Hi friends, good morning. Welcome to day 2 of your CA Final Paper 3 Advanced Auditing Marathon. Now yesterday we had a session from evening 7 o'clock to 10:30 p.m. and we completed 2 chapters. So which were the 2 chapters we completed? That was your company audit and second one was professional ethics. And today we are required to do all the remaining chapters. So this 8 o'clock to around 1:30 p.m. I repeat, 8 to 1:30 p.m. will be the auditing standards. And your 2 o'clock onwards will be all your remaining miscellaneous topics which are there. We'll start with auditing standards today. And just remember one thing, your exams are going on. You need to keep on preparing. You cannot stop in between. Just remember one thing, whether I like it, I don't like it, I have to keep moving. Yeah, I have to keep moving. I cannot stop. Okay, now before I move ahead, let me just glance you through a new scheme which we have introduced at Unacademy. So at Unacademy now you are allowed to have a subject-wise subscription. So earlier you had to choose G1 or G2 fully. Now subject-wise subscription is available. So you can choose individually FR, you can choose individually auditing, that is available. This lectures will not be live class, it will be a high quality studio recording. Plus there will be a regular doubt solving sessions. Regular doubt solving sessions which will be on a live basis. The weekly will come live to solve all your doubts. Otherwise, it will be high quality studio recording. The best part is if you don't understand a concept, you can just go back and watch it. Plus, even your plus subscription will now have a basically evaluated test series. The evaluated test series is now for everyone and the price at which we are giving is the best in the industry. Nobody will be giving at such rate. If I just tell you the pricing, if someone chooses FR, individually FR, if you take a 6-month subscription, the price is 7,999. Imagine in 8,000 rupees, your full FR subject is done. And these recordings are based on the latest ICA material, covering your RTPs till November 22 and your suggested answers till your May 22 examination. Everything latest recordings are available for your purchase. So take up the subscription, use code CA Niket, you'll get some special discounts. Let's begin with today's work. Let us begin with today's work. Come to chapter number 1, Auditing Standards. Just 1 minute. Okay, now page number 1.3. Page number 1.3, the preface to auditing standard as such not relevant much from exam point of view. I'll focus on those things which are relevant from exam point of view. See, nobody can complete everything in last 1.5 days. It's all things which we marked as important that will cover up. And now someone asked me yesterday that, sir, after your lecture is over or during break time, what we should be doing? See, I tell you one thing, once this revision marathon is over, I'll recommend you, one, you glance all the important things which you feel points are to be recalled. And second, if you don't know what to do, simple, do last 3 RTPs, last 3 suggested answers. If you're doing last 3 RTPs, last 3 suggested answers, you're able to understand what type of question comes and how do you need to write your answers. Okay, now there was basically an international Auditing and Assurance Standard Board, IAASB, they came up with some international auditing standard, international auditing and assurance standard. Based on this, we in India, we have IASB, in basically your AASB, your Auditing and Assurance Standard Board, which comes out with auditing standards in India. Now, do we really call it as auditing standards? Answer is no. Do we really call it as auditing standard? Answer is no. They are called as, just come over here. So it's not the auditing standard, we call it as engagement and quality control standards. So now we have the names, numbers which are there. It's based on the type of services which we give. So whenever we are doing audit, so there are standards which are given to you. They are called standards on auditing. They are applicable for audit of historical financial information. When you're doing a review is generally for your listed entities. They are required to publish quarterly unaudited but reviewed financial information. So whenever you're doing a review, there are some standards given for that. That is your SRE, standards on review engagement. Okay, whenever you're doing an assurance engagement other than audit or review. Okay, other than audit or review, for example, other than historical. So other than historical financial information, prospective financial information, you're giving assurance, there will be SAE. Then if you're giving a related services, compilation, agreed upon procedure, that is covered under SRS. And so these are 4, this ABCD are called engagement standards. They are called what? engagement standard, and whenever you're performing any engagement, there are some quality control standards which are to be followed. The quality control standards are to be followed whenever you're giving any engagement services. So SA, SRE, SAE, SRS and your SQC, engagement and quality control standards. Fine, other things are okay, not relevant. Not relevant. Directly come to objectives and functions of AASB. So in India, the auditing standards or engagement and quality control standards, they're issued by AASB. So we directly go to objectives and the functions of AASB. What is the functions of AASB? To review the existing and emerging audit practices, and they will try to see what is going on in the world, what is basically areas where new standard needs to be developed. So they try to identify areas where new standard needs to be developed. They formulate the standard. They review the existing standard. They develop the guidance notes. They review the guidance notes. Acha, question, whether guidance notes are mandatory? Answer is no, guidance notes are not mandatory. They're just for your guidance. But they are issued under the authority of council. The guidance note are issued under authority of council, but they are not mandatory. Acha, there is general clarification. Standard ambiguous, they come out with some clarification. Whether the general clarification is mandatory, answer is yes. Fine. They formulate this general clarification. They also formulate and issue technical guides, practice manuals, studies and other paper. This all things are not mandatory. Fine. So this is your objective and function of AASB. TK, composition of AASB is not relevant. Procedure for issuing or modifying the engagement and quality control standard. See, procedure for issuing the standard as well as modifying standard, both are same. So first of all, project identification, prioritization, approval. Okay, who will identify the areas where standard is required? So AASB. The AASB will identify areas where the standards are required. Now for preparing a standard, what will happen is they will have study groups. The first is project identification. Now if there are 2-3 areas, they'll prioritize and basically your AASB will decide which areas we should come up with standard. Then for preparing the standard, they have a study group or a task force that will come up with a preliminary draft. The draft is circulated everywhere. Okay, to whom it is circulated? The draft is circulated basically to the members of AASB, council members of ICI, and it's also circulated to the specified bodies. Your SEBI, RBI, so they are all specified bodies. Specified bodies also it is circulated. Plus, it will also be exposed to public at large. The public at large it will be exposed, it will be put up on the website of ICAI, and it has to be kept for a period of 45 days for the people to comment. Everybody can comment on basically the draft which just came up. 45 days are given to it, and once the comments have came, we come out with the final version. The final version is then AASB gives it to the Council of ICI. Council of ICI will then issue it. So can I say standards are issued under the authority of council? Now, the procedure for issuing standard, modifying the standard is same. The procedure for issuing guidance note or even modifying guidance note is same, except the step 3, public exposure. The public exposure is not required for issuing or modifying the guidance notes. Are you clear? Okay, write a short note on IAASB, International Auditing and Assurance Standard Board. It's an independent standard setting body. Uska purpose is to come out with a high quality auditing standards. And based on that, we can have an international auditing standards which are common for everyone. Acha, now, how do they do this? They come out with a high quality standards which are there for audit. They come out with high quality standards for other assurance services. They come out with high quality standards for other related services. They come out with standards on quality control, and they also come out with some other pronouncement. This is how they do it. So, short note on IAASB. Then let's go to SA 200. The preface over, going to SA 200. See, always in your essay, the heading has to be read very properly. If you read the heading, you're able to understand bit of the content. And number 2, every essay has an objective. To fulfill objective, there are requirements. The objective of this one, basically, it's the overall objective of independent auditor and conduct of audit in accordance with essay. If you see, overall objective it talks. The overall objective is what? To obtain a reasonable assurance that the financial statement as a whole are free from material misstatement, whether due to fraud or error. And this will enable you to express an opinion whether the financial statements are prepared as per the applicable financial reporting framework. The first is to obtain reasonable assurance so that you are able to express an opinion. Second, you report on financial statements. You report on financial statement in accordance with the basically essays based on your findings. Okay. 2. Now the word came applicable financial reporting framework. What do we mean by the word applicable financial reporting framework? It's a framework adopted by the management or wherever appropriate TCWG in presentation of financial statement, and that is acceptable. वो framework acceptable है कैसे? Based on the nature of financial statements, the nature of entity, objective of financial statement, and it is also as per laws and regulation. So partnership preparing balance sheet in a T form, horizontal form, it's allowed. It's acceptable based on nature of entity. It's acceptable based on objective of financial statement, and it is as per laws and regulation. ठीक. So this is basically applicable financial reporting framework. Now see, framework is the basis. Basis used for preparing financial. Who prepares financial? Management. It's adopted by the management or wherever appropriate those charged with governance. Acha, Ujjwal as a question, sir, do we need to quote the essay number in exam? Answer is yes. Essay number, when you're quoting essay number, also write the name of the essay together with it. TK, responsibility of financial statement is fine, scope of audit is fine, requirements. Now they're given 4 requirements. See, this essay talks about overall objective. To achieve the overall objective, they say 4 requirements. 1, you need to follow ethics. 2nd, you need to be professionally skeptic. 3rd, you should have a professional judgment, and you should obtain sufficient appropriate audit evidence and audit risk. Okay, ethics is fine. Coming to this professional skepticism, which is important. Okay, what do you mean by the word a professional skepticism? It's an attitude where you have a questioning mind. You are alert to circumstances where there can be a possible misstatement, and you critically examine the audit evidence. It's an attitude where you have a questioning mind, you're alert to circumstances where there can be possible fraud or error, and you critically examine the audit evidence. Now, if I'm professionally skeptic, I'll be alert to what? If I'm professionally skeptic person, I'll become alert to what? One evidence which contradicts other audit evidence. I'll become alert to information which questions the reliability of document. Remember a signature stroke example? 3rd, the condition that may indicate a possible fraud, like company coming out with the IPO, there may be a misstatement. The sales might have been misstated. And circumstances where you need more audit procedure even than what is said in essay. And if you are skeptic, it will reduce what? It will reduce the risk of overlooking unusual things, overgeneralizing the conclusion, and using inappropriate nature, timing, extent of your audit procedures. Plus, critical assessment of your audit evidence is a part of basically your professional skepticism. Now, I have a belief that the management is honest. If I have a belief the management is honest, can I leave my skepticism? Answer is no. Still, you need to remain skeptic, and you should not accept less than persuasive audit evidence. The evidences are persuasive, not conclusive. So I get evidence which convince me. I can't say this is 100% correct. So you should not accept less than persuasive audit evidence. 3rd one, professional judgment is also important. What is professional judgment? Now see, definitions, try to remember. Few lines should come in a similar way. Okay, so what is professional judgment? It's application of relevant training, knowledge, experience within the context provided by auditing, accounting, ethical standard. So you apply the training, knowledge, experience in making informed decision about a course of action in the circumstances which is appropriate. So you apply your relevant training, knowledge, etc. in making an informed decision. That's called as a professional judgment. Many places in audit we are required to make judgment. Sir, what is material? 2nd, nature, timing, extent of audit procedure to be done. Whether we obtain sufficient appropriate audit evidence, which report to be given. So we are required to exercise professional judgment throughout the audit, and this professional judgments exercise should be documented. Okay, sufficient appropriate audit evidence and audit risk. Sufficient appropriate audit evidence will be covered in essay 500. I'm skipping it. Going to audit risk. Okay, what do we mean by the word audit risk? What do you mean by the word audit risk? Audit risk is the risk that auditor may give an inappropriate opinion on the financial statement which are materially misstated. See, I'm giving an inappropriate opinion on the financials which are materially misstated. So instead of qualified, I give clean. That's audit risk. But instead of clean, I give qualified. That will rarely happen, man. So that's not audit risk. Reason, see, instead of clean I give qualified, you are trying to say there were no misstatement but you found. ऐसा नहीं होगा. There were misstatement you could not find, that can happen. Your audit risk has three components. Which are the three components? Inherent risk, control risk, detection risk. Okay, what is inherent risk? Suspectability, chances of an account balance or a class of transaction to a misstatement which could be material individually in aggregate when there are no related controls. If there are no controls, what are the chances there will be fraud or error in that item? That's inherent risk. Inherent risk depends on quality of people. Inherent depends on nature of item. Small item, susceptible to fraud. Big item, not susceptible to fraud. So basically it depends on nature of item, quality of people, quality of basically environment, उन सब पे depend करता है. Okay, control risk. Control risk is, it is a risk that misstatement will occur at an assertion level, individual class of transaction, account balance or disclosure, and it could be material individually in aggregate, and it will not be prevented or detected and corrected on a timely basis by the entity's internal control. The management has put the control, still it will not be prevented, detected and corrected on a timely basis. After putting control also, it will not be there. That's basically your control risk. Control risk depends on the quality of control. And last one is detection risk. Okay, so out of, there was some inherent risk. So there were certain errors. Usme se few are prevented by control. Whatever are not prevented, that remain. Now auditor will check. And whatever auditor is also not able to find out. Whatever auditor is also not able to find out, that's basically the detection risk. The procedure performed by auditor to reduce audit risk to acceptable lower level will not detect a material misstatement when it exists, and it can be material individually or in aggregate. Okay, now see, all three are different. Inherent risk, control risk, detection risk, all three are different. If you multiply all three, then it is known as audit risk. The audit risk is inherent into control into detection. And inherent into control is risk of material misstatement. When they gave you financials, what are the risk of material misstatement? That's inherent risk into the control risk. Are you clear? Are you clear? Okay, now, what is the interrelationship? What is the interrelationship between components of audit risk? If inherent risk and control risk is high, people are not good, controls are not good, can I say chances of frauds and errors are more? If chance of frauds and errors are more, you will check in more detail. If you are going to check in more detail, the detection risk goes down. So there's an inverse relationship between a combined level of inherent and control risk with the detection risk. Okay, what is not included in audit risk? What is not included in audit risk? The risk that auditor might express an opinion that the financial statements are misstated when they are really not. So instead of clean, you give modified. That's not covered in audit risk because that's very, very, very rare. Frauds and errors were not there, but I found. वो नहीं हो सकता है. So that's not audit risk, है ना? Because of your wrong reporting, if there are consequences, because of your wrong reporting, there are consequences, they file a case against you, you will have some problems, that is not covered in audit risk. So auditor's business risk, loss from litigation, etc., that is not audit risk. Audit risk is a risk that auditor expresses an inappropriate opinion on the financials which are materially misstated. Okay, limitations, inherent limitations of audit is important. See, irrespective of how well you do audit, you cannot give an absolute assurance. You cannot give absolute assurance because there are inherent limitations of an audit. There are 4 points given. It's not just the 4 points important. You need to understand in detail also. The first, the nature of financial reporting. See, the financial reporting, the financial statement itself is based on judgments. Now, whenever something is based on judgments, I can never say it's 100% correct because they themselves are based on judgment and judgment may go wrong. Second, the nature of audit procedure. See, pehla tha nature of financial reporting. Second is nature of audit procedure. See, there are some practical and legal limitations on your ability to obtain the audit evidence. So there are some practical legal limitations on your ability to obtain evidence. Management may not give you complete information, sometimes knowingly or unknowingly. Second, there might be some frauds which are carefully designed. We may not be able to find out. And audit is not an investigation. So this is talking about nature of audit procedure. Third, we have a timeliness of financial reporting and balance between benefit and cost. See, financial statement has to be given to stakeholders on timely basis. If audit takes a long period of time, I want to be sure about everything. It will take a long time. And then financial statement don't reach to people timely. तो then that's of no use. तो financial statement has to reach on a timely basis, and उसके लिए we need to complete the audit also on timely basis. So it is possible we may not be able to go for everything in detail, and the cost of audit also should not exceed the benefit generated out of it. But just one thing, difficulty. The matter of difficulty, time or cost involved in itself is not a valid basis for omitting a procedure when there are no alternative. If alternative procedure is not there, this procedure will take time, that's why I omitted. Alternative procedure not there, this procedure will take time, that's why I omitted, that is not allowed. And last one, there are some other matters which affect limitation. There are certain areas where your ability to find out a material misstatement is not possible. It's very difficult for you. Which are that areas? So there can be a question only on this fourth point. So in certain subject matters, limitation on auditor's ability to detect a material misstatement, your limitations are significant. Which are that areas? One, fraud, particularly involving senior management. Second, whether related party transactions are there or not, existence of related party transaction. Third, non-compliance of law really has happened or not, because many laws are operational laws, I don't know about it. And last, future events or condition which may affect going concern. We don't know about future events and condition. I know about what has happened. So these are the subject matters where my ability to identify basically the misstatements becomes limited. So over here basically my limitation becomes significant. Okay, the 4 points: nature of financial reporting, nature of audit procedures, balance between your timeliness and profitability, benefit and cost, and fourth one is other matters. Now see this next question, question 1. There are some basically fraud which was later on found out. Auditor said there's inherent limitation. Now what do you think, whether auditor made a correct statement? Yeah, correct. But now see next question, also discuss certain subject matter or assertion where it is difficult to detect the material misstatement due to the effect of potential inherent limitations. Acha, so they are talking about only point number 4. What were the subject matters or assertion? Fraud involving senior management, existence of related party transaction, non-compliance with laws and regulation, and fourth one kaun sa tha aapka? Future events and condition which may have a doubt related to going concern. Are you clear? Only point 4 was asked. Okay, conduct of audit in accordance with SA is fine, leave it, not relevant from exam angle. I'm taking important questions, no important over here. Come to SA 210. Every 15-20 minutes, a sip of water, this is going to keep you fresh. And for me, better for my throat. Now, SA 210 is agreeing upon the terms of engagement. Now, they say that auditor and client should agree on the terms of engagement, and this should be done. This should be done what? Preferably before the commencement of audit. So that is basically there. Now, first of all, whenever they basically come out that, sir, we have an audit for you, before accepting the audit, I need to check the precondition. This is important. Before accepting the audit, you need to check whether the preconditions are fulfilled or not. If precondition is not fulfilled, don't accept the audit. So if preconditions are not present, you should not accept. Now, which are the preconditions? 1, the management should have used acceptable financial reporting framework in presentation of financial statements. And number two, management should agree on the basis on which the audit is conducted. It means audit is conducted on test check basis, audit will give you a reasonable assurance. वो सारी चीजें management should agree. So these are the 2 preconditions. If question comes, what are the precondition? A, B. This is the answer. But if question comes, how as an auditor you check it? So in order to establish whether preconditions are present, auditor shall. So if question is, what are the precondition? A, B. But if question comes, how auditor checks it? So 1, he has to determine whether the financial reporting framework adopted by the management is acceptable. And you have to obtain agreement of the management. You have to obtain agreement of management, and You take an acknowledgement from management regarding what? That it understands its responsibility for preparing the financial statement as per the applicable financial reporting framework, for establishing the internal control, which will ensure the financial statements are free from material misstatement, whether due to fraud or error, and they will provide to auditor access to all information plus additional information, unrestricted access to persons. The other question is, what are the precondition? Write A and B point above. But if how auditor will check precondition, this is the answer. Are you clear? Okay, if there's a limitation on scope prior to acceptance of audit, before I accept the audit, they put some limitation. Sir, you are not allowed to check this. If this is going to lead to a qualified report, like the possible effect is material but not pervasive, you can still accept the audit. But if the possible effect is material and pervasive, if it will go to lead to a disclaimer of opinion, don't accept the audit. The limitation on scope which is going to lead to disclaimer, don't accept the audit. Okay, letter of engagement is a letter written by auditor to his client, documenting and confirming your acceptance to audit, and it will also contain the objective of audit, scope of audit, your responsibility, my responsibility. Okay, what are the principal matters? Objective, responsibility of auditor, responsibility of management. We identify which is the applicable financial reporting framework, and we also refer to the expected form and content in which we are going to give our report. Additional matters can be anything, whatever you want to put. Next, see, if law or regulation gives basically the objective of audit, the scope of audit, their responsibility, my responsibility, then no need to write it again in letter of engagement. You can just write down that our roles and responsibility will be as per this section of this act. If law or regulation prescribes it, give a reference of that law or regulation. Reference dena padega. ठीक है? See, the purpose of letter of engagement is to have a clarification. There should not be misunderstanding. That's the only purpose. Fine. Audit of component, branch, or a subsidiary. Imagine you are auditor of parent also, you are auditor of subsidiary also, you are auditor of HO also, you are auditor of branch also. Should you give a two separate letter of engagement, or can I give one letter of engagement? That will be fine. Depends. Don't say yes, no directly. Depends on factor. Who appoints the auditor of component? Whether they need a separate audit report. What does law say? Extent of work done by other auditors, degree of ownership, degree of independence. Depending on factors, you decide whether a separate letter of engagement is required or not. Same way, recurring audit. See, you are appointed for 5 years. If you are appointed for 5 years, can I give one letter of engagement for all 5 years, or should I give individually for all 5 years? Again, it depends. It depends on circumstances. One, if you feel client has misunderstood the objective scope, send it again. If there's a revision in terms, send it again. If there's a change in the senior management, send it again. If the change in ownership of that company, the owners have changed, send it again. If there's a change in nature or size of that operations, send it again. Change in law, that's why, what is law telling based on that? And there's a change in financial reporting framework. Last time AS, now Ind AS. Better you send it again. And change in the other reporting requirement. So if there are some changes, you send it again. So if you feel that client has misunderstood, again send it. Okay, kind of that. Okay, now after the audit was accepted, terms of engagement were done. Later they tell you to change the terms, which will give you a lower level of assurance. I repeat, later they are telling you to change the terms. कैसे आपको assurance देगा? Lower level of assurance. Should you accept it? Again, don't say yes, no directly. First, you need to understand the appropriateness of doing so. Why management is requesting? Try to understand the reason. And if you feel there's a reasonable justification, and even after the change in terms of engagement, you will be able to comply with essays, you will be able to comply with regulatory requirement, you can accept. Okay, whenever the terms are later changed, you agreed. If you agreed, new terms are entered. Should I need to write in my audit report that the terms were changed in between? Do I need to write in my audit report the terms were changed in between? Answer is no, no need to write that the terms were changed in between. But if you feel that management is asking for a change in terms, that's not acceptable. I found problem in debtors, and that's why they're telling don't check debtors. Then don't accept the change in term. You continue doing the audit as per the current terms. And sir, what if they don't give me documents of debtors? If they don't give you document of debtors, in that case, you're unable to obtain sufficient appropriate audit evidence. Either withdraw from engagement or you can modify your report. ठीक है. Now, I need to send a letter of engagement. Sending is mandatory. Should client sign and give it back? Sending letter of engagement, auditor will send to client. Should client sign and give it back? Now pay attention for this. If objective, scope, roles, responsibilities are already defined in statute, so can I say you sending, they signing is just a mere formality? Then in that case, it is not required. But if objective, scope, roles, responsibility are not properly defined in statute, then they have to acknowledge it and you have to get it. TK, now check. First one is easy one, leave it. Third one, there's a listed entity and there are joint auditors over here. Okay, I have a question. In case of joint auditor, would every joint auditor issue a separate letter of engagement, or there will be a common letter of engagement? In case of joint audit, there will be a separate letter of engagement or a common letter of engagement. There will be a common letter of engagement on company's letterhead. I repeat, common letter of engagement on company's letterhead. Okay, now check over here. The engagement letter contains the details of objective, scope of audit, responsibility of auditor, applicable financial reporting framework. What is missing is the responsibility of management. What is missing is responsibility of management. Expected form and content of report is also there. What is the discrepancy? Responsibility of management is the discrepancy. Okay, now over here, what are the precondition? If question is what are the precondition to? Now second question, also advise whether Mr. Ram should accept the audit or not. If preconditions are not fulfilled, you should not accept the audit. Now question is not how auditor will check the precondition. Question is what are the precondition? Did you understood? There were two separate questions over there. Okay, next one is SA220. Next one is SA220, quality control for audit work. Now they say that you should obtain a reasonable, though you should be basically implementing quality control procedures. You should implement quality control procedures which will give a reasonable assurance that the audit complies with professional and legal standards and the audit report will be appropriate in the circumstances. If I follow that small quality control procedures, I'll be able to get a reasonable assurance that audit complies with professional standards, legal requirement, and the report is appropriate in circumstances. Now there's some definition, I'm not going for it, just the word engagement partner. Whether engagement partner necessarily has to be a partner of a CA firm? Does he have to be necessarily a partner of CA firm? Answer is no. Engagement partner is the one. He has to be a member of ICI. He has to be a member of ICI full-time working with you. He should be full-time working with you and he should be responsible for the engagement, his performance and the report to be given on behalf of firm. So imagine ABC & Co is a CA firm. CA Mr. D is an employee full-time. CA Mr. D is a full-time employee. There's a small audit fully handled by CA Mr. D on behalf of firm. If that small audit is fully handled by CA Mr. D on behalf of firm, for that small audit, CA Mr. D will be the engagement partner. Now I take the definition of EQCR, which is important. Engagement Quality Control Review. See, one is a normal review. The work of juniors checked by seniors. Articles work checked by partner or employee. वो regular है. What is EQCR? EQCR is only for big audits. For big audits, before you give your audit report, you want to be double sure. I want to be double sure. And that's why we get it reviewed from someone. Before the audit report is issued, the engagement partner will get this EQCR done. And the guy who does a EQCR will be someone who was not in your team. वो team member नहीं था, other than the team member था. So it's a process designed to objectively evaluate. When? Before the audit report is issued. What? Significant judgments made by the engagement team and the conclusions reached. Are you clear? Okay, now what are that quality control procedures which are to be implemented in this essay? All these quality control procedures are to be implemented by engagement partner. All things talk about the responsibilities of engagement partner. The engagement partner should act like a leader. Engagement partner should ensure that everybody follows ethics. If there's a non-compliance found out, he should be taking actions. Engagement partner should form a conclusion. Everything is engagement partner. That they are complying with the independence. Okay, this point is important. Engagement partner should form a conclusion that they comply with the independence requirement, and in doing so, for that purpose, He should obtain information to identify and evaluate circumstances, relationship which have a threat on independence. So try to get information to identify and evaluate circumstances which have a threat on independence. Evaluate information on identified breaches and take appropriate action to eliminate their threats or to reduce it to acceptably lower level by applying the safeguards. Are you clear? Or third option is, if you're not able to eliminate, if you're not able to reduce to appropriate lower level, you withdraw from the engagement. So this was important. Next, acceptance and continuation of client. Every CA firm should have a policy for acceptance of new client, continuation of old client. Here, engagement partner should be satisfied that appropriate procedure regarding acceptance of client, continuation of client has been followed. And if at all you find out, if you find later that, oh, this client should not have been continued, what I should do? You consult with your other partners and then you take a course of action. Okay. Assignment of team. Engagement partner should ensure that the engagement team have the competence and capability. They have a competence and capability to perform the audit in accordance with professional and legal standards and to ensure that the audit report will be appropriate in circumstances. Plus, for a better engagement performance, there should be a system of direction, supervision, review. Direction, before the article goes, you direct them. Supervision while they are doing the work. Review is once they are done. Plus, there should be a consultation. Consultation within the firm, outside the firm, both consultations are required. And there should be a system of EQCR, which is important. Okay, whether EQCR is required for all audits? No. So, किसके लिए EQCR is required? One, for listed entity का audit and any other audit which your firm has determined. So, listed entity, EQCR mandatory. Other clients, whichever your firm has decided, there should be a EQCR done. If EQCR is required, the engagement partner shall appoint the reviewer. He should discuss the significant matters with him and not sign the report before the review is completed. Now, the engagement quality control reviewer will focus on two things: the significant judgments made by the engagement team and the conclusions reached. They have to evaluate two things, and this evaluation shall involve. So, for evaluating the two things, significant judgments and the conclusions reached, what will the reviewer do? The reviewer will discuss. There should be a discussion of significant matters with engagement partner. He will review the financial statement, the proposed audit report. He will review the selected documentation and he will evaluate whether the conclusions reached are proper or not. Okay, the reviewer has to review two things. For reviewing two things, what he will do, this is ABCD. Okay, for listed entity, the reviewer also has to consider three more things. So normally he has to review two things: significant judgments, conclusions reached. But for listed entity, he has to review three more things. Which are three more things? One, whether the whole team was independent, whether appropriate consultation has taken place within the firm, outside the firm, and whether the documentation supports the conclusion. Whatever documentation, they are supporting the conclusion. Now, if there's a conflict between engagement quality control reviewer and the engagement partner says clean, reviewer says no, qualified, what to do? Resolve as per firm's policy. Follow firm's policy. And there should be a monitoring of quality control. Now, this essay talks about the quality control procedures implemented by the firm. And that firm should keep on monitoring the quality control procedures, what they have implemented. It is possible they might be required to change the quality control procedures over a period of time. Fine, now come over here. Question 3 is important. Question number 3 is important. Which information assist the engagement partner? See, engagement partner has to decide. He has to form a conclusion whether policy for acceptance, continuation of client is properly followed or not. So, what information assist the engagement partner in determining whether the conclusion reached regarding accepting continuation of client are appropriate? So, which information will help me to understand that accepting a client, continuation of client was done properly? So, uske liye integrity of owners. Whether your team is competent, you have a necessary capability. If I feel we don't have a capability, I should not accept the audit. Whether you can comply with the ethical requirements and any significant matters which have arisen. Last year there was a fraud coming up and now I understand I should not continue the audit. So these are which information assist you to decide whether basically the continuation of client, acceptance of client was appropriately done or not. Now see the next question. Next question, RTP May 19, November 19 exam. Now, which information assists you to decide whether to continue or not? One of them was integrity of owners. Now see this question, a huge story. Now, with regards to integrity of client, give some examples of matters which you will consider. Now see, SA 220 and SQC 1, majority content is common. Now, to continue the client or not, we see the integrity of owner. With regards to integrity, what do we see? ये point ऊपर जो था ना, integrity, उसका detail is there. With regards to integrity, give the examples of matters which we need to consider. What I'll consider? The check, the identity and business reputation of the owners, the nature of your client operation. Are they doing any fraudulent activity, kind of that? Information concerning the attitude of principal owners, the key management, उनका attitude कैसा है? Are they telling you to keep the fees as low as possible? Whenever they try to keep your fees as low, you will also be checking less. अगर ऐसा है तो it creates a doubt. They are trying to hide something. Are they putting any limitation on scope on your work? If they are putting limitation, वो कुछ छुपा रहे हैं, कुछ छुपा रहे हैं. The integrity is questioned. Indication that client might have been engaged in money laundering activity and reason for proposed appointment of your firm and why they did not reappoint the earlier one. So why are they not reappointing earlier one? He was eligible for reappointment, no problems were there. There might be something wrong, management is trying to hide, or integrity pe question comes. So this is with regards to integrity. Did you understood? Next important one. Okay. Under SQC1, the firm review responsibility, the work of less experienced team is reviewed by more experienced. So junior ka work checked by senior. This is not EQCR. This is a normal review. Junior's work checked by senior. What are the areas covered under such review? So whether the work is performed as per professional standards, significant matters were properly considered, appropriate consultation had taken place, nature, timing, extent of work performed of junior was proper or not, whether the work performed supports the conclusion, evidence obtained is appropriate, objectives of the engagement procedure has been followed. So whenever junior ka work is reviewed by senior, what are the areas considered in that review? Clear? Next. 10th one, important. 10th is important. 10th is important. This is the material which was basically covered in our regular batch, which I did in the month of April, May, June. April, May, June 22, there was a batch of auditing. This is the same material and the link of material is also there on our Telegram group. Okay, engagement quality control review for audit of financial statement of listed entity will cover what all matter. Achha, listed entity hai, remember normally 2 things plus additionally 3, normally 2 plus additionally 3, they've given the same thing but in a different way over here. So check over here, 1, firm ka independence, significant risk identified, responses to those risks, appropriate consultation had taken place or not, judgments which were significant, corrected, uncorrected misstatements which were identified, matters to be communicated to this, working papers support the conclusion and appropriateness of the report. It's actually the same thing but just written in a different way. Are you clear? As it was a listed company, normally 2 significant judgments made by the engagement team, conclusion reached, and 3 more, independence, consultation, and the third one is document supports conclusion. TK, next one. What are the controls that a firm may design and implement? What are the controls the firm may design and implement to maintain confidentiality, safe custody, integrity, accessibility, retrievability of the documentation? So what controls you can use to ensure the documents, your documentation is kept properly? Okay, so if it is kept in electronic form, you can use passwords. आप थोड़ा backup ले सकते हो so that if anything happens to the PC, you still have a documents. Okay, procedure for properly distributing the engagement documentation. It's properly distributed. Sequence wise, it goes from one person to another. And procedure for restricting the access, the cupboard where it is there, they are kept in lock. So that is basically the controls to ensure confidentiality, safe custody, integrity, retrievability of engagement documentation. Next one, 12th one, it's a listed company. Engagement partner says that only he has to check the independence ka compliance. Independence, compliance, he has to definitely check. Remember requirement number 3, independence. The engagement partner has to ensure independence was followed or not. In doing so, there were 3 points given. But as it's a listed company, can I say the engagement quality control reviewer? Engagement quality control reviewer also has to additionally check 3 points. Usme the first point was independence. The engagement quality control reviewer was not allowed to see this. So engagement partner was of the view that independence assessment is not the responsibility of engagement quality control reviewer. Engagement quality control reviewer objected. The objection of engagement quality control reviewer is right. Objection of engagement partner is not right. The independent assessment has to be done by engagement quality control reviewer also. Are you clear? Next one. Now see over here. Over here there was some basically fraud which had happened. The closing balances, opening balances related fraud. Complaint was filed against NK. See, question is not on fraud. If you see, now pata chalega. Complaint was filed against NK. You are required to inform what policies are required to be implemented for dealing such complaints and allegation. When someone files a complaint, what policies within the firm you should have for dealing with the complaints filed by someone. What policies you should have within the firm for dealing with the complaint. This is SQC 1 ka question. To 1. The firm should establish policies, procedures to provide reasonable assurance that it deals appropriately with the complaints and allegations which are coming up. ठीक है? Complaints, allegation may come within the firm, outside the firm. ठीक है? The firm should clearly establish the defined channel how a person can raise complaint. उसका एक channel आपको properly बनाना है. And whenever a complaint comes, the firm investigates such complaints. Investigation is supervised by a partner who was not involved in the engagement. And small firms hai, so they can appoint some external person also for handling the complaint. And the result of the investigation, if they result into deficiencies, the firm should take action. The question was, if a complaint is filed against your firm, what should be the policies, procedures to be followed by you for handling those complaints? Are you clear? Okay, next one is SA 230, documentation. We are doing all important questions also, so this is a kind of a detailed revision. Okay, documentation is record of audit procedures performed, evidence is obtained, conclusions reached, nature and purpose is fine, not relevant from exam point of view. Documentation is required at all the stages, that is also fine. Important is this form, content, extent of documentation. You need to document in a manner that the experienced auditor is able to understand. You need to document in a manner the experienced auditor is able to understand the nature, timing, extent of the audit procedures performed, the result of those procedures, and third, the significant matters which came up and how did you deal with it. The experienced auditor, the one who is a chartered accountant in practice, who has done a similar kind of audit, usko bolte experienced auditor. He should be able to understand all these things. Okay, now whenever you're documenting nature, timing, extent of audit procedures performed, you need to document the characteristics of item tested. How did you select the sample? Okay, who performed the work? When did he perform it? Who reviewed the work? When did he review it? And this point is extremely important. The form and content of working paper are affected by. The question comes, the form and content of working papers are affected by following: size and complexity. If complex, I have to understand, do more checking, more documentation. Nature of audit procedures performed, which type of procedures you're doing. If you're doing analytical procedures, so documentation is different. If you're doing test of details, documentation is different. The risk identified, if you feel the risk is more, you will check more documentation. Significance of audit evidence is obtained. Based on whatever evidence is obtained, if you feel things are fine, you may go for less checking, less documentation. Nature of exceptions identified. Okay, if at all you found some problems, exceptions. Yeah, the word anomaly. If you find out some anomaly or something, you need to go and check whether it's really anomaly or not. Okay, need to document a conclusion or basis for conclusion. If you feel that the base for the conclusion, how do I arrive at, this is a complex thing, how did I arrive at it, I need to have that also. If basis for conclusion also needs to be documented, there will be more documents. And last, the audit methodology tools which you are using. The form and content of working paper is affected by size and complexity, nature of audit procedures performed, the identified risk of material misstatement, the significance of evidence is obtained, nature extent of exceptions which you identify, need to document the conclusion or the basis for conclusion, and methodology and the tools used. Okay. Now your documentation can be on paper or can be on electronic form. Examples of audit documentation. The question is, what are the examples of audit documentation? This, your plan, some analysis which you have done, the summaries of significant matters which you prepared, some letter of confirmation, some checklist, some emails which you have done. These are all your examples of audit documentation. Next is classification is fine, permanent audit file, current audit file, that's not required. Assembling into a final audit file. Now tell me, I need to assemble my documentation into a final audit file within how many days? 60 days from the date of audit report. Am I required to have an audit file ready before I give my report? No. So you have a file ready within 60 days from the date of audit report, and making file ready is not type of getting new evidence. Making file ready is kind of an admin work. Making file ready is just an admin process, does not involve performance of new procedures. And sir, what are the things which are included? So deleting or discarding the superseded documentation. पहले आपने लिया, फिर new document came up, the old is to be discarded. Sorting, collating, cross-referencing the things, signing off who did which one, checklist filling, and documenting audit evidence that the auditor has obtained. Okay, so during this phase, can I obtain new evidences? No. It's just admin process which is there. Achha, how many years you need to keep your audit file? So how many years you have to keep it is not given under your SA 230. SQC1 says you need to keep it for at least 7 years. SQC1 ne bola. Achha, who is the owner of the documentation? The auditor is the owner of the documentation. Can I have a right of lien? Sir, wo mera hi hai. Right of lien comes on client's property. This is my property only. There's no question of right of lien. Achha, can a main auditor ask for the documentation of branch auditor? No. Branch auditor's documentation is property of branch auditor. You cannot ask for it. Okay, now there's a word called completion memorandum. Completion memorandum is nothing but a summary which you prepare. It's a summary which you are preparing which shows the significant matters which you identified, how you addressed it. That is called as a completion memorandum. TK, over here all the illustrations are fine. See this question. What are the factors that influence the amount of working papers required for purpose of audit? This form and content of working paper depends on which factor. Next one is SA 240, that is on fraud. SA 240, which is on fraud. Okay, now auditor's responsibility in relation to fraud in audit of financial statement. Fraud refers to some intentional act done by one or more individual amongst the management, TCWG employees, which uses some deceptive technique to get some illegal or unjust advantage. Okay, now fraud can be of many types. Fraud which affects the financial statement. Yeah, fraud which affects financial statement, they are only relevant to us. Other frauds are not relevant. See, some employees are doing fraud to see that the commission of someone else comes to them. वो हमारे लिए relevant नहीं, or one guy gets a credit of work of other. That is not relevant for it. Fraud which affects the financial statement, they come over here, and उसके अंदर there are two things. Misstatement coming from fraudulent financial reporting and misstatement by way of misappropriation of asset. Under fraudulent financial reporting, there is no chori. Under fraudulent financial reporting, there is no chori. Only the financial statements are fraudulently prepared. You are trying to show more profit. You are trying to show less profit. That's the only thing. But under misappropriation of asset, there is a chori. People have stolen. The employees have stolen cash. Employees have stolen goods. That's misappropriation of asset. Are you clear? Misappropriation of asset is further bifurcated into misappropriation of goods, misappropriation of cash. Okay. Primary responsibility management kiye, that is fine. What is the responsibility of auditor? See, this is responsibility of auditor. This is responsibility. What is the responsibility of auditor for fraud? Auditor is required to obtain a reasonable assurance. They are required to maintain a professional skepticism. There's always an unavoidable risk that some fraud and error may not be detected, and risk of non-detecting a material misstatement from fraud is higher than risk of non-detecting a material misstatement from error. Now the essay starts. What are the objective? The objective is to identify and assess the risk of material misstatement in the financial statement due to fraud. So try to find areas where there can be a fraud. Number 2, once you identify areas where there can be a fraud, you obtain sufficient appropriate audit evidence about that assessed risk of material misstatement by designing and implementing appropriate responses. So identify area where there can be fraud, check that areas in detail, and then how do you report? If fraud is found, तो क्या करना है? तो to report appropriately on identified and suspected fraud. To fulfill objectives, there are requirements. First of all, we have to identify areas where there can be fraud. To remain professionally skeptic. Remain skeptic. Have a discussion with your team member, because you don't go for audit, your team goes. The team ko batao. If you find this kind of thing, if you see this kind of scenario, there may be a fraud over there. So discuss with team member. And third, risk assessment procedure. What is risk assessment procedure? Procedures to identify the risky areas. Okay, we're trying to identify risky areas. Uske liye procedures. What procedure we can do? 1. Inquire with the management. Management se पूछताछ. So how do management identify the risk? How do they assess the risk related to fraud? What is the process of management for identifying fraud? Have management found any fraud which they communicated to TCWG? And how management has communicated to employees about their views on business practice ethics? So 1, we inquire with management. 2nd, we inquire with TCWG. 3rd, we try to evaluate unusual or unexpected relationships. 4th, we use other information. Whatever we did till now, usme kuch mila. Other information obtained due to audit. And last, we evaluate the fraud risk factors. Okay, now sir, what is fraud risk factors? What is fraud risk factors? Fraud risk factors are events or conditions that motivate someone or pressurizes someone to commit fraud. And see, fraud risk factor does not mean there is a fraud, but whenever there is a fraud risk factor, they are just trying to say these are circumstances motivating someone or pressurizing someone to commit fraud. So wahan pe there may be a fraud. And always your fraud risk factors are divided in 3 parts. Fraud risk factors are always divided in 3 parts. Incentive, pressure. There's an incentive or a pressure to commit fraud. Then there will be opportunity, and third one is rationalization or attitude. See, whenever someone does fraud na, uske piche uska rationalization, he will always say why. Sir, sab karte hain. Sab karte is also rationalization. Everybody does it. Or sir, I was paid less. As I was paid less, ye mera hak hai. This is my right. So this is rationalization. The fraud risk factors are divided in 3 parts, that is incentive or pressure, opportunities, and attitude rationalization. ठीक है, तो what were the risk assessment procedure? 5 things: inquire with management, inquire with TCWG, evaluate unusual things. 4th one is other information which you obtain and evaluate the fraud risk factors. Fine, now you are able to identify the risky areas where there can be a fraud. Okay, now you might identify a risk which can affect one item in financials, or you might identify a risk which may affect many items in financial. If the risk is affecting many items, we say it is a risk at financial statement level. If risk will affect a single class of transaction or a single account balance or a single disclosure, we call it as risk at an assertion level. Financial statement level risk means which affects many items. Assertion level means which affects single class of transaction, account balance, disclosure. If the risk is affecting many items, we come out with an overall response. Many items will be affected. Send a good team, increase the sample size everywhere, add an element of unpredictability in audit. That is what you do in overall response. Achha, if risk is at one item, you need to perform further audit procedure whose nature, timing, extent are responsive to the risk at an assertion level. And now you should also do some audit procedure responsive to the risk of management overriding the control. Management overriding control means management not following control, uske related risk. So they've jumped the control, they're not following. You should do some procedure for that also. Acha, so now you identified risky area, you checked that in detail. After checking, you would have got some evidences. Now you see whether there is a fraud or there is no fraud. If there is a fraud, one option, you leave the audit. You feel it's a big fraud, you leave. 7th point is important. 7th point is important. If auditor unable to continue the engagement. So you found this a big fraud and now you feel no, I can't handle this audit, let me leave. If you are unable to continue, so you should determine the professional and legal responsibility applicable. Remember, whenever you want to leave, ADT 3 is to be filed. So determine the professional legal responsibility applicable in the circumstances, including whether you are required to, whether there is a requirement to report to a person who made the appointment or to regulatory bodies. Okay, consider whether it's appropriate, and if you withdraw, तो पहले determine professional legal responsibilities and determine whether it is appropriate to withdraw. Now, if you are withdrawing, discuss with the appropriate level of management and you determine your professional legal responsibility to report to the regulatory authorities or the person who appointed you. So, agar you are withdrawing, then you communicate to them and you also communicate to management and TCWG. Are you clear with this point? Okay, next. If you are continuing, fraud tha, but आप continue कर रहे हो, तो whenever you find any fraud, you need to communicate to management TCW. Remember SA 260? Communication of audit matters to those charged with governance. So if you find a fraud, you have to communicate to them. ठीक है. You communicate to regulatory body only if it is required by statute. Remember section 143.12, fraud above 1 crore, you communicate. Plus, you take a representation from management, do your documentation. Now, which audit report to be given is not covered here. Which audit report to be given is covered under your 700 series. Acha, now this question is also important. 10th one. Which are the representation relating to fraud auditor should take? Agar question hai, which are the representation related to fraud we should take? So one, I need to take a representation from management that they acknowledge their responsibility for designing internal control to prevent, detect fraud. They've disclosed to auditor everything, not hidden anything, and they've disclosed to auditor their knowledge of suspected fraud involving management, employees, others, and they've disclosed to auditor any allegations of fraud. See, यहाँ पे word था fraud or suspected fraud, यहाँ पे allegations of fraud. Did you understood the difference? So this is important. So point number 7, unable to continue. Point number 10, these are important. Next, let's go to the important questions. Okay, fraudulent financial reporting. Fraudulent financial reporting is basically often done by management overriding the control. What are the techniques by which management override control? The fraudulent financial reporting is by overriding the control. Techniques wherein they override the control. So one, they record some fictitious journal entries last mein. Oh, to last mein fake sales to boost the profit. Inappropriate adjusting the assumptions. They change the assumptions or estimates. They omit, advance or delay the recognition. They omit cash sales not recorded to save taxes. They advance, early record kar rahe hain so that they get more profit. They delay, late record kar rahe hain so that they have to pay less taxes. They conceal or not disclose the facts which are there. They enter into a complex transaction to misrepresent the actual transaction, and they alter the records and the terms of significant and unusual transactions. So this is how management may override control and they do a fraudulent financial reporting. Did you understand techniques by which fraudulent financial reporting is done? Okay, next. Now check. Now see, check. Management is in a unique position to perpetrate fraud by overriding the control. Irrespective of auditor's assessment of risk of overriding control, the auditor shall design the and perform audit procedures. Okay, now see, for there's a risk of overriding control, you have to check it. How do you check it? So there's a risk of management overriding control, you have to check it. How do you check it? So see, one, they might make fictitious journal entries. Last mein, so I need to check the appropriateness of journal entries. Second, they might change the assumptions, etc. So I need to check the estimates, whether there is any bias for it or not. And third, they might change the terms of some significant unusual transaction. If anything is significant, unusual, you are required to understand the business rationale. Why did they enter into such a transaction? So this is actually first point mein, how do management override control? And uske liye how do you check it? That's the second point. Are you clear? This was how do you check it. Next, misappropriation of asset. Misappropriation of asset ke liye, there are variety of ways. Which are the ways in which misappropriation of asset is done? So one, embezzling the receipt. Cash sales not recorded, scrap not recorded, or debtor paid money, teaming and leading wala fraud, embezzling receipt. Stealing physical asset or intellectual property. Causing entity to pay for goods or services not received, put a fake bill, take away money. fake bill डाल के take away money using entity's asset for personal. So this is misappropriation of asset. Again, fraudulent financial reporting, there's no chori. Misappropriation of asset, there is a chori. Next one, circumstances relating to possibility of fraud. Circumstances relating to possibility of fraud. One, discrepancy in accounting record. You find some discrepancies in accounting record. Possibility of fraud. Conflicting or missing evidences. There are some conflicting or missing evidences. Okay, there's a problematic or unusual relationship between auditor and management. You ask for document, they don't give, always they delay, last moment पे देते हैं. So that is problematic relationship between auditor and management and some others. Did you understood? Circumstances relating to possibility of fraud. Okay, now this sixth one is important. See, remember one of the point for identifying risky areas was discussion amongst team member. ठीक है, तो how discussion will be helpful and what matters can be discussed. Two questions. How discussion will be helpful? The one, it gives opportunity for experienced member to share their insight. It allows the team member to exchange information about the business risks. It assists the team members to gain a better understanding for potential misstatements which can be there and provide a basis for the team members to communicate and share new information which they are obtaining throughout the audit. So this is how it will be helpful. Now, what are the matters which can be included in engagement team discussion? Which are the matters? The one, which are the areas where there can be a misstatement? Circumstances where there can be earning management, like they might be trying to basically take the more revenue or less revenue, earning management, external internal factors affecting the company, management's involvement in overseeing the employees with access to cash, etc. Unusual things wala we can discuss. Importance of maintaining professional skepticism. I can tell to everyone, please maintain professional skepticism. So that also can be discussed in engagement team discussion. Types of circumstances where there can be a possibility of fraud, how to add an element of unpredictability, which audit procedures to follow when we are responding to some kind of thing, wo sari cheeze can be discussed. So two questions. One, how engagement team discussion will be helpful and what are the matters discussed over here. Okay, next one, this is important. Adding an element of unpredictability helps in auditing. Adding an element of unpredictability helps in auditing. Now, sir, how do I add an element of unpredictability? One, you try to check those account balance and assertions which are not normally tested. So normally you're not checking this item, now you check it. Time of audit procedure is changed, timing. Method which you use for sampling, वो method आपने change कर दिया and you go on an unannounced basis, different location. The different locations पे आप जाओ, normally you're going on this branch, now you go to some other branch and that too on unannounced basis. That is adding element of unpredictability. Are you clear? Are you clear? Okay, now there's a question. What are the indicators that suggest that significant transaction outside the normal course have been entered for a fraudulent purpose? There's some significant transaction outside the normal course entered for fraudulent purpose. Uske liye, what are the indicators? If I see transactions are overly complex, if I see there's an inadequate documentation, management is putting more emphasis on a particular way of accounting. They are not accepting your way of accounting. नहीं sir, ऐसे ही account होना चाहिए. Or they involve some non-consolidated related parties and previously unidentified related party who do not have a substance of financial strength. So there are transactions with people who do not have a financial strength for this. Like suppose a peon gave you a loan of 10 crores. Hajam hi nahi hoga yaar, peon gave a loan. So that all indicates there are some significant unusual things which are for fraudulent reporting purpose. ठीक है, next one. Okay, now check question 16. This was asked in December 21 exam. Question 16, this was asked in December 21 exam. Risk factors relating to misappropriation of asset. Now, whenever word comes risk factor, risk factor is fraud risk factor. And if you just recall, fraud risk factor is divided in three parts: incentive, pressure, opportunity, attitude and rationalization. The question was actually only the opportunity. So incentive, what is incentive for misappropriating the asset? Why are you going for misappropriation, incentive or pressure? Okay, personal financial obligations are there, that's why you're misappropriating. और adverse relationship with entity and employee, मेरी बनती नहीं है कंपनी के साथ इसलिए मैं फ्रॉड कर रहा हूं. That's okay. Opportunity, what gives you opportunity to misappropriate the asset? The one is the characteristics of item. Items are small, easily stolen. So certain characteristic or circumstances, large amount of cash is there, small size ka inventory is there, easily convertible asset is there. That's one. Second, inadequate internal control. As you are having an inadequate internal control, you are not checking the things properly, you don't maintain proper records ka physical verification timely basis pe nahi hota hai. That's the reason why they are misappropriating the asset. It's creating an opportunity. The opportunity is one due to certain characteristic circumstances. Second is inadequate internal control. Okay, attitude rationalization. Why I am doing it? तो उसके लिए you are not happy with the company. Okay, now your lifestyle has changed. You want to live lavishly. That's why you're doing it. Tolerance, ये सब करते हैं. Tolerance of petty theft is everybody does it. So these are all attitudes rationalization. So when word comes risk factor, it's a fraud risk factor. 3 points should come in your answer. Which are the 3 points? Incentive pressure, opportunity, attitude rationalization. Then this was basically your SA 240. Last, this is okay. Chalo. Coming to SA 250. Coming to SA 250. We need to finish till SA 300. Then we take a break. Okay, SA 250. Consideration of laws and regulation in audit of financial statement. So see, management is required to comply with all the applicable laws. Auditor has to go and check whether the laws has been complied or not. Okay? Now this point is important. Indication that non-compliance may have occurred. I'm not telling non-compliance has occurred, may have occurred. Kab? When there are penalties on company, there's investigation by department, commission paid which appears to be kind of excessive. There are some unusual payment in cash. There's some payment done for professional charges to lawyers, etc., but without specifying reason. So why are you paying to lawyer? You might be trying to hide something. Non-compliance of law. Okay. Unusual transaction with companies registered in tax haven. You purchase goods from one country, your payment is done in another country, that can again be indicator. I'm not telling there is a non-compliance, there may be a non-compliance. Adverse media comment, unauthorized transaction, transaction without proper exchange control documentation. These are all indicators where there may be a non-compliance. Acha, now tell me, who has to comply with the laws and regulation? Management. Okay, for that, what does management do? If question is, what does management? Following procedures and policies help the management. So these are the policies, procedure followed by the management to ensure they are complying with laws. What they can do? One, they can monitor the legal requirement. They can have a good internal control system. They can develop a code of conduct, see that everybody is following, employees are properly trained, and they should monitor the code of conduct. And last, they can have a legal advisor, as well as they can maintain a register for laws and regulation so that they don't skip any of it. So what can management do to ensure they are complying with laws and regulation? This is the answer. Okay, now what is auditor's responsibility? Okay, can auditor be responsible for identifying all the non-compliances? No. We cannot be responsible for identifying all the non-compliance because many laws are operational in nature, we don't know about it. Sometimes non-compliance is in nature of fraud, kind of hidden, we are not able to identify. And sometimes litigation goes off, whether it's a non-compliance or not, court has to decide. So we cannot be responsible for all the prevention, detection of all non-compliance of laws and regulation. So what is our responsibility? Two parts may divided. One, for laws which have a direct effect on amounts and disclosure in financials, and laws which do not have a direct effect on amounts and disclosure. Okay, for the laws which have a direct effect on amounts and disclosures, you are required to obtain sufficient appropriate audit evidence about its compliance. But for the laws which do not have a direct effect, operational laws, I don't know, okay. So I'm not telling you to obtain sufficient appropriate audit evidence. I'm just telling you kya? You are required to perform specified audit procedure which will help you to identify instances of non-compliance. Okay, for financial laws, you obtain sufficient appropriate audit evidence, they are complied. For non-financial laws, you are just required to perform a specified audit procedure which will help you to identify instances of non-compliance. Now, sir, which are the specified audit procedure? 1. You inquire with the management. And number 2, you inspect the correspondence between the company and the regulatory body. This is what you need to do for other laws. Okay. Now, what are the procedure when non-compliance is discovered? Okay, that was to identify non-compliance. Ab non-compliance mil gaya. Ab non-compliance mil gaya. You try to understand the nature of non-compliance, circumstances in which it happened, and because of that, what will be wrong in financial statements. So evaluate karo, because of that what is wrong. Now you communicate to management if it is not properly reflected in financial. If non-compliance is not properly reflected in financial, you communicate to not management, to shareholder actually. To management you have to communicate every time. To management every time communicate. Users you communicate if they are not properly reflected in financials. Management have to communicate every time. Users I'll be communicating if it is not properly reflected in financials, and to regulatory body I have to tell only if it is required by statute. Achha, normally withdraw from engagement whenever there are material problem, but if this is a non-compliance of law and the management doesn't take remedial action which you feel is necessary, then you can withdraw even though the non-compliance today is immaterial. Are you clear? Are you clear? Okay, there was a question while verifying the employee record, you found there are child labors. They tell you, sir, you don't check it. See, for other laws, I have to perform that specified audit procedures which will help me to identify instances of non-compliance. And here I have already identified an instance of non-compliance. If I already identified an instance of non-compliance, I need to communicate to management, I need to communicate to users if it is not properly reflected in financials. Now, they have a child labor, penalty will come up. If provision for penalty not done, you are required to inform to users and you may modify your overall audit report. Next one, this question is good. If I was setting a paper, ye aata. CA Jazz is the CFO of the company. CA Jazz is the CFO of the company. Can I say he's working for the company? Okay, now what they're telling. CA Jazz wants to implement policies procedure that can assist him in prevention detection of non-compliance. Okay, the management can implement which policy procedure? The answer is policies procedure to be implemented by management. That's the question. Clear, Che? Okay, you're suspicious about transaction. Indicate the areas where you have to look to understand. So basically they're telling indicators of possible non-compliance, that is to be answered. We are required to answer the indicators of possible non-compliance. Okay, correct Prateek, that was correct. Now SA 260, 250 over, 260, 65, 99, 300. Then we take a break. Okay, 260, communication of audit matters to those charged with governance. Now see, whenever you're doing audit, any important matter comes up, you communicate with those charged with governance, only important ones. TCWG are not really interested in small things, they're just interested in big things. And whenever I communicate to them some important matter, they can take actions on a timely basis. Okay, so this essay focuses on communication between auditor to TCWG. There should be effective two-way communication. Just say the auditor and TCWG can understand the matters related to audit. Auditor can obtain information relevant to audit from TCWG, and TCWG can fulfill their responsibility for discharging what? The oversight of financial reporting process. Okay. Now, what is management? Those who are having executive responsibility of conduct of business. Okay, what is the TCWG? Those who have responsibility for giving strategic direction to an entity and who are responsible for the entity. They are TCWG. Now, over here, whenever the essay says that I need to communicate the significant matters arising out of audit to those charged with governance, the question comes up, whom to communicate, what to communicate, how to communicate. Whom, what, how. Whom to communicate is relevant person. It will be based on your professional judgment to see the organizational structure, governance structure, and then you decide. Achha, if you have communicated something to a subgroup, imagine a committee or individual director, if I have communicated something, should I again communicate it to overall BOD or not? That's again based on your judgment. Acha, if I have communicated something to basically a subgroup, if I have communicated something to management, and now as per this essay I have to communicate with TCWG, now all the people in management are same in TCWG, no need to communicate again. If all are same, no need to communicate again. Important is what to communicate. Okay, what to communicate is 4 things. 1, the auditor's responsibility. Second, the plan, scope and timing of audit. Third, significant findings. Now, there can be a question here. Significant findings. Significant findings mein there are 2 things. One is the significant difficulties which you encountered. आपको जो difficulty हुई. And second is the significant matters which came up during audit. So there are 2 things. Significant findings के अंदर 2 things are there. The significant difficulties encountered by auditor. There were delay in management, unavailability of entity's person. They took a very long time basically to give the documents. There was a huge efforts required every time to obtain sufficient appropriate audit evidence. Restrictions were imposed by the management. Unwillingness of the management to allow you to meet TCWG in person. वो सारे, they are difficulties which you encountered. Then significant matters which came up, which you have discussed with management. You already discussed with management, but they are big ones. The big ones I also have to communicate to TCWG, like significant event or transaction which occurred, business condition affecting risk of material misstatement, some consultation regarding accounting or auditing matter, some discussion basically relating to application of accounting standards, etc., where I have a disagreement with the management. So this all things again I have to communicate to TCWG. The 2 things, significant difficulties which you faced and significant matters which were discussed with management but they are not resolved with them, I am coming to you. Did you understood? If question is on significant difficulties, only write the above points. Fine. And independence. Independence is only for the listed entity. For the listed entity, you're required to make a statement that the engagement team and others have complied with the ethical requirement relating to independence. All relationship which have a bearing on independence have been communicated, as well as the related safeguards have been communicated. And how to communicate it, basically again nothing is given over here how to communicate. It's out of 4 matters. Out of that 4 matters, what you have to communicate, the first two basically, the first 2 is your first one kya tha? That is auditor's responsibility, plan, scope and timing. They can be oral, but generally they'll be included in letter of engagement. The last two significant findings and the auditor's independence has to be in writing. But to clarify on this, that might be written in letter of engagement only, what to communicate, whom to communicate, how to communicate. Okay, this was basically your SA. This is fine. Let's see if any good questions are there. No. 260 mein it's fine, no good questions. Now going to essay 265. Now 260 we communicate only to TCWG, and 260 we can communicate any matter in which TCWG will be interested. 265 we communicate to TCWG and management, and we communicate only one thing, the deficiencies in internal control. What do we communicate in 265? The deficiencies in internal control. This essay doesn't tell you how to check control. This essay doesn't tell if controls are weak, what extra checking is to be done. No. This essay just says if you're checking control, you found out a deficiency, you communicate. If it's a normal deficiency, to the management. If it's a significant deficiency, it should be communicated to TCWG. Fine. Now, what do you mean by the word significant deficiency? It's a deficiency. It's a deficiency which in auditor's professional judgment merits the attention of those charged with governance. The one which you have to bring it to TCWG, that is your significant deficiency. Now, requirements are very simple. Normal deficiencies you communicate to the management, and that you can communicate orally also. Significant deficiencies you have to communicate in writing, first to management, then to TCWG. And now, whenever you are communicating the deficiencies, give the description, explain their potential impact, and you also give sufficient other information so that they are able to understand the context of your communication. You give sufficient other information so that they are able to understand the context of your communication. Now my question, if I am communicating some deficiency in internal control, I am required to describe the deficiency, explain the potential impact. Do I need to quantify the impact? Do I need to quantify the impact? Answer is no, the quantification is not required. You may give suggestions for remedial action, but a quantification is not required. And to decide whether it's a deficiency or not, you communicate with appropriate level of management and then you decide, yahan pe deficiency hai ya nahi. Okay, now there are two good questions. One, examples of matters to be considered while deciding it's a significant deficiency. Which are the matters which I'll consider to decide whether it's a significant deficiency? Okay, the likelihood of deficiency leading to misstatement in future. Okay, future mein fir se iske karan problem can come up, so it's a significant. Suspectability of loss, the complexity of determining the estimated amount. Okay, the financial statement amount which is exposed to the deficiency. How much financial statement amount is exposed to the deficiency? The volume of activity. The importance of the control relating to the financial reporting process. So because of this deficiency, okay, the control mein there is a deficiency. How much important is this control for the overall financial reporting process? Frequency of the exceptions detected and interaction of this deficiency with other deficiency. Okay, so examples of matter which I'll consider while deciding it's a significant deficiency or not. Likelihood of deficiency leading to misstatement in future, suspectability of loss or fraud because of this, subjectivity and complexity of estimated amount, financial statement ka total amount exposed to the deficiency, the volume of activity which is exposed, importance of this control in the overall financial reporting process, the cause and frequency of the exceptions as a result of the deficiency. Deficiency के कारण कितना exceptions आ रहा है, कितना problems आ रहा है, and interaction with this deficiency with others. इसके कारण whether other controls में there will be a problem. So these are examples of matter. Now second question, check. Indicators of significant deficiency. So the two separate things. Which are the matters which I consider in deciding whether it's a significant deficiency or not? That's different. Indicators of significant deficiency. If I see the control environment is weak, I say it's a significant deficiency. If there's an absence of risk assessment process within the entity, every entity should have their own risk assessment process. Entity ka risk assessment process. If there's an absence of risk assessment process, again I say it's a significant deficiency. ठीक है. Evidence of ineffective entities risk assessment process. पहले था absence, now it is there but ineffective है. तो भी ineffective response to identified significant risk. See, there's a difference between the word significant deficiency and significant risk. Significant risk is a identified risk wherein it requires a greater special audit consideration. So you need to check something in more detail. So there was some significant risky area, chances of fraud and error are more, still we are not doing anything over there. So we are not putting extra control, वो significant deficiency in internal control हो जाएगा. Okay, misstatement detected by audit procedure but were not detected by whom? The entity's internal control. And some misstatements of basically some prior period items basically are there. They are fraud or error. Fraud is actually shown as prior period item. If that is done, that is wrong. The misstatement due to fraud error shown as prior period item, wo galat hai. And evidence of management's inability to oversee the financial statements. If management is unable to see properly the financial statement, so these are all indicators of significant deficiency. So one is examples of matter which you consider to decide it's a significant deficiency, and indicators. If these are there, these are indicating it is a significant deficiency. I hope you are clear with both the question. Okay, next one. Now see, whatever deficiency in internal control we identify, we are required to communicate with management, TCWG, we send a letter to them. The letter relating to deficiency in internal control, that's called letter of weakness. Now question is, what are the points you keep in mind while drafting a letter of weakness? The points to be kept in mind, the letter should list down only the weakness, can offer the suggestions for improvement. It is only weakness, not the strength. Letter is a valuable reference document for the management and it will minimize the legal liability of auditor later on If someone says auditor ने कुछ नहीं किया, we say we already given a letter of weakness to them. ठीक है. Fine, this was your SA 265. Come to SA 299. Keep smiling. SA 299. Joint audit. Now, joint audit is there are more than one auditor for the same entity. One entity, more than one auditor. Achha, one is a main auditor, other is a branch auditor. Are they joint auditors? No, they are not joint auditors. Achha, whenever there are joint auditors, how should be audit planning, risk assessment, allocation of work? So first, the engagement partner, key team members from all the joint auditors should collectively come together for planning. The engagement partner, key team member of each of the joint auditors should come for planning. They should establish an overall audit strategy. And basically, this point is important. They should discuss and develop a joint audit plan. So they should establish a overall audit strategy, and they should also discuss and develop a joint audit plan. Okay, whenever they are developing a joint audit plan, which are the areas they will cover? So in developing a joint audit plan, the joint auditor shall identify the division of areas, common areas. So they will try to understand the scope of each of them. They will ascertain the reporting objective. They will try to identify which are the areas which are significant in directing the team members' efforts. Fourth, they will also have the preliminary engagement activity. Remember, there are 3 preliminary engagement activities. The result of the preliminary engagement activity they will cover, and the nature, timing, extent of resources necessary. Acha, if question comes, in developing a joint audit plan, the joint auditor shall consider what? So actually, these are points of strategy. When you're developing a plan, you consider the points of strategy and then you develop. When you're developing a plan, you consider the points of strategy and then you develop. So what are the points which you will cover? One, they will try to understand the scope, the reporting objective, which are the areas which will direct the significant efforts of your team member, results of the preliminary engagement activity, and last, the nature, timing, extent of resources required. Okay, they will have a common letter of engagement. I repeat, they will have a common letter of engagement which will be on company's letterhead. So they will obtain a common letter of engagement from the management. And now, how will be the responsibility? See, normally each joint auditor is responsible only for the work allocated to him. However, for the following things, they are jointly and severally responsible, work not divided, decision taken by all joint auditor while doing a joint planning. So, usme if they have done a wrong decision regarding materiality, etc., all are responsible. Matter coming to one joint auditor, you discuss with others and then they have taken a collective decision, so all are responsible. Matter related to statute, if statute is not complied, all are responsible. Presentation disclosure is not as per schedule 3, all are responsible. And audit report is not as per the statute, all are responsible. So financial statement not as per requirement of statute, presentation disclosure not proper, or audit report not as per statute, all are responsible. Okay, now question, conclusion. Out of 3 joint auditor, 2 wants to give clean, 1 wants to give modified. Can I have a majority? No. So if they are able to arrive at a consensus, one report, everybody signs. But if they are not able to arrive at a consensus, what will happen? Each joint auditor can give their own separate report. If 2 wants to give clean, they can merge. 1 wants to give modified, he can give a modified separately. Okay, Ujjwal has a question, sir. If any one joint auditor wants to give a separate engagement letter, is it possible? Dear, engagement letter will be common. Reason, in the engagement letter, the company itself will write that this is work of yours, this is work of yours, this is work of yours. So which work is given to whom? Like you are handling this state, you are handling this state, you are handling this state. So it becomes easy for the company because they know what is there. So it won't be a separate letter of engagement. Letter of engagement is one. But reporting ki time, when you're giving an audit report, if you're not able to arrive at consensus, you can give your own separate audit report. Acha, this is important. Whenever, suppose there are 2 joint auditors, one is given clean, other is given modified. So can I say there's other joint auditor who is given a different opinion? So when I'm writing my audit report in my other matter para, I need to put down. In my other matter para, I need to put down that the other joint auditor has given a separate report that is to be there. So this is your clarifying about the auditor's responsibility, auditor's report. TK, this was your SA 299, last essay before break, SA 300. Last essay before break, essay 300. Okay, essay 300 is on planning. Advantage of planning is fine. That's an inter-level question. I directly go to the requirements. Okay, in your requirements, in your planning, first of all, we develop an overall audit strategy. Then we go to detailed plan. But before that, before the strategy is also done, we have to go for preliminary engagement activity. So 3 preliminary engagement activity you need to check. 1, whether the policy for continuation of client or acceptance of client, whether that has been followed or not. See, if at all policy for continuation of client is wrongly followed, after you plan, you start audit, you have to leave in between. The first, check whether policy for continuation of client is properly followed. Second, whether you'll be able to comply with ethical requirements, including independence throughout the audit. And third, you see the terms of engagement, and based on that, now you start your strategy. The strategy kya hai? The strategy sets the scope, timing, direction of audit, and it guides the development of a detailed plan. And strategy includes what? That 5 things. Strategy includes what? The 5 things. So check over here, next page. In establishing an overall audit strategy, the auditor shall identify the characteristics that define your scope, what all you need to cover. Ascertain the reporting objective. Do you need to give report only at the end? Do you need to communicate report on quarterly basis? Do you have a frequent meeting with TCWG? तो वो सारी चीजें. Ascertain your reporting objective. See the factors which will direct your team members' effort, consider the result of PA, and determine the nature, timing, extent of resources required. So see, strategy ends at determining nature, timing, extent of resources required. Now what that resources will do? So articles will do what, how, when, that all comes in your detailed plan. So which audit procedure to be done, when to be done, who will do it, who will review it, how we will do it, that all will be in detailed plan. Strategy ends at determining nature, timing, extent of resources required. Okay, just come up. The process of establishing strategy assists the auditor in, the strategy assists the auditor in determining nature, timing, extent of resources required. So check. Employment of qualitative resources. So which type of resources do you need? Nature. Allocation of quantity of resources. Quantity. कितने आपको चाहिए article? That's quantity. Timing. तो nature, ये था extent, quantity. Timing is next timing, the nature, timing, extent. When do you need that articles and how you are going to manage the resources? So it talks about employment of qualitative resources, its nature, allocation of quantity of resources, extent, and timing is basically timing. The nature, timing, extent of resources required and how you are going to manage them. What all that resources will do, that all comes in a detailed plan. To check. The overall audit strategy assists auditor in marshalling human resource. Upar wala answer. Now check this. In establishing overall audit strategy, the auditor shall ascertain the reporting objective. You ascertain the reporting objective. Elucidate cases by which auditor can ascertain the reporting objective. Now, question is only on this B point. So whenever you are basically coming up with a strategy, you cover up 5 things. Usme B point, ascertain the reporting objective, the timetable. Do you have a meeting with TCWG? The discussion with TCWG regarding the expected timing, and discussion with management regarding the expected communication. So you understand your reporting objective. Do you need to give only at the end or in between? Do you have a regular meeting? How you are required to give? So that all is basically the answer. Are you clear? Now, after the audit strategy is built, we go to the detailed plan. Now, detailed plan may first, it will include nature, timing, extent of plan, risk assessment procedure. The procedures to identify risk area. So how will we identify risk area? Uske liye the plan, risk assessment procedures. Plus nature, timing, extent for further audit procedure for assertion level. Each and every item. Sales. How to check, who will check, when he will check, who will review, when he will review, which procedure he will do, all that things. Same way for purchase, same way for salaries, same way for assets, same way for liabilities. Plus other planned procedure to ensure the audit complies with SA. So whatever plan you have done for other procedures to ensure the audit is complying with SA. So simple words, which audit procedure to do, that all comes in your detailed plan. Strategy ends at deciding nature, timing, extent of resources required. And one more, basically the nature, timing, extent of direction, supervision and review which will be required. Now nature of direction, supervision, review which will be required depends on nature of direction, supervision, review which will be required depends on size and complexity of entity, the area of audit, risk of material misstatement kitna, and how are your people, the competence of your team members. So kitna unko direction, supervision, review required. One is dependent on complexity, area of audit, risk kitna hai, and fourth one, how are the articles. ठीक है, and as and when audit progresses, you may be required to revise your overall audit plan. अच्छा, if plan needs a modification, first revise the strategy, then you can revise the plan. तो आपको check करना है whether the strategy needs a revision or not. Based on that, you revise the strategy first, then you revise the plan. Are you clear? Are you clear? Okay, now this is a question which is documentation related to planning. This is documentation related to planning. The summary of discussions which you had with TCWG, documentation of audit committees, pre-approval of your services. They gave you that what you need to do. Documentation of access letters. Management would have allowed that we will allow you to access all these things. वो उसका documentation. Other communication regarding your scope, etc. Audit report, previous wale you document, and other report as specified in engagement things. So this is documentation related to planning phase के. ठीक है, if it's an initial audit engagement, in the preliminary engagement activity, I don't have to see policy for continuation of client, I have to see the policy for acceptance of client. And number two, if it's initial audit engagement, I need to communicate with the previous auditor mandatorily. Next word is audit program. Acha. Now sir, audit program kya hai? Actually, in simple words, it's a detailed plan of action. Simple words means it's a detailed plan of action. But now, I cannot write in that way. So it's a detailed plan of applying the audit procedures in a given circumstances with instruction for appropriate technique to be adopted for accomplishing the audit work. The simple words, whenever you are telling your articles, you have to do this work on this day, this way, that is called audit program. It's a detailed plan which will describe who will do what work, when he will do, how he will do, that all will be written over here. That's audit program. Achha, can I have a common audit program for all my audits? Nahi. Every business which I audit is different. The common audit program will not be there. The important matters which are there in formulating audit program. So audit program banane ke liye, one, the nature of business you should see. Second, it should be based on overall plan. So based on your overall plan, the program comes. So plan pehle ready karo, then the detailed program will come up. You have to see the internal controls, how are they? If controls are weak, I need to do more checking. You have to build a program accordingly. Size and structure, size of organization, the structure of management. Information as regards organization. Now see, we need to understand what is the information available. See the history of the company, kya usme koi frauds the past mein, all that things, and based on that you make it. And accounting and management policy, are they following AS, are they following Ind AS, wo sab dekhte hue, then you basically frame your audit program. So if question is formulating audit program, headings are important. So important matters which you have to consider in this regard: nature of business, overall plan, system of internal control, accounting procedure, size of organization, unka structure, information as regards the organization available, client ka history, unka business, etc, etc, accounting and management ke policies. ठीक है. Drawing up audit program is fine. Just going over here, circumstances where audit program needs to have been altered. Okay, when I have to alter the audit program, the volume is substantially increased. So volume of the company is substantially increased. Second, it is discovered that internal control are not effective as assumed. So what you assume, the internal controls are not like that. You have to go in detail kind of thing. There's an extraordinary increase in debtors or stock. There's extraordinary increase in debtors or stock, or suspicion came up in between. Now you have to change your audit program. Are you clear? Circumstances that would lead to a change in audit program. Okay, now let's see over here. This question, W the auditor asked the finance and audit head of the company only. I am telling the finance and audit head of the company only to make a audit plan for me. No. Audit plan is auditor's responsibility, not management's responsibility. ठीक है. Next we have, now see, A and Co are the auditor of Great Airways. As an audit partner, what factors shall be considered in development of overall audit plan? Achha, if the question comes, what are the factors considered in developing a joint audit plan? Or joint audit plan mein the 5 things related to strategy comes. If you remember joint audit plan mein, they had written over there 5 points related to strategy. Here it's the same thing but in a detailed manner. Yeah, actually the same thing hai but different manner mein hai. So what are the factors considered in development of a overall audit plan? Plan banane ke liye what I'll consider: the terms of engagement, the nature of timing of reports, applicable statute, the accounting policies, what are the significant audit areas, material cheese kisko bolenge, degree of reliance to be placed on accounting system internal. I'll see all these things and based on that I'll come up with a audit plan. But if question is what are the factors affecting development of a joint audit plan? In your essay 299, 5 point of that strategy was given. 1. We consider basically the reporting objective, we consider the scope, we consider the matters which impact our where significant efforts will be required, result of PEA, and 5th, nature, timing, extent of resources required. So that answer was to be written. But if the question is here, just a general one, factors affecting development of overall audit plan, this is the answer. Same hai, different way mein it is given. Fine, this is fine. Next one is also fine. Done. So SA 300, there are no other important questions. We discussed all the important ones which were required. Okay, so we completed from SA 200 to your SA 300. Now we are taking a break. We take a break. After the break, we'll start with SA 315 and we'll finish off till SA 540 and then we'll again take a break. So taking a break of 30 minutes is 9:45. We are meeting back. कितने बजे मिलते हैं? 10:15. It's 9:45. We are meeting back at, चलो 5 minutes कम कर देते हैं. We meet at 10:10. So there's a break till 10:10. We'll meet at 10:10. Already we are learning we are going 10-15 minutes late. So 10:10 we are meeting and we are moving ahead. Enjoy your break. See you after the break. Achha, there's a question from Hitu that, sir, can CAP charge the fees on base of percentage of bank loan raised under? Achha, Hitu, for bank loan, if at all I'm helping basically to come up with a bank loan is not covered under fundraising. Fundraising के अंदर IPO, FPO, debenture issue, वो सारी चीजें are covered. तो bank loan में percentage of loan is not allowed. If I charge based on percentage of loan, it is not allowed. Are you clear, Hitu? Then, chalo, see you at 10:10. Till then, enjoy your break. Material which you referred, please don't go searching for new material now. The material which I am using is the regular batch material which I took at Unacademy in April, May, June 22. So in the April, May, June month, I have taken a batch. This is the regular batch material. Now, SA 315 is identifying and assessing the risk of material misstatement by understanding the entity, environment, internal control. So see, 240 also, sir, we identified risky area, but 240 was only for fraud. 315 is general, whether for fraud or error. And here you try to identify risky area just by understanding the entity, environment, internal control. And when you are able to identify risky area, it will provide a basis for designing and implementing appropriate responses. Fine, this all things are okay. I just go to few important definition. Internal control. Achha, internal controls are policies, procedures adopted by the management which assist the management in fulfilling management's responsibility or management's objective, like orderly conduct of business, adherence to management's policy, safeguarding asset, prevention, detection of fraud and error, complying with laws and regulation, accurate completeness of accounting records. Fine. Now, the basic purpose of internal control is to segregate authorization, recording, and custody function. The one who authorizes a transaction, one who records a transaction, and one who have physical custody of the asset. That three guys has to be different persons. Okay, now risk assessment procedure is procedure to identify risky area. This standard, we identify risky area by understanding entity, environment, internal control. So whatever audit procedures are performed to obtain understanding of entity, environment, internal control, that will be a risk assessment procedure. Significant risk is a risk which requires a special audit consideration. The significant deficiency in internal control which merits attention of TCWG. Significant risk which requires a special audit consideration. TK requirements may we first of all, we try to identify the risky areas. Now how? How we identify risky area? By inquiring with management, by doing some analytical procedure, or by doing some observation inspection. TK. We discuss among team member, this is similar to your SA 240. Now, once you are done with your risk assessment procedure, you will have a required understanding of entity, environment, internal control. So what all understanding? What all understanding of entity, environment, internal control you should have? This essay, we are identifying risky area by understanding entity, environment, internal control. How to obtain understanding? Yeah, inquire with management, analytical procedure, observation, inspection. What all understanding is the third point. What all understanding is the third point. First, we try to have understanding about entity and environment. That is simple. Then the internal control. There are 5 components of internal control. Which are the 5 components of internal control? 1, the control environment. Second, the entity's risk assessment process. Third, information system relevant to financial reporting. Fourth, other control activities relevant to audit. And the fifth one, how does the entity monitor the control? The 5 components of internal control are there. According to me, this control environment is important. Okay, and see, we just have to obtain understanding of everything. This essay is only about obtaining understanding. You have to obtain understanding of the control environment, and in obtaining this understanding, the auditor shall evaluate. हमें evaluate करना है whether the management has created a culture of honesty and ethical behavior, and the strength in the control environment are collectively providing appropriate foundation. See, if environment is strong, it gives a foundation for the other controls to work properly. Okay. The control environment includes attitude, awareness, actions of TCWG, and it includes governance and management function. How is the hierarchy, etc. If there's someone sitting over you, you will definitely follow the rules, so environment becomes kind of stronger. It sets the tone for organization, influencing the control consciousness amongst the people. Fine. Second, entity ka risk assessment process. Every entity should have a risk assessment process. This is related to risk related to their business. It's not risk of fraud or error. It's business risk related. Okay. Third one is important. Information system relevant to financial reporting. Okay. The one of the component of internal control is information system relevant to financial reporting. How the financial reporting takes place, we have to understand. We have to understand the major classes of transaction. We have to understand the procedure by which transactions are initiated, recorded, processed, reported. We need to understand the accounting records which are maintained. We need to understand how the system captures information, how the system captures events and condition, how the system is capturing your events and condition other than the transaction which are significant. The transaction capturing is easy. Event condition कैसे capture हो रहा है? That you need to see. The overall financial reporting process, the control relating to journal entry, the overall how is financial statements prepared, we need to obtain understanding, entire process. Achha, we need to obtain understanding of control activities relevant to audit. See, there's a difference between the word control objective and control activity. The objective is basically to find out fraud or error, or objective is to safeguard the asset. वो objective है. To achieve the objective, there are some activities conducted. We put a CCTV camera, we have work of one person checked by another. वो सारे activities हो गए. तो control activities which are relevant to audit, you obtain understanding. ठीक है. Now, once you obtain understanding of entity, environment, internal control, you are able to identify the risky areas. Okay, you'll be able to identify whether the risk is affecting one item or many items. If risk is affecting one item, we say it is risk at an assertion level. If risk is affecting many items, we say it is risk at a financial statement level. And don't just identify risk. This is important. Fourth point. So for the process of identifying and assessing the risk of material misstatement, don't just identify risk, assess the identified risk, evaluate whether it is affecting financial statement as a whole or is it basically for one thing, relate what can go wrong at assertion level. So यहाँ पे we tried to relate whether it's a more pervasively, then we try to relate what can go wrong at an individual level and consider the likelihood of misstatement and also consider the magnitude of it. So don't just identify risk, assess whether it is pervasive. Third, what can go wrong at an individual level and what is the likelihood of it going wrong, and if it goes wrong, how much impact will it have? Okay, now next is risk which requires a special audit consideration. That is your significant risk. The risk which requires a special audit consideration, significant risk, they arise due to non-routine transaction, judgmental matter. Non-routine transaction, judgmental matter के कारण they are arising. ठीक है. And your significant risk are inherent risk with higher likelihood of occurrence or higher magnitude. तो उसका occurrence के chance ज़्यादा है, या if they come, they will have a huge impact. They are all significant risk. Okay, following are always significant. Which are always significant? If there's a misstatement due to fraud, always significant, and transaction with related party outside the normal course. So significant transaction with related party outside normal course, they're always significant. Important is this. So to decide whether it's a significant risk or not, auditor will consider the following. So when we are deciding whether it's a significant risk or not, what do we consider? Whether it's a risk of fraud, whether it's a risk relating to recent economic accounting development, complexity of transaction, whether risk involves transactions with related party, the degree of subjectivity involved, and significant unusual transaction, whether it involves a significant unusual transaction. So to decide whether it's a significant risk or not, we will be checking these points. Did you understand? The question comes, whether it's a significant risk or not, kaise pata chalega? We have to see these factors. Fine. Now, illustration 1, meaning, objective, structure, inherent limitation of internal control system. Meaning we already did. Objective is fine. Inherent limitation, I'm coming to it. So see, in spite of you having a very good internal control, can I say there's still possibility there might be a fraud or error? Reason, there might be collusion amongst employee. That's one. Second, we develop an internal control only for routine things, something which is unusual, uske liye controls are not there. Third one, many times we don't put up a control because the cost of putting a control will exceed the benefit. So cost will exceed the benefit. उसके लिए यहाँ पे not exceed करो, तो cost exceeds the benefit which are derived. Human error के कारण or circumvention, people are coming together, collusion. There's a circumvention of internal control, controls are not followed through collusion which is there. And the person responsible for exercising control, he himself abuses it, or there's a manipulation by the management in the transactions of estimate, judgment. So even though you have a good control, there is a possibility still there may be a fraud and error. Inherent limitations of internal control. Next we have, okay, now this question is a good one. Okay, by inquiring with different people, you get different level of information. The auditor's inquiry is obtained from management as well as for those responsible for financial reporting. See, what information auditor can obtain from inquiring of others within the entity and employees with different level of authority. With different people, if you inquire, what is the different information which you will be getting? If I inquire with TCWG, I can understand environment. If I inquire with internal audit person, I can understand the internal audit ke procedures and how are the internal controls. If I inquire with the employee who is initiating, processing, recording complex transaction, I can understand appropriateness of their accounting policies for that. If I inquire with the in-house legal counsel, I'm able to understand whether they're complying with laws and regulation. If I inquire with marketing and sales guy, I'm able to understand the sales trend, the marketing strategies, etc. So can I say when I inquire with different people, I get different information? That was the question which was there. Next, we have examples relating to IT specific risk. Okay, IT specific risk to an internal control, IT related risk. The one, inaccurate processing of data. तो system is not processing properly. Unauthorized access to data. Possibility of IT personnel getting access or privileges beyond those necessary. Remember, a super user. So there is a guy who is basically the head. He has access to everything. Unauthorized changes to the data in master file. Unauthorized changes to the systems or program. ये data change किया, ये system or program change किया. Failure to make necessary changes to system when required. The system needed a change, we are not changing. Inappropriate manual intervention. Possibility loss of data. Possibility of loss of data due to power failure or some corrupt virus aa gaya, something like that. So these are IT related risks. Understandable? Okay, next. See, entity ka risk assessment process. I told you every entity has a risk assessment process and they try to identify the business risk. The entity's risk assessment process is not to find fraud or error in accounting. It is for entity ka business risk. ठीक है. Elucidate the circumstances in which the risk can arise or change. अच्छा, तो are they talking about fraud error का risk or are they talking about business risk? Okay, तो give circumstances in which the business risk can arise or change. क्या लिखना है? Give circumstances in which business risk can arise or change. So due to change in operating environment, due to some new people hired, there might be some business risk. Revamped information system. From Tally, you moved on to SAP. SAP is not working properly. Everything is kind of mismatch. Rapid growth, new technology, new business model, corporate restructuring, expanded foreign operation, new accounting pronouncements. So because of this, the business related risk can arise or change. Did you understood? Okay, next. Control environment, we already did. What are the elements of control environment? Control environment, we already did. Elements of control environment. The elements of control environment is, it includes communication, enforcement of integrity and ethical values. So how is the top level management communicating and how they are enforcing integrity amongst the people? If I enforce integrity amongst people, people are having integrity, environment is stronger. Commitment to competence. Participation by TCWG, their attitude basically. Management philosophy and operating style. How is management managing the business risk? What is their attitude towards financial reporting? Do they follow all rules, regulation? Yes, sir, chalta hai. If they have attitude chalta hai, environment is weak. So that's organizational structure, proper hierarchy setup, environment will be strong. Assignment of authority, responsibility. The guy who has authority, responsibility, the appropriate authority should also be given. And human resource policies and practices. Okay, do you do proper recruitment, training, evaluation, promotion, counseling? Yes, sir. If you have a proper human resource policy, everybody will be happy. Then there will be a good culture of honesty. Good culture of honesty, environment will be good. Did you understood? Your points relating to elements of control environment. Again, communication, enforcement of integrity, ethical values, commitment to competence, participation by TCWG, management philosophy, organizational structure, assignment of authority, responsibility, and human resource policies and practices. Next, we have, now check this May 21 question. What are the control objectives you will like accounting control system to achieve? कौन से control objectives you want accounting controls to achieve? तो accounting controls में कौन से objective मेरे को achieve करने हैं? All transactions are recorded, all recorded transactions are real, they are properly valued, they are recorded on timely basis, they are properly posted, they are properly classified, they are properly summarized. Which objective you want accounting controls to follow? Did you understood? Accounting controls. If accounting control was not written, what internal control was written, the answer would have been different. Prevention, detection of fraud and error, safeguarding of asset, timely preparation of financial statement, वो objective आ जाते. But this is which objective you want accounting control system to follow. ठीक है. Now, which are the different types of control activities? I told you control objective is different. To fulfill objective, we do activities. What are the control activities? One, performance review. We have a performance review, prepare budgets and actual or work of one person checked by another. Second, information processing. Information processing is whether the input data is correct or not. तो उसके लिए some general IT controls, application IT controls might be used. Physical control. You put a security guard so that people are not stealing. That's physical control. You put a CCTV camera, people are not stealing. वो सारे physical control. And we do segregation of duties. So these are control activities. Did you understood control activity? Performance review, information processing, physical control, segregation of duties. Okay, next, what do you mean by the word internal check? What do you mean by the word internal check and aspects to be considered in framing a system of internal check? Internal check क्या था? The internal check is what? It's a check on your day-to-day transaction which operate routinely as a part of your system where work of one person is checked by another person and no person is allowed to carry out the work from origin till its end. वो था internal check. Internal control system is a broader term. Internal check is a part of it. But यहाँ पे no person is allowed to carry out work from origin till end and the work of one person is checked by another person. So aspects. Okay, so if question is the effectiveness of internal check depends on clarity of responsibility, division of work, standardization, appraisal. Work of one checked by another, appraisal. That all. ठीक है. Now aspects to be covered in system of internal check. This is important. No person should have a complete control over important aspect. Staff ka duties should be rotated time to time. Staff should be encouraged to go on leave at least once in a year. When you go, someone else will do your work. If you hide something, that will be found out. Person having physical custody should not have access to the records. Okay, there should be an accounting control, periodic inspection of physical assets. So physical whatever assets, inventory, uska periodic inspection should be done. Mechanical devices should be used to prevent losses like CCTV camera, etc. They are mechanical devices. Budgetary control should be exercised. Budgets compare with actual, etc. Whenever inventory counting is going on, your production sales should be halted. And financial and administrative power should be divided judicially. This is aspects considered in framing a system of internal check. Okay, let's go ahead. Technique for evaluation of internal control. There are 4 things: narrative record, then we have a checklist, then we have internal control questionnaire and flow chart. Important, directly come to flow chart. Okay, the flow chart is a graphical presentation of company's internal control system. It gives you a bird's eye view how the transaction flows. And if you just see over here, a properly drawn flow chart can give you a neat picture of the whole activity, how the flow of documentation activity is there. It can show what point of time the document is raised internally, number of copies in which it is raised, what are the intermediate stages in which the document flows, the distribution of document to various section, who authorizes what thing, वो सब वो chart में लिखा आएगा, filing of document and final disposal of the document, where does it go. So good flow chart will help you understand the overall this many things. Did you understood flow chart? Did you understood flow chart? Okay, now 15th one, as such it's not written important, but according to me it's good one. When you are developing an internal control questionnaire, certain basic assumptions are taken relating to element of good internal control. So when we are developing a questionnaire, certain basic assumptions are taken. For example, if you have a system where work of one person checked by another one, is it a good system? Yeah, it's a good system. Okay, so there are certain assumptions are taken that these are element of good internal control system. Based on this, the questionnaire is basically prepared. So certain procedures in general used by most business concern. Okay, then division of responsibility. If division of responsibility is there, we assume it's a good internal control. Employees with accounting function, not having custody function, single person not allowed to do everything. Work done is basically checked by another one. Proper documentation are kept. These are some assumptions which we keep, and based on that the questionnaire is built. So when I'm building an internal control questionnaire, I put questions in a manner. अगर ऐसा है तो अच्छा है. तो can I say assume that if this way is a good way, work of one person divided, checking हो रहा है, proper documentation हो रहा है. So this was the answer. Okay, steps for risk identification. Steps for risk identification. First of all, I'll start with try to identify the inherent risk, unique characteristic of risk. Inherent risk आप check करो. उसके बाद try to see the control risk, whatever is there. Internal controls, how are they? That you see. Now, whatever risk you identified, assess the significance of risk, likelihood of risk, document the assertions which are affected, what impact will it have, and the degree of it. Actually, I should start from here. नीचे से start करके ऊपर जाना है. Inherent risk, control risk, assess the significance, likelihood, which items will be affected, impact क्या आएगा, that all thing. So this is basically steps for risk identification. Internal control in small businesses. Okay. Next important is, okay, check over here. Officer was handling sales ledger and cash receipts. Okay, you are handling cash collection and you handle accounts. Can I say you handle cash? You should not be handling accounts. This is wrong. Another officer was handling dispatch of goods and issuing delivery challans. The guy who's dispatching goods and delivery challans bhi aap hi bana rahe ho. No. Remember, recording function and custody function has to be with a different person. So this is also wrong. One more officer was there to handle customer debtor ka accounts and issue of receipt. You handle accounts and issue of receipt, that are same, that are both accounting function. So that is fine, that's not a problem. The first two were a problem. Next important one, era. Next, question 29 is important. What may be the point of indication that the risk identified may be significant? Remember, whether it's a significant risk or not, we had certain point, whether risk relates to risk of fraud, whether risk relates to some significant related party transaction, whether risk relates to unauthorized transaction. तो वो सारा list था ना, changes some आए हुए हैं later, तो that is to be written. Okay, question number 30. Question 30, May 19 exam. Now pay attention. You are a newly qualified professional. You are concerned about effectiveness of internal control. You want to evaluate it. Towards achieving your objective, you want to know the standard operating procedures for assessment evaluation of control. What are the standard operating procedure for assessment evaluation of control? What all you need to evaluate? Standard operating procedure for evaluating controls. So one, I need to see whether entity has a risk management process, whether they have done a proper segregation of job responsibility, whether there is a job rotation there in sensitive area, the delegation of financial powers, admin powers are judicially decided, and they might also have some IT-based controls. IT-based control like in Tally, debit side 20,000, credit side 2,000, not allowed. So they just want to ensure that the inputs are coming correctly. So that will be there. So question was SOPs in assessment and evaluation of control. So what I need to check? One, enterprise has a risk management policy or not. They have a segregation of responsibilities done. One person not allowed to carry out work from origin till its end. They have a job rotation in sensitive areas. They have financial admin power delegated judicially, and they also have some IT based control. This all I need to evaluate. Are you clear? Okay, next one is international internal control framework. Now see, there are some frameworks. Frameworks are the basis, or they have suggested that this is the way the control should be there. Now, different people have came out with different internal control framework, and they're talking about internationally. So one is basically COSO. COSO is Internal Control Integrated Framework issued by Committee of Sponsoring Organization. The Committee of Sponsoring Organization COSO framework is there. This was asked once. Only I'm taking the one COSO framework. Now COSO framework may again, they also have 5 component of internal control. Like we had 5 components of internal control. They also have the 5 component: control environment, entities risk assessment process, information system relevant to financial reporting, control activity relevant to audit, and how do they monitor. The same thing is there. Same, they have the 5 components, the same one. If question comes, which are the 5 components of internal control under COSO? Same one, no different. But the only thing is they've divided. They divided the objective into 3 categories. So control objectives are divided into 3 categories. One is basically operational objective. So we put controls in order to ensure the operations are running smoothly. The operational objective. Second, reporting objective. We have a controls to ensure the financial statements are free from fraud and error. So reporting objective. And we have a control to ensure we are complying with laws and regulation. That's called compliance objective. तो internal controls के objectives are bifurcated into three categories. Operational objective to ensure that business is operating properly. Reporting objective to ensure the financial statements are free from material misstatement, whether due to fraud or error. And compliance objective, the entity is complying with laws and regulations. So these are the three objectives for which the internal controls are established. Like we had this COSO, same way there is a COCO, which is by Canadian Institute. Same we have basically COBIT, which is more related to IT related controls, COBIT. Then we have basically internal controls guidance, which is given by ICAEW, Turnbull report. Everybody talks in a similar way. And last is Sarbanes-Oxley, US wala. Now what does US people say? This is there in India also. The Sarbanes-Oxley Act, they are telling all publicly traded company, publicly traded is nothing but listed. So all the listed companies are required to have internal controls, and basically whenever the audit report is coming up, the auditor has to report on two things. One, they have to report on the overall financial statements, plus they're also required to report on IFC. So like we have IFC reporting under Sarbanes-Oxley Act, also there's a IFC reporting. The external auditor have to give two opinions in a single integrated report. One, the independent opinion on effectiveness of ICFR, internal control for financial reporting. They use the word internal control for financial reporting, and the traditional opinion on financial statement. You give a report on financials, plus you also give a report on the ICFR internal controls. Done. This was your SA 315. Come to 330. Come to 330 first, then I come to 320. Come to 330 first. Okay, now we identified risky area in 315, we come out with that responses. Okay, if you remember, if the risk is affecting one item, we come out with responses specifically to that item. If risk is affecting many items, we come out with that overall response. Okay, the overall response is for the risk at a financial statement level. Objective mein this can be there. Sir, what are the overall responses? Emphasizing the team to maintain more professional skepticism, assigning more experienced staff, doing more supervision, adding an element of unpredictability. There was a question how to add unpredictability, we already did. And making general changes to nature, timing, extent of audit procedures. You are performing audit procedure in a bit different way, adding an element of unpredictability kind of. The overall responses. Acha, but if risk is at a one item, if risk is basically at one item, you should design further audit procedure responsive to the risk of material misstatement at an assertion level. Okay, now when I'm designing the further audit procedure, in designing further audit procedure, I need to consider what? The likelihood of the misstatement, and wahan pe, how much is the control risk? The inherent risk, control risk I'll consider, and I'll try to obtain more persuasive audit evidence. So whenever you're designing further audit procedures, you need to consider the reason, inherent risk kitna tha, control risk kitna tha, and you have to obtain a more persuasive audit evidence, more convincing audit evidence. Okay, test of controls. Okay, is it mandatory to do test of controls? Test of control kya tha? Test of controls. Is it mandatory? See, SA 315 we understood control. Now we are testing whether the controls are really working, what they are telling. There's a difference between understanding and testing. So 315 we understood controls. Now 330 we design our procedures. Procedures are divided in two parts, compliance and substantive. Compliance is nothing but your test of details. Substantive is basically you check figures, disclosures, etc. So under your test of control, we are just trying to see whether the controls are operating effectively or not. So whether test of control is mandatory, answer is no. I have to test the control when? One, when I want to rely on control. If controls are good, I want to check less. If controls are good, I want to check less. So when I want to rely on control, or when I feel that substantive procedure alone will not give me sufficient appropriate audit evidence. Simplest example is bank mein interest calculation. Okay, can you check so many transactions? Nahi, they have crores of interest transactions. Rather than that, you check the system based on which interest entries are done. So these two cases, control testing is required. Otherwise, control testing is not mandatory. But substantive procedures are mandatory for all material class of transaction, account balance, disclosure. Achha, now there's a question over here. Controls were tested last year. Can I rely on the controls tested in last year? Controls are tested last year. Can I rely on them? So they are telling If there has been change, you need to check again. Okay. If it's a significant risky area, you need to check the controls again. And third, if it is not a significant risky area, there are no change, you can rely on the controls tested earlier, but you need to check the controls again over a period of 3 years, somewhat every year. You need to check the controls once in every third audit and test some controls each audit. If there are no changes, I can rely on the control tested in last year, provided I have to test it once in every third audit, somewhat every audit. Fine. Substantive procedures are mandatory irrespective of the risk. You need to perform substantive procedure for material class of transaction, account balance disclosure, plus for financial statement closing process. What is closing process? The ledgers are coming in trial balance, the same figure goes in financials. Whoa, that is one thing. And second, the year-end journal entry that you need to mandatorily examine. If something is a significant risk, you do some extra substantive procedure specifically responsive to those things. And over here, whenever I'm doing substantive procedures, I don't just check the figures, I also have to check the presentation. The checking of presentation disclosure is a part of substantive procedure. Okay, I did my compliance procedure, I did my substantive procedure, so you got the evidences. Now evaluate whether you obtain sufficient appropriate audit evidence. If answer comes no, you obtain further audit evidence, and if you're unable to obtain further audit evidence, you may land up giving a qualified or a disclaimer of opinion. Fine. Now check over here, there are two good questions over here. Now, what are the factors that may warrant retest of control? What are the factors that may warrant retest of control? Remember I told you we can rely on the control tested previously. But if there are changes, I have to check again. If it's a significant risk, I have to check again. If it's no change, not a significant risk, I have to check once in every third audit, somewhat each year. वो क्वेश्चन नहीं है. क्वेश्चन बोला है फैक्टर्स. फैक्टर्स कौन से? If I see a deficient control environment is deficient, or if I see deficient monitoring of control, or if I see significant manual animality is there, or if I see personal changes, the people who are implementing control, they have been changed, or the circumstances have changed, or the general IT controls are weak. So these are the factors which are suggesting I should check it again. Did you understood? Did you understood? The question was factors पूछा था, ये factors है, वो factor नहीं था. Okay. Next, while commencing audit, what should be the consideration of auditor to assess the risk of material misstatement and the responses? Now see two questions. One, to assess the risk of material misstatement and the response. So SA 315, 330 both are there. 315, if you remember, we don't just have to identify risk, we should assess, we should relate what can go wrong, and we should also try to see likelihood and the magnitude. So ये assess हो गया. And now respond के अंदर, if the risk is affecting one item, we have to do further audit procedure responsive to the risk of material misstatement over there. And while designing further audit procedure, I need to understand the inherent risk, the control risk, and I should obtain more persuasive audit evidence. Okay, next one. Okay, what are the steps in a risk-based audit? Okay, steps in risk-based audit is very simple. Risk identification, identify करो, फिर उसके बाद you check on it and then you come to a conclusion. So risk assessment, then risk response, and then is your reporting. हो गया. The steps in risk-based audit: risk assessment, risk response, and then reporting. Next, done. Come back to SA 320. Come back to SA 320. Okay, now 320 is materiality in planning and performing an audit. See, information is material if its misstatement, erroneous omission or erroneous statement influences the decisions of users of financial statement, and materiality is not just from amount point of view, various other things also. And don't see it from individual point of view, see it in aggregate also. Fine. Now, we need to determine, as an auditor, we need to determine materiality level as well as performance materiality level for a financial statement as a whole as well as assertion level. Now, sir, what is a performance materiality level? Now see, normally materiality level is percentage of PAT, PBT, turnover, net worth, something. Now suppose our policy is if it is a less risky company, materiality level is 1% of PBT. PBT 1 crore, 1% of PBT is coming 1 lakh. As per our policy, materiality level is 1 lakh. We need to focus on transaction above 1 lakh. It doesn't mean you ignore below 1 lakh. You have to focus more on above 1 lakh. But you decided to focus more on above 80,000. As per the policy, it was coming 1 lakh. You decided to check above 80,000 properly. So can I say you decided a level which is below the materiality level? Now, isse kya hoga? You will be checking more. As you will be checking more, the uncorrected and undetected misstatements will go down. Yeah, uncorrected and undetected misstatements will go down, or simple words, the detection risk will go down because you are checking more. What is a performance materiality? So performance materiality means the amount set by auditor at less than materiality level. Q, to reduce to appropriately lower level. What you want to reduce? The probability that uncorrected and undetected misstatement exceeds materiality. So uncorrected and undetected misstatements are more, uska probability you want to reduce. Uncorrected and undetected misstatements are more, uska probability you want to reduce. Simple words mein, to reduce detection risk to appropriately lower level. So instead of 1 lakh, you decided to check above 80,000 properly. ठीक है. And as and when your audit progresses, whatever materiality level or performance materiality level you set may be required to be changed. It's okay. Now important is question number 1 and 2 both. What do you mean by audit benchmark? Factors affecting identification of appropriate benchmark. I told you materiality level is percentage of PAT, PBT, turnover, net worth. So this PAT, PBT, turnover, jiska base le rahe ho na, that is called as a benchmark. Now sir, which are the factors affecting identification of appropriate benchmark? So which one I should choose? PAT, PBT, turnover, kya lena hai? So one, see the elements available in financials. Options kaun se? Second, user focuses on what? If user focuses on turnover, take the base of turnover. User focuses on profit, take the base of profit. Third, the nature of entity, life cycle, industry in which it relates, all that thing. I cannot have a same base for manufacturing company and same base for a service industry. Manufacturing mein turnover will be too huge, service mein turnover will not be that huge. The ownership structure, way it is financed. If it is financed more by debt, then people are more interested in the net assets. So you can take basically percentage of net assets and the volatility of benchmark. Choose a benchmark which is kind of stable, not much fluctuating. Okay, now what is the relationship between materiality and audit risk? Okay, it's not materiality level and audit risk, it's materiality and audit risk. More the transaction material, you check more. If you check more, audit risk goes down. So higher materiality, audit risk goes down. Can I say there's an inverse relationship? It is materiality and audit risk, not materiality level and audit risk. Are you clear? Okay, you want to reevaluate the materiality concept. Can you reevaluate the materiality concept? Yeah, as and when audit progresses, if you want to change the materiality, answer is yes, it can be done. Come to SA 402. Come to SA 402. Okay, SA 402, audit consideration relating to entity using service organization. If at all you're using service organization, now sir, ye kya hai? Using service organization. A Limited has outsourced the accounting to B. Now we are auditor of A. A Limited has outsourced the accounting to B Limited. We are auditor of A. So can I say I need to understand accounting system, internal control system of A? But when I tell about accounting system, internal control system to A, they say, sir, we don't do accounting, B Limited does. So B Limited is a service organization. The service organization is a third-party organization that provides services to the user entity. Which type of services? Which are a part of entity's information system relevant to financial reporting. Okay, remember this word came, information system relevant to financial reporting, SA 315, components of internal control. So someone is providing you services which are a part of your information system relevant to financial reporting, services which are affecting your financial reporting, then that organization who is providing such a services is called as a service organization. Now, I am an auditor of A Limited. I need to understand accounting system, internal control system of A, but they are not doing it. This is a B is doing. So even though I'm auditor of A, I need to understand whether B Limited is doing accounting properly or not. So I need to understand B ka accounting system, internal control system, even though I am auditor of A. Now, how much understanding of B I need, the nature and extent of work performed by user auditor regarding the services of service organization depends on nature and significance of those services to the user entity. तो वो कितना सर्विस प्रोवाइड कर रहे हैं, बेस्ड ऑन दैट आई विल बी एबल टू अंडरस्टैंड हाउ मच आई नीड टू अंडरस्टैंड अबाउट बी लिमिटेड. ठीक है, नाउ लेट्स मूव अहेड. Requirement number 1 is important. Requirement number 1 is important. Obtaining understanding of the services provided by the service organization. So as an auditor of a user entity, you need to obtain understanding about what? The services provided by the service organization, including the internal controls at service organization. Kaise? So first of all, I need to obtain understanding regarding what? I need to obtain understanding of how the user entity uses the services of service organization, including nature of services provided, significance of those services to the user entity, nature and materiality of transaction which they are processing, the degree of interaction between the service organization and the user entity, and the relationship between user entity and service organization. So try to obtain understanding of the work of service organization. ठीक है. Now the user auditor shall evaluate the design implementation of relevant control at the user entity related to the services of service organization. So related to services of service organization, if there are some controls at user entity, you obtain understanding. But if I'm not able to understand properly about the work of service organization through the user entity, if I'm not able to understand about the work of service organization from the user entity, what to do? If you're unable to obtain sufficient information from the user entity, what do? Okay, the one option is you can contact the service organization giving a reference of the user entity. Second, if allowed, you can visit the service organization, check it yourself. Third, you can take a report from their auditor. If I take a report from service organization's auditor, remember it can be either type 1 or type 2. Type 1 report is a report on description and design. Type 2 report is a report on description, design and operating effectiveness of control at the service organization. Okay, the type 1 and type 1 के अंदर I am taking a report from their auditor. Their auditor का जो report होगा ना, उसमें description is given by management of service organization. Their auditor will be telling the above description is accurate, the system controls are in place and the system is designed appropriately to meet the objective. He has not tested the control. He has seen. मैंने देखा sensors are there, but I have not checked whether sensors are working or not. Whether sensors are working or not, that comes under type 2 report. In type 2, the service organization's auditor will tell the above description is accurate, system controls are in place, they are designed properly, and based on test of control, they are operating effectively in how the test of control was done. That's in type 2. So one option, if I'm not able to get details about service organization from user entity, what should I do? One option, I should contact service organization. I should speak with them. Second, if allowed, I can visit over there. Third, I can take a report from their auditor. Achha, am I taking a report on financial statements of service organization? Am I taking a report on financial statements of service organization from their auditor? No. I am taking a report about the internal controls and accounting system at the service organization. ठीक है. And last, I can appoint some other auditor. Who can go and check the accounting system, internal control system at the service organization using another auditor. ठीक है. Now, if you are using type 1 or type 2 report, if I am taking a report from their auditor, I need to check his professional competence if he is not a member of ICI. And I need to see the adequacy in which his report was given to me. So check his work if he is not a member of ICI, adequacy of standard under which it was reported, that you can check it every time. ठीक है. Now, if I feel that the controls at service organizations are working well, I want to rely on them. So I cannot rely just by speaking with them. Either I should have tested or I should have obtained type 2 report. Type 1 में test नहीं हुए थे. Either I should have tested myself, or I should have taken type 2 report, or I should have used some other auditor who has gone and checked. So if I want to rely on their control, it should have been checked. Based on type 1 report, I cannot rely over there. Okay, now if A has outsourced the work to B Limited, B has outsourced somewhat to C. So can I say service organization is used sub-service organization? Now, service organization is used sub-service organization. So now pay attention. It will be written in the service organization's auditor's report. In service organization's auditor's report, it will be written this much work is done by C. Now, CK control objective and the related control. C's control objective and related control might be included in B's auditor report or might not be included in B's auditor report. If C's control objective and the related activities are included in B's auditor's report, we call it as inclusive approach. If it is not included, we call it as carve out approach. So if CK control objective related activities are not written in B's auditor report, so I don't know how C has done the work. So you are required to follow the same procedures which was given under this standard. How did you obtain understanding about B? The same way you obtain understanding about C also. Okay, last one. Okay, can I write in my audit report that we have relied on the report of service organization's auditor? Can I write his name? If you are giving a clean report, you cannot write the name. In case of a modified report, you can write, but by writing, the responsibility is not shifted. The sole responsibility of audit opinion, you are giving an opinion on A's financial statement. The sole responsibility of audit opinion is only on you. Did you understood? Okay, now check question number 3. Check question number 3. What procedure a user auditor can do for what? The assets held or the transactions undertaken by service organization. So user entity ka asset is there with service organization. Imagine we gave them laptops for doing accounting. Our assets lying with them. Or they did certain transaction, how do we check? The service organization did certain transaction, how do we check? One option, you inspect the records document held by user entity. Second, you inspect the records document held by service organization. Third, you obtain confirmation of balances and transaction from the service organization. Ask, sir, are this many laptop of user entity lying with you? So that you can take basically confirmations. And fourth, you perform some analytical procedures on the records maintained by user entity or the reports received from service organization to understand really unke paas hoga ya nahi hoga. So there are certain assets of user entity lying with service organization or some transactions of user entity but done by service organization. How do I check that? Based on documents with the user entity or based on documents with the service organization, or you do some external confirmation with the service organization, or you do some analytical procedures based on the records which are available. Did you understood 4 points? Okay, now check over here. R Limited has outsourced certain activity as an engagement partner. Okay, what you are required to do, guide the management in assessment of services provided. Simple is your requirement number 1. Requirement number 1 is to be written. This is over. Acha. Illustration 6. Illustration 6. CA Raman, you are giving an unmodified report. Your assistant had written the name of a service organization's auditor. Unmodified report mein your assistant had written the name of service organization auditor. You asked to remove the reference. आपने उनको बोला कि यार वो reference निकाल दो. It's an unmodified report. So are you correct? Are you correct in telling your assistant to remove the name of service organization's auditor? Answer is yes, because it's a clean report. Next one is SA450. Next one, SA450. Now, pay attention. In your SA 315, we identified risky area. 330, we came out with our responses. So can I say we checked them, we did compliance procedure, we did substantive procedure. So whatever procedures we did, can I say we would have found out some misstatements? Now, what do you mean by misstatement? It's a difference in amount, classification, presentation, disclosure, which is there in financial and which is required as per the applicable financial reporting framework. So financial reporting framework requires something and you have presented something, that is a misstatement. As per this essay, whatever misstatements you accumulate, you keep on, or whatever misstatement you identify, keep on accumulating unless it is clearly trivial. Okay, if at all over a period you feel the misstatements have become more, you might be required to change your overall audit plan and strategy. So when do I need to change the overall audit plan or strategy? One, when accumulated misstatement exceeds materiality, or the accumulated is not more than 10%. If more than 10, we'll change the plan. If accumulated is more than 10, I'll change. If accumulated is not more than 10, but what happens is we have some identified misstatement. Based on nature and circumstances of identified misstatement, there will be some other misstatement, which when aggregated exceeds materiality. In 40, there are only 2 errors, but in remaining 60, we feel there will be 10. 40 में 2, remaining 60 we feel 10. So can I say out of total 100, there will be 12 misstatements exceeding 10%. So identified doesn't exceed materiality, but based on nature and circumstances of identified, there will be some other misstatement which when aggregated exceeds materiality. We have to change the audit plan. ठीक है. Now, we accumulated all misstatements. We might have changed the audit strategy, audit plan also. And now whatever misstatements we have, we will request the management, will communicate to management, request them to correct it. Okay, if management corrects it, well and good. If they don't correct, we'll evaluate the uncorrected misstatement. We'll evaluate uncorrect. If uncorrected misstatements are material, we communicate to TCWG. TCWG, only the uncorrected one goes. So all misstatements, first we communicate to management, request to correct. If they correct, well and good. If they don't correct, we evaluate uncorrected. If uncorrected are material, we go to TCWG and we take a representation if they are not correcting. So TCWG is a representation law that according to them, the uncorrected misstatements are immaterial if they are not correcting. And it's according to them. They feel immaterial doesn't mean you also feel immaterial. If you feel the uncorrected misstatements are material, you give a modified report and do your documentation. Okay, check question number 1, which is important. Identify the sources of misstatement. What's the question? Identify the sources of misstatement. कहाँ से misstatement हो सकते हैं? 1. Inaccuracy in gathering or processing data. Omission of something. Incorrect accounting estimate because of overlooking. Or you make some judgments which is unreasonable. So that is again, these are all leading to misstatement. So these are sources of misstatement. 4 points given. I just have to write 4. Then you bluff about misstatement kya hai, ye wo, then marks will not be there. Check the 4 point. Inaccuracy in gathering, processing data. Omission of amount or disclosure. Incorrect accounting estimate arising from overlooking or clear misinterpretation of fact. Or judgment of management relating to accounting estimate that we consider it unreasonable. Okay, done. This was SA 450. Come to SA 500. This was 450. Now come to SA 500. Okay, SA 500 is audit evidence. We are required to obtain sufficient appropriate audit evidence so that we are able to draw a reasonable conclusion based on which our opinion can be given. Okay, now your audit evidence. You have to obtain sufficient appropriate audit evidence. How do I do it? By performing my procedures. Now your procedures are divided in 2 parts. First, risk assessment procedure, SA 315. Other procedures, 330. So risk assessment procedure, we understood the entity, environment, internal control. And based on the result of risk assessment procedure, your other procedures are done. Other procedures are test of controls and substantive procedure. Here we understood everything. Here we are testing the controls. And this is substantive. Now, test of controls are the test designed. Pay attention. Test of controls are the test designed to obtain a reasonable assurance that the internal control on which reliance is to be placed are in effect. The internal controls on which you have to rely, they are in effect. And substantive procedures are the test designed to obtain evidence about accuracy, completeness, validity of the data produced by the accounting system. If I'm checking any figure, if I'm checking a system, it's a test of control. If I'm checking any figure, disclosure, etc., that's substantive procedure. Substantive procedure is further divided into 2 parts, test of details, analytical procedures. Analytical is you're checking figure by ratios, trends. That's analytical. Test of detail is I'm checking the figure by way of bills, agreements, etc. And test of detail is further bifurcated into 2 parts. If I'm checking a transaction, usko bolte hai vouching. If I'm checking a balance, that's called as a verification. Are you clear? Now, sufficient relates to quantum. Appropriate is not quality. It's not quality, it's relevance and reliability. The evidence has to be relevant one and the evidence has to be reliable one. Relevant means there has to be a logical connection or a bearing to the purpose of audit procedures. And when do I say it is reliable? Reliability depends on many things. Once the source, internal, external, to external is more reliable. Source, oral, written, to written is more reliable. Circumstances in which you obtain, immediately mila, more reliable. Next day mila, bit doubty. And last one, basically over here, including the control over the preparation. Fine. Now, if I have done compliance procedure, if I did a test of control, I'll be able to understand few assertions. Assertions are the representations by management. So management is telling, sir, we have internal control system. So control system exists. Control system is designed properly. It's operating effectively throughout the year. If management is telling all this about controls, I can get to know about it by compliance procedure. Okay, but if management says, sir, we have a building. Building is our asset. Building is bought during the year. All buildings are completely recorded. Buildings are properly measured. Buildings are properly disclosed in financials. So that all we get to know by doing substantive procedure. So from substantive procedure, we understood which assertions of management, representations by management which are there in financial, usko bolte assertion. So existence, rights and obligation, occurrence, completeness, valuation, measurement, presentation and disclosure. Fine. Types of audit evidence is fine. That is not relevant. Now, this one. When information to be used as audit evidence is prepared using the work of management expert. So, information which I'm using, say actuary ka report. Now, actuary was a management expert. So, what do? Can I rely blindly on it? Answer is no. So, you need to evaluate competence, capability, objectivity of expert. You need to obtain understanding of his work, the method, the data, the assumption used by him. And you need to evaluate the appropriateness of expert's work with respect to your audit. Are you satisfied with his work or not? If you're satisfied, then only you accept it. So if work is done by management expert, don't accept it blindly. ठीक है. अच्छा, if there's an inconsistency in two evidences or if you have a doubt over the reliability वो signature stroke वाला, तो क्या करना चाहिए? You need to determine what additional audit procedures to be done to resolve the matter. Methods of obtaining audit evidence. There are 6 methods of obtaining audit evidence. One is inspection. It can be physical inspection or it can be documentary inspection. Second, observation. आप just observe करो. They say work of A checked by B. तो see whether work fraud, मतलब the file went from A to B. Third is inquiry. Now, inquiry will also include the responses to the inquiry. They are also covered over here. Inquiry. Evaluating response is a part of inquiry. So, seeking knowledge, seeking information from knowledgeable person. That's inquiry. External confirmation. You are trying to get a direct written response from the third party. Direct written response to the auditor from the third party. ठीक है. Then we have a recalculation. You calculate the things, commission ka, etc., totals, etc. Reperformance, a part of procedure performed by management. You do it again. And last is analytical review. You do analysis of ratios and trends. The 7 methods of obtaining audit evidence. They are also known as audit techniques. Inspection, observation, inquiry, external confirmation, recalculation, reperformance, analytical review. Fine, let's move ahead. Okay, now check over here. You are trying to check the actuarial valuation. Usme the actuary changed certain basic assumptions compared to last year. So can you directly rely on that actuary ka certificate? Answer is no. We have to evaluate the competence, capability, objectivity. We need to obtain understanding of his work and we need to see whether his work is appropriate or not. Now, whether his work is appropriate or not, while evaluating appropriateness of his work, I need to see whether it is consistent with other evidences. उसके जो assumption methods हैं, they are appropriate. उसका कोई source data है, the data is also appropriate. So this is what I need to do. I can't blindly rely on him. ठीक है, this is fine. Fine. Okay. You are unable to obtain sufficient appropriate audit evidence. State how to obtain further audit evidence. You are unable to obtain, question is not how to report. Question is how to obtain further audit evidence. You are required to write about that कौन सा techniques, वो methods of auditing that you need to write. Find risk of material misstatement at a assertion level for class of transaction, account balance, disclosure. For class of transaction, account balance, disclosure, what are the categories of assertions which you want to verify? For class of transaction, which assertion do you verify? For balance, which assertion do you verify? And for presentation disclosure, which assertion do you verify? For class of transaction, transaction में existence is for balance sheet item. So balances के अंदर existence will come. Rights and obligation is also for balance sheet item. Occurrence is of a transaction. Completeness comes in both. All assets, liabilities are recorded. All transactions are recorded. Completeness comes in both. Measurement is of a transaction. The accuracy is measurement. Valuation comes under your balance sheet item. Acha, plus they have given over here, the transactions are recorded in a proper period cutoff, and transactions are recorded in a proper account classification. They have written two more. Acha, presentation disclosure mein we present and we disclose. Related party transactions are also disclosed. The balance of related parties are also disclosed. So all these points will come in presentation disclosure, everything. The occurrence and rights and obligation. Completeness, classification, understandability. Okay. So financial statement is presented, disclosed as properly, classify proper किया हुआ है, current, non-current, all that thing, and accuracy, valuation both. So measurement, valuation both are covered. Are you clear with this? Okay, come to SA 501. Come to SA 501. 501. Now see, most of your essays are general in nature. They don't talk about specific things. But this essay is very specific. They talk about three things. One, attendance at physical inventory counting, inquiry regarding litigations and claim, and segmental information. First, attendance at physical inventory counting. Physical counting is responsibility of management. They say auditor should remain attendant. Why? If you are remaining attendant, you get a sufficient appropriate audit evidence about existence and condition of inventory. The auditor should obtain sufficient appropriate audit evidence about existence condition. How? By attendance at physical counting. क्यों करना चाहिए? क्यों करना चाहिए? To evaluate management's instruction, management का procedure. See, management has to count. You will evaluate. You attend physical counting. Attend करो. Count मत करो. Attend करके to evaluate management's instruction and procedure. Observe management count. Management count करेगा, आप observe करो. Inspect, देखो inventory को, and perform certain test counts. So whether you are responsible to go and do the counting, no. You have to observe management counting. You can do test counts. अच्छा. And performing audit procedure over the final inventory record to understand कि भाई whatever if you attended over there, you know these are the actual counts. So whether they are only taken in financial statements. So if question comes, how should auditor obtain sufficient appropriate audit evidence about existence and condition of inventory? So by attending physical counting, this AB point. Acha, if you are not able to attend on a balance sheet date, try to do on some other date. If you are doing on other date, तो आपको from balance sheet date to that date, whatever transactions have happened in inventory, that has to be taken care of. So if it is done on other than balance sheet date, you have to perform procedure about the changes have been properly recorded or not, and for that thing, you need to see perpetual record. Inventory records are properly adjusted, inventory records are reliable, and if there's a difference coming between perpetual record and physical counting, so whichever date we counted, usme what was books mein, what is actual difference, is there a significant difference, why there was a difference? Okay, now if you're unable to attend on a planned date, do it on alternative date. But if it is impracticable to attend, imagine the goods are lying in warehouse is in border area, currently you're not allowed to go over there, impracticable, you should perform alternative procedures. Alternative procedure can be inspection of the documents, like subsequent sale document. Subsequent sale document है तो पता चलेगा हाँ inventory में होगा. Because it's sold on 3rd April, so 31st ko it's there in inventory. So that subsequent sale document or prior purchase document or something like that, you can just check out. Okay, and one more thing. just because it will have a difficulty, it will took long time, थोड़ा cost ज़्यादा होगा, तो can I say it is impracticable? Answer is no. So just because general inconvenience will be there, you cannot say it is impracticable. And if even by doing alternative procedures you are unable to obtain sufficient appropriate audit evidence, then you modify the report as per SA 705. Now, if the stock is lying with a third party, कई बार stock is lying with a third party, what you should do, one, you can request the confirmation from third party, or you can do any other audit procedure whichever you deem appropriate. Either you do one or both. See the word written, one or both. So one is external confirmation, second is other audit procedure as appropriate. Now see, final level, they can ask you a question, which are that other audit procedure? The other audit procedure will include attending or arranging for another auditor. You cannot go, you attend or you send someone else at the third party. Attending yourself or arranging someone else. Or obtaining a report of their auditor about their internal control system, accounting system, inspecting the documents, or if the inventory is basically pledged as collateral with someone, unka confirmation le lo, like bank ke paas pada hai to bank ka confirmation. So this is other audit procedures which can be done, plus you take a representation that they've completely disclosed all inventory to you, they're not hiding anything from you. Okay, inquiry regarding litigations and claims. See, we are required to obtain sufficient appropriate audit evidence that litigations claims are proper. So we are required to identify the litigations and claims. So uske liye we need to do procedures, identifying litigations and claims. How do I identify? One, you inquire with the management, unke paas se le lo list of litigations claims. Second, you read the minutes of meeting. If some litigations are going on, they would have discussed in the meeting. Third, review the legal expense account. I find a lawyer's bill telling this for this case, that is there. Plus, you try to talk with entities lawyers. Okay, now when I'm talking to entities lawyer, if I talk directly, they will say, sir, I can't give confidential information of my client. The letter should go from management to the lawyer of the entity, telling the lawyer to communicate directly with the auditor. So letter should go from management to lawyer, telling lawyer to communicate directly with the auditor. Okay, if the management refuses to give permission to communicate with the lawyer, or you're unable to obtain sufficient by another procedures, then you're required to modify your report and take a representation. Last one is segmental reporting over here. The segmental reporting is disclosed in notes to accounts. So we are required to obtain a sufficient appropriate audit evidence about presentation and disclosure of segmental information. And they've clearly said we are not required to do a detailed kind of audit. We just need to do analytical procedures and other tests which are deemed appropriate. So how do I obtain sufficient appropriate audit evidence? By understanding the methods used by management, and by performing analytical procedure, other procedure as appropriate. So no need to do as detailed audit ki tarah, because you're not reporting, you're not giving a report on segmental information separately. You are giving a report on overall financial statement. So you're not reporting on this individual figure, you're reporting on overall balance sheet figures. So don't go for that detail. Okay, so over here, we need to obtain understanding of the method used by management. Okay? Evaluate the methods which they have used is as per the applicable financial reporting framework. Evaluate the method is giving proper result or not. So I have to evaluate the method used by management. तो उसके अंदर क्या? तो examples of matter that may be relevant. Examples of matter that may be relevant when understanding the method used by management. Now there can be a question only on this. So when I'm understanding the method used by management, what are the examples of matters which I need to consider? So one, sales, transfer, elimination of inter-segment sales, how this has been done. Second, budgets and actual आप compare करो, segment wise what was the budgeted, segment wise what is the actual, that you try to see. Allocation of common cost, how it was done by the management, and whether the segmental information is consistent with the prior period. So examples of the matters which I need to consider when I am understanding the methods used by management. And lastly, take a representation from the management. I hope you're clear. Okay, next, what are the matters which are relevant in planning attendance at physical inventory counting? So planning time, when I'm planning attendance, क्या करना चाहिए? What are the factors I need to consider? Nature of inventory, stage of WIP, risk कितना है, controls कैसे हैं, timing of inventory counting, whether they have a perpetual record, or not, how many locations are there. So that all I need to consider when I'm planning attendance. Okay, next one. Check this question. RTP May 18, November 20, May 21. How sufficient appropriate audit evidence regarding existence and condition can be obtained? How it can be obtained? By attending the physical counting. फिर उसमें था ना, टू क्या करने के लिए, evaluate management procedure, to evaluate, observe management count, वो सारी चीजें. And if you are not able to attend, it's impracticable, so what you should do? You should do alternative procedure. That's the answer number B. Okay, other things are fine over here. Check now this November 20 question. Okay, there's a segmental information. You want to ensure that the method adopted by the management is proper or not. Give examples of the matter which will be relevant in obtaining understanding of method followed by management. 4 point. वो inter-segment sales वाला, compare actuals in the budgets. Third one was basically allocation of common cost. And fourth one is the consistency. So 4 points are to be written. If you write general, marks नहीं मिलेंगे. Are you clear? Are you clear? Next one, essay 505. Chalo. Continue. 15 minutes more. We'll finish off 3 more standards. 500, 510, 520. Then we take a break. Okay, essay 505. 505 is external confirmation. It is nothing but evidence obtained as a direct written response to the auditor from the third party. And see, when I just do external confirmation, I cannot get sufficient and appropriate audit evidence. One thing can never give you sufficient. So यहाँ पे objective is to obtain relevant and reliable audit evidence. The objective is not to obtain sufficient appropriate, it's just relevant and reliable audit evidence, where I can use it generally to confirm the balances, but I can also use to confirm the terms of agreement as well. This is fine. Process is also fine. Timing is important. When should I do the external confirmation? Either at the financial statement date, or at a date which is reasonably close to financial statement. So either financial statement date or at a date which is reasonably close to financial statement. Uska reason, if you are doing external confirmation, say for example on 1st of March, so you need to check transaction from 1st March to 31st March, because that balance will come in your balance sheet. Okay, design and form. The design and form of external confirmation request should meet your objective. There are 2 things: positive confirmation request, negative confirmation request. Positive, they have to mandatorily reply. Negative, they have to reply only when there's a disagreement. Now, you should not use negative confirmation request as a sole substantive procedure. You should not use negative confirmation request as a sole substantive procedure unless all the following are present. So if you've seen the risk of material misstatement is low, you have checked the controls are working fine. So area hai, controls are working fine, risk is low. Second, huge population consists of large number of homogeneous unit. Third, the exception rate is very low. And fourth, you are not aware of any circumstances where the recipient will disregard your request. You are requesting them to reply if balance doesn't tally and you feel they will pakka reply. So I should not go for negative confirmation request as a sole substantive procedure unless all the following are present. Acha, you wanted to do external confirmation, management is refusing. Management refuse kar hai, to first inquire as to the reason why. Acha, inquire as to the reason why. If you feel the reasons are genuine, you may accept. If you are accepting, you need to do the alternative procedure. To evaluate the implication of management's refusal, whether there can be a risk of fraud also over there. And based on that, you perform the alternative procedure. Okay, now 2 questions important, question 1 and 2. 2 questions important, question 1 and 2. Check. What are the factors to be considered when designing a confirmation request? So should I go for positive? Should I go for negative? Uske liye which factors I consider? Should I go for positive? Should I go for negative? Which factors I consider? So one, I need to see assertion, which I am checking. Risk kitna hai? Layout presentation, prior experience, the method of communication which I am using, the confirming party kaisi hai. Sometimes management encourages them to reply always. So how is management encouraging? If I know management always encourages that they should reply even if doesn't tally, then I can go for negative also. and ability of the confirming party to confirm. So whether to go for positive or negative, these are the factors. Did you understood? Whether to go for positive or negative, these are the factors. Now see second question. What are the factors that assist the auditor in determining whether external confirmation should be used? So there's a difference in earlier question and this question. Earlier was whether to go for positive confirmation or negative confirmation. This question is whether to go for external confirmation or not. Whether to go for external confirmation or not will depend on how are the respondents. Simple. उस पे depend करेगा. Respondent कैसे? तो confirming party's knowledge of subject matter, the ability or willingness of the confirming party to respond, objectivity of the confirming party. So when I'm talking about should I go for external confirmation depends on how that other persons are. If they are going to report properly, if they are going to reply properly, then only you can go for external confirmation. So did you understood question 1, 2 ka difference? First one is whether I should go for positive confirmation or negative confirmation request. Second is whether I should do external confirmation or not. Okay, next is fine. Other things are all okay. Going to SA 510 is initial engagement opening balance. SA 510 initial engagement opening balance. Come on, we need to push ourselves. We need to push to the limits, whatever is possible from our side. Don't stop in between. Every 1.5 hour, we are taking half an hour break. Okay. Initial engagement opening balance. This essay is applicable only when it's an initial engagement. When do I say it's an initial engagement? Financials are audited for the first time or they were last time audited by someone else. Acha, whenever it's an initial audit engagement, you are required to obtain a sufficient appropriate audit evidence about what? The closing balances are correctly brought forward. The opening balance do not contain a material misstatement affecting the current period and the accounting policies are consistently followed. TK. So 3 things. Closing are correctly brought forward, opening balance does not contain a material misstatement and the accounting policies are consistently followed. TK. So auditor shall obtain sufficient appropriate audit evidence that opening balance does not contain a material misstatement affecting current period. Kaise? So this point is important. How? So 1. I need to see the prior period is correctly brought forward. And now, if there were some adjustments related to prior period, they are correctly shown as prior period item in current year. AS में there's a prior period item, Ind AS में restate हो जाएंगे opening balances. ठीक है. Plus you need to see the opening balances reflect the appropriate application of accounting policy. So whatever accounting policies were followed past में वो भी बराबर थी. Appropriate accounting policies were followed. And third, you can use one or more of the following. How do I understand opening balances do not contain a material misstatement affecting current period? You see they are matching with previous year. Okay, if anything comes up in this year related to past year, appropriately shown as prior period. Second, past mein appropriate accounting policies were followed. And third, I can do one or more of the following. What is one or more? If the financials were already audited. If the financials were already audited, can I rely on the figures reported by previous auditor? Yes. So you can peruse the copies of audited financial statement. But if they were unaudited, then some procedures of current year will help you to understand opening is correct or not, or you can do any specific procedure regarding opening balance. For example, current asset, current liability, debtor. If there was a debtor opening, this time it's collected. So can I say current year ka collection helps you to know how opening mein debtor hoga? The same way current year creditor we have paid. If you have paid the creditor in current year, we can understand opening may it would have been there. So this is some procedures of current year helping you. But that cannot be the case for inventory. Inventory में वो नहीं चलेगा. Inventory if you are verifying today, you have to go back, roll back करना पड़ेगा. Today it is this month, तो उस दिन कितना होगा? You may go for a rollback kind of thing. Same way for non-current assets and liabilities, I can go and check the bills. Like last year a machine was purchased, I can go and check the bill of last year. I can do any specific procedure related to last year. A simple, if they are audited, I'll just peruse the copies of audited. If they are not audited, some procedures of current year will help me, or I can do a specific procedure specifically related to opening balance. Are you clear? Okay. Then I need to see the consistency in accounting policy. If accounting policy has been changed, so uska effect is properly shown or not, that I need to check out. Okay, now coming to the reporting. If you are unable to obtain sufficient appropriate audit evidence about opening balance, qualified or disclaimer. Okay, if you find opening balance contains a material misstatement, If you find out opening balance contains a material misstatement affecting the current period also, so now this year you're required to give a modified report. If it is affecting the current period, you're required to give a modified report. If accounting policy is not consistently followed, and the thing is, change is not properly reflected in financials, then in that case I'm required to give again a modified report, qualified or adverse. Important over here was only this point, the audit procedures related to opening balance. How do you ensure the opening balance does not contain a material misstatement affecting current period? Fine, next is your SA. Acha, now coming to illustration 3. Wait. I'm coming to illustration 3. The auditor has to satisfy about the opening balances. What you will do in following cases? When the financials were already audited by previous auditor, if they're already audited by previous auditor, I can ordinarily place reliance on the closing balances by perusing the copies of audited financial statement. But if they are audited for the first time, then I need to check it. Kaise check karunga? Some procedures of current year will help me to understand opening are correct or not. Or second, I can do any specific procedures related to opening balance. Okay? Now, if you are not satisfied about correctness of opening balance, then you are required to give a modified report, qualified or adverse. If you are not satisfied, if you are not able to obtain evidence, then it's qualified or disclaimer. So if it is materially misstated, it will be qualified or adverse. Are you clear with this? SA 510. Okay, next one is SA 520. SA 520 is analytical procedure. See, what is analytical? It's evaluation of financial information through analysis of relationship between financial and non-financial data. So you don't just analyze the financial thing, you also analyze the non-financial. Evaluation of information through analysis of relationship. Relationship is ratios and trends. And it also includes investigation which is necessary of the identified fluctuations or inconsistencies in relationship. If you find out some inconsistency in relationship or ratios not matching, the investigation is also a part of analytical procedures. Analytical procedure is required at all the stages of audit, planning, implementation, conclusion. And if you see the objective, just by doing analytical procedure, I cannot get a sufficient audit evidence, but appropriate ho sakta hai. So I can get a relevant and a reliable audit evidence, and they've clearly given that you need to do analytical procedures at end of audit that will assist you in forming your overall conclusion. So can I say mandatorily analytical procedures at year end has to be done? Two objectives are there. Okay. Now, how do I do analytical procedure? Compare with prior period, compare with budgets, compare with industry elements, industry standards. Okay. Now, how much I can rely on external analytical procedures? How much I can rely on analytical procedure depends on, if item is material, I should rely less on this, do other things also. If other procedures and analytical are giving a same result, then I can rely more. How much accuracy I am expecting, and how are the inherent and control risk? If inherent and control risk is high, chances of frauds errors are more, I should not do only analytical, I should also do something else. Acha, question. Whether investigating the inconsistencies in relationship and the significant fluctuation, is that also a part of analytical procedure? Yes. How to do an investigation? You inquire with the management and obtain appropriate audit evidence relevant to management response. Okay, so don't just inquire. Inquiry ke baad whatever management said, uske liye you obtain appropriate audit evidence about the response. And second, you can perform any audit procedure whichever you deem fit in the circumstances. Did you understand? Any audit procedure whichever you deem fit in the circumstances. Okay, let's see over here. Illustration 2. What are the reasonableness tests used in analytical procedure? What are the ratios used in analytical procedure? And what are the sources of information from which you can do analytical procedure? Okay, three things: reasonableness test, ratio, and sources. Kahan se information milegi? First, reasonableness test. Loan is this much, rate of interest is this much, so interest should be this much. Okay, sales is this much, GST should be this much. Okay, now suppose raw material consumption is this much, so output, production has to be this much. This all are reasonableness test. Did you understood reasonableness test? Okay, ratios are nothing but GP ratio, inventory turnover ratio, profitability ratio. These are all ratios. And where do I get this information? Where do I get this information to do the analytical procedure? One, from interim financial information, from budgets, from management account, from bank records, VAT returns, etc. You get the information. Okay, next is, check over here. Question 6. Question 6. The result of analytical showed inconsistency. Result is shown inconsistency. Can I say we need to go for investigation? State the course of action that auditor should take. So whenever you find inconsistency, you're required to investigate. What comes under investigation? Inquiring with management, obtaining appropriate evidence about the management response, and number 2, any specific other audit procedure whichever you deem fit in the circumstances. Next one is SA 530, last one before break. SA 530, the last one before break. Pay attention. Audit sampling. Okay, what do you mean by audit sampling? Application of audit procedure to less than 100% of population. Now, whenever I go for sampling, there is a sampling risk. This is important. What is sampling risk? It is a risk that the auditor's opinion based on sample may be different if the whole population was subject to the audit. If you had given an opinion based on whole population, the opinion would have come different. Now imagine if you are doing test of controls. If you are doing a test of control, what can happen is, if you are doing test of control with the help of a sample, in sample you found lesser errors. If sample you found lesser errors, you feel the controls are more effective than they actually are. But if in sample you found more errors, you find controls are less effective than they actually are. So when I'm doing test of controls, the sampling risk will be, I may feel controls are more effective than they actually are, or I may feel controls are less effective than they actually are. But when I'm doing a substantive procedure, test of detail, okay, I'm doing checking of some figure based on a sample. If sample mistakes are not there, so I feel there is no material misstatement when in fact it was there. Or if I feel more misstatements are there, I feel there's a material misstatement when in fact it was not. So यहाँ पे material misstatement does not exist when it in fact does, and material misstatement exists when it in fact does not. So can I say simple words is, either is in sample you found lesser errors, population में there are more percentage wise, or in sample you find more error, population में there are less percentage wise. So these are the two ways sampling risk can affect. Are you clear with sampling risk? Very important. Okay, anomaly. Anomaly is like a exceptional error or exceptional misstatement or a deviation. If you are doing a test of controls, the word क्या use होता है? Deviation. If you are doing a test of detail, the word is misstatement. So misstatement or a deviation which you identified in a sample, but it is not a representative of a misstatement or deviation in the entire population. Now, requirement number 1 is important: sample design, sample size, sample selection. Okay, design of sample should be based on 2 things. 1, the purpose of your audit, and the characteristic of population. Size depends on how much sampling risk you are ready to take. If you are ready to take more sampling risk, you can have a lesser sample size. So there is an inverse relationship between sample size and sampling risk. And third one, selection. You need to select in a manner every unit has a chance of selection. I'm not telling every unit should have an equal chance, but every unit should have a chance of selection. Select ho gaya, you perform audit procedure. After performing, you will find out some misstatements, deviation. Okay, this was misstatement deviation in the 40 which you check. What about remaining 60? Project, and then you evaluate your result. Okay, illustration 1, value weighted sampling and stratified sampling. Okay, stratified sampling, remember the population is divided into homogeneous units, strata. So all sales between 1 to 25,000, then all sales between 25,000 to 50,000, 50,000 to 1 lakh, and more than 1 lakh. Okay, so 1 to 25,000, I'm selecting 1 in 10, 25,000 to 50,000, I'm selecting 1 in 5, 50 to 75, I'm selecting is basically say 1 in 2, more than 1 lakh, I'm selecting all. So wo ho gaya stratified sampling. And a result of a strata can be applied only to the remaining units of that strata. So 1 to 25,000 mein whatever mistakes are identified, so I guess I can say remaining 1 to 25,000 mein that much mistakes will be there. So we are dividing by the basically monetary value, and the result of basically that stratum can be projected only to that stratum. ठीक है. Now what is a value weighted selection? Imagine your total sales is 10 lakh. The total sales is 10 lakh and there are, we need to select 100 bills. हमें 100 bills select करने हैं. कितने bills select करने हैं? 100. तो 10 lakh divided by 100, can I say it comes 10,000? So wherever cumulatively the sales exceeds 10,000, that item will get selected. तो cumulatively आप पूरा एक sales file बनाओ, invoice 1, 2, 3, 4, 5, 6, उनका amount and then cumulative amount. Cumulatively multiple of 10,000, cumulatively 10,000, 20,000, 30,000, 40,000, wherever that is being crossed, that item gets selected. उसको बोलते हैं value weighted selection. Item with a more value will have a more chance of selection. Item with a lesser value have a lesser chance of selection. अच्छा, Shivram has a question. Sir, can we send positive confirmation request to one class of trade receivable and negative confirmation request for another class of trade receivable? Dear, if they are for different goods, इसको अलग goods बेचें, इसको अलग goods बेचें. This goods में the controls are really strong, वहाँ पे risk is not there, the items, the list is given is followed, then you may do it. So if they are debtors related to different businesses, like we do two businesses, one business ka debtor, another business ka debtor, we can follow one may positive, one may negative. Are you clear? Okay, now this question according to me is important. Factors influencing sample size. Okay, यहाँ पे it's written for test of control. There's another question for test of detail, but answer is similar. Factors influencing sample size. Okay, one, how much risk you feel. If you feel risk is more, the sample size should also be more. Second, the tolerance, how much you are ready to tolerate. If you are ready to tolerate more errors, you can have a lesser sample size. Because if you are ready to tolerate less, the tolerance limit will be crossed. You have to add the samples. The tolerance limit is less, more checking will be there. Expected rate of deviation. As they talked about the word control, यहाँ पे word deviation लिखा है. If they talked about word test of detail, word will be expected rate of misstatement. So if you have more deviation expected, increase the sample size. How much assurance you need? If you need more assurance, more should be the sample size. And number of sampling unit. Now, number of sampling unit does not affect the sample size. Imagine, you go to a bank, interest transactions are 10 crores. Still, you are checking 400 only. So if transaction were 10 crore or transactions were 1 crore, you will check maximum 400 only. तो उससे फर्क नहीं पड़ेगा. The number of sampling units, उसकी impact is negligible on sample size. Okay, non-sampling risk is important. What is non-sampling risk? Auditor reaches to an erroneous conclusion for any reason not related to sampling risk. For any reason not related to sampling risk. Now, this arises due to sample galat select nahi hua. Sample is properly selected, but you use inappropriate audit procedure. You misinterpreted the audit ka result. You fail to recognize a misstatement or deviation. Sample was fine, but you fail to recognize a misstatement or deviation while checking it. So these are non-sampling. Non-sampling are human mistake, misinterpreting the result, or applying procedures which are not appropriate, relying on some erroneous information. तो sample में गलती नहीं है, sample के checking में गलती है. That is your non-sampling risk. Done. This was your SA 530. Any doubts? Anybody till now? Any doubts? Anybody till now? Again, we take a break of 25 minutes. We are meeting back at 12:10. So there is a break till 12:10 p.m. and next session में will finish off all your standards. तो 12:10 से लेके approximately by 1:30-1:45. By 1:30-1:45, all your standards will get over. Then we'll take break and we'll start with the remaining chapters. Enjoy your break. Any doubts are there, you can just type in over here. I'll take up all your doubts after the break. Okay, hi, welcome back. Chalo, let's move ahead. We finished till SA 530. We finish off the remaining standards now and then we'll take a lunch break. Yeah, so 540 to SA 720, that is what is to be finished in this session. We are targeting to finish it by 1:45. I repeat, we are targeting it to finish by 1:45, then 1:45 to 2:30 will be the break. 2:30 onwards will again start. Now, probably we'll not be able to finish at 7 today. We'll be finishing by 8:30. Repeat, 7 ki jagah will be finishing by 8:30 today. Okay, let's go to SA 540. Okay, S540 is for audit of accounting estimates. Many places in accounts we know the estimates are involved, and estimate is nothing but approximation of an item in absence of a precise measurement. Now there's a word called estimation uncertainty. Estimation uncertainty is suspectability, the chances of a accounting estimate and a related disclosure to an inherent lack in precision of measurement. Means there's a possibility that estimate can go wrong. If there's a high possibility estimate can go wrong, it's a high estimation uncertainty. If there's a low possibility that estimate can go wrong, it's a low estimation uncertainty. If it is a high estimation uncertainty, it's a significant risky area. And remember, significant risk requires a special audit consideration. Okay. Now over here, requirement number 1, risk assessment procedure. So how do I identify risky area related to accounting estimate? Now see the answer. You have to identify risky area. So you have to write about obtaining understanding of entity, environment, internal control. Remember, we identify risky area by understanding the entity, environment, internal control. But the points has to be related to the accounting estimate. So risk assessment procedure, first we need to obtain understanding of the following: the requirement of applicable financial reporting framework. How does management identify transaction events which need a estimate, and how does the management make the estimate? And uske liye the methods used, the relevant control used, the whether they used expert, the assumption used, is there any change in the method which was there last time, etc. So risk assessment procedure. Third point is important: how do I respond? How do I respond to the assessed risk of material misstatement? Now see, first we understood what management is doing. Now we test. Whatever management is doing is proper or not. So whether the management has appropriately applied the requirement of framework and methods are appropriate, applied consistently. And we can also, for estimates, we can also do one thing: we can take up the subsequent event, because the actuals will come up after the year is over. So you can also take up the event occurring up to the date of audit report. Test how the management has made the estimate, unka method is appropriate, assumptions are reasonable or not. If they have any control in making estimate, so controls are operating effectively or not. That also you can take it, and you can develop your own point estimate or a range estimate. You can develop your own point estimate or range estimate. Auditor can have a point estimate or range estimate. Management always will have a point estimate. Now point number 4 is important. If there is an estimation uncertainty, if there is an estimation uncertainty, it's a significant risk. If it's a significant risk, we are required to perform special audit consideration. So I have to do some further procedure. So what further procedures are to be done? The further procedure may first, the auditor shall evaluate the following: whether the management has considered the alternative, why did it reject the same? Whether the significant assumptions which are used by the management are reasonable or not. And third, many times the reasonableness of management thing depends on basically some course of action. So estimate barabar hai ya nahi depends on course of action. So our production will be this much, subject to we are adding a new machine. So whether the management intend to carry out that specific course of action, and do they have an ability to do so, that also you need to evaluate. So if it is a estimation uncertainty, you are required to check 3 things extra. Which are the 3 things? Did management consider alternative? Why did it reject the same? Whether the significant assumptions used by the management are reasonable or not. And third, when reasonableness of significant assumptions used, when we are checking the reasonableness of significant assumptions which are used, so whether management intend to carry out a specific course of action and whether they are having an ability to do so. I hope you are clear. Now, if auditor feels the management has not adequately addressed the effect of estimation uncertainty, so while checking this you feel management has not appropriately addressed the effect of estimation uncertainty, then you should come out with your own range estimate and try to see whether the estimate is falling in the range or not. The auditor shall develop a range within which they will evaluate the reasonableness of estimate. This point is important. Okay. Now check question number 1. Some accounting estimate involve high estimation uncertainty, and they are based on significant assumption and they have a higher risk. Okay, so when we say there is a higher risk and higher estimation uncertainty, it's highly dependent on some judgment. They are not calculated using some standard measurement technique. similar estimates was done in past, a substantial difference came up, and the fair value is based on a highly specialized entity developed model. If it's an entity developed model, not a common one, so I can say it's a estimation uncertainty barabar hai ya nahi, we don't know. So this is question number 1. Okay, question 3 is important. The degree of estimation uncertainty. The degree of estimation uncertainty may be influenced by many factors. So how much is estimation uncertainty? Depends on factors. Which factors? 1. How much the estimate depends on judgment. The sensitivity. If this small factor changes this much, estimate kitna change hoga. Third, existence of recognized measurement technique. If recognized measurement technique is there, estimation uncertainty will go down. Length of forecast. More the length of forecast, more is the estimation uncertainty. Availability of reliable data from external sources, and whether we are using observable or unobservable data. If you are using unobservable data, there is a more estimation uncertainty. If you are using observable data, less estimation uncertainty. So factors influencing degree of estimation uncertainty. Fine. Next, what are the matters that auditor may consider in evaluating the reasonableness of the assumptions used by management? So whether the assumptions used by management are reasonable or not. So I need to check what? 1. Individual assumptions are reasonable. The assumptions are interdependent, internally consistent. Internally they are consistent. They reflect the market assumptions. It should not be you should reflect a marketplace assumption. Plus, they should be consistent with the economic environment. They should be consistent with the plans of entity. They should be consistent with the assumptions made in prior period, and they should be consistent with the experience of the entity and other assumptions used by entity. If at all they are consistent with all these things, they appear reasonable, they reflect the market place assumption, then I say that assumptions are reasonable. Clear? Next one is question number 9. Check question number 9. This is important. 9th May, there's one simple thing. You want to obtain written representation related to assumptions. If I want to obtain a written representation related to assumptions, what all written representations I can take? 1. Appropriateness of the measurement process. The assumptions model used, they are all proper or not. The appropriateness of the measurement process. Second, it reflects the management's intent and ability to carry out the course of action. If assumption whatever are taken, they reflect what management wants to do. Third, the disclosures are complete. Now if you see, this essay, the objective was whether the estimates are reasonable and the related disclosures are adequate. So disclosures are complete and adequate, and there are no subsequent event which requires adjustment. So this 4 certificates representation we take. The question is, what are the representations related to accounting estimate? This 4 points. Next one, question 9 is fine. Question number 10. Okay, question number 10. Okay, there is an estimate which involves a significant risk. The estimation uncertainty is there. What are the extra points as auditor you need to check? Remember the 3 points in estimation uncertainty. We are required to write about that 3 point. Again, I tell you, in your question, last 1 or 2 lines are most crucial. Please make sure that last 2 lines you read it 2 to 3 times. Now going to SA 550, which is on related party. Okay, now see, normally it's not like always related party transactions have higher risk. So many times related party transactions are normal in a business. They may not have a higher risk, but however, sometimes they have a higher risk. Now when the circumstances which give higher risk are, 1, they operate through a complex range of relationship and structure. Second, the information system is ineffective in identifying which is the related party. And third, they are not conducted at normal market terms. So they generally may not be at higher risk, but the following circumstances give higher risk whenever this related party transactions are this way. Okay. Now coming directly to the requirements. Okay, who is required to identify the related parties? Management. Who is required to account the related parties transactions properly? Management. Who is required to disclose them in notes to accounts? Management. So when I say management is responsible for identifying, accounting and appropriately disclosing the related party transactions. Okay. Now the risk assessment procedure. Risk assessment procedure is identifying risky area related to related parties. Related to related party. 1. You understand what management does. To identify risky area, SA 315, understand the entity, environment, internal control. To understand the entity's related party relationship and transaction, inquire with the management the identity of the entity's related party, the nature of relationship with them, any transaction entered with them or not. Okay. You also understand the control the management has established. You also understand, everything is understanding. In risk assessment procedure, everything is understanding. Management is established to identify, account, disclose the related party transaction, to authorize and approve the significant related party transaction, to authorize and approve significant related party transaction outside the normal course. So what are the controls management has set up for related party? Everything you try to obtain understanding. Plus you remain alert and you share information with your team members. Now you identified the risky area. Now coming out with your responses. There are 2 questions which are very good. In responses, this A point is good, B point is good. A point. You identify a related party transaction or related party which was previously unidentified or undisclosed by management. The previously unidentified or undisclosed you found out. First, promptly communicate to all your other team members. Okay. Now, whenever your applicable financial reporting framework establishes a related party requirement, request the management. Tell management, sir, give me all transaction with that party. And sir, if I was able to find out, why you were not able to find out? So promptly communicate to all your team members, request the management to identify all transaction with that parties and ask why you failed to identify it. Okay, now whatever transaction they gave, you perform substantive procedures on the transaction. Now, management hid something over here. So can I say it can be other place also? I found one unidentified or undisclosed related party. There may be others also. So reconsider the risk, perform additional procedures, whatever you feel necessary. And if non-disclosure by management appears intentional, evaluate the implication on your audit, including modifying your auditor's opinion. Did you understand? So this was, if you identify a related party which was unidentified or undisclosed by the management. Next one, if you find some significant related party transaction outside the normal course of business. So what I should do, I should go through the contract. I should be going through the contract and evaluate whether the business rationale suggests a fraudulent financial reporting. So is it entered into for some fraudulent financial reporting purpose? Because significant related party transaction outside the normal course. You don't give commission to anyone, but you have given commission to director's son. Why? Why? That's business rationale. Then the terms of transaction are consistent with the management explanation. If management is giving explanation, uske saath the terms are matching or not, and they've been appropriately accounted and disclosed. Plus, as this is something outside the normal course, it has been appropriately authorized and approved. This is what we need to check. TK, this was your related party. Let's see if any questions are good. Yeah. First one actually is good. This question 2 over here. Now, it's not written as important, but according to me is important. See, what are the matters which can be taken in discussion amongst engagement team related to related party transaction? In your engagement team discussion, what are the points related to related party which can be taken? See, there was a question earlier. Why engagement team discussion is useful and what are the matters covered under discussion? That was general. This is what matters can be covered under engagement team discussion specifically for related party. Okay, so over here, nature, extent of entity's relationship, emphasis on maintaining professional skepticism, circumstances where there can be an existence of related party relationship, records, documents जिससे हमें पता चलेगा related party relationship is there or not, the importance that management and TCWG attach to identification, appropriate accounting, disclosure, how much importance TCWG is giving for all related party things, uska bhi discussion we can do it in our engagement team discussion. That was specifically for related party, what engagement team discussion will happen. Okay, now check with this is fine, not relevant. How can you verify the existence of related party? So there are so many ways. This is okay, general question, inter-level, not final level. Now, this is also check. Okay, management is responsible for substantiating an assertion that related party transactions are at arm's length price. Okay, who has to substantiate related party transactions are at arm's length price? Management. How do they substantiate? One, they can compare the related party transaction with the identical similar transaction with unrelated ones. They can hire an expert and tell you that, sir, see, expert is told this is the proper value. Or they can compare the transactions with some market में terms, market में similar transactions are there उसके साथ. Not theirs but someone else उसके साथ. अच्छा, how will you evaluate? How will you evaluate that they are really at arm's length price or not? To consider the appropriateness of management process, verify the source of internal external data, and whatever assumptions they've used, whether they are reasonable or not. So one, how will management prove to you that they are really at arm's length price? And second, how you're going to check it. Did you understood two questions? Okay, going to next essay, essay 560. Going to the next essay, 560. Now, subsequent event. See, this is based on your AS4 or I'll say Ind AS 10 event occurring after the balance sheet date. So, as per your AS4, your subsequent event are divided in two parts, adjusting, non-adjusting. Adjusting event are those which provides additional evidence as to the circumstances prevalent on balance sheet date. They are to be adjusted in financials now only. Non-adjusting event are those which gives additional, which does not give additional evidence as to the circumstances prevalent. They are a kind of new circumstances which have came up. They are not to be recorded now. They will be recorded later. As per AS, if material, they are disclosed in BOD report. As per Ind AS, the non-adjusting event, if material, are to be disclosed in notes to accounts. Fine. Non-adjusting event affecting going concern will be treated as adjusting. Now, this essay, for this essay, there are two objectives. One, you should obtain a sufficient appropriate audit evidence about what? Any subsequent event which happened after year end till the date of auditor's report. Yahan pe it is till the date of auditor's report. Any subsequent event which requires an adjustment or disclosure in financial has been appropriately reflected in financial. And number two, any fact which comes to your notice after the date of audit report. Once you give audit report, then something comes up. If it was known before, you would have given a different audit report. How to deal with it? Okay, so coming to the first requirement, which is important. Coming to the first requirement, the auditor should perform procedures to obtain sufficient appropriate audit evidence that all events up to the date of audit report which requires adjustment or disclosure have been identified. Kaise hoga identify? One, you obtain understanding of what management does. You inquire with management whether subsequent event has occurred. You read the minutes of the meeting. Something big happened, they would have had the meeting. Read the latest interim financial statements. In addition, you can also have the latest budgets, cash flows. You can do inquiry with the lawyers. Is there any change in status of case after year end before the audit report? And you can also take a written representation from the management regarding the subsequent event. They have disclosed all to you, not hiding anything from you. This was important. Now, fact becoming known to auditor after the date of audit report. If it was known earlier, you had given a different opinion. So first of all, discuss the matter with management. See whether financial needs amendment, how management wants to deal with the situation. Now, isme there are two things. Financials are not yet circulated and financials are already circulated. First one is financials are not yet circulated. So, before the financials are issued. Okay, there is a change required in financial, management is ready to change. So, you check the amended financial, give a new report on amended financial. Old report, take it back, tear it, put it in dustbin. Achha, if management is not ready to amend, financial needs amendment, management is not amending. So if the report was not yet given, prepare ho gaya tha, not yet given, modify and give. If it was already given, tell the management, don't circulate that financials, don't circulate that audit report. Still, if they circulate, take appropriate action to prevent reliance on your audit report. Achha, if financials were already circulated, financial needs amendment, management is ready to amend. Management is ready to amend, so check the amended financial, give a new report on amended financial and review the procedure of management. Like those people who got the old financials, old report, they are informed about the situation that new financials, new report is coming. So review the procedures which are followed by the management, that those who have received the old, they are informed about the situation. This is the extra point. Achha, if management is not ready to amend, financial needs amendment, management is not amending, now financials is already circulated. Already circulate ho gaya hai. what I should do. Now you take appropriate action. Appropriate action can be, if AGM is pending, attend AGM, tell it at AGM, or if AGM is already over, publish it in newspaper. Done. यहाँ पे there is nothing much in your this standard. Okay. Check November 20 question. Check November 20 question. Now you are an auditor of PQR supplying food products to airlines, and now non-perishable, you need to stock non-perishable items for 1 month, and pandemic came up, things are kind of stuck up with you, and over here, see, if after year end, before the books are approved, if you understand there is a going concern issue and you are no longer a going concern, then the year which is over, you cannot prepare the accounts as per going concern. But our question is not that. What is the question? As an auditor, what would be the procedures to ensure all subsequent events are considered? What procedures are there to ensure all subsequent events are considered? This is your requirement number 1. Requirement number 1, that is your answer. Okay, now inquiry from management is helpful to understand the subsequent event. Which inquiries you can make? Which all inquiries I can make to management for understanding subsequent event? Whether any new commitment, borrowing, guarantees are entered, whether any sales or acquisition of asset has occurred or planned, whether there is an increase in capital or issue of new shares, debentures after year end till the date of audit report, whether any asset is appropriated by the government, taken away or destroyed by flood, fire, etc. Whether any new development regarding the contingencies, the litigations going on, is there any change in that? Whether any unusual accounting has happened after year end before the books are approved, whether anything has came up which affects your going concern. So these are all inquiries which are specifically related to subsequent event which I can do. Okay, this was your essay 560. Come to essay 570. This was 560, come to essay 570. 570 is on going concern. We know going concern is one of the fundamental accounting assumptions. So accounts are always to be prepared as per going concern. If accounts are not prepared as per going concern, if you are not a going concern, accounts will be on a totally different basis, say liquidation basis, where all your assets will be coming at your NRV. And then it has to be disclosed. Which is the basis used, that has to be disclosed. Now, as an auditor, we are required to obtain sufficient appropriate audit evidence about what? The appropriateness of management's use of going concern assumption. Because now people use going concern assumption even if they are not going concern. वो गलत है. You filed for bankruptcy and still you prepare accounts as per going concern, that's wrong. So you should obtain sufficient appropriate audit evidence about appropriateness of use of going concern assumption by management. Second, you need to conclude, is there any material uncertainty casting a doubt on entity's ability to continue as going concern? And third, how do you report over here? Okay, now important is first one, the risk assessment procedure. Identifying risky area related to going concern. Identifying risky area related to going concern. You understand what management does. So first of all, what you should do is, so when performing risk assessment procedure as per SA 315, the auditor shall consider whether event and condition exist which cast a doubt. For that purpose, you should determine whether the management has already performed a preliminary assessment. See, management prepared financial as per going concern. So they would have assessed now they are really going concern. So whether management has performed a preliminary assessment, if yes, you should discuss with the management and determine whether management has identified event which may cast a doubt on entity's ability to continue as going concern, and if they have identified, what are their plans to overcome it. So अगर management ने assess किया है, discuss that assessment, understand that assessment from them. If management has not done the assessment, then discuss with the management why they are telling that they are going concern without doing the assessment. क्यों वो लोग बोल रहे हैं वो लोग going concern है. Check illustration 1. Check illustration number 1. Auditor has determined management has already performed the preliminary assessment. How auditor should proceed? So I need to discuss with the management, have they come across any incident which cast a doubt on entity's ability to continue as going concern and their plans. Also, what auditor should do if such assessment is not done? If such assessment is not done, inquire with the management. Why do they say they are going concern without doing that assessment? That's the answer. Plus, to identify risky area, you need to remain alert. आप alert रहो, and alert रह के you will be trying to find out the indicators, financial indicators, operational indicators, other indicators, inter-level question, not relevant for final exam. ठीक है. Now directly going to point 4, which is important. Okay, the first, we tried to identify events or condition which may have a doubt on entity's ability to continue as going concern. Now if such events or condition are identified, तो पहले we are trying to identify the events condition. Now we identified it. अब मिल गए. If we found out that event or condition, now what we need to do? So pay attention. First, if management has not performed the assessment, tell the management to make a detailed assessment. If they have not done the assessment of it, बोलो उनको sir, for this point, what are your views? Give a detailed assessment. Second, if management has already made an assessment, उनका plan था, तो whether that plan is feasible or not, workable or not, that you try to see. Third, if entity has prepared some cash flow forecast, कुछ cash flow forecast बनाए हुए हैं, तो reliability of the data you try to see, and whatever assumptions they have taken, the assumptions are reasonable or not in the forecast. Okay, any additional fact which has come up later on, management did some assessment from that day till today, is any additional fact coming to you, and take a representation like whatever management is telling that sir we are going to do this thing and will not have a going concern issue, take it in writing, they are really going to do it. So two things separate. One is we are identifying event condition where there may be a going concern issue, the requirement number 1. And when going concern issues, when events or condition are identified, now what to do? Now what to do is requirement number 4. See, event and condition which affect going concern are identified. Doesn't mean that we are not a going concern. Events hai. There might be one negative event. The effect of negative event might be mitigated by some positive event. It is possible your supplier basically is no longer available. You found out an alternative supplier. The raw material is not available. You found some alternative raw material. ठीक है. Now reporting is also important over here. So requirement 1, 4, 5 are important. Now coming to reporting, if you are not a going concern but accounts are prepared on going concern base, means the going concern assumption is inappropriate. If it is inappropriate and still if you prepare accounts on going concern, accounts are fully wrong, it should be on a totally different basis, directly adverse opinion. Okay, if there's a material uncertainty related to going concern, as such you are a going concern but one litigation going on. If you lose the case, you will not remain going concern. So there's a material uncertainty related to going concern. So we need to see whether the financial statement adequately disclose the principal event or condition which cast a significant doubt. And they should clearly state that there's a material uncertainty related to going concern and we may not be able to realize the assets and discharge the liabilities in ordinary course. So they have to write this in financials. If the financial has this disclosure, I'll give a clean report with an extra para drawing attention. That para is known as material uncertainty related to going concern para. But if the financial doesn't have this disclosure, the disclosure required, they have not done it properly, I'll give either a qualified or an adverse report depending on how the disclosure is done. So adequately disclose, you give a clean report drawing attention. Not adequately disclose, you give a qualified or adverse opinion. Are you clear? Are you clear? Okay, next. What are the additional audit procedures which are relevant when events or condition affecting going concern are identified? Now, this is nothing but your requirement number 4. Same thing over here. Fine, this is done. This is also okay, done. So, this was SA 570. Come to SA 580. Come to SA 580. Okay, SA 580 is representations by management. Now, we know representations by management are written statement provided by management to the auditor to confirm certain items or to support other audit evidence. So, whether this written representation or audit evidence, yes, they are audit evidence, but they are not sufficient appropriate audit evidence in themselves. The fact that I've got a reliable representation does not relieve me from doing the other audit procedures. The other audit procedures will remain same. Okay. Come to the requirement. First, you need to decide from whom do you need a representation. Point 2 and 3 are important. So we have to mandatorily take representation about. You have to mandatorily take representation about number 1. Management believes that they have fulfilled their responsibility for preparation, presentation of financial statement as per the applicable financial reporting framework. And number 2, they have completely disclosed all information to us. So this is mandatory I have to take. Plus other representation. Wherever essay requires, I have to take a representation. And in addition, wherever I want a confirming evidence, I can take a representation. Okay, what should be the date and period of representation letter? The date of representation letter should be as near as practicable to, but not later than the date of audit report. So it's as near as to the date of audit report, but not later than the date of audit report. And the representation, remember we have a current year figure, previous year figure. Now there's a SA 710 which tells whether we are reporting only on current year or both. If you are reporting on both, the representation should also be for both figures. If you are reporting only on current year, the representation should be only for current year. So date of representation letter as near as practicable to, but not later than the date of audit report. The reason is I can't take it before the financial statements are done. I cannot take it because one representation is management believes that they fulfill their responsibility for preparation of financial statement as per the applicable financial reporting framework. Next, 6th point is important. If I have a doubt over the reliability of representation. Now see, if you have a doubt over the management, if you have a doubt over the integrity of management, you may also have a doubt over the reliability of representation. Plus, if you find out that the representation are inconsistent with other evidences, you need to perform procedure to resolve the matter. Other evidence is wrong hai, representation wrong hai. To perform some additional procedures. And if basically the matter you could not resolve it, you feel that still there is a dicey, this is wrong, then it will create a doubt in your mind about the representation. And if one place representation are wrong, other places also representation can be wrong. So what they are telling, if you conclude representations are unreliable, you should take appropriate action, including determining possible effect on your opinion as well as your auditor's report. So doubt aaya. First, if you have a doubt about management, you will also have a doubt about reliability of representation. If it is inconsistent with others, perform some extra procedures, and you should try to reconsider the integrity of management. If you conclude they are not reliable, take appropriate action, including determining opinion change karna hai ya nahi. Acha, if you want a representation, management is not giving. If management is not giving the representation, discuss the matter with management. Why they are not giving? Kuch chupa rahe. To reevaluate the integrity of management and take appropriate action, including possible effect on your auditor's report. Okay, this is done. This is same question. Okay, now check this question. Illustration 4. There is some confusion regarding the date and period covered by the representation letter. What is the date and period? Date should be as near as practicable to, but not later than the date of audit report. And the period should be the period which is covered in your audit report. If you are reporting on both figures, the representation should also be for both the figures. Then come to SA 600. Using the work of another auditor. Now, another auditor means a branch auditor or a subsidiaries auditor. If I'm using their work, would I be responsible? Answer is generally no, you're not responsible for the work done by another auditor, except there were circumstances which should have aroused suspicion in your mind about their work and still you did not do anything extra, then only you will be responsible. Now, this question is important. Acceptance as principal auditor. If they're offering you a position of principal auditor, should you accept? You should accept position of principal auditor only when you are sufficiently involved in audit. Only when you are sufficiently involved in audit. How do I know I'm sufficiently involved in audit? So how much is the materiality of the portion which you are auditing? How much knowledge you have regarding the business of component? What is the risk in the component? Component mein risk kitna hai? And what are the other things which you can do to ensure that you are significantly involved in audit? To act as principal auditor, I should be significantly involved in audit. Okay, now the principal auditor ka procedure. So whenever you're planning to use the work of another auditor, I have to check his professional competence if he is not a member of ICI. Okay, now I need to perform procedure to obtain evidence that his work is adequate for our purpose. How do I understand his work is adequate for my purpose? So I need to advise him I need to tell him what is the use of your work and report to be done by me. I need to tell him the areas which requires a special audit consideration. I need to tell him the completion timetable for completion of audit, and I need to tell him the significant accounting, auditing, reporting requirement and take a representation that he is complying with it. So I need to see that his work is adequate for my purpose. TK. Plus, principal auditor might discuss with other auditor what? The audit procedures applied, the written things, whatever that other auditor has done, I can discuss with him. I cannot tell him to give his working paper, but I can tell him to fill a checklist. I can tell him to fill a checklist or a questionnaire to understand whether his work is adequate for our purpose or not. Clear? There should be coordination, that's fine. Coming to division of responsibility. Whether a principal auditor is responsible for the work of component auditor, answer is no, you're not responsible except in circumstances which should have aroused suspicion about his work and still you did not do anything extra, then you are responsible. You need to clearly write down in your audit report, this many branches are audited by other auditor, we have relied on the report given by them. So clearly division of responsibility is to be written, and whenever you are not happy with the work of other auditor ka work you are not happy and you don't have a time to do extra things yourself, so can I say you are unable to obtain sufficient appropriate audit evidence, you should land up giving a qualified or a disclaimer of opinion. Then now May 18 question, principal auditor is asking the other auditor to share the working papers. Can I tell the other auditors to give a copy of working paper? No. Okay, can I tell him to fill a checklist or a questionnaire to understand how he has done the work? Yes. Can I do discussion with him? Yes, that all is allowed, but sharing, you cannot ask for working papers. Okay, this is okay. Chalo, coming to SA 610, relying upon the work of internal auditor. It is relying upon the work of whom? Internal auditor. Now this SA is applicable only when an entity has an internal audit function. Even when there is an internal auditor, if I want to rely on internal auditor, the sole responsibility of report is only on us. Relying upon internal auditor does not reduce our responsibility. When you're relying upon the component wala auditor, other auditor, the responsibility was reduced, you're not liable for his work. But when you rely on internal auditor, he's a management's guy, rely at your own risk. Now, there are four basically thing over here, requirements. Number one, determining whether. Now see, there is already some work which internal auditor has already done. And now there is some work which I want him to do for me. I want a direct assistance of internal auditor. So two things. One, I want to use the work of internal audit function, and second, I want to use internal auditor to do some extra checking, to work as my assistant. Two separate things. So first, whether determining whether the work of internal audit function can be used. So whatever he has done, can I use his work? If yes, to which areas, what extent? So determining whether, which areas, what extent I can use the work of internal audit function. If I am using, what to do, that's your requirement number 2. If using, what to do. Now requirement number 3 is determining whether internal auditor can be used to provide direct assistance. I want him to check extra thing for me. The determining whether internal auditor can be used to provide direct assistance, in which areas, what extent, and if I am using, so what to do, that is your requirement number 4. Using them. So pehle determining whether I can use, and then if I use, what to do. So 4 things are there, determining whether I can use the work of internal audit function. Second is, if using, what to do. Third, determining whether I can use him to provide direct assistance, and if using, what to do. Are you clear? Okay, the first one. So whether I can use the work of internal audit function, you evaluate the internal audit function. So you need to understand whether the internal audit function ka organizational status, hierarchy in organization, and the policies procedure followed by them, does it support their objectivity? Are they able to work objectively? Okay, level of competence of internal audit function, and do they have a systematic and disciplined approach? So determining whether, uske liye we evaluate it. Now which areas, what extent, I need to understand areas what they have covered. I should plan to use less of their work, do more of myself only. Even after using their work, I should be sufficiently involved in audit. And if you have planned to use their work, before using, communicate with TCWG. Now, if I am using their work, so I need to first of all discuss the planned use of the work with the internal auditor. I should read the internal auditor ke report, and I should perform other procedures in order to ensure that his work is adequate for my purpose. If I'm using his work, I have to ensure that his work is adequate for my purpose. For that, I need to see he had properly planned, supervised, documented the work, he had obtained sufficient appropriate audit evidence, and the conclusions reached by him were proper or not. And together with using the work of internal auditor, I might also be doing something else. सिर्फ उस पे तो होगा नहीं. So what are the procedures which I will do? The nature, timing, extent of my procedure will depend on judgment कितना involved है, risk कितना involved है, whether he is able to do it objectively, and the level of competence. Are you clear? Now, determining whether I can use him to provide direct assistance. Very simple, two things you see. Whether I can use him to provide direct assistance. So I have to see whether he will be able to work objectively and does he have a level of competence. So I need to evaluate existence and threats to objectivity and the level of competence. If I feel there's a significant threat to objectivity, don't use him as a direct assistance. If you feel he lacks competence, don't use him. Okay? Now they've clearly given deciding now which areas, what extent I can use him. So deciding which areas, what extent I can use him, so they've clearly given over here, we should not use him wherever significant judgments are involved. If significant judgments are involved, that areas don't use him to provide direct assistance, do it yourself. Second, there's a higher risk of material misstatement. Third, the work relates where the work was done by him only. I cannot tell him to check his work. And fourth, the decisions which I have to make in accordance with this standard. The decisions which I have to make, like how much to rely on internal auditor, I have to make. I cannot tell him to take that decision on behalf of me. That's not allowed. So I cannot use him to provide direct assistance if judgment involved is high or risk involved is high or he has only done the work. वहाँ पे I cannot use him. ठीक है. Now, if I am using him to provide direct assistance, now what I should do? I should take it in writing from the management that they will not interfere in between. I should take it in writing from the internal auditor that he will maintain confidentiality because he's working for me, not for management. And I should direct, supervise and review his work because he's working as an assistant to me. Are you clear? Okay, there's one question over here. Check. This is important. The external auditor asked the internal auditor to provide direct assistance regarding what? Evaluating the significant accounting estimate and assessing the risk of material misstatement. Evaluating significant accounting estimate, assessing the risk of material misstatement. Can I do this? So see, they've clearly said you should not use direct assistance where judgment involved are high. Now, किसको बोलेंगे significant judgment? Assessing risk of material misstatement, assessing sufficiency of test performed, evaluating management's use of going concern assumption, evaluating significant accounting estimates. So can I say we want it for this work, we want it for this work, both are covered under significant judgments, so I cannot use internal audit function for this work. Are you clear? Okay, now there's a question, sir, what is the weightage of your auditing standards in exams? Dear, auditing standards ka weightage will range from around 30 to 40 marks. The 30 to 40 marks will be the weightage of auditing standards. Next is using the work of an expert. This is auditor's expert, not management expert, auditor expert. Okay. So, auditor's expert is a person who is helping the auditor in obtaining sufficient appropriate audit evidence. And he will be a person expert other than the field of accounting and auditing, because accounting, auditing, you are only the expert. So now, first of all, whether you need an expert or not, depends on the materiality of item, nature, complexity of item, and other evidences available. Now, together with using expert, what will be the nature, timing, extent of my other audit procedure? Okay, I'm using expert. What will be the nature, timing, extent of my other audit procedure? That will depend on, one, the matter कैसा है? Second, the risk कितना है? Third, the significance of expert work to the overall thing. If expert ka work becomes very, very important, I also should do something else. Then my knowledge and experience with the expert, if I feel he's a very good guy, does work excellently, I may do other things less. And whether he is subject to your firm ka quality control procedure. If he allows you to supervise him, review him, then you might not do other things, you might do other things less. So together with expert, what should be the other audit procedure? This was thing. Now, before I appoint an expert, I need to check his competence, capability, objectivity, field of expertise, and when I'm appointing, I should enter into an agreement. This is important. So entering into agreement on following matters. Which matters may I need agreement? The nature, scope, objectivity, roles and responsibility, how is the communication to be done, reporting done, and he has to maintain confidentiality. Now there may be a need for a more detailed agreement. There may be a need for a more detailed agreement. Which are that more detailed agreement? कब चाहिए आपको? तो one, the expert will have access to sensitive or a confidential information. Roles are different from what normally is there. Multi-jurisdiction legal laws apply. Matter is highly complex. You're not previously worked with expert, and greater the extent of auditor's work and uska significance, his work is very important. In that all cases, you need a more detailed agreement with him. So if I have not worked with expert earlier, there's a more detailed agreement required. If I don't do agreement only, that's wrong. You'll be guilty of professional misconduct. SA gets violated. Okay, now you need to evaluate the adequacy of the expert's work. Don't blindly rely on him. Whatever method he has used, the method is proper or not. Whether he has used any assumptions are reasonable or not. Source data barabar liya hai ki nahi, that all you need to check. Plus you need to see whether his work is consistent with your other evidences, because you also done something else, so consistent hai ya nahi. Acha, can I write the name of expert in my report that I have relied on this expert? Can I write the name? If you're giving a clean report, no. Modified report you can write, but by writing the name, the responsibility is not shifted. Okay, now there's a question from you say now that, sir, when are you starting with A category topic? Dear, we are doing auditing standards currently. Yesterday we finished company audit, professional ethics. So actually all 8 categories getting over, and from 2:30 p.m. onwards we'll go to the miscellaneous topics, all other remaining chapters. Next we have, now check this question, May 19. What the question is asked, if you see, state specific procedure which you should follow to evaluate adequacy of expert. Specific procedure. They are not telling what you need to check, how you will check it. So method, data, assumption check karna hai, but kaise, that is the question. We need to check method, data, assumption. How? Specific procedure. So I can make inquiries with expert. I can review the expert's working paper. I can try to have a corroborative procedure, other evidences. I can have a discussion with another expert, or I can have a discussion with the management about the expert's report. So this is specific procedure. Ye word was important. So it's not what you want, it's basically what you will be checking, how you will be checking. That was the question. Okay, which type of reports or opinions I can take from an expert? That is given. So valuation of complex financial instrument, actuarial valuation, estimation of gas oil ka reserves kitna hai, environmental liability related thing. So which type of reports I can take from them? That's okay. You're working for the first time, but you did not go for agreement. Dear, you need a more detailed agreement over here. TK, this was your SA 620. Come to SA 700. Come to SA 700 series. Let's finish it. Okay, 700 series is on reporting. SA 700 is on clean report. 705 is on modified report. Okay. Coming to 700, why do we need a format of reporting? Reason: if there's a format of reporting, what will happen is everybody will cover minimum things. And they also give you flexibility. If there is a modified report, you can add something. Why modified? This, that. So this standard promotes consistency in audit report, but also recognizes a need to give flexibility to accommodate a particular circumstances. This promotes global credibility. So it promotes credibility in global market, and basically the users will be able to identify something unusual very easily. So whenever you're giving a modified report, heading ही change हो जाता है various places पे. So it becomes easy for the users to find out the things. Now, 2 things. One, you have to form an opinion. Second, you have to express clearly your opinion through a written report. Coming to forming an opinion. In that, C point is important. Okay, forming an opinion. The auditor shall form an opinion whether the financial statements are prepared in accordance with applicable financial reporting framework for this purpose. If you just recall, SA 330, 315 you identified risk area, 330 mein you did the test of controls, substantive procedure, then whatever misstatements were found out, SA 450 you evaluated the misstatement. The SA 450 mein whether the uncorrected misstatements are material or not. If uncorrected misstatements are material, you modify the report. uncorrected. So we need to evaluate whether uncorrected misstatements are material or not, and second, whether we obtain sufficient appropriate audit evidence. These are the two main things. So whether you obtain sufficient appropriate audit evidence and the uncorrected misstatements are not material. That is the two main things. For this, you have to evaluate. Okay, so what are the things you need to evaluate for this thing? Whether the significant accounting policies are adequately disclosed, they are appropriately selected and applied, the estimates are reasonable, the presentation is done in a proper manner which is comparable, understandable, adequate disclosures which are required by Schedule 3, etc. has been done, terminologies used in financial statements, the titles are all appropriate. And if at all they are following a fair presentation framework, remember under fair presentation framework we use the word true and fair. If it's a compliance framework, we don't use the word true and fair. We say the financial statements are prepared in accordance with XYZ laws of India. Okay. So if it's a fair presentation framework, we also have to consider whether it achieves the overall presentation structure, content, achieves a fair presentation. Now check, auditor is required to make specific evaluation while forming an opinion. Answer is this point number C. That's a specific evaluation which we need to do. Okay, now forming an opinion. If the auditor concludes based on audit evidence is obtained, the financial statement are not free from material misstatement. If you conclude financials are not free from material misstatement, or you are unable to obtain sufficient appropriate audit evidence, the auditor shall modify the report. If you feel that they contain a material misstatement or you are unable to obtain evidence, you should modify the report. So this was forming an opinion. Now going to expressing your opinion through a written report. There are 12 matters in your audit report. First is title, independent auditor's report. Addressee, appropriate addressee. If it's a firm we are auditing, it will be to the partners. Next is auditor's opinion. There are two para in opinion. One is the intro para and the actual opinion para. Intro, actual opinion. Actual opinion will write, in our opinion, to the best of information according to explanation given to us, the aforesaid financial statement gives the information required by the Act in a manner so required, and it shows a true and fair view of state of affairs as at this date, profits and cash flow for year ended on this date. Okay. Now, basis for opinion is important. Basis for opinion is important. Now, there are 4 general sentences which we write in basis for opinion. Which are the 4 general sentences? Number 1. Audit is conducted in accordance with standards on auditing issued by ICI, or if it's a Companies Act, issued under section 139 subsection 10 of the Companies Act. Then our responsibility as per the standard is given in a separate para named as auditor's responsibility in relation to audit of financial statement section of the audit report. Plus, we will also write we are independent of the entity in accordance with the relevant ethical requirements, and we also fulfill other ethical requirements related to independence. And we also complied with the code of ethics which is related to independence. And last, we believe that the audit evidence we obtained is sufficient appropriate to provide a basis for our audit opinion. The 4 general sentences, this is important. Acha, if there's a material uncertainty related to going concern adequately disclosed in financials, we give a clean report with extra para drawing attention, which comes here. Okay, key audit matter is only for listed companies. We'll come to it in SA 701. Okay. Next comes responsibility of management, responsibility of auditor. So management ka responsibility is 1 for preparation of financial statement as per the applicable financial reporting framework, and establishing internal controls which will ensure that the financial statements are showing a true and fair view and are free from material misstatement whether due to fraud or error. So one is preparing financial statement and internal control. Uske saath saath there's one more, that is assessing the ability to continue as going concern. The management is required to assess whether they are going concern or not. Auditor will conclude whether the management's assessment is correct or not. Assessment kisko karna hai, whether they are going concern or not? Management. Auditor will conclude. Okay. Now this is the management responsibility, but only thing, if it's a company, then there are some extra responsibilities which are added, which are given under your director's responsibility statement, section 134 subsection 5 that all are also added in the management responsibility para. Okay. Auditor's responsibility, there are 3 big paragraphs. First one is our responsibility. So our objective is kya hai? Our objective is to obtain a reasonable assurance whether the financial statement are free from material misstatement, whether due to fraud or error, and issue audit report. Now what is reasonable assurance? We explained that. Reasonable assurance is a high level of assurance but not a guarantee. that the audit conducted in accordance with SA will always detect a misstatement when it exists. Now, misstatement can arise due to fraud or error, and they are said to be material if they influence the decisions of users of financial statement. The first para was talking about our objective, then we went on to word reasonable assurance, then we went on to word misstatement. How do we do audit is the second para. How do we do audit is the second para. So as a part of audit, we exercise professional judgment, maintain professional skepticism throughout the audit. We identify and assess the risk of material misstatement, whether due to fraud or error. We design and perform audit evidence responsive to those risks, and we obtain evidence that is sufficient, appropriate to provide a basis for our audit opinion. We obtain understanding of internal controls. We obtain understanding of internal control relevant to audit, not all, relevant to audit, in order to design the audit procedures which are appropriate in the circumstances, but not for the purpose of expressing opinion on internal controls. But if we are reporting on IFC, this underlying thing will not be coming. We evaluate appropriateness of accounting policies used, reasonableness of accounting assumptions which are made. We conclude on appropriateness of management's use of going concern, and are there any material uncertainty which is casting a doubt on entity's ability to continue as going concern. And if it's a fair presentation framework, we evaluate whether the overall presentation structure is achieving a fair presentation or not. So this was auditor's responsibility para, that is fine. Usme one more, there's third one also. The first one, talking about your objective, etc. Second, how do you do audit? Third is communication with TCWG. So as a part of audit, what do? We communicate with TCWG amongst other things, planned scope and timing, significant audit findings, including the significant deficiencies in internal control coming from 260, 265. Okay, we also make a statement to the TCWG that we are independent of the entity, and all relationships and having bearing on independence we have communicated to them, including the related safeguards which we have taken. And one more line we write down. Out of the matters communicated to TCWG, some of the matters are selected as a key audit matter. So the key audit matter are always communicated, except sometimes that key audit matters are not communicated when the law or regulation prohibits, or the auditor feels that communication will have a more of harmful effect rather than the beneficial effect. At that time, the key audit matters are not communicated. But this one is only for listed entity. Now, such a big auditor's responsibility, 3 big para, kahan pe dalu? 3 big para, where do you put it? Either within the body of your audit report, second, as a part of appendix. So for auditor's responsibility, refer annexure A. Or if law or regulation expressly permit, you can put it on website of some authority and uska reference de do. As of today, law or regulation does not tell anything. I cannot put it on website wala things. Okay, other reporting responsibility, remember section 143 subsection 3, 10 matters, CARO 21 matters, they all will come over here. Report on other legal and regulatory responsibility. Then there's a signature, place of signature, date of signature, that's fine. If law or regulation is given the format of audit report, use that. Use that, not this one. But I can also say that is as per SA if that format also includes all these 12 elements. Now, if you are required to report as per the auditing standards issued by ICI as well as some international auditing standards, should I give 2 report, 1 report? So you can give 1 report provided you can give 1 report. So you may refer to standards on auditing in addition to international standards. Ek hi report do if there is no conflict, and that report also includes minimum of this 12 matters, and which is that international standard, that jurisdiction is to be clearly specified. Okay, if there's some extra information presented together with financial, supplementary information presented with financial, if it's a part of financials, it should be covered by audit. If it is not a part of financial, it should be distinguished, separated from financial. Next page pe start karo. But if it is not properly separated from financials, you tell the management to separate it. If they're not doing it, you can write it in other matter para that this supplementary information is not audited. Illustrative audit report is fine. Let's move ahead. Illustrative audit report is fine. Let's move ahead. Check this question 2, which is important. Check this question number 2, which is important. The auditor shall evaluate whether the financial statements are prepared in accordance with applicable financial reporting framework. Okay? And for this, you evaluate the qualitative aspect. Including management bias hai ya nahi, and advice about the qualitative aspect of accounting policy. and indicate about the possible management bias. So it's actually essay 540 ka question. Management bias comes in estimate. So qualitative aspect. So see, many judgments are made about amounts and disclosure. Essay 260 tells about you should discuss the qualitative aspect with TCWG. In qualitative aspect, when do I say basically that there's a lack of neutrality? So whenever they do a selective correction of misstatement, whatever misstatement you identify, they don't correct everything. And management is biased in making estimate, so I say there's a lack of neutrality. Essay 540 addresses the possible bias in making accounting estimate. The question was, the qualitative characteristic of accounting are to be considered, including indicator of possible management bias. Advice, how you should deal with this. The first, many judgments are involved. Essay 260 also tells us to communicate qualitative aspect with the TCWG. We say it's a lack of neutrality when there's a selective correction of misstatement and possible management bias in making an estimate. 540 addresses the possible management bias. And if you come across a indicator of possible management bias, and because of that the financial statements are not showing a true and fair view, then in that case you can give a modified report. Did you understood? Okay, key phase in audit planning, identifying risky area, you test the controls, then you test other things, you report. That's okay, not relevant. SA 701. Keep smiling, keep replying, keep drinking water. If you keep on replying, now you'll feel energetic, you'll not feel bored. If you just keep on listening, ears will get tired now. Okay, communicating key audit matter in independent auditor's report. Now, first of all, the purpose is to enhance the communicative value of audit report. So they are telling that whatever are the key audit matters, while doing audit, whichever matters we considered were most significant for the audit of current period, that we need to basically report. And see, communicating key audit matter is not qualifying report, or basically that is not the thing. So check over here the definition. Key audit matters are those matters which in auditor's professional judgment were of most significance during the audit of current period financial statement. They are selected out of the matters which we communicate to whom? TCWG. And the purpose is to enhance the communicative value to audit report. So whenever a user knows that auditor is focused on this thing, they get some extra knowledge and they are able to better interact with management whenever they attend the general meetings. Okay. Communicating key audit matter is not a substitute of a disclosure in financial. It is not a substitute for your modified report. It is not a substitute for that additional para, material uncertainty related to going concern. No. And it's not a separate opinion on those matter. We are not giving a separate opinion on those matter. We are just telling you this were the areas we focused more. Okay, how do I determine a key audit matter? First requirement is important. So how is the key audit matter determined? Key audit matters are basically out of those areas where there's a high risk of material misstatement. The areas where there was a higher risk, they are the key audit matters. We would have checked more in detail. Okay, where more judgments are involved, significant estimation uncertainty or high estimation uncertainty. And third, significant event or transaction which occurred during the period. Like during the year IPO came. So can I say utilization of IPO proceeds will be the key audit matter? So higher risk of material misstatement wala area, significant audit management judgment wala area, auditor as well as management judgment, high estimation uncertainty, and significant event or transaction which has taken place during the period. Okay. Now we communicate to basically the users how. So in our audit report there's a separate heading called as key audit matter. In that heading, first we give some intro because people don't know ye kya hai. First we give an intro, first para, and second para we list down all the key audit matter. And whenever we're listing down the key audit matter, we need to write why the matter was decided as a key audit matter, how we have dealt with it while doing our audit. Okay. Sixth point is important. Now tell me one thing. There is one item because of which we are giving a qualified report, or there is a material uncertainty related to going concern, we are drawing attention by extra para. So can I say those items for which we modify the report, those items for which there is a material uncertainty, we would have definitely checked more. So those items are by nature a key audit matter. So matter for which modification required or matter for which extra para for going concern required, they are by nature they are key audit matter, but they are not written under key audit matter. They are reported as per the relevant auditing standard. If it is matter leading to modification, SA 705, matter related to material uncertainty related to going concern, SA 570. So they are by nature a key audit matter, but they are not described in key audit matter. Rather, they are reported as per the applicable SA, but unka reference is given over here. So key audit matter mein unka reference, in addition to the matter given under basis for qualified opinion section of the report, the other key audit matters are. So unka reference is given under key audit matter. Very important. Okay. Next, check over here, May 18 question. Matter that required significant auditor's attention may have resulted in significant interaction with TCWG. What are the considerations that may be relevant in determining? What are the considerations that are relevant in determining the significance of the matters communicated and deciding whether it's a key audit matter or not? So what factors do you consider in determining whether it's an important matter to be communicated to TCWG? The importance of the matter to the users, the nature of underlying accounting policy related to the matter, the nature and materiality of uncorrected misstatement arising due to it, the efforts which were required of auditors for it, difficulties in applying audit procedures over there, if you had some control deficiencies because of it. So this is basically the answer. So over here, actually it is nothing but an extension of requirement 1. Requirement 1 mein 3 points diye the na. This is kind of detailed version. So that was a bare text. This is application and explanatory material. So in determining relative significance of the matters to be communicated to TCWG and whether such a matter is a key audit matter or not, what do we see? The importance of matter to user, nature of underlying accounting policy related to the matter, subjectivity kitna involved hai, complexity kitna involved hai, the nature and materiality of corrected, uncorrected misstatements related to that matter, the auditor's efforts needed to address that matter, the difficulties which auditor faced in applying the audit procedures for that matter, any control deficiencies identified related to that matter, and whether the matter involves a number of separate but related auditing consideration. It's one thing but covering many aspects. So in some case may we say it's significant. Okay, it's a key audit matter. ऐसा बोल रहे हैं. Next is your SA 705. SA 705 is modification to opinion. It's a modified report. Okay, so first of all, when do I give a modified report? Come to the summary given on the next page. When do I give a modified report? Under two cases. One, based on audit evidence is obtained, auditor concludes. Based on audit evidence is obtained, the auditor concludes that the financial statements are not free from material misstatement, or the auditor is unable to obtain sufficient appropriate audit evidence. In this two cases, you give modified. Now, which one to give? Which modified report to give depends on whether the effect or possible effect. If you check, the word is effect. If you are not checked, the word is possible effect. Whether the effect or possible effect is material but not pervasive or material and pervasive. Okay. If the effect or possible effect is material but not pervasive, you give a qualified report. Okay. If you checked it, and the effect is material and pervasive, adverse. If you are unable to check and the possible effect is material and pervasive, disclaimer. I hope you are clear. Okay, if suppose they are asking when do I give a qualified report? Qualified report, here two cases. Now see the language. See the language. When do I give a qualified report? The one, based on audit evidence is obtained, auditor concludes that the financial statements are not free from material misstatement and the effect of it is material but not pervasive. Or the auditor is unable to obtain sufficient appropriate audit evidence and the possible effect of it is material but not pervasive. Are you clear? Okay. Now pervasive is something which is not basically confined to single element item, it's at many places. Or if it is at one item, that one item forms a substantial portion of financial statement. Or if it is in relation to disclosure, the disclosure is fundamental to the user's understanding of financial statements. Fine. Now there's a question. If You are unable to obtain sufficient appropriate audit evidence because management has put some limitation. If you're unable to obtain sufficient appropriate audit evidence, management has put a limitation, what you should do, don't jump to conclusion. First, request the management to remove the limitation. If they refuse, communicate with TCWG, perform alternative things. Still you are unable. Now what you should do? Now, if the possible effect is material but not pervasive, qualified. If possible effect is material and pervasive, either disclaimer or you can withdraw from engagement. Are you clear? Now, whenever I'm giving a modified report, so in my opinion, heading only will be qualified opinion or adverse opinion or disclaimer of opinion. Your point number basically 3 related to your opinion. So first was title, then addressee, then comes opinion. Opinion may qualified or adverse or disclaimer you will write over there. Okay. One, and whenever you are giving qualified में क्या दोगे आप? Except for the effect of the matter described in basis for qualified opinion section of the report, the financial statement shows a true and fair view. And if you are unable to obtain the except for possible effect. If you are giving adverse, because of the significance of the matter described in basis for adverse opinion section of the report, the financial statement do not show a true and fair view. If you're giving a disclaimer, we are unable to express any opinion on the financial statement because of the significance of the matter described in basis for disclaimer of opinion section of the report. We are unable to obtain sufficient appropriate audit evidence to provide a basis for our audit opinion. So this one change will happen. Okay. Now, one more thing, basis for opinion. Basis for opinion mein word will be basis for qualified opinion, basis for adverse opinion, basis for disclaimer of opinion, kind of that. And in that, last line may change. We believe that the audit evidence we obtained is sufficient appropriate to provide a basis for qualified opinion, adverse opinion, that way. And disclaimer mein that 4 general sentences will go away. Next, auditor's responsibility. If you are giving a disclaimer, instead of 3 big para, there is only 1 para. This is important. Auditor's responsibility, instead of 3 big para, you'll be only having 1 para if you're disclaiming. And there's one more thing. Naseem has said that, sir, in intro para under disclaimer, we were engaged to audit. So don't write we have audited. We were engaged to audit. That's perfect. But this is most important of this essay. So if you are giving a disclaimer, auditor's responsibility will not have a 3 big para. It's only 1 para, 3 sentences. 1. So our responsibility is to conduct audit in accordance with essay and to issue audit report. However, because of the significance of the matter described in basis for disclaimer of opinion section of the report, we were unable to obtain sufficient appropriate audit evidence to provide a basis for our audit opinion. And third one, we are independent and we have followed all the ethical requirements related to independence. So instead of 3 big para, only 1 para. Most important. And whenever you're disclaiming an opinion, no need to give key audit matter. Key audit matter will not be coming when you're giving a disclaimer. Formats of audit report is fine. Okay, let me just go up. Next one is SA 706, emphasis of matter para and other matter para in independent auditor's report. So can I say these are the 2 paragraphs which we are adding in independent auditor's report? So when should I give emphasis? When should I give a other matter para? Pay attention. Emphasis of para. It's a para included in auditor's report which refers to a matter. It refers to a matter which is appropriately presented or disclosed in financial and which in auditor's judgment is of sufficient importance that it is fundamental for the user to understand financial statement. So emphasis for something which is already there in financial, appropriately presented and disclosed. Sir, why I'm writing it? It is fundamental for the user's understanding of financial statement. I'm drawing attention. So whenever I give emphasis, I draw attention to, we write always, we draw attention to note number 10, which describes the effect of fire on company's production facility. So this is already there in financials. We are just drawing attention. Anything which you want to draw attention, emphasis. Except material uncertainty related to going concern, it was covered in SA 570. वो भी emphasis ही है, but it's covered in 570, not here. Going concern वाला thing, not here. Okay, other matter. It is a para included in audit report, refers to a matter which is other than those presented or disclosed. So can I say it is not there in financials? It's not there in financials, and this matter according to auditor is fundamental or important for the user to understand audit, auditor's responsibility, auditor's report. So this is for something which is not there in financial. I am writing it to clarify audit, auditor's responsibility, auditor's report. Sir, example, this many branches are audited by someone else, that can be there, or the supplementary information is not audited, that can be there. So a joint auditor has given a separate report, I have to write it in other matter para. That all can be coming over here in other matter paragraph. Okay, now question. A matter which give rise to modification or a matter which is covered under key audit matter. Matter which gives rise to modification or a matter which is covered under key audit matter, that again cannot come in emphasis of matter. So there's a question from Prateek that, sir, can a key audit matter and emphasis of matter be used interchangeably? If you are putting it under key audit matter, it will not come up under emphasis. It is possible that item, if you're checked in detail, that item you're putting in key audit matter. If you're putting in key audit matter, it cannot come in emphasis. So emphasis mein you shall include in emphasis provided you are not modifying for that thing and it has not been determined as a key audit matter. Are you clear? Heading should be emphasis of matter, clear reference should be given, we draw your attention to this thing. Other matter ho gaya, done. Acha, now where does this key audit matter and other matter para comes? So key audit matter, other matter para, where it will be coming in your financial, in your audit report, it will come after that key audit matters before the auditor's responsibility. So after key audit matters before the auditor's responsibility, you need to put that. Fine. Now there's this question, we are required to draft the emphasis of matter para. We just have to draft the emphasis of matter para. We draw attention to, always start like this. Emphasis starts with draw attention. Other matter para doesn't start with draw attention because it is not there in financials. Okay. Next is SA 710, which is comparative. Next is SA 710. Last two, 710, 720. Then we take a break. Big one, 45 minutes. Okay. SA 710. SA 710 comparative. Now see, there are two approaches. Why are we giving a previous year figure? Current year, previous year. So is previous year figure just given for the sake of comparison, or is previous year figure a part of current year financial statement? So under your corresponding figure approach, the previous year figure is treated as a part of current year financial statement. So whenever you say you audited current year financial statement, means you audited current year as well as previous year, both the figures mandatorily. But under comparative financial statement approach, the previous year figure is not treated as a part of current period financial statement. They're just given for the purpose of comparison. Sirf comparison ke liye, not a part of current period financial statement. Now sir, which basically the framework is followed, or which approach is followed? It will be given in laws or regulation, or it will be decided by the management, and management will write why they are giving previous year figure in their notes to accounts. Notes to accounts mein policy for previous year figure will be there. Now pay attention, if previous year figures mein they have adopted a corresponding figure approach. Corresponding figure approach may we are reporting on both. If we are reporting on both, sir, question comes, do I need to audit both the figure? If previous year are already audited by someone else, so if law or regulation does not prohibit, you can rely on the figures of previous year auditor. But whenever you're relying on previous year figures auditor, you just have to write in other matter para that the previous year figures were audited by another auditor. He had given this kind of report on this date. So if previous year were audited by someone else, you don't have to check again, you can rely on his figures, but you write it in other matter para. Now suppose your report on previous year figure, you're reporting on both, your report on previous year figure is different from the previous year auditor, then in other matter para, you also have to write down the reason for difference in opinion. Fine. Now important is this audit procedure, that is important. Important is this audit procedure. So we are required to obtain sufficient appropriate audit evidence whether the comparative information is as per the requirements of laws and regulation. तो उसके लिए तो auditor should determine whether the financial statement include the comparative required by law. and whether it's appropriately classified. Okay. Now you evaluate. Whether the comparative agree with the prior period, the accounting policies are consistent, changes if any are properly presented, disclosed. If you become aware of possible misstatement, relating to previous period, you are reporting on both, so you have to perform additional procedures and you take a written representation. किसके लिए? For all periods. If you are reporting on both, take a representation for both. If you are reporting only on one, take a representation only for one. Now pay attention. Corresponding figure, we are mandatory reporting on both. If you are mandatory reporting on both, now what happens? If last year's audit report was modified, matter is unresolved. Last year's audit report was modified, matter is unresolved, so can I say previous year figures are wrong? And if it affects current year also, the current year figures are also wrong. We are reporting on both, we should give a modified report in current year with respect to both the figures. But now, if previous year figures are wrong, it does not affect current year. So current year figure correct, but previous year wrong. There we are reporting on both. As we are reporting on both, even if one is wrong, still will be giving a modified report in current year with respect to previous year's figures. So previous year figure wrong, not affecting current year, still in current year modified report because we are reporting on both. I'll be giving a current year modified report with respect to previous year's report, previous year's figures. I hope you're clear. Okay, now check this question. When a corresponding figures are presented, the auditor's report shall not refer to corresponding figure. Now see, whenever corresponding figures, when you're using a corresponding figure, we are mandatory reporting on both the figures. So do we need to write that we have audited balance sheet as at 31st March 22 and 21? In corresponding figure, no. But in comparative financial statement, if you are reporting on both, you have to specifically write we have audited balance sheet as at 31st March 22 and 21. यहाँ पे 22 balance sheet includes 21 figures. But when we are modifying the report, if it affects current year, we modify with respect to both. When we are modifying only with respect to previous year, we specifically mention them. So discuss the exception. Exception is whenever we are modifying the report, we will be clearly telling it's modified for both figures, will be clearly telling it's modified with respect to previous year figure. So can I say they are specifically told at that time? Otherwise, we don't specifically mention about it. Okay, next is your essay 720, the last one. Next is essay 720, the last one. Now, essay 720 is auditor's responsibility for other information in annual report. What is your responsibility for? Other information in annual report. Now, what do you mean by other information? Other information may include some amount or some other item, some theoretical sentences that might be there. So that's other information. Whether auditor is required to audit the other information which is there in annual report. So in annual report, there's management discussion analysis report. There is a board of directors report. There is some business responsibility report. In annual report, there are other information. So do we need to audit them? Answer is no, we are not required to audit the other information. But this essay says you're required to read the other information to identify whether there's any material inconsistency between other information and the financial statement. And you have to read the other information, whether you get it before the audit report or even after giving the audit report, you got annual report, to bhi padho. So responsibility is regardless of whether other information is obtained prior to or after the date of audit report. ठीक है. So first you obtain the other information. Whatever other information is ready till your date of audit report, you obtain. Later, you tell management to give the remaining other information after the date of audit report. So determine which document comprises of annual report. Make arrangement with the management to obtain the final version. When some or all documents are not ready till the date of audit report, request the management that you will give it to me later. Now you read the other information, try to identify is there any inconsistency. Now there are three options possible. One, other information is wrong, financial statements are wrong, or third, your understanding about client's knowledge of business is wrong. So other information wrong, financial statement wrong, or your understanding about entity environment needs to be updated. So you felt it was this, really it might be different, kind of that. Okay, if other information wrong, if other information is wrong, tell the management to correct it. If they correct it, well and good. If they don't correct, okay, if they don't correct, if report is not yet given, If report is not yet given, what is wrong? Not the financials, other information. Can I modify the report? No. But in our report, there is a separate section. There's a separate section where I'll be reporting that the other information is wrong. So how to report? I'll come to it. The report was not yet given, include it in your report, not other matter para. There's a separate para for it. As per SS 720, there's a separate para for it. But sir, if report was already given, now that other information is wrong, what do I do? Other information wrong hai, mera report chala gaya. Take appropriate action to bring it to the notice of users. After the date, so you are required to take appropriate action to bring it to the notice of the users. Acha, now if financial statements are wrong or your knowledge needs to be updated, if financial statements are wrong, what to do? Okay, SA 705, SA 560. If report is not yet given, modify as per 705. Report already given, now you found something. SA 560 subsequent event. Auditor's knowledge needs to be updated, SA 315. So this will be responded as per the other essays. Now how do we report? So there's a separate section with a heading other information. Now we are reporting. In case of listed entity, we'll write about the documents which we have received, and we'll also write about the document which we expect to receive. But in case of unlisted, we'll write only about the document received. So listed में I'll write about document जो management ने दिए, which are other information वाले, and which I expect to receive. But for unlisted, I'll talk only about the document which I have received. I'll not talk about document which I have to receive. ठीक है. So what you should write under this heading called other information? First, a statement that management is responsible for other information. What is included in other information? That you write. Our responsibility is not to give an opinion. We are not covering opinion or other information. Our responsibility is to read the other information to identify the inconsistency. And now, based on the other information which has been received till now, jo mila, based on other information which has been received till now, either we write we have nothing to report. There are no inconsistency, or we write down the inconsistency which is there. We have nothing to report, or we write down that there is an uncorrected material misstatement of the other information. So that we need to write down. And whenever you are giving a disclaimer of opinion, this will not come. Disclaimer opinion mein you don't have to add this extra para other information wala. That is not required. Check the illustration. The thing is, you have other information. The company's board of director is responsible for other information. The information includes this report but does not include financial statement and audit report. Our opinion on financial statement does not cover other information. In connection with our audit, we are just having a responsibility to read the other information to find out any inconsistency, and based on this, we have nothing to report. Clear? Okay, illustration number 1 is fine. Illustration 2, give example of amounts and other item. Clearly written amounts and other item which will be included in other information. Amounts may speak about the figures. Other information may, other items may theoretical lines. So check amounts like summary of key financial result, selected operating data geographical area wise or segment wise. Special items like asset disposal, litigation provision, they are there in financials, they might be there in other information, both. Okay, some data regarding cash equivalent, dividend, etc. Some capital expenditure wala data, some off balance sheet items, contingent liability, etc. Okay, some guarantees which you are given, uska amount, some ratios, etc. So these are certain amounts which might be there in financial also, which might also be there in other information, wo ho gaya. And now other item is not amounts. So explanation regarding some accounting estimate or assumption, identification of related party, description of transaction, not amount, description. ठीक है, description of nature of off balance sheet item, description of guarantee, description of changes in legal regulatory requirements. See the word description everywhere. So these are other items. So amounts and other item ka meaning, examples were to be given. Then, Okay, now over here, the partner is telling we don't have to see the other information. The partner's approach is wrong. You are required to read the other information. If there's an inconsistency, you have to report it, and reporting ke liye, there is a separate para for it, which is called as other information. And that para will come again before auditor's responsibility. Where the para will come? Before auditor's responsibility. Whew. This were all your auditing standards. We're done with company audit, we're done with professional ethics, we're done with all your auditing standards. Now we need to start with all your remaining chapters. I'm starting after a lunch break of around 45-50 minutes. We meet back at 2:30 p.m. I repeat, we are meeting back at 2:30 p.m. So I just write down over here. Break till 2:30 p.m. Now someone asked me, sir, what we need to do from our side after this is over? After this marathon is over, hum kya kare? I'll recommend you go through the last 3 RTPs, last 3 suggested answers. And still, if time permits, whatever important areas you want to go through, that you can just go through. But first, last 3 RTPs, last 3 suggested answers. Okay, let's take a break and then we'll start with the remaining chapters. Keep smiling. See you after a break. Our company audit, professional ethics, and your auditing standards. So all your miscellaneous chapters are pending. The weightage of all this miscellaneous chapter is around 35 marks. So what we did is around 65 marks. What is pending is around 35 marks. Now, see, we cannot do each and everything in all this miscellaneous chapter. There are 2 ways of doing it. There are few people who will be happy to glance everything. Yeah, there will be few people who will be happy to glance everything. And there will be few people who will focus on whatever importance are marked out. So I'll be focusing over here on the important which have been marked out, and rather than glancing everything which we cannot recall, I'm just trying to focus only on the points which are marked as important, and there's very high probability that the question is coming directly from them. I cannot say 100%, but there's a high probability the question comes directly from the things which are marked as important. So let's begin now, sir. Which is the sequence in which we are doing? We are going in the sequence only which is there in the material. So we have already done chapter 1, 2, 3. Chapter 1 was auditing standard, 2 and 3 are related to auditing standards. So that is over. Now coming to chapter number 4, that is your automated environment. I'll go in the sequence only. Am I audible, visible properly? Okay, now let's begin. First of all, the automated environment, directly going only to the important points which are marked. Okay, now first of all, we have this concept in a real-time environment. Thank you so much. Now, what do you mean by real-time environment? Real-time, I'll just take this all questions very slowly so that we're able to grasp the things. So rather than just hurrying to all the things, I'll focus on the important ones. So basically, a real-time environment is an automated environment in which the business operations and transactions are carried out, so initiated, processed, recorded immediately as and when they happen without a delay. And in your real-time environment, there are 4 components. Which are the 4 components of real-time environment? Application, middleware, network, hardware. And all these components should be working properly. If there is a failure of one component, it will lead to a failure of the entire real-time environment, and it will lead to a huge loss. The applications are basically the softwares. Network is wide area network or basically local area network. Generally, it will be the wide area network. Hardware is basically your data centers, your power backup and storage devices, etc. And middleware is basically from the hardware which takes to the network in a proper way. That is your basically your ATM switches, asynchronous transfer mode ke liye. So ATM switches are there. It's not ATM machine of bank, it's ATM switches. So real-time environment ke 4 components. Fine. This is done. Moving ahead. Understanding and documenting the automated environment. Now see, as an auditor, we are required to obtain understanding of the entity, environment, internal control. Environment also includes the automated environment. Obtaining understanding is required as per SA 315. Now what all we need to understand? Everything. What all we need to understand? The applications which are used, the IT infrastructure, the organizational structure, the policies related to IT, IT related risk, IT related controls, everything. So we understand. After understanding, we are required to document. This is just an illustrative format given how to document. This is just example. No need to basically stick to it. This is just an example. So application ke names, it is used for what purpose? Which is the database used? Which is the operating system used? I'll write operating system mein everywhere is Windows 12. सब में Windows लिख के आ जाओ, Windows XP. और network में it is LAN, local area network or wide area network. That is what you need to write. Storage में is it internal hard disk or it is network पे storage or it is on cloud basis, whatever. So this is how you document the automated environment. Now this is an example of IT organizational structure. IT organizational structure का example, board, IT director, that is your chief information officer. Under that, manager application, manager IT infrastructure, manager IT facilities. In that there are people. Fine. Okay, now this is the most important according to me, consideration of automated environment at each phases of audit. So whenever you're doing audit, at each phase of audit, your automated environment becomes important. How? So one, during risk assessment, I need to consider the risk arising from use of IT. Okay? During obtaining understanding of business process, I need to obtain understanding of IT systems and application. Okay. While assessing the entity level control, I need to consider the aspects relating to IT governance. So they are kind of overall related things. Okay, pervasive controls may I need to obtain understanding of general IT controls, that should be considered. Testing phase may, based on the result of general IT controls, my other timing, nature, timing, extent of other testing will be decided. Okay. When testing, the information produced by the entity, the information coming out of IT systems are also to be tested. And at completion stage, I can use data analytics to come out to my conclusion. So at every stage of audit, the automated environment is becoming relevant, right from risk assessment to your completion stage. Did you understood this? Very important question. Okay, this was asked in November 18 exam. To enumerate the points of such consideration when auditing an automated environment. It is important at every phase of cycle. Okay, enterprise risk is fine, not relevant over here. Achha, just one thing, if question comes about business related risk, which are the business related risks? These are the business related risks. Market risk, regulatory and compliance risk, technology and security risk, financial reporting ka risk, operation ka risk, credit risk, business partner risk. So these are the business related different types of risks. Fine, let's move ahead. Now, assessing IT related risk and control. Whenever you are assessing, evaluating IT related risks and the control, what you should do? So when assessing IT related risk, the auditor should consider risk which relates to governance, organization, management of IT. So risk which relates to governance, it's kind of an entity level risk. Risk in IT processes and procedures being followed. And risk in each layer of automated environment. Network mein kya risk hai, database mein kya risk hai, that's each layer of an automated environment. Now whenever there are risks, there will be control. Controls are divided in three parts: general IT control, application IT control, IT dependent control. General IT control are the basically kind of common ones, and they are applicable for entire organization. The general IT control are policies, procedure that relate to many application. And they support the effective functioning of the application control. And they are mostly related to what? They are related to integrity of information, data security. General IT controls are actually divided in four parts. Which are the four parts they are divided? Data center and network operations. Second, program change. Access security, who is allowed the access, and application system acquisition, development, maintenance. But they're not talking about specific application, they are talking about general. If at all we want to buy any application, we buy only from reputed vendor, that's a general IT control. The general IT control is divided into four parts. Fine. Now there is this thing given, the details about the parts of your general IT control. Every control which you have, there will be a control objective, there will be control activities. So control objective hai, and there will be control activities. To fulfill the objective, activities are there. Okay, like for example, For a program change control, the program change is done only by authorized person and the modified program is working appropriately. That's the objective. तो उसके लिए activities will be given. Access security में the access is allowed only to the authorized people and the authorized programs and data are only coming in. So that's basically the thing. And uske related some activities are given. That's fine. Okay. Now, that was general IT control. Now coming to your application IT control. Application IT are related to some specific applications. And they can be both manual control as well as automated control. So what are the automated application control? Automated application controls are divided as one, validation of input data. If you remember, tally mein debit side 2000, credit side 200, they will not accept. Sequence number check. After invoice 7, there has to be invoice 8. User limit check. How many times you can log in? Reasonableness check. The figure should be between this much. The age between, say for example, it's above 18 to up to 99 years. And mandatory data field. If you leave a mandatory data field, they don't allow. So these are automated control inbuilt the system to ensure that the data comes is kind of fine. IT dependent control, they are manual control, but they depend on the data coming from IT. They depend on data coming from IT. Next we have, okay. Now check over here. There are some direct entity level control, indirect entity level control. May 18 this was asked. What are direct entity level control and indirect entity level control? See, direct entity level control, they operate directly. वो directly operate करते and they are operating at higher level than the business activity and they basically directly help you to prevent, detect, correct the misstatement on timely manner. See, they are all controls. The purpose is to prevent, detect, correct the errors on timely basis. Acha, direct ELCs are directly helping you, like the reviews which are done, work of one person checked by another, the business performance review. You put an internal audit system, they will directly find where the error is, problem is. Indirect ELC, they don't directly help you to find out, but they indirectly contribute. How they indirectly contribute? Good code of conduct, good human resource policy, your job responsibilities and roles are properly defined, so automatically errors which happen will be down. So indirectly they are contributing. Fine, next. Okay, now this question was asked in examination once. As an auditor, you are trying to understand that direct ELC, indirect ELC, all that things are there, and you're also evaluating the process level controls also. The example shows how you should obtain understanding of a whistleblower policy. So remember indirect ELC. In your indirect ELC, your human resource policy, employee job responsibility, code of conduct, इसमें आ जाएगा. So whistleblower policy, how I'll obtain understanding? Very simple. First, whether a company has a policy, is the policy documented, is it communicated to employee, are employees aware about it, they understand the purpose of the policy, has the company taken measures, given training to the employee so that people are using it, does the company monitor the effectiveness of the policy, and how does the company deal with deviations and the non-compliance which come up. So example of how auditor performs understanding and evaluation of whistleblower policy. Fine. Next we have data analytics. Okay, next we are having is data analytics. What is data analytics? It's nothing but generating meaningful information from a raw data. Generating meaningful information from raw data using processes, tools, techniques is called as a data analytics. Now, where can I apply the concept of data analytics? There are two things. One is where can I apply the concept? Second is the process. So, where can I apply the concept of data analytics? For doing some preliminary analysis, for identifying risky area, for doing some control testing, for doing some analysis of journal entries which are non-standardized, something unusual come up, usko find karne ke liye, evaluation of deficiencies, fraud, risk assessment. So areas where I can use. Now, the approach, how to use it is first, you need to understand the business environment, the IT environment, you obtain understanding, you define your objective. I want sales above 5 lakhs. I want sales above 5 lakh. That's my objective criteria. Okay, so identify the data which you need. I need sales data. Okay, extract the data. Verify the completeness of data. So total of that should match with the figure of sales appearing in balance sheet, P&L. Apply your criteria, filter mein jao, above 5 lakh you put it, validate, confirm the result and report and document the result. So this is basically the suggested approach. Two separate things are there. One is basically where I can use data analytics and how, suggested approach. Okay, so check over here this question, examples of circumstances where you can apply data analytics, the earlier one. And the second one is the suggested approach for using this data analytics. Fine. Now standards, guidelines, procedure, best practice, this is not relevant for exam point of view. This is your chapter of automated environment. Ho gaya? Come to the next one. Automated environment over. Chapter 7, I'll come to it at the end. In your chapter 7, audit committee, corporate governance, some amendments are there. I'll take it at the end. So let's go to chapter number 8. 5, company audit done. 6, audit report already done. Now going to chapter number 8. Okay, now chapter 8 is audit of consolidated financial statement. Now to whom consolidated financial statements are applicable, which are the exemptions given in standard. I'm not going for all that, you already done in FR. So what is relevant from auditing point of view, directly going over there. If we just come down, definition of control is fine. Acha, this question. M Limited acquires 51% shares. They sold 25% within the year. Okay, 51 may say 25% sold. They're telling they did not prepare CFS because it was a temporary control. Acha, now under Ind AS, do you have an exemption for temporary control? Under Ind AS, do you have an exemption for temporary control? No, temporary control exemption is only there under AS, not under Ind AS. Fine. Second question over here, it's an investment company. Investment company are exempted from preparing CFS, but investment company exempted, not the parent of investment company. And one more thing, investment companies are exempted provided they carry the investment in subsidiary associate JV at fair value through P&L. But any subsidiary which is there who is doing an extension of your activity only, like I am an investment company, I have a subsidiary but does a research for me, so that subsidiary has to be consolidated. So in this, basically it's an investment company, it is not required to prepare a CFS. Okay, now coming to the things which are relevant for auditing purpose. If you see over here, this was RTP 19 question. What are the objectives of auditor while auditing in CFS? When you're auditing in CFS, what is your objective? 1, you need to ensure that they are prepared as per the applicable financial reporting framework, Ind AS 110 or AS 21. Second, you should be able to express an opinion whether they're showing a true and fair view. Plus, you need to report on matters covered under 143 subsection 1. You need to report on matter covered under 143 subsection 3, and you need to validate the requirement for preparing CFS as per the applicable financial reporting framework. This is your objective whenever you are reporting under CFS. Okay. Salient features of CFS having impact on audit. Okay, salient features of CFS, two things. Two salient features are there. One is basically it has to be prepared based on the accounting standards, whichever is applicable. And second, under your CFS, the subsidiaries would have been audited by someone else. If they are audited by someone else, can I say the principal auditor will use the work of another auditor? SA 600 will come into picture. So requirement of auditing wherein you are using the work of another auditor. The two main things which are there. Okay. Now, I have a question for you. Suppose a subsidiary's auditor has given a modified report. Is it mandatory that while giving a report on CFS, I should also give modified? Subsidiary's auditor has given modified report. While giving a report on CFS, should I also be giving a modified report? Not necessary. So, you need to apply the concept of materiality. And based on that, you're required to give it. Okay, now there's a question from Lakshmi. Sir, what is for operation under severe long-term? Okay. Now see Lakshmi, there are two exceptions given under AS 21. AS 21 mein kya exception hai? One, it is basically a temporary control, and second, the subsidiary operates under a severe long-term restriction that significantly impair the ability to transfer funds to parent. Imagine you have a subsidiary in China, and India, China are not doing well, and from China you cannot bring any money to India. The subsidiary is operating under a severe long-term restriction which significantly impair ability to transfer funds to parent. Okay. So this is there. While doing audit of CFS, concept of materiality will be coming into picture. The auditor has to see the concept of materiality would be considered while doing or while seeing the observations of component auditor. Next, auditing the consolidation. This is okay. Now, if you see, this is important. How do I ensure that all components have been included? How does the auditor ensure all the components, all subsidiary, associate, JV has been included? कैसे पता चलेगा? One, you review the last year's working paper. You understand the parent's procedure. You make inquiry with management. Any new subsidiary, associate, JV was there. Review the investments of the parent as well as the investments of component. Reason, subsidiary is also a subsidiary. If subsidiary has a JV, they are also to be consolidated indirectly. So, not only your investment but also component ke investments. Review the joint ventures and joint arrangements which are entered. Review other arrangements which are entered by the parent but not have been included. Read the statutory records. Oh, statutory records aap dekho, register under section 186, 190, wahan se you might be able to understand. And the shareholders register. The changes in shareholding which has taken place during the year, that also you try to notice. So how do I understand all components have been included? These are the points important. Okay, while doing consolidation, two type of adjustment: permanent consolidation adjustment, current consolidation adjustment. Permanent is only one time. It's only one time, like you calculate goodwill capital reserve only first time when there's a when subsidiary came up. Acha, if your NCI is at fair value, the fair value is determined only on day one. It is not fair valued again and again. So that are the permanent consolidation adjustment. Current is coming up every year. Current is coming up kind of every year. Intra-group transactions to be eliminated, unrealized profit to be eliminated, mutual indebtedness to be eliminated. We need to harmonize the accounting policy. If the financial year of parent and your subsidiary is different, we can use subsidiaries figures which are different, provided gap should not be more than 3 months, and we need to make adjustment for significant transactions which have happened during that 3 months. If subsidiaries abroad, their figures are in dollars, we have to convert into INR every year. So this all basically are the current consolidation adjustments. Fine. Next one. Okay, disclosure is not relevant. Last point which is actually important, this and this both. One, which are the representations which we take related to CFS? Okay, which are the representations which we take related to CFS? One, completeness of the component. So we are taking representation from management. So completeness of the component which are included. Identification of segments for segmental reporting. Identification of related parties for CFS. And appropriateness and completeness of permanent and current consolidation adjustment done by the management. Okay, the 4 points are there. Which are the 4 points? Components included are complete, segmental reporting, related party identification, and last, the permanent and consolidation adjustments are properly done. Okay. Now, reporting. If I am only the auditor of parent and I am only the auditor of all the subsidiaries, I am only auditor of parent, I am only auditor of all subsidiaries, so can I say I don't have to use the work of another auditor? Wahan pe kuch nahi hai. So what I should do? So when you are only the auditor of all the components, so you just have to see the principle followed for consolidation is proper, and you have to issue audit report containing your opinion whether the consolidated financial statements are showing a true and fair view. But when you are not the auditor of all the component, if you are not the auditor of all the component, then in that case what will happen? SS 600 will come into picture, and you are required to write down clearly. You are required to write down clearly how many subsidiaries are audited by other auditor. Don't just write the number of subsidiaries. You have to put a quantification to the effect. कैसे quantify करना है? तो you will be clearly disclosing the magnitude of the portion audited by other auditor. How to clearly state the magnitude of the portion audited by other auditor? So you need to state the amount wise or percentage wise, the total asset, total revenue, cash flows of component which is included but is not audited by you. So in your CFS, this much total asset, total revenue and total cash flow have been audited by another auditor. We have relied directly on the report submitted by them. That you are required to write it in your other matter paragraph. You are clarifying audit, auditor's responsibility, auditor's report. Fine. And now when component का audit report, component subsidiaries audit report is prepared on a different accounting framework. अच्छा, तो यहाँ पे we follow Ind AS. Now suppose subsidiary has not followed Ind AS, they are abroad, they are following something else. So we are following Ind AS, subsidiary abroad, they are following something else. For consolidation purpose, we need their figures as per Ind AS. For consolidation purpose, we need the figures as per Ind AS. Now how do I do it? So pay attention. Two options. One, the parent's management. Parent ka management performs the conversion of component audited financial to a framework under which CFS are prepared. So parent ka management will convert the subsidiaries financial from whatever they had prepared to Ind AS, and they are audited by the principal auditor. The parent's management converted subsidiaries financial into Ind AS and you checked it. A second option. What is second option is, they are telling the local component auditor, the subsidiary ka auditor themselves, they will issue an audit report on the components financial, on subsidiaries financial, which are prepared as per group's accounting policy. The subsidiary prepares two sets of financial. One is as per that country's law and other is as per Ind AS. Their auditor only is telling that these are as per the Ind AS. They only certified, we can directly use it. So either the parent's management does the gap conversion, we check it, or their auditor, unka auditor hai, they only give another report telling the financial statement as per the group's accounting policy. Are you clear? Okay, next, component auditor ka report is under auditing framework, which is different. Acha, India mein the audit is done as per standards on auditing issued by ICI, but abroad mein, can I say this? Basically auditing is done as per some not auditing standards of ICI, some other auditing standard. So component ka auditor's report is based on some different auditing framework. So we need the audit report as per Indian auditing standards. So check over here. Normally in order to maintain consistency, what will happen? The other auditor's report, the component ke financial should also be audited as per your Indian auditing standard as well. So like we had in SA 700, like we are required to give a report as per Indian auditing standard and international auditing standard. So can I say wahan wala bhi? So their auditor might be required to give a report as per their auditing standard and the Indian auditing standard. That way. So we need a report of subsidiary as per Indian auditing standards. If components are not audited, imagine if the components are not audited, it is possible few countries may, if the limit doesn't cross, audit is not required. So we have a subsidiary abroad. Wahan pe limits are not crossed, audit is not required. So can I say the figures coming in CFS are unaudited? If that figures are material and they are unaudited, so can I say we are unable to obtain sufficient appropriate audit evidence? And if we are unable to obtain sufficient appropriate audit evidence, we might be required to modify the report as per SA 705. Are you clear? Okay, Ujjwal has a question. Sir, subsidiary restated and presented 3 balance sheets. Should parent also restate? Acha, subsidiary has done some restatement. They have some 3 balance sheets. So should parent CFS may also whether 3 balance sheets are required? That is a question. Kya karenge? If subsidiary has done some restatement, they have put in some 3 balance sheets, whether parent should also be putting a 3 balance sheet, answer is yes. But accounting policy change hua to wo group ko dekhna hai. If group's accounting policy change, then only 3 balance sheets. Subsidiary change policy wo nahi. But subsidiary mein error rectified. Okay, subsidiary mein error rectified. So can I say that was also an error in CFS last time? Subsidiary mein error tha, CFS mein bhi error tha na. So CFS is rectifying error, definitely 3 balance sheets will come up. Are you clear? If CFS changing the policy, then CFS will need 3 balance sheet. If CFS rectifying the error, 3 balance sheets. Okay. Next. That's it. Over. This is basically your audit of consolidated financial statements. Let's move ahead. Going in the same sequence, audit of bank. Going in the same sequence, audit of bank. It's a huge chapter. I tell you, we cannot remember each and everything. Better is to focus on things which are important, which can come up in examination. So I just go down over here. Now, important. Banks have certain characteristics which distinguish them from other commercial enterprises. Banks have certain characteristic which is distinguishing them from what? Other commercial enterprises. What are that characteristic? Large volume of monetary items, cash बहुत पड़ा है, large volume of transaction, wide geographical network, many branches are there. They assume significant commitments without transfer of liability. They give guarantees on behalf of people. ठीक है. There are transactions basically entered at one place, recorded at another place, managed at another place. Okay, I take a loan from branch, but loan approval process is not at branch, वो centralized हो जाता है different place पे. There are national, international settlement systems which are there. So these are all something. So this is distinguishing bank from other commercial enterprises. Okay, now there's a question over here. Special audit consideration. Special audit consideration arise in bank because of. So in a bank, there's a special audit consideration coming up. Why? Why? One, the nature of risk associated. Bank में exposure बहुत बड़ा हो जाता है. Significance dependent on IT. Statutory requirements, we need to follow that RBI rules, regulations, whatever are there. Technology keeps on evolving. You have net banking, mobile banking, all that things. And new product keep on coming. All these things require a special audit consideration. Clear? Now check the question May 19. Because of certain characteristic, bank are distinguished from other enterprise and they need a special audit consideration. Okay, specify peculiarities which may necessitate special audit consideration. Why special audit consideration is required in a bank? Answer is this one. Not the characteristic, answer is this one. So because of the risk associated, significant exposure, huge dependence on IT, regulatory requirements, development of new product and net banking, mobile banking, all that things coming up. Okay, legal framework, fine. I'll just go to the important ones. Okay. This one, page number is 4. Pay attention. You are a statutory central auditor of a bank. You are a statutory central auditor of bank. You are going to report. You're going to report on what? The financial statements. Yes. You're going to report on section 143.3.10 matters. Okay. Bank may applicable. 143.3.10 matters. Yes, they are applicable. 143.3.10 matters, they are applicable. Caro is not applicable to bank. Acha, together with that, we are required to give some certificates in addition to the main report. Which are the certificates which are required in case of a bank in addition to your main report? One, report on IFC. Then there's a LFAR, long form audit report. Then report on SLR, statutory liquidity ratio. Then reconciliation of securities held by bank. The bank might be having their own investments and they might be handling investment on behalf of customer. Remember portfolio management service? So, uska reconciliation. Okay, then whether prudential norms related to asset classification, provisioning, wo sare are followed or not, uska certificate we have to give. So income recognition, asset classification, provisioning. Acha, if I found out some serious irregularity in working of bank, I have to report to RBI. Plus wo section 143.12 reporting to central government, that also is applicable. Acha, BR ka ek certificate, unused bank receipt. Acha, what is this BR? Whenever one bank is selling investment to another bank, imagine bank A sold investment to bank B. The bank B has paid money. Bank A says, sir, we have received your money. We'll give you the delivery of investments. We'll give you the physical certificates within 15 days maximum. So they give a receipt currently that, sir, we got your money. I'm going to give you the investment ke physical certificates maximum within 15 days. That's called BR. Unused BR ke upar, there's a certificate which is to be given. Capital adequacy ratio, uske related. Okay, report on compliance by bank of the implementation recommendation of Ghosh Committee, Jilani Committee. So Ghosh Committee, Jilani Committee gave recommendation. Whether they are followed or not, uske upar auditor has to give a certificate. Adverse credit deposit ratio in rural area plus listed bank hai corporate governance ka certificate. Listed bank hai corporate governance certificate and interest subsidies subventions. Ab ye kya hai? Interest subsidies subvention. Government gives many interest subsidies. Simple. Pradhan Mantri Awas Yojana. In Pradhan Mantri Awas Yojana, some 3% subsidy in interest or 2.5% subsidy in interest, etc. is there. So whatever is subsidy given, bank will claim from government. Auditor ka certificate will be required while claiming it from government. So together with doing your normal audit report, other certificates required, the list is given. Next, let's go ahead. Okay, CARO does not apply to the banks. Fine. Long form audit report, now it's a kind of a questionnaire. It's a kind of questionnaire containing so many things, and this long form audit report has to be filled by the central statutory auditor, the statutory central auditor, even the branch auditors. Branch auditors will fill it. The branch auditors will fill it and give it to statutory central auditor. Then statutory central auditor will do the consolidation of it, and then they will be basically giving it to RBI. They will be giving it to RBI, as well as they will be placing before the audit committee of bank. So whatever is audit committee, unko bhi bank ko bhi denge, it will also be submitted to RBI as well. Plus copy of LFAR together with board's view is submitted to RBI within 60 days. Acha, just pay attention, there's an amendment here. Pehle auditor was submitting to RBI. Now LFAR, branch auditors will submit to statutory central auditor. Statutory central auditor will submit it to the audit committee of bank. Audit committee of bank will have a discussion on this. They have so many inputs, etc. And all that things are then given to RBI within 60 days of submission of LFAR by the statutory auditor. If you see here, word amendment would have been written. Exam angle, not much important, but yes, it is there. Next, conducting an audit is not relevant from exam angle. I just skip it. See, most important is how do you check advances, provision, वो important है. ठीक है. Special consideration in IT environment. अच्छा, तो बैंक में there's an excessive use of IT. So what are the special consideration in IT environment? What as an auditor you need to take care? It's all related to IT. So auditor, it is imperative that bank shares a detailed information with auditor. It is necessary that the bank is sharing the detailed information about IT with the auditor, like the overall IT policy, data processing, how is the data integrity, business continuity plan, how is the control over key aspects, MIS reports which are generated, exception reports which are generated, how is the information gathered, all that things. Okay. The bank is sharing this information. The bank has to share all this. What auditor has to do? To check over here, the key control aspect that auditor need to address. वो bank was giving information about all IT related things. Now, what you need to ensure? What you need to ensure? See, यहाँ पे ensure आ गया word. Ensure that authorized, accurate, complete data is available. Ensure that if it is an interruption of power, it starts from that thing only. वो duplication नहीं हो रहा है. Ensure that the system prevents unauthorized amendment to the programs. Access controls are verified. Verify segregation of duties, changes to the user level, etc. are all authorized. Verify exceptional transaction report. Verify master balances are not amended, not modified except by authorized person. Verify the balance in general ledger tallies with the subsidiary book. So this is what you had to do. So there are two questions. One, what all information the bank will give to you related to IT, and what you need to ensure in IT environment in a bank. If it is in a bank, then only this answer needs to be written. Actually, you can write everything about IT, chal jayega. Not a specific one. Next, we go ahead. Internal controls in banks. Internal controls in bank, general. Okay, general mein, I'll take 2-3 which are important points. Like first, they're telling all bank forms like checkbook, demand draft, traveler's check should be kept in a possession of an officer, and another responsible officer should occasionally verify it. To unused checkbook, all that things, it is there with one officer, another officer should occasionally verify it. ठीक है. All the mails, means the letters, all the mails which are coming in should be opened only by responsible officer. Signature, like letter coming from another branch manager, to uske signature, they can verify with the signature book. The signatures on letters should be verified with the signature book by the authorized person. The signature book is basically for that. TTs mein there's a telegraphic code. The signature book and telegraphic code book should be kept with responsible officer and should be seen by authorized officers only. Now check question. Check question. They have S1, S2, S3, 3 staff. Okay, S1 is a peon. He opens all the mails, forward it to concerned person. Now, they told you mail should be open only by authorized person. So check यहाँ पे it should be only with open by responsible officer. Peon is not the responsible officer. So this is wrong. ठीक है. S2 has a possession of bank forms. He maintains the record very well. No other staff checks it. Okay. Now for this, all this unused checkbook, demand draft, all that things, it should be kept in a safe custody with an officer. Another officer should occasionally verify it. Another officer is not occasionally verifying it. This is the second problem over here. The two things, peon opens the mail and the unused DDs, etc. Another officer is not verifying on a regular basis. Okay. Cash is okay, leave it. Clearing is fine. Now, advances. Take this as important. You will find loans and advances at many places. In chapter of banking, loans and advances बहुत सारी जगह पे आएगा. This, what are the internal controls banks should have relating to loans and advances? This is what are the internal control banks should have related to loans and advances. How you will check it, that's not it. This is not that. Auditor कैसे check करेगा, that will come later. Evaluation of internal control is separate. These are what are internal controls. कौन से internal controls banks should have? So one, bank should make advance only after satisfying the credit worthiness of borrower and after obtaining the sanction from the appropriate authorities. All necessary documents should be executed before the disbursement. Sufficient margin should be kept. If I'm giving a loan of 100 rupees, I should take a security of 120 or 150. All securities should be received and returned by a responsible officer, and it should be in a joint custody of two officers. Okay. Security requiring registration. Like if I'm taking a loan on the security of my house, तो can I say उसका mortgage deed बनेगा? It has to be registered basically. So you need to ensure they are registered in the name of bank or the title is basically now in the name of bank. Okay. If goods are there, if goods are given to bank and taken a loan like gold chain, so it should be kept appropriately by them and they should frequently check. They should be checking whether the gold is really there or not. Surprise check for hypothecated goods. Market value of goods. Market value of goods should be checked by the officers. It should not be happening. Like I gave a security of, say for example, shares and I took loan. Now shares ke value have gone down. So can I say security ka value has gone down? So now in that case they should demand repayment or they should demand additional security. Okay. Next, as soon as any increase, decrease. Now see, whenever you borrow money on the base of current asset पे stock debtors पे borrow कर रहे हो, so based on the figure of stock and debtors which are there on monthly basis, your drawing power is there. So you need to ensure that the accounts are kept within the drawing power and the sanction limit. Drawing powers are updated on a regular basis and the operation in need advance should be reviewed at least once a year. So these are internal controls which banks should have related to loans and advances. Clear? Okay, next, credit card operation important. I'm just taking the ones which are important. We cannot cover up everything on the last day. हो ही नहीं सकता है. So trust whatever important marked. There is a very high probability that questions will come. Okay, so first of all, whenever someone wants a credit card, effective screening of application has to be done. Strict control over storage and issue of credit card. Okay, there should be a system whereby the merchant confirms the unutilized limit. So whenever you swipe the card, balance hai ya nahi. If balance is there, then only it is accepted. So merchant confirms the unutilized limit of cardholder. And there should be a system of prompt reporting of all settlements done by the merchant. Whatever merchant ne accept kiya, that is to be promptly coming up. Reimbursement for merchant. So what will happen is merchant collected 100 rupee, the bank collected 100 rupee, we are not going to pay 100 to merchant. We will have net of commission given to him. We will have net of commissions which are given to him. So over here, customer is debited the gross amount. Customer is debited gross amount, merchant is paid the net amount, remaining is the commission for the bank. There should be a system to ensure the statements of credit card are sent regularly to the customers. Customers के पास से the payments are again monitored, उसका follow up is taken, and if at all amount is overdue, you should stop basically handling the other transaction of that person, and periodical review of credit card holder account, whether to increase the limit, decrease the limit, that should be done by you. This is basically credit card operations. Okay, next one is verification of cash is fine. Investments. Now actually investment is also okay, but I'll just do it because it's marked as important. So one, investment is one of the main area of bank में two main assets. One is called as advances, they give loans, and second is they do investments. The two main things. So as an auditor, what we need to do to check internal control. See, auditor क्या करेगा? Review. So you review the investment policy of the bank. What is the investment policy? The internal control evaluation, उनकी policy का evaluation. You need to ensure that the segregation of investment function, front office, mid office, back office. The front office is those people who punch the orders. Mid office is those people who are doing kind of analysis. Back office is those who basically do the accounting, वो सारी चीजें. तो front office, mid office, back office are basically bifurcated. Reconciliation, this is important. Now, you might be having your investment, you might be having investments on behalf of your customer, portfolio management services. So reconciliation has been done basically for the same. Plus, वो भी reconciliation, plus you can physically verify the securities which are there with you. Sometimes securities are not there with you, वो government के register में SGL, तो we need to ensure वो SGL balance में they are matching or not. वो BR वाले केस में examination of document is fine, like whenever you purchase an investment, the broker ka contract note etc. is to be verified. Physical verification has to be done. Now if you are having in us basically like we have a demat account होता है हमारा, wherein we have our shares. Same way, when you are holding a government security, you can also have it in case of a soft copy like eKuber for government security. So there's a eKuber platform which is basically of RBI. From there also you are able to understand how many government securities you are holding. So you should verify with that. Okay. Now investments are bifurcated as held till maturity, held for trading, available for sale. Okay, held till maturity is you want to keep it till maturity. Held for trading is within 90 days you want to sell off. And third one is available for sale, the balancing one. And classification, you need to see it's appropriate. Changing from one to another is allowed only with the permission, so that needs to be checked out. Valuation of investments, it is properly done or not, that needs to be checked out. Now again, they're not given how do we value all that things. Achha, dealing in securities on behalf of others. If you're dealing on behalf of others, there's a prior approval for carrying out such operations. Your income is recorded, and any liability if you're dealing on behalf of someone you bridge, like someone gave you money to invest in equity, you invested somewhere else, say you invested in diamonds, and now the values have gone down, so your liability may come up, so that is to be seen. ठीक है. Now special purpose certificate, you should maintain a separate account for your investment and your client का investment, portfolio management service वाला, and you're required to get the investment under PMS separately audited by the external auditors. Okay, so this was related to investment. Again, it's fine. Now, advances is important. Advances are important. See, first we saw the internal controls, what should be there while bank is giving loans and advances. कौन से controls होने चाहिए. Now, auditor क्या check करेगा? Now see, pay attention. तो auditor is primarily concerned about the following. If question comes, which are the attributes you check? I repeat, question is what are the attributes which you check? The amount included in balance sheet are outstanding, they represent amount due to bank, they are supported by loan document, there are no unrecorded things, they are valued properly, they are disclosed properly, provision is done properly. These are attributes which I check. The question comes about which attributes do you check about loans and advances, this is the answer. Now, second over here, वो attribute था, that's a different thing. Now, evaluation of internal control. There's a difference between internal control कौन से होने चाहिए and how you will evaluate. This is evaluation of internal control. तो वहां पे जो point थे उसको कैसे आप check करोगे? तो examine how credit appraisal is done, verify the procedure for credit appraisal is proper or not, examine the advances are sanctioned by delegated authority, examine all necessary documents have been executed before sanction, before disbursal, examine the compliance with the terms of sanction, the end use of money, examine the enforceability of the security given is enforceable or not, examine the validity of amount recorded, examine the operations, examine whether the drawing power is correctly calculated, examine the loan policy of bank complies with RBI prudential norms or not. We are evaluating internal controls. If question is about attributes, upar wala answer. If question is about evaluation of internal control over advances, this is answer. Okay, if question is about substantive procedure about advance, the figures. So यहाँ पे we did not talk about figures, यहाँ पे we talked about systems. If you see, ये credit appraisal का system, they are sanctioned, all documents are duly executed, the terms of sanctions are met, end use of money is met, securities are enforceable, drawing power is calculated properly. We are talking about systems. Now we are talking about the figure. Ensure correctness of master data and see the amounts, the installment amount, EMI amount, rate of interest, वो सारे बराबर है. Okay. Ensure all large advances. So you examine all large advances, small you can have on sample basis. Examine all large, small on sample basis. Plus उनका classification, performing, non-performing is done properly or not. ठीक है. If there are basically, remember in advances में, if at all RBI inspection or your internal auditor or external auditor says it's a loss asset, तो loss asset में provision 100% करना पड़ता है. That you need to check out. If there's restructuring done, restructuring is as per the provisions of RBI guidelines. Any advance slippage to NPA within 12 months of sanction, अगर वो slip हो गया NPA में जल्दी because the security value has gone down और वहाँ पे there was some problems, तो then in that case it is called as a quick or early mortality case. Problems. Verify accuracy of interest being charged, carry out analytical procedures. Okay, so now we are not talking about systems over here. We are talking about amount. EMI, installment, rate of interest are proper. Examine all large accounts, small sample basis pay. Check interest is being charged properly. Do analytical procedures. If it is restructured, wo guidelines restructuring are properly followed. Whether it requires additional provision or not, that all information. Okay, now there's a question from Hema, sir, CLR, SLR audit. CLR, SLR not much relevant from exam angle. That's why I've just omitted. See, we cannot be doing all questions. It has to be on a selected basis. तो ही complete कर पाएंगे. Otherwise, never possible. Okay, now there's one more thing. If I'm asked about how do you check recoverability of advance, तो see, एक था attributes, second था evaluating internal control, third था substantive procedure, fourth recoverability. So according to me, recoverability is important. If they are talking about recoverability of advances, so periodical statement submitted by the borrower will be sending a statement periodically. उनके financials, उनके stock का report, उनके debtors, all that things. उससे recoverability I am able to understand. See the latest financial statement of borrower. Review report of the security. Security की value has not gone down. उससे पता चलेगा if security के review report is there. And last, if a borrower is enjoying a credit limit of 10 lakh or above for working capital, review the audit report which they will be providing. If they are providing audit report, आप उसका audit report भी check करो. So from audit report, from financial statement, from the value of securities, from stock, debtors के statements, I am able to understand recoverability. Did you understand? Okay, next is provision basically for NPA. For NPA, this is important. I will take the ones which are there first. Now, in case of a bank, we say it's NPA when it's overdue for more than 90 days. Yes, no? When it's overdue for more than 90 days. But in case of a bank overdraft or cash credit, वहाँ पे there's no concept of overdue. OD में you are given a OD limit. If you exceed the limit, तो problem होगा. The account has to be for OD. The account has to be within the sanction limit as well as within the drawing power. Drawing power will be calculated based on the stock statement, debtor statement which you are giving, and drawing power के लिए the statements which you are giving should not be more than 3 months old. अगर वो more than 3 months old है तो account is said to be irregular. So it should not be older than 3 months old. If it is more than 3 months old, then it is said to be irregular. Okay, now suppose you were given some facility for a period of 3 years. आपको OD facility दी था 3 साल के लिए, then it has to be renewed. Okay, if renewal is pending, तो ad hoc you are using till the time renewal happens, तो renewal should happen maximum within 180 days. Stock statement should not be older than 3 months. Limits are not renewed, तो within 180 days में it has to be renewed. And by chance, due to genuine reason, if it is for more than 180 days also, but the payments are coming on regular basis, there are no problem, then still the account may be classified as performing. Check. The auditor should ensure that this ad hoc or short reviews are not done on a repeated basis. And there was this question over here. The renewal has not been done even though 180 days are over. The renewal not been done even though 180 days over हो गए, तो भी renewal नहीं हुआ. And you told that the auditor had expired, you appointed a new auditor. Because of that, there's a delay in basically audited financial statement, and for renewal purpose, audited financial statements are required. So there's a genuine reason, account is operating within the limit, so still the account is said to be standard asset, not non-performing. Because 10th April ko the things are done. 10th April को the things are done, and we already informed sir auditor expire हो गया, we have to appoint a new auditor, he will carry out audit, things got delayed, but it's due to a genuine reason, so we treat it as an adjusting event, things coming to know after year end before the balance sheet date. Now this is important, asset classification is borrower wise, not facility wise. If Niket has taken 2 loans from HDFC, I have taken a car loan as well as housing loan. Okay, if I default in housing loans, then both my loans which HDFC, car and housing, both will be NPA. So one loan of Niket NPA, all the loans of Niket with the same bank, they are NPA. It's borrower wise, not facility wise. Okay, government guaranteed advances. If it's a government guaranteed advances, now central government guarantee. If it's a central government guarantee, it's always classified as a performing asset. But if it is overdue for more than 90 days, income recognition will be like NPA, that's on receipt basis. So exemption is given from classification, not from income recognition. Okay. But if it's a state government guaranteed advances, there is no exemption. State government guaranteed advances overdue for more than 90 days, it will be treated as NPA only. Clear? Restructured advance not relevant from exam angle. This is important, sale purchase of NPA. This is important, sale purchase of NPA. Okay, so your board of directors should lay down the policy which is there for the sale purchase of NPA. Only such NPAs which have remained NPA for more than 2 years, they can be sold. NPAs which have remained NPA for more than 2 years, they can be sold. They will always be sold without recourse. Means I should not have any liability once I sell it off. Okay. You cannot assume any legal liability related to it. It should be sold only for cash basis, and under no circumstances it can be sold to another bank at a contingent price. Okay, it cannot be based on how much you recover. It has to be fixed price, it has to be non-recourse, it has to be on cash only. Entire amount has to be received upfront only. They say we'll pay you later once we collect. No. That is not allowed. And I cannot purchase the NPA which I only have sold off. Achha, whenever you sell an NPA, imagine asset was 100, provision done was 50, so net was 50. If suppose you sold for 40, if you sold for 40, 10 rupee goes to PNL, loss. But suppose you sold for 60, so we don't record a profit 10 rupee, rather we'll retain a provision 10. So NPA ho, when you sell it off, it's removed, loss should go in PNL, profit should not be recognized, no profit is recognized, but what we do is the excess provision is retained. So I'll remove 100 and remove provision 40. Provision 40 gaya, asset 100 gaya, net 60 got removed, we received 60. We are not recording a profit 10, we continue the provision of 10 rupees. ठीक है. Okay, that's fine. Next, fixed asset is not at all relevant from exam angle for bank. Bank में fixed asset का कोई meaning नहीं है. Okay, come to page number 28. Come to page number 28. Non-banking asset acquired in satisfaction of claim. What is acquired? Non-banking asset. The non-banking asset you acquired in satisfaction of claim, like suppose someone is not paying money. If someone is not paying money, we took their car. So when car is coming, that's a non-banking asset acquired in satisfaction of the debt. So agar car aaya, so now can I say it has to be transferred in bank's name? To verify the asset with the relevant documentary evidence, check the ownership is legally vested into bank. That is what we need to do. And after acquisition, bank has to dispose it. They can keep it for a maximum period of 7 years. The non-banking asset acquired, they have to dispose it. Maximum within how many years is? 7 years. Fine. Other things, these are not relevant. Directly go to, okay, deposits. Page number 30. Deposits. People are depositing money with bank. Okay, one, it can be current account, savings account, जिसको हम बोलते हैं CASA, current account, savings account, CASA. Then term deposit, that is FDs. And last one is deposits which are there in foreign currency, non-resident people have made deposit, FCNR account, foreign currency, non-resident account. Okay, the audit procedures, first of all, how do you verify current account, savings account? Mark it as important. How do you verify current account, savings account? Mark this as important. One, on a sample basis, you verify the current account, savings account open during year. Unke KYC norms basically are adhered or not, that you need to check. Okay, verify the balance in individual account on a sample basis. Interest on current account, savings account, you test check on a, you check it on a test check basis. Okay, normally no interest is paid in current account, but our savings account may around 3.5% is paid. So that you check it. You try to do some external confirmation with the customers. वो भी आप कर सकते हो. Examine whether the procedure for obtaining balance confirmation is followed. Okay, if there's a debit balance in current account में negative balance, it should not come under deposit. It should come under advances. So negative should come under your advances. Inoperative account are high risk area of fraud in a bank. So why it is inoperative and suddenly there was an account inoperative, one fine day 10 lakh rupee came, it becomes a question mark. Or risk of money laundering increases. So try to see whether inoperative account are reviewed and suddenly there is a transaction in inoperative account, that needs to be verified. Term deposit is fine, others is fine. Okay, borrowings are also okay, not relevant. Now come to this contingent liability. See, for all these offbeat chapters, we should do 5 to 10 questions in every chapter. And out of that 5 to 10 questions which we are doing in every chapter, there's a high probability question will be out of it. Okay, contingent liability in case of a bank, it is to be bifurcated like this. How should the contingent liability in bank be bifurcated? Check. 1. Claim against the bank not acknowledged as debt. So someone filed a litigation, we have not accepted as a liability. Liability for partly paid up investment in Schedule 3. In Schedule 3, it is basically a commitment, but Schedule 3 doesn't apply to bank. They show it as contingent liability. We have to show it as contingent liability. Liability for partly paid up investments. Liability on account of outstanding forward exchange contract. Whatever is forward exchange contract, usme you might be liable to pay to them extra amount uske liye. So liability on account of outstanding forward contract. Now see, what happens over here? Pay attention. Customer enters into a forward contract with bank. Bank generally don't keep it open. They will enter into forward contract somewhere else. But even if that guy doesn't pay, bank will have to pay to the. If that guy doesn't pay, bank will have to pay to whom? The customer. So whatever is the liability on account of outstanding forward contract, that we show it as contingent liability. So actually it's not contingent. One side we have a receivable, one we have a payable. Customer ko dena hai, we have to collect from someone. So as such it gets knocked off, but still will show it as contingent liability. Guarantees given on behalf of constituent is customers. The guarantees on behalf of customer, that comes over here. Acceptance, endorsement, other obligation is LC, letter of credit. Now there's a difference between a normal guarantee and LC. LC में bank is a part of the entire process. All documents, payment are routed through bank. Guarantee में bank का role comes only when the customer defaults. And other items for which bank is contingently liable, these are the points related to contingent liability of a bank. Okay, check this question. RTP November 19. What are the disclosure requirements of contingent liability for bank? Don't forget to read the word for bank. Okay, next question. What are the representation letters which we can take? What are the representation things which we can take for contingent liability? So contingent liability का representation which we can take from management. One, all off balance sheet item have been recorded. All off balance sheet items have been entered as per the procedure. All off balance sheet items are supported. All contingent liability have been disclosed. Contingent liability does not include any crystallized liability. If it has become actual, it doesn't come here. So take that. It is as per the AS 29, the figures which are there is as per accounting standard 29. Achha, if you are given a guarantee, in case of guarantee issued on behalf of bank director, the bank has taken appropriate steps to ensure that if guarantee is given on behalf of bank director, director के behalf we have given guarantee, तो उसके पास से some security etc. is kind of taken before giving the guarantee, and that is basically there. So these are the representations which we can take for contingent liability. Now, how to check contingent liability? That audit procedure is not much relevant. Important was classification of contingent liability. Move ahead. Come to concurrent audit. Come to concurrent audit. Okay, Sulabh has a question, sir. Will this be kept on YouTube? Answer is yes. This will be available on YouTube later on also. So those people who are having examination later, they can watch it later as well. Okay, now concurrent audit. What is concurrent audit? They are telling it is verification of transaction as and when the transaction happen or at earliest. It is at earliest. Is it a pre-audit? No. It is not a pre-audit. It's basically concurrent, simultaneous with occurrence of the transaction. So that is basically given. And for this concurrent audit, now see, concurrent audit, you don't have to have concurrent audit for all the branches of bank. No. तो सारी branches के लिए नहीं है. Out of all your branches, bank has given advances or bank is having deposit, 50% advances, 50% deposits need to be covered. The bank has 1000 branches, but out of 1000 branches, top 200 branches covers 50% advances and deposit. So you need concurrent audit only for the top 200 branches, where 50% advances, 50% deposits of the bank are covered up. Okay. Now, concurrent audit is like an internal audit. It is an internal audit. So who will appoint the concurrent auditor? Bank themselves will appoint the concurrent auditor. Okay, so bank themselves will appoint. Now, concurrent audit के अंदर which areas are to be covered, that is actually given by RBI. So guidelines issued by RBI cover the following areas for concurrent audit. Which areas are covered? One, you remember headings. The headings. Which are the areas covered in concurrent audit? Cash, important ones. Cash है, deposit है, advances, investments, foreign exchange, housekeeping. Housekeeping is general, and other items. So cash, deposits, advances, investment, foreign exchange, housekeeping, and other item. Now, according to me, advance is important, foreign exchange important. Okay, so let us go inside. If I just go inside, advances. So concurrent audit is kind of internal audit. Whenever an internal auditor is checking advances, what he should check? Ensure that the loans have been properly sanctioned, securities document have been received. Post disbursement, you try to see that the money is coming, the stock statement, the installments, recovery, all that things are on a proper basis. There should not be any misutilization of loans. In case of letter of credit issued is only for a genuine trade transaction. If bank has given a guarantee, they are properly worded. Follow up for overdue bills of exchange. Classification is done as per RBI norms, standard, substandard, doubtful loss. Okay, whether they are whether they are, whenever your advances are guaranteed by DICGC, Deposit Insurance Credit Guarantee Corporation, or ECGC. So if suppose they are not paying, we have to make a claim to DICGC and ECGC. So claims have been made to them, all that things. So this is basically related to advances. Now check RTP May 19. RTP May 19, what they've given? You are required to verify the advances. You are a concurrent auditor. So concurrent audit mein, how do you verify advances? This is the answer. Okay, foreign exchange. Foreign exchange. Check foreign bills negotiated under letter of credit. Letter of credit में foreign bills जो आपने negotiate करे हुए हैं वो. FCNR, foreign currency non-resident account, other non-resident account, that you check. Inward outward remittance in foreign currency are properly recorded. Vostro Nostro, remember Vostro Nostro? Nostro is our bank having funds with a foreign bank in foreign currency. Our bank having funds in foreign currency abroad. Acha, foreign bank having funds in Indian currency here. So that is, one was Nostro, other is Vostro. So Nostro, Vostro ka reconciliation is done in a proper basis. Adherence to RBI norms etc. are done. Reconciliation of Vostro Nostro account is done. Okay, so check this question. Again, you are a concurrent auditor. Concurrent auditor, the main areas of coverage for foreign exchange transaction. Only foreign exchange transaction, this was to be answered. The one you need to remember the headings, inside you need for advances and the foreign exchange transaction. Then, okay, now, appointment of concurrent auditor. Who is going to appoint the concurrent auditor? It will be appointed by bank at their own discretion. Everything it's by bank, because it's a kind of internal audit. Bank themselves are going to appoint it. Okay. Remuneration etc. all things is by bank only. I'll directly go to audit committee of a bank. Now see, for a bank to have an audit committee is mandatory, and in case of audit committee of a bank, one chartered accountant director is also mandatory. So who will be the member of the audit committee? The executive directors, the nominees of central government, chartered accountant director. Chartered accountant director is mandatory in case of audit committee of a bank. Now check these two questions. You might feel these questions are not related to theories given, because these are related to inter mein. This topic was also there in inter as well, or your bank audit. So check. A bank has recognized on accrual basis income from dividend of mutual fund and basically dividend on securities. See, income from investment, how to record? If it is dividend which is basically of a corporate entity, company, the company's dividend they can record on what basis? Right to receive dividend established when it is declared at an AGM. So company ka dividend declared at AGM you can book on accrual basis, but a mutual fund wala dividend is to be only on receipt basis. So income from dividend on shares of corporate body, mutual fund should be on cash basis. However, for shares of corporate body, you can book it based on declared at AGM if the right to receive is established. But your mutual fund ka dividend has to be on receipt basis. Next, you are a consortium member. So group में you are given a loan. If group में you are given loan, out of three banks has given loan. One bank is getting money, other two banks are not getting money. The bank which is getting money, they will classify it as performing. Bank which is not getting money, they will classify it as non-performing. You see your own recovery. The consortium finance, the bank may classify the advance by its own experience of recovery. So if your money is not coming, you show it as NPA. Okay. Now there is this question, in a particular account there was no recovery last 18 months. There was no recovery last 18 months. The bank has not applied the NPA norms because it is guaranteed by CG. If it is guaranteed by CG, it is always classified as performing, but it's overdue for more than 18 months. Income recognition should not be like performing. Income recognition should be on cash basis. Are you clear? The central government guaranteed, the exemption is available from classification, not from income recognition. Acha, there's one more question. Would your answer be different if it was guaranteed by state government? Yeah. If it was guaranteed by state government, we don't consider only, it will be classified as NPA. If it was state government, it will be classified as NPA. Are you clear? And last one, we have this question, advances against LIC policy. We have done an advance against LIC policy, draft a audit program. Audit program is how you are going to check. If advance are given against LIC policy, one, we need to inspect the policy. Policy is assigned in the name of bank. So if something happens, the money is received by bank, assigned in favor of bank. Premium is paid on timely basis, policies are in force, surrender value, I should give you a loan up to the surrender value. That, and you need to see that the surrender value is subject to payment of premium, so such premium is deducted from surrender value. Ho gaya. This is your chapter of audit of bank. Let us finish one more chapter, insurance company, then we take a break. Coming to audit of insurance company. Coming to audit of insurance company. Okay, now insurance company mein there are two things. One is a life insurance, other is a general insurance. Majority time the question is only from general insurance. The life insurance as such is not much important. Still, whatever points we have marked important, will cover it. Okay, if I just go down, 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 introduction fine, legal framework fine, registration. Registration, only a Indian company is allowed to do a insurance business in India. FDI in insurance sector is allowed up to 49%. FDI in insurance sector is allowed after how many percent? 49. So if at all there is a foreign company, they want to do insurance business in India, they need to start a company in India with an Indian partner holding 51%, foreign company holding that 49%. That is possible. But there is a reinsurance company. So foreign insurance company can engage in reinsurance business. See, reinsurance is not retail. See, retail ka meaning, customer coming directly to you. That's retail. And second kya hota hai? I went to SBI to take an insurance. Now SBI doesn't want to take that much risk. They get it reinsured from another bank, another insurance company. The SBI life insurance gets it reinsured from someone else. That is reinsurance. So reinsurance is kind of between two insurance company. Reinsurance is between two insurance company. The foreign insurance company can engage in reinsurance business. But if they want to do the normal retail business, in that case, they have to have a company registered in India, and foreign company can hold maximum 49% in it. Okay. The minimum paid up capital for insurance company is 100 crores excluding the preliminary expenses. Fine. Financial statement is fine. Just go down, down, down. Acha. Now over here, appointment of auditor for insurance company. Tell me, how many insurance company ka audit I can do? How many insurance companies audit I can do maximum? I can do maximum 3 insurance company ki audit. In that, not more than 2 should be life insurance or not more than 2 should be general insurance. So maximum 2 life insurance, maximum 2 general insurance. Total I can do is 3 audits, insurance company. Okay, perfect. Okay, whether tax audit applies to life insurance company, answer is yes. Now there's a question. Let's say this insurance company already have an audit under other act. So whenever the tax audit is applicable, they will have a form number 3CA. Right? Answer is yes, they will have a form 3CA. It's wrongly written 3CB over here. So if you have an audit under other act, the form which is there for tax audit is form 3CA with the annexure 3CD. Okay, types of life insurance plan is okay. Now requirement of Schedule A. Now see, there's Schedule A which is for life insurance company, Schedule B which is for general insurance company. Schedule A ke andar, there's a format of balance sheet, P&L, all that things are given. Now Schedule A, Schedule B, both are divided in 5 parts. Schedule A, Schedule B, both are divided into how many parts? 5. Part 1 talks about the accounting principles. Part 2 is basically related to something else, and there's one of the part talking about the formats of balance sheet, P&L. So they have a specific format. Exam angle not relevant. You had a chapter in your intermediate that is basically financial statements of insurance companies. Fine. Now whether accounting standard apply to them, answer is yes, except AS3 cash flow statement, AS 17 segmental reporting, and one more, AS 13. The investment ka accounting they have separately, it is not applicable, AS 13 doesn't apply to them. Fine. How do we value the investments? If it's a real estate property, this is for life insurance company. Okay, it is for life insurance company. Real estate investment property day one is historical cost, subject to revaluation once in every 3 years. Subject to revaluation once in every 3 years. And whenever you're revaluing, that profit loss will go in revaluation reserve. So profit on sale of investment or loss on sale of investment. See, currently revaluation reserve cannot be used. It cannot be used for declaration of dividend, but subject to the guidelines issued by IRDA, it can be used for declaration of bonus to policyholders. So the balance for revaluation, whatever is there, revaluation reserve, some amount based on the direction, you can use it for bonus to policyholders, but you cannot use it for giving dividends to shareholders. And once that asset is sold off, it will be transferred to basically your profits. So profits में चला जाएगा. Currently it is in revaluation reserve. ठीक है. Now debt security. Okay, so real estate investment property at historical cost, subject to revaluation once in 3 years. ठीक है. Now debt securities, if they are held till maturity, they will appear at cost. Okay, equity which are traded in active market, they are measured at the fair value on the balance sheet date. Derivatives are always again at a fair value. The equity and derivative, they are always at the fair value at the balance sheet date. Uska unrealized gain loss will go in fair value change account. Fair value change account, you cannot use it for what purpose? For declaring dividends to shareholder, but it can be used for issuing bonus to policyholder based on IRDA rules and regulations. Fine. Unlisted companies other than actively traded, you will show at cost only. They are shown at historical cost. TK loans is fine, ULIP is fine. Loans is fine, ULIP is fine. So part 1 was talking about the policies. Part 2, the disclosures forming part of financial statement. Part 3 is basically a board report. Board report mein kya kya aayega. Part 4 is the format of balance sheet P&L, and part 5 is audit report related things. TK. So this is part 2. Part 4 is the content of management report, not relevant exam angle. And now comes audit wala thing. See, till now just a kind of intro tha. Exam mein what is more important is audit. How do you check premium? How do you check claims? Claim paid, provision for claim, wo sab important hai. Okay, so over here, audit of accounts of life insurance company, there's a word actuarial process. What is this actuarial process? See, whenever I want a life insurance, I go to insurance company. The insurance company, they will basically have actuaries working over there. The actuary ka highest recruiter is basically insurance company. An actuarial process is nothing but actuary ka meaning kya hota hai? You're trying to understand what is the risk involved over here. So whatever insurance companies have taken the life insurance, they are required to have a provision created as per the actuarial valuation. So whatever policies are there, usme future mein what payments can come up, uska present value minus the premium to be received. So check over here, they have given. The auditor in audit report are required to certify whether actuarial valuation of liability is duly certified by appointed actuary and it is as per the guidance and norms which are issued by IRDA. But in insurance company, the role of actuary is not just limited to your valuation of liability. They are used at other places also. How much premium to be charged, actuary will decide. Which type of plan to come up with, actuary will decide. So actuary ka role is now in product development, model development, statutory valuations are there only, business planning, solvency management, and your management reporting also. So actuaries work has increased a lot in insurance sector. तो पहले क्या था, सिर्फ they had to have a certification of provision for liability. Now for developing new type of insurance plans, for deciding the premium to be charged, for what will happen if this thing happens, etc. All things are now done by actuary. So actuaries in life insurance have gained a tremendous importance. They've shifted from just certifying to other things also, and over here they quantify the risk. They are kind of a calculating and modeling hub of the company. The actuarial process is nothing but an actuarial department in the life insurance company. Next is word free look cancellation. This was given in RTP. What is free look cancellation? Whenever you take a life insurance policy का when you get a contract ना, the terms and condition, it's a full booklet. A पूरा booklet देते हैं. After getting the contract of life insurance, after taking, you are given 15 days. You can look at the contract. If you feel you are not happy with terms and condition, you can give back your policy. The free look cancellation. You can see the terms and condition, review the terms and condition. If you disagree to those terms and condition, you have an option to return the policy. आप policy return कर सकते हो, and for that you have a 15 days from the date of receipt of policy document. Policy document मिला, within 15 days you can look at the terms condition, not happy, give it back. अच्छा, when you give it back, sir, would I get back my premium? Sir, 12-13 days you are covered na. So that much they will deduct, whatever is proportionate premium they will deduct. Achha, if the insurance company had borne some medical charges or stamp duty or something on behalf of you, that they will deduct. Remaining amount they'll be giving it back to you. Clear? Next is, okay, now check this point. Check this point. Now, if the question comes, how will you audit accounting of premium? I repeat the word. How you are going to audit what? Accounting. Premium ka accounting. Accounting of premium. The one, collection of premium. So we need to check that the premium money is kept in a separate bank account. There's a daily reconciliation process. Premium collected, premium entered in system, and the money deposited in bank. Uska daily reconciliation is there. Appropriate mechanism to ensure all collections are deposited with bank on a timely basis. Okay, so collection. Second, calculation is done on a proper basis. Uske liye there is a system employed. Third, recognition of income. Premium income should be recognized on the basis of policies issued. Okay? Whenever you issue a policy, premium income should have been recognized. Achha, sometimes you have received some upfront premium. If I have got some upfront premium, the risk goes in next year, that will come up under advance premium. So we received money, risk has not commenced, then it will be under advance premium. Okay. Reporting of figures to IRD and management. There's a proper management information system. MIS system is there. Usme maker checker ka rule. The one who is making should not be checking the things before the reports are given. They should be checked by someone else. And there's a reconciliation process between premium income as per financials and as reported. Okay, so accounting for premium, one is collection, one is calculation, recognition of income, advance premium, reporting of figures to IRDA management, are they matching with the figures in books, and other areas like the appropriate SOPs, delegation of authority metrics, who will give receipts, etc. Premium received, refund of premium, how it is to be done, refund kaise dena hai. Company conducts a reconciliation on daily basis and robust interface between admin and accounting system. The question was related to accounting for premium. It was not general, just accounting for premium. Claims is okay, this is not relevant much. Okay, investment. What is the role of auditor? What is the role of auditor when you are doing a review of investment department of insurance company? When you are reviewing the investment department of insurance company, similar to bank wala thing, review the management structure, front office, mid office, back office. Review the standard operating procedures, IRDA regulations, how you are doing the investment. Review the investment policy. Review the scope, minutes of investment committee. Check compliance with all investment regulations of IRDA are complied. Disaster recovery, backup plan, whatever you are having. Review the excess control. Who can order, who can do the things, uske excess controls. Cash management system to ensure that you have money when you are doing investment. Insurance companies cannot go for short selling. Short selling is not allowed. Restrict the short sales. And you can invest in certain categories of investment. Okay, below this credit rating only this much investment should be there, above this credit rating this much investment should be there, to ensure the regulatory limit on exposure and rating of debt instruments. Reconciliation fund wise, now iske andar there is a ULIP plan, unit linked insurance policy. What happens in ULIP plan? You give money, the insurance company will invest on your behalf. Kahan pe? If you choose a ULIP which is equity wala, they will invest in equity. If you choose a ULIP which is debt wala, they will invest in debt. So insurance company is going to invest on your behalf, ULIP plans. So can I say that investments are not the insurance company ke investment, they are policy holders investment. The investments are to be bifurcated, split into shareholder, policy holder. Split into shareholder, policy holder. So that we need to check. Reconciliation of holding with the custodian, whatever holdings are there, custodian ke paas wo sare physical certificates etc. are there. Valuation is done in a proper manner, NAV computation is done properly, that is fine. Then control over personal dealing, insider trading, front running. So insider trading is prohibited, that all things we need to take care, wo sab hua nahi hai. So this is about the investment department of life insurance company. Okay, commission payable to agent is fine, we'll take it together with the general insurance. General insurance mein cover hoga. Now this is important. It's not written but just mark it. This was a question asked November 2020. Okay, operating expense related to insurance business. So legal and professional charges, if they are incurred in connection with claim, then they will go in claims, they will not come under operating expenses. Okay, employee welfare, employee remuneration, to all kind of payment related to employee, reimbursement of medical, whatever is there, they all will come over here. They all will come over here. ठीक है. Interest and bank charges. So interest and bank charges, all expenses towards maintenance of bank account, interest, other charges levied by the banker, they all will be coming over here. Acha, any other interest charge on borrowing will not form part of revenue account, not to be included here. Now see, in life insurance and general insurance mein, you have a revenue account, you have a P&L account. Revenue account is a policy holder account and P&L account is a shareholder account. So any income expense relating to policy holder comes in a revenue account and any income expenditure related to shareholder will be coming in P&L account. Depreciation, charging of depreciation is basically as per Schedule 2 of Companies Act, same. Interest, dividend, rent. The interest, dividend, rent, they are to be bifurcated between revenue account, P&L account. If it's an investment of policyholder fund, income from that investment comes in revenue account. If it's an investment of my shareholders fund, then that will come under your P&L account. So that's why it is to be split, that is given. Okay, this was related to your division A. Exam angle, more important is your Schedule B. So that was Schedule A, now Schedule B. In case of a general insurance company, how do we value investments? Okay, just remember your real estate property. Real estate property under life insurance kaise tha? First at historical cost, subject to revaluation once in 3 years. यहाँ पे no revaluation allowed. यहाँ पे no revaluation allowed. Debt security, equity, they are all same like the life insurance company. They are same like the life insurance company. Now coming to audit of accounts, उसमें premium. Audit of accounts, उसमें premium. I'm taking the important thing, this one. No risk assumption without the premium. If premium is not received, you cannot bear any risk. See the line. No insurer shall assume any risk in India in respect of any insurance business on which the premium is ordinarily payable in India until the premium is received or is guaranteed to be paid by such person in such manner within such time as may be prescribed, or it is deposited, or a deposit of such amount is made in advance in a prescribed manner. The simple words, unless you receive the premium, risk is not started. So imagine we gave a policy to Reliance Industries Limited. We gave a policy to Reliance Industries Limited on 15th of March. 30th March, they have a fire at that place and they have not paid the insurance premium yet. If they have not yet paid the insurance premium, then my policy may risk doesn't come to me. So even though they have already suffered a fire, I will not be liable to bear because they need to pay the money. So section 64 VB, no insurer shall assume any risk in India in respect of any insurance business on which premium is ordinarily payable in India until and unless the premium is received or is guaranteed to be paid by a person in a manner, in such manner and within such time as may be prescribed, or until a deposit of such amount as may be prescribed is made in advance in a prescribed manner. Okay. Now I'll just go over here again. This is important. Okay, for premium, what you should do, see, premium income, when I should be booking it, the auditor should verify that the policy document have not been issued. कब मुझे policy document issue नहीं करने चाहिए? If premium is not collected at all, or checks have been given but checks are dishonored, or premium is not collected due to furnishing of bank guarantee or cash deposit but they have fallen short. They had bank guarantee or some deposit as prescribed but they have fallen short. Tab? Okay, if it is basically an open declaration policy means the limits have exhausted. Like the policy was covering sales up to 10,000 crores. Now 10,000 crores is crossed. So then in that case, you should not be liable for anything. Policy document should not have been issued. Okay, installment for premium has not been collected. So again, you are not liable for basically the things. And so you should not be issuing policy document in the following case. Fine. Now, if it's a co-insurance, what is a co-insurance? SBI Life or basically SBI General Insurance, suppose, and HDFC Ergo. They come together and they give insurance. That's called basically what? Co-insurance. In a co-insurance, you come together and give insurance. It's not like I go to SBI and then SBI got it reinsured with HDFC. SBI getting it reinsured with HDFC is different. This, यहाँ पे two insurers are giving the insurance collectively together to that one guy. Agreement में दोनों का name will be there. If it's a co-insurance में there will be a lead person. The lead insurer will get all the money. Now lead insurer will collect full money, but he should record income only for his share. For the share relating to others, he has to book a liability payable to him. And the other guy should be accounting income based on the advice which is received from the lead insurer. Fine. So when you are a leader, you should record only your share of income. Now see, this is all verification of premium fully. यहाँ पे पूरा verification of premium and not just that accounting for premium. So this is a huge topic. They've given around 15-17 points. Fine. Check this question, many times asked. I told you, you took a policy. You have issued a policy on 25th March. Fire wala thing. And the 31st March ko you observe that policy is issued on this date. And the company is basically having a practice for big customer. Money was collected on 5th of April. Kab paisa aaya? 5th April. Now, there's an accident on 31st March. Would you be liable for giving the claim? Policy issue kiya 25th March, money is collected on 5th. If money is collected on 5th April, no liability can be assumed till 5th April. 31st March, there is an accident at the client's place. Are we liable to pay? Answer is no. 64 VB. 64 VB, not liable. Okay, claims. Uske andar, this is important, register and records. In your claims, the point important is register and records. Okay, which are the registers and record relating to claim which are to be maintained? Claim intimation register, claim paid register, disbursement book, claim docket. Claim docket contains all documents relating to claims. Claim intimation, claim form, policy, survey report, photograph, letter of subrogation, repairer's bill, everything is covered. Okay, report of quality assurance team, salvage register. So this is registers record relating to claims. Now there are two things over here, verification of claim paid and second is claim provision. Okay, if question is claim paid, write down points of paid. If question is on provision, write down points related to provision. Okay, in case of co-insurance, you should be booking only your share, not the others. ठीक है. The claims are not paid if premium are not received, section 64 VB. Claims are paid on the basis of advice from other insurance company when you are not a leader. You are not a leader, you pay the claim based on advice of other insurance company. Co-insurance mein. They are duly sanctioned. The salvage has been recovered. The payment made against claim partially settled. Partially settled hai, they are duly vouched. The sanctioning authority should ensure all these things proper. Final settlement may, you should take a unqualified discharge note. Final settlement time, take an undischarged qualified note from the insured person. ठीक है. This is basically all related to claim paid. If I go to provision, you should make provision for two things. कौन सी two things? Okay, claim intimated but not paid. आपको intimate किया but you are not yet paid, or claim not yet intimated. Okay, claims are not yet intimated but I know client has already suffered a loss. Newspaper में आ गया, TV में आ गया. I know he is going to file a claim in 2-3-5 days. So I should make a provision for that also if year end is coming now. So basically you do that. Provisions are made for all unsettled claims at year end. Provisions are made only for claim where you are legally liable to pay. For determining the amount of provision, event after balance sheet date are considered. ठीक है. Provisions are made net of on account payment. If I already made you some payment, balance का provision करना है. Average clause should be applied. Co-insurance में only own share you need to take. If it is a litigation में how much provision to do, take a legal advice. Take a legal advice. Then the provision has been basically the provision whatever you're doing. If some amount is deposited with court को पैसा दिया but it's a pure deposit. If it's a pure deposit, don't show it as a liability, show it as an asset. Fine. So this is basically related to claim provision. To check the question, steps taken for claim provision ka verification. Write only points for verification. The claim provision. Okay, commission, it's fine over here. Outstanding premium agent's balance. Okay, two things. One, outstanding premium and agent's balance. The long outstanding premium is there. Try to understand why. To inquire reason for long outstanding credit balance in premium account. Examine the reason for policy not being issued or the long outstanding not adjusted against the amount due. So Q, why long outstanding is there. ठीक है. Scrutinize and review the control account debit balance, the nature. So debit balance, agent का balance. If I have to receive money from agent, it will have a debit balance. Okay, inoperative balance. Okay, if it's an old one, inoperative, why are you still retaining it? Okay, make sure that old balance है debit, they are not paying, provision करके उसको finish off कर दो. Okay, age wise, sector wise analysis of outstanding premium. Check बाद में whether outstanding premium is collected. And if you have a bank guarantee or premium deposit for outstanding premium, adjust outstanding premium against it. That is basically to be done. Unexpired risk reserve is fine, not relevant. Reinsurance is already fine, we did it. Reinsurance mein there are two things. Reinsurance inward. So this is reinsurance accepted. And second is reinsurance outward. Outward is reinsurance ceded. So inward is accepted, outward is ceded. Reinsurance is always as per the, कैसे होता है? Agreement के basis पे होता है. So you need to see the agreement between the two insurance company. You need to ensure that it is as per the policy of their both the board of directors. It is as per the IRDA norms. वो सारी चीजें is to be checked out. ठीक है. Co-insurance we just now did. Now solvency margin is important. Imagine you took insurance, but if something happened, insurance company is not paying claim. Insurance company says we don't have money. Now, if insurance company says we don't have money, can I say nobody will buy only insurance later on? So insurance company has to ensure they are always solvent. Okay, तो उसके लिए there's a solvency margin 64 VA. 64 VA important, 64 VB important. अच्छा, VA requires every insurer and reinsurer to maintain excess of asset over liability at all times. Excess of asset over liability at all time, and that should not be less than 50% of minimum capital. Minimum capital was 100 crores excluding preliminary expenses. So at least 50 crore rupees has to be excess of asset over liability mandatorily required. ठीक है. If you fail, so what will happen? If you fail, what will happen? The IRDA can apply to court for winding up your insurance company. Fine. So if you do not maintain, you are required to submit a plan to the IRDA. A plan IRDA is applicable. अच्छा, just a minute. Video leak हो गई है. Am I audible, visible properly? Am I audible, visible properly? Okay, what is this video leak ho gayi hai? I did not understood. Okay, that's a spam. Leave it, chalo. Let's continue. If you're able to hear me properly, let us move ahead. Okay, let's move ahead. Purpose is to finish off the revision. छोड़ो वीडियो का जो होना है. If it is getting leaked, others are getting it. Good है ना? कुछ खराब तो कर नहीं रहे. We are doing good only. Okay, so if at all you are not maintaining that excess of asset over liability, you are required to submit a plan to IRDA. If IRDA is satisfied with the plan, they will give you some time or they will tell you to rectify in a proper manner. If you are still, if IRDA is not happy, they may basically apply to court for winding up that insurance company. Acha, so now you are required to submit statement showing value of asset, IRDA asset AA. You are required to show a statement basically related to amount of liability HG and solvency margin in form KG. This are to be there. Now question, whether solvency margin is to be checked at year end only or is it to be kept at all times? Is it only at year end or at all times? Answer is all times. Okay? And the statement of assets, liability, solvency margin are to be certified by auditor. Auditor has to certify the statement of assets, liability and solvency margin. Check question number 6. They said solvency margin needs to be maintained only on the last day. No, it is at all times. Trade credit insurance is fine. And now coming to auditor's report of insurance company, there are some statement of fact. It's okay. Truth and fairness is okay. Certification may we just now saw. We just now saw that auditor has to certify basically statement of assets, liabilities and that solvency position that is there. Plus, if you just remember, auditor has to certify whether life insurance company mein, whether actuarial valuation of the liabilities has been done or not by a life insurance company, that also needs to be certified by the auditor. TK, and who has to sign on behalf of management the financial statement of insurance company? Okay, who has to sign them? It should be signed by a company on who? Chairman and 2 directors and the principal officer of the company. The chairman will sign and 2 directors and the principal officer will sign on behalf of company. So this was your life insurance company. We'll start with the remaining chapters after the break. Okay, so we did 4 chapters. Which are the 4 chapters we did? Automated environment, consolidated financials, automated, consolidated financial, audit of bank, audit of insurance company. So 4 chapters we did. After the break, again we do 4, then again we take a break and then the remaining. So we'll be trying to finish off by 7:30, 8 o'clock. Let's enjoy our break till now. So 30 minutes. We are meeting back at 4:45. We are meeting back at 4:45. Break till 4:45. See you after the break. Okay, any doubts anybody is having, please tell me. Sir, can we write down our own points for this chapter? Now see, for all this miscellaneous topics, if you write something in your own way, wo chal jayega. But if the question is specific, the answer has to be specific. So we need to understand what has been asked. If question comes verification of premium, you can write generally. Okay, same way verification of claim paid, verification of claim provision, वो सारी चीजें you write in your own way, that all will be fine. Just ensure some of the key words are matching over there. Okay, we meet back at 4:45. Enjoy chapter 11, 12, 13, 14, 15. So we finish 5 chapters and then we again take a break, and then there will be chapter number 16, 17 and chapter number 7 which is pending. So now 11, 12, 13, 14, 15. Let's begin chapter number 11, audit of NBFC. Now there's a question from Sridhar that, sir, do we need to write the sections in chapter of company audit? See dear, only company audit chapter has sections. So if you are able to remember it, please write it. So I will personally recommend, yes, sections should be written. If you are not writing, they may deduct half mark or 1 mark, not more than that. If you are not writing, don't worry. ऐसा नहीं है, you are not going to get marks. It's half mark, 1 mark will get deducted. Now, audit of NBFC, non-banking finance company. Audit of NBFC, non-banking finance company. First of all, the definition is important. Okay, what is the definition? It's a company registered under Companies Act, which is engaged in business of loans, advances, acquisition of shares, stock, bonds, debentures, security issued by government or other marketable security, or in a business of kind of leasing, hire purchase, insurance business, chit business. So this all kind of business you're doing, but not including any institution whose principal business is that of agricultural, industrial activity, purchase sale of goods, or purchase sale construction of immovable property. Now, when do I say my principal business is financing? When do I say my principal business is financing? For that, we are having 50-50 test, which is important. So when do I say my principal business is of financing? If your principal business is something else, you are not NBFC. When your principal business is financing, 50-50 test, both asset and income. So out of your total asset, more than 50% should be financial asset, and out of your total income, more than 50% income should be coming from that financial asset. So check your financial asset constitute 50% of total asset, more than 50%. But in the total asset, don't include intangibles. And your financial income from financial asset is more than 50% of gross. Both asset criteria, income criteria, both are to be satisfied in order to be a NBFC. Fine, let's move ahead. Regulations of NBFC. Okay, NBFC cannot start a business unless they get a certificate of commencement from, certificate of registration from whom? The RBI. So RBI ke paas you need to take a certificate of registration, and pay attention over here. All your NBFCs are required to have a minimum net own fund of 2 crore. Now many people ask me, but sir, the limit is revised to 100 crore. No. They can make it as 100 crores. So currently the limit is 2 crores only. They can make it as 100 crores. So what is the net own fund required? Basically 2 crore rupees. Okay. To obviate dual registration, certain NBFCs are exempted from registration. For example, those who are doing insurance business, they are also covered in definition of NBFC, but they are registered already with IRDA, so they don't need to be registered with RBI. Same way, venture capitalists, fund managers or merchant banking companies, they all are registered with already SEBI, so they are not required to be registered again with RBI. Nidhi companies, chit fund companies, housing finance company, they are exempted to have a dual registration, avoided. Okay. Types of NBFC mainly divided in 2 parts: deposit taking, non-deposit taking. Do you take deposit from public? Don't take. And number 2, asset size 500 crores or more, then you're called as systematically important. Asset size 500 crores or more, systematically important. Under this 2 broad category, there are various categories. This is not relevant much from examination angle. Most general one is investment and credit company. Investment and credit companies, they do investments also and they give loans also. So they do investment also, they give loans also. So principal business is asset finance. And they also give they also do acquisition of securities, both the things. Plus anything which doesn't fall in other category will come over here. So there is also a residual category as well. Okay, others are all fine, leave it. Now, minimum net own fund. They said minimum net own fund is 200 crores. How to calculate the minimum net own fund? That's first of all, you have to calculate the own fund. Own fund is your paid up capital. Your paid up capital equity. Compulsorily convertible preference shares, all your reserves excluding the revaluation reserve, all your reserves excluding the reserve created by revaluation. तो capital plus convertible preference share plus all your reserve excluding revaluation reserve minus your fictitious assets. That's own fund. Out of own fund, you deduct what? Investment in shares of subsidiaries or group companies or other NBFC, and investment in bonds, debentures or loans to subsidiaries and group companies. यहाँ पे word other NBFC is not there, and these two are to be deducted. These two are to be deducted total करके to the extent they exceed 10% of your own fund. So if this two together is up to 10% of own fund, no need to deduct. Over and above 10% of own fund, that is to be deducted. Fine, prudential norm is fine. Over here, asset classification. Chalo. Now, asset classification के लिए there are two separate regulations of RBI. Which are the two separate regulations of RBI? One, NBFC non-systematically important, non-deposit taking. You're not taking deposit, you're not systematically important. Means a small NBFC. A small one not taking public deposit. Regulation 2016. And second one is NBFC. Either you are systematically important, non-deposit taking, or you are deposit taking one. Either you are taking deposit from public or you are a big one, asset size 500 crores or more. तो NBFC, ND, non-deposit taking, non-SI, उसका regulation. And second one, NBFC, SI or deposit taking. बोलों में से कुछ भी, that is there. Okay, so two separate regulations are there. Now, when do I say it's a standard, substandard, doubtful loss? The standard में there are no problems, that is standard. Okay, substandard में for the small ones who are not taking deposit, who are not basically the one not taking deposits and non-SI, उनके लिए the limit is 18 months. So if you are NPA up to 18 months, you come under substandard. So for them it's 18 months. But for the SI and the deposit taking one, it is 12 months. The SI and deposit taking ones, if you are NPA up to 12 months, you are substandard. NPA for more than 12 months, you will be doubtful. The big ones, it is 12 months. Small ones, it is 18 months. And loss asset, you are classified as loss by the RBI inspection or internal auditor or external auditor or the bank themselves. अच्छा, NPA कब बोलेंगे? तो for that small ones, the limit given is 6 months. Non-deposit taking, non-SI, and for the deposit taking one or the non-SI, for the deposit taking one or the SI, for them the limit given is actually 3 months. So can I say for the big ones, they made it similar to bank? Okay. Now provisioning, loss asset 100%, doubtful, unsecured is 100%, secured में up to 1 year, 1 to 3 year, more than 3 years, 20, 30, 50%. तो 20, 30, 50 बैंक में ये नहीं है. बैंक में यहाँ पे it is 100, यहाँ पे it is 20, 30 and 50. Please take care of it. Doubtful for more than 3 years is 50%. Standard पे 10%. अच्छा, sorry, substandard is 10%. For standard, the small one it is 0.25. For big ones it is 0.4. Small it's 0.25. Big one is 0.4. Fine. Now coming over here, when we are checking audit procedure में this fourth one, compliance with NBFC acceptance of public deposit Reserve Bank direction 2016. So compliance with your public deposit Reserve Bank direction. So how much public deposit you can take depends on your credit rating. वो depend करता है credit rating पे. अच्छा, whenever there's a downgrading of credit rating, so whenever there's a downgrading of credit rating, it has to be regularized. How? This is important. So you should stop taking the new deposits from immediate effect. All existing deposits will continue till maturity. You report this within 15 days to basically RBI. And last, no matured public deposit should be renewed unless there is an express consent of the depositor. ठीक है. So that basically is the ceiling related to your public deposit. That was important. One more thing, NBFCs cannot grant loan against the security of their own shares. Against the security of own shares, I cannot grant loan. Okay, classification of frauds by NBFC. RTP May 19, November 20. So frauds under NBFCs are classified as misappropriation, criminal breach of trust, fraudulent encashment through forged instrument, manipulation of books, unauthorized credit for reward or illegal gratification, negligence, cash shortage, cheating, forgery, irregularities, foreign exchange. Now, your negligence, cash shortage, irregularity in foreign exchange, they they are as such not fraud unless that intention was proved. But they will be treated as fraud if there was a cash shortage, you did not report at that time, later you are caught. Cash shortage था, आपने report नहीं किया, later that employee is caught, then they will be treated as a fraud only. So otherwise these two are not fraud unless basically the intention is proved, but they will be treated as a fraud. Cash shortage wala, it is treated as fraud if it was not reported on occurrence and later detected by the management, auditor or inspecting officer. So which are the classification? Misappropriation, criminal breach of trust, fraudulent encashment, unauthorized credit for gratification or reward, negligence, cash shortage, cheating, forgery, irregular in foreign exchange, any other type of fraud. Fine, that is okay. Go down directly. Now audit checklist. Audit checklist, how to check investment and credit company. The NBFC, which is an investment and credit company, how do I check it? There are both the things. It has given loans also, it has done investment also. So I need to write points about how to check investment company, how to check the loan company. Both the things are to be written. First, verify all shares, securities held by NBFC. Yeah, investment. You should not have given loan against security of own shares. Dividend income, etc. are properly recognized. Remember, it should be on cash basis. Final dividend, which is at AGM declared, that you can record on accrual basis. Fine. Contract note, etc. for broker for buying, selling of investment. Board minutes for purchase, sale of investment, or if there is an investment committee, to unki cheeze. Check investments have been properly valued. ठीक है. Requirement of AS 13 to the extent applicable are basically considered. Many time we have a shares, we don't want to sell it, we can lend it. If at all we have given securities under securities lending scheme, so on the securities which are lent, later on the same securities have came back. On lending we have got some income, that all has been properly recognized. Okay, now loans which you have given, they are properly sanctioned. Verify the security obtained for the loan which is given. Obtain the balance confirmation with the concerned parties. Okay. Then they say that adequate appraisal of loan, follow-up of loan has been done. Classification, standard, substandard, doubtful loss is done properly. And uska provisioning, whatever is required, that is also done in a proper manner. So loan points are also there, investment points are also there, both together. And the last point of this chapter is report to board of director. See, in addition to your normal reporting which you are doing, there is one extra reporting to board of directors required under NBFC. This is an additional report to board of director. We'll report on financials, we'll report on section 143 subsection 3, we'll report on car wo sab hai. In addition, there's a report to board of directors. Now what all things we need to report? First, for all NBFC you have to report one, whether they obtain certificate of registration. Okay, whether they continue to hold such certificate of registration as per the principal business, still the principal business is financing. And they meet the net own fund requirement. This is for all NBFCs. Okay, then for those NBFCs which are holding public deposits, point related to that are there. For those NBFCs which are not accepting deposit, point related to that. That is not important. Last one is important. Point number 5. This is obligation of auditor to submit exception report to bank. Bank is RBI. We have to send a exception report to RBI. Now what? Exception, problems. So when in case of NBFC, the statement referred in any of the above thing, तो above जो भी थे, board of directors को जो report करना था, if there is something unfavorable or qualified, or the company has not complied with provisions of RBI Act, or NBFC acceptance of public deposit Reserve Bank Direction 2016, or NBFC non-SI non-deposit taking Reserve Bank Direction 2016, or NBFC SI non-deposit taking or the deposit taking Reserve Bank Direction 2016, then in that case, so if at all something is not followed, answer to any of your above points were unfavorable or qualified, you are required to give an exception report, tell about the problems to the RBI. The obligation to make a report containing unfavorable or qualified statement, kisko, to the concerned regional office department of NBFC of the bank. Bank means RBI, under whose jurisdiction the NBFC is falling, and you have a responsibility only to क्या करना है, आपको सिर्फ exceptions बताने, problems बताने. You don't have to tell anything which is good over there. Okay, done. This is over. Now, Caro. In your CARO clause number 16, if you remember, CARO clause number 16 is registration with RBI. Registration with RBI. Now, this NBFCs are required to have a registration done with RBI. So, whether a company is required to be registered under Section 45 IA of RBI Act, if yes, whether the registration is obtained, so that we are required to basically have it, and whether they are doing any NBFC activity without a valid certificate of registration, we are required to report on that. So, check question 7. Check question 7. You have a net own fund of 1 crore 50 lakhs. Fine. Can I say net own fund is not 2 crores? Acha. They appointed advice on basically reporting requirement under CARO. So, audit procedures under CARO first. You need to examine the transactions of company, whether they are covered under basically your RBI, NBFC mein. So, for that 50-50 test. And whether they have a net own fund which is required for registration. So, in the current case, the net own fund is less than 2 crore rupees. The auditor is required to report under your CARO clause number 6 for second point mein. CARO clause 16 mein, second point. The company is doing NBFC activity without holding a valid certificate of registration. Okay, so this question is important over here. So, what all we need to do, examine basically whether they are NBFC, 50-50 test, net own fund, whether they obtain registration or not, and we are required to incorporate following: whether registration is required, if so it is obtained, if not the reason. Okay. And the last point of this chapter is, for NBFCs, does Ind AS apply? Answer is yes. 1/4/18 onwards. 1/4/18 onwards, the Ind AS came for NBFC. 1/4/18 onwards, it was for those NBFCs having a net worth 500 crores or more. 1/4/19 onwards, all listed one. Unlisted having a net worth 250 crores or more. Now, the format, if at all they follow Ind AS, are they required to prepare the balance sheet P&L as per division 2? No. For them, there's division 3. So, division 3 is for those companies, those NBFCs which are following Ind AS. Now, what is the difference between division 2 and 3? This is important. What is the difference between the division 2 and 3? So, 1, in your division 3, they are allowed to have a balance sheet in the order of liquidity. Second, they don't have to classify as current, non-current. They can classify as financial, non-financial. Third, any item which exceeds 1% of total income. Acha, वहाँ पे था 1% of total income or rupees 10 lakh, whichever is higher. यहाँ पे सिर्फ 1% of total income, it has to be shown separately. वहाँ पे word था 1% of revenue from operation or 10 lakh, whichever is higher. Then, for revenue from operation, if you remember revenue from operation, उसके अंदर sale of goods, sale of services, other operating revenue, that was coming in notes. Now here the revenue from operations and other comprehensive income, OCI के item, they should be on face. They should be on face instead of notes. There is some separate disclosure required for the trade receivable which has a significant increase in credit risk and credit impaired. So trade receivable, जहाँ पे significant increase in credit risk, credit impaired is there. There is some extra disclosure required over here. And statutory reserve. The NBFCs are required to create a statutory reserve. So uske related condition restrictions are to be again disclosed in notes. So this is distinction between division 2, division 3, very, very important. November 19, May 20 RTP, May 21 RTP. Done. Go to the next chapter, chapter number 12, fiscal loss. Go to the next chapter, chapter 12, fiscal loss. Okay, now this chapter is too huge actually. And now what will be asked, what will not be asked, nobody knows about it. Any of the clause they can pick up 3CD ka and they can ask it. So don't think that, sir, which are important, nobody knows over here. Let's try to do it very fast. First of all, audit of a public trust. Audit of a public trust. If trust needs an exemption from income tax, trust has to be registered with Commissioner of Income Tax. वो होना चाहिए registered, and basically they have to get themselves audited also. So if they want exemption from income tax, one, they are registered and they are also audited. So audit program of a trust, preliminary is all basics. Then you do routine checking. There is some accounting principle ka checking, and lastly annexure. इसके अंदर list of certified person, kind of related party. So list of certified person we have to obtain from trustees, and the format of audit report of trust is as per form number 10B. Is as per form number 10B. ठीक है. Now coming to tax audit, applicability of tax audit. किसको tax audit applicable? Pay attention. Section 44AB. Okay, तो business turnover exceeding 1 crore. Okay, profession gross receipt exceeding 50 lakh. Okay, if you fall in presumptive and you want to show lower than the prescribed. Okay, you fall in presumptive for profession. You fall in presumptive for profession 44 ADA and you want to show less than 50%. And E point is a SSE carrying on business referred under section 44 AD. This is also related to that presumptive related thing. उसके अंदर ही आ जाएगा. So this is A, B, C, D. Which clause of section 44 AB the tax audit is there? We are required to write in form 3CD. ठीक है. Now there's one change. For business people, the limit instead of 1 crore will become 10 crore if your total payments उसमें से the cash payment is less than 5%, total receipt उसमें से cash receipt is less than 5%. तो cash receipt, cash payment are less than 5% of total receipt, total payment, then the limit will not be 1 crore, it's 10 crore, but only for business. I am a professional. My cash receipts less than 5%, cash payment less than 5%. Do I get 10 crore limit? I am a professional, my cash receipts less than 5%, cash payment less than 5%. Do I get that limit? Answer is no. The threshold is 10 crores only for business wale things. Are you clear? Okay, now the tax audit ka report ka date is 30th September, but every time it's kind of generally getting extended. Fine. Now, which are the report? For a person who is already having audit under other law, if already other law may say Companies Act may audit is there, then the auditor, tax auditor will give a report in form 3CA with an annexure 3CD. But if you do not have an audit under other law, then the tax auditor will give a report in form 3CB with an annexure form 3CD. TK disqualifications are fine. What is the penalty for not getting the accounts audited? The lower of the following. If you're not getting the accounts audited, lower of the following. 0.5% of your sales turnover gross receipt or 1,50,000, whichever is lower. So 0.5% of your sales or 1,50,000, whichever is lower. Acha, whenever I'm basically having taxation, tax mein ICDS are there. Not the normal accounting standard, ICDS. For computation of income, ICDS is income computation and disclosure standard. ICDS are for computation of income, not for maintaining books of accounts. For computation of income, wherever the SSE is following mercantile system, it is applicable. If SSE follows cash system, ICDS does not apply. The mercantile system is following, then there will be ICDS applicable for calculating profit or loss from business profession as well as your IFOS. Okay, and there are 10 ICDS. Okay. Audit report we already just covered. Now let's go over here to the applicability. Now this is based on over here section 44 AD. Presumptive mein can you go or not? Section 44 AD. Presumptive is allowed up to 2 crore. The turnover up to 2 crores you can go for presumptive. DB private limited turnover 125 crores. Companies are not covered in section 44 AD. So they have to get a tax audit done. 1 crore exceeded. Okay, partnership firm engage in trading of electronic goods, turnover 165 lakh. Yes, they can go for presumptive. Mr. Cutter, commission agent, individual covered, but commission agent is not covered under 44 AD. So anyways, the receipt is 137 lakh. He has to get the books audited. Vishal Rakha owning an agency, as is owning an agency, again I assume it's a commission agent kind of thing, but his turnover is anyways 87 lakh. He is not required to get the books audited. Even though he was covered or not covered in 44 AD, he is not required to get the books audited. Then calculation of turnover is fine. Acha. Now, Cooperative Societies Act says that a person who is basically having some certificate as per some cooperative laws, he is also allowed to be auditor. Can that person also become a tax auditor of cooperative society? No. For a tax auditor, he has to be a chartered accountant within the meaning of Chartered Accountant Act 1949, correct. Yeah. Okay, can a tax audit ka report be revised? Normally, no. Following circumstances, yes, I can revise it. When revision is due to the change in financial, the financial statements are voluntarily revised. There's a retrospective change in law, or interpretation of law, CBDT circular, notification, then otherwise you can't revise the tax audit report. Okay, so when books are voluntarily revised, the tax audit report will also be revised. Fine. Now 3CA में, under 3CA we are not reporting on truth and fairness of financial statement because it's already reported by someone else. But in 3CB we report on truth and fairness of financial statement. 3CD is an annexure. Now question, who has to fill in the 3CD? Whether auditor fills 3CD or management? Auditor fill करता है, management fill करता है. Okay, so actually your 3CD is to be filled in by whom? The management. Management has to fill in. Auditor is basically telling that the above particulars are true and correct. The auditor will check and yes, he has to tell the above particulars are true and correct. Correct is the word for 3CD. Fine. Now, while furnishing 3CD, the following things are to be checked. While furnishing 3CD, the following things are to be ensured. For a particular item, if it is coming at more than one places, particular item coming more than one places, you can have a cross-referencing. Okay, if there's a difference of opinion, tax auditor and SSE, I told you it is filled by management. Then if you have a different opinion, have both the views covered under 3CD. Okay, particular clause not applicable, right over there not applicable. Allowances, disallowances should be based on the relevant law which is applicable. Whatever is the law applicable, based on that the allowances and disallowances are to be considered. And then they are telling, if suppose some data is not given by management, don't stop your audit. वो पूरा stop मत करो. Whatever information is available, based on that you do it, it's fine. So if piecemeal में data is given or SSC does not give the information, don't withhold the entire audit report. Wherever they are not giving, you qualify your report. Wherever they are not giving data, you qualify the report. Now check this. Check this question. There's a difference of opinion between management and the auditor in the 3CD. What needs to be done? Both the opinions are to be included. Now question was, advise on matters to be considered while furnishing 3CD. Answer is this. The matters to be considered while furnishing 3CD. Okay, now in your 3CD, there are how many clauses? 44 clauses. 44 clauses. I see I can pick up anything and ask you a question. Okay, now first 8 clauses are part A, 9th clause onward is part B. First name clause, address clause, PAN number, indirect tax ka registration. Okay, now question over here. Check. You have applied for GST and the thing is you have not got a physical certificate yet, but the registration number is available on the portal. How as an auditor you will verify the indirect tax ka registration? So I can just go to the portal and portal में से check out whether it is really appearing or not. So as a auditor, you need to check the registration number from the portal. ठीक है. Now status, previous year, assessment year, under which clause? Under which clause of section 44AB this tax audit is applicable? याद है 44AB में A, B, C, D, that was there. Achha, and have you opted for alternative tax regime? That is basically the thing. Alternative tax regime, have you opted? Yes or no? 9th clause onward is part B. Uske andar, if you are a firm AOP, to uske andar the names of partner, is there any change in profit sharing ratio? Okay, nature of business profession, is there any change in nature of business profession? 11th, whether books of accounts are prescribed under 44AA. 44AA prescribes books of accounts for specified professions. List of books of accounts which are maintained. List of books of accounts examined. Okay, whether you have gone for presumptive income. If you have gone for presumptive income, now the thing is, if you have gone for presumptive income, audit only doesn't come. If audit doesn't come, the tax audit also doesn't come. So this is coming only when part is as per presumptive, part is as per regular. Part is as per presumptive, part is as per regular. Practically it will never be applicable. Because when part is regular or part is presumptive, the auditor always says follow regular for everything. ठीक है. 13th clause, method of accounting followed, change in method of accounting. If yes, give the details of change, impact of that on P&L. Okay, whether any adjustment is required due to ICDS, what are the changes required due to ICDS and disclosures related to ICDS. One change which will always come is under inventory. Under inventory mein what happens is, whenever we are having inventory mein, if I am getting a credit of GST, I will have the cost net of GST. So we have exclusive approach under normal books, but under ICDS they have an inclusive approach, not the exclusive approach. The inventory will appear including of GST. So there is always a difference, but our net effect will become 0, 0. Not relevant exam angle, I am not moving much into it. Okay, method of valuation of closing stock, deviation. Yes, I told you inclusive approach, exclusive approach. In case of valuation, that is always there. Exam angle mein not relevant. Okay, if capital asset is converted into stock in trade, description of capital asset, when did you acquire, what is your cost, not the WDV, what's your cost, and amount at which it is converted into stock in trade. Amount not credited to P&L, anything which is not credited to P&L falling under section 28, the charging section. Pro forma credit, drawbacks, refund of some duties, escalation claim, other item, or capital receipt. Capital receipt. Now there's a question over here related to capital receipt. Check. While writing the audit program for tax audit in A Limited, you wish to include possible instances of capital receipt not credited to P&L. Okay, capital receipts not credited to P&L. Give examples of such instances. For example, you got a government grant which is in nature of promoter's contribution. Can I say it has gone directly to capital reserve? You got government grant for fixed asset. It's deducted from the fixed asset. You got some compensation from surrendering certain rights. You took it directly in capital reserve. Profit on sale of fixed asset investment, if they are not credited to P&L, they are to be reported here. So whatever is not credited to P&L is to be reported, not credited to P&L. Then the assessing officer will see whether it should come in P&L or not. In simple words, we are helping assessing officer to complete the assessment faster. Okay, next one, 17th. Okay, land, building, whether they are transferred at a value less than the stamp duty valuation. If less than stamp duty valuation you transferred, that details are to be given. TK. 18th one is related to the depreciation. It's fine, leave it, not relevant. Inadmissible. Inadmissible under all the following sections. Now I tell you simple, section 35E is preliminary, section 35D is preliminary expense. Preliminary expense, books made will come fully. Tax mates allowed only 1/5. The books made is 30,000, tax may allowed 6,000. Can I say 24 is disallowed? The amount debited to P&L, how much is admissible? That is to be written. TK. Now, question, उसमें clause 20A, any sum paid to employees bonus or commission which was otherwise payable as basically dividend. तो dividend की जगह आपने bonus दिया, practically not possible, तो NA only will come, not applicable. But contribution received from employee for various funds. Remember, from employees we take that PF का contribution, etc., etc. So nature of fund, sum received from employee, due date for payment, the amount paid, and the actual date of payment to the authorities. ठीक है. 21A is important. Amount debited to P&L. Amount debited to P&L being capital expenditure, personal expenditure, advertisement in political parties brochure, not allowed. Political party ka brochure, pamphlet, not allowed. Expenditure at clubs for entrance fees. Expenditure at club for club services. And expenditure by way of penalty, fine for violation of law. Expenditure by way of any other penalty or fine not by violation of law. Agreement violated, wo wala. Now see, this one is disallowed. Same way, the first three are also disallowed. If I just give this, how much is this debited in P&L, the assessing officer understands how much is to be disallowed. ठीक है. An expenditure for the purpose which is an offense. Offense wale ke liye I did something, that is also to be disallowed. Fine, that was 21A. You did advertisement in brochure of political party. Clause 21A mein it is not allowed. You are required to report. ठीक है. 21B is for the TDS. TDS में non-compliances. Leave it, not relevant. Okay, 21C is commission remuneration inadmissible. Okay, partners commission remuneration salary inadmissible. Remember, limits are given up to 3 lakh, 90%, more than 3 lakh or 60%. The inadmissible amount is to be written over here. 21D is important. Disallowances under section 40A3, cash payment. Cash payment about 10,000 are disallowed. तो उसमें two things. One, expenditure, and second word is यहाँ पे payment. So expenditure was last time, now this time I'm making payment. So this time it's not expenditure, this time it is payment. So any cash payment about 10,000 will get disallowed. But for the transport business, hiring of transport business, उसके लिए the limit is not 10,000, the limit is 35,000 rupees. Okay, if at all you did just a provision for gratuity, that expense is to be disallowed unless you contribute to approved gratuity fund or you actually make payment. The actual payments are allowed or contribution to approved gratuity fund is allowed, otherwise not allowed. Okay. Next, if any amount, see, if income is not chargeable to tax, the any expenditure on it will also be inadmissible. That is basically given. And 21I is basically if the asset is not yet ready to use, till the date asset is ready to use, the interest is capitalized, that interest cannot be allowed as deduction. Now, hiring, leasing of goods, you have payment for 6 invoices, 5,000 each. 6 into 5 is 30, not exceeding 35, chalega. 2 invoices, 18,000 each, you are paying on different day pay kar rahe ho, chalega. 40,000 payment you made against an invoice, no, exceeding 35,000 is not allowed. The first and second mein no problem, third wale mein it is a problem, you are required to report in 21D. ठीक है, MSME को interest paid will be disallowed, that is to be reported over here. Okay, now this is important. If I have payment to related party, related parties को payment कर रहा हूँ, that is to be disclosed. I am just required to disclose the payments which are done to related party. So particulars of payment made to the related party, whether they are at market value, not at market value, you are required to disclose. Assessing officer will try to see. Assessing officer will see if it is excess of fair value, then he will disallow. But reporting over here is mandatory. TK, next one is clause 25. Clause 25 is any amount chargeable to tax under section 41. 41 में वो bad debt recovered or liability reversed. If liability is not to be paid, liability is reversed or bad debt recovered, they come under clause 41. Okay, 26th is important, section 43B. If you pay till the due date of filing of return allowed in this year or else in the year of payment. Acha, Vadiraj has a question, sir, how much time basically the class will go on, Sarda? The class will go on till around 7:30 to 8 o'clock. 7:38 we'll finish off this. And sir, do we need to write down the clause number? If you are able to remember, write down. Nahi yaad rehta hai, no option only. ठीक है. Now, so section 43B, if you pay till the due date of filing of return allowed in this year, else in the year of payment. So now, pre-existed on the first day means last year it was not allowed. Last year it was not allowed. That is why it is pre-existed. If it is paid in this year allowed or it is again carried forward. Is it paid during year or not paid during year? Acha, incurred during this year. Incurred during this year, if you pay till the due date of filing of return allowed, not paid till due date, it will not be allowed. Fine. Now going to okay, 27A में there is basically a Sanvet credit की details are to be given. Opening balance of your GST receivable, credit availed, credit utilized, closing balance. That's basically the thing. Sanvet credit का details are to be given. Okay, next one is clause number 28 is now not applicable. It is merged with 29B. This is not applicable. It's merged with 29B. ठीक है. Clause 29, if you have received any consideration for issue of shares which exceeds the fair market value. So you received, so private company issuing shares at more than fair market value, whatever extra you receive becomes your deemed income. Okay, 29A. 29A is basically some income chargeable under IFOS under section 56 subsection 2 clause number 9. Uska detail यहाँ पे if you have received money, advance मिला था for selling a basically property and that advance is forfeited, that is basically coming. The check, any sum received as an advance in the course of negotiation or transfer of capital asset, advance received for transfer of capital asset, if the sum is forfeited because the negotiation did not result into transfer. So forfeited amount is to be written over here, it becomes chargeable to tax to you. Okay, to check, you have received an advance, the same is outstanding for 5 years. Unless you forfeit, it is not to be shown. It is not to be reported under 29A. Next one, you have forfeited without the right of forfeiture. If you forfeited without the right, ठीक है बेटा, there should not be any complaint coming up. Complaint नहीं आया, they have accepted the forfeiture, then you are required to report. Okay, you are not forfeited even though the conditions of forfeiture are applicable. अगर forfeit नहीं किया, no need to report. So really not forfeited, no need to report. Okay, 29B. 29B is if you are getting a gift of cash or in kind for amount exceeding 50,000, that will come over here. So if you are getting a sum of money exceeding 50,000 cash or immovable property the stamp duty value is exceeding 50,000, or you are getting for a consideration आप ले रहे हो, but the consideration is the stamp duty value and consideration what you are paying, the difference. So what you are paying is less than the stamp duty, and वो भी less 50,000 से भी ज़्यादा difference है, up to 50 नहीं, 50 से भी ज़्यादा. तो means you are getting anything. If you are getting anything gift में, cash, immovable property, other than immovable property, then immovable property may consider the stamp duty value. Other than immovable property, consider the fair market value. Fair market value लेना है. Property में you are required to consider stamp duty value. Other than immovable property, fair market value. That is to be considered. 50,000 ऊपर वाला, that becomes your deemed income chargeable to tax, 29B. Okay. Now check over here. You got some shares of a private company for free, 75,000. Can I say more than 50,000? It is to be reported under 29B. Hundi is not required. 30A is for transfer pricing, not relevant for you. Transfer pricing. Chalo, still I'll do that 30A. Whenever primary adjustment has been carried out, transfer pricing में primary adjustment हुआ है, then only this becomes applicable. Primary adjustment is done by the SSE himself. If yes, तो primary adjustment is made, amount कितना था, whether excess money is available with the associate, whether excess money has to be repatriated, and उसका interest income. तो see, primary adjustment, what is this? I sold goods to subsidiary at 80 rupee, real worth was 100. I sold goods at 80, real worth is 100, subsidiary is abroad. I tell to department real worth 100, they say okay, pay tax on 100. But they don't just want tax on 100. They also want that 100 rupee foreign exchange should come, not 80 rupee. So whether excess money is to be repatriated to India, if yes, whether it has been repatriated, no, तो उसके ऊपर interest charge करो. Okay, 30B is thin capitalized company. Thin capitalized company is basically rather than having a capital, we put in money, the owner has put in money but shown as loan only or debentures. So in that case, can I say interest expense will come up? So they are telling that you will be allowed an interest deduction maximum up to 30% of EBITDA. So you incurred an interest expense exceeding 1 crore rupees, interest expense exceeding 1 crore, then interest will be allowed only up to 30% of EBITDA. Extra you can carry forward, later on you have more EBITDA, you can adjust that, but up to 30% of EBITDA will be the interest expense which will be allowed if the interest amount is more than 1 crore. 30C is not yet applicable, remove it. 31A is basically 31A, B, C, D, E is related to your 269 SST, that is your basically loan given in cash or repayment in cash, all that things, leave it, that's fine. Okay, clause number 32, details about brought forward losses, depreciation allowance is to be given. Okay, 32B may, okay, if at all there's a change in shareholding. Now see what happens is, for a private company to carry forward the losses, at least 51% of the shareholder has to remain same. If the shareholding has changed, that loss cannot be carried forward, uska details. Achha, if you got some speculation loss, uska detail, because speculation loss can be set off only against speculation income. Okay, next, if you have any loss which is related to a specified business ka loss can be set off only against that specified business ka income, that is to be disclosed separately. Okay, then if you are having income which is deemed to be speculative, okay, examples are deemed to be speculative, intraday trading in stock market, so shares intraday buy sell kar, not future option, shares you're buying intraday, uske liye that's called a speculation business. The speculation business ka income can be set off only against the speculation expense only, that's why it is to be given. Details of deductions which are there, all your ATC, DE wale deductions list is to be given. Okay, clause 34 is again for TDS, but this is general. आगे भी आया था 21 clause में भी, but that was only the default. This is kind of general. So section wise summary you are giving, section wise summary, section wise how much was the amount of payment or receipt which was there, TDS, TCS both. Total amount on which tax was required to be deducted, total amount on which tax was deducted. ठीक है, total amount of which TDS etc basically collected, वो सारी चीजें तो full thing. Same way, if at all you are filing TDS के returns, क्या उसमें delay है, you are required to give the details. Now see, delay is there or not, the details are mandatory. So clause 34A is kind of a general detail about TDS. एक section wise पूरा detail. Second is due dates of furnishing wala, whether what is the due date, when did you furnish, so that. And third, whether you're liable to pay interest, so whatever interest you paid, that detail. Okay. Next one is you are having a quantitative details which are to be given. Quantitative details. For trading concern, these are the quantitative detail: opening stock, purchase, sales, closing stock, shortage. Manufacturing में bit more will be there related to yield, percentage, shortage, etc. is also coming up. Same way for raw material, finished goods, byproduct, you are required to give it. Okay, come to next. 36 is now omitted. It was basically related to DDT. DDT is now abolished. Okay, 36A. 36A is kind of deemed dividend. If you are having a deemed dividend, uske related disclosures are required, but now actually DDT provision is gone. The deemed dividend doesn't have any impact as such. It doesn't have any impact as such, but what deemed dividend? If I private company giving loan to the shareholders, what deemed dividend माना जाएगा? It's a deemed dividend only. Okay, whether cost audit was conducted? If yes, give detail of disagreement of cost auditor, the negative comments of cost auditor. Okay, whether central excise audit was conducted? If yes, uske negative points. If service tax audit was conducted? If yes, uske negative points. Next is details of turnover. You are required to give some ratios. So turnover, GP ratio, NP ratio, stock by turnover, material consumed by finished goods. So these ratios are required to be given. Next one, 21. If any demand is raised or refund is issued for laws other than income tax, wealth tax, if any demand is raised or refund is issued, you are required to give details about that. Check over here, November 20 question, clause 41 ke liye. You have got a demand notice 150 lakh for excise. So can I say it's other than income tax? It is to be reported under clause 41. Okay, clause number 42 is basically related to form 61, 61A, 61B, not related, exam purpose, leave it. Same way 43 is country by country reporting, not relevant, exam purpose. And clause 44 is breakup of your expenditure. So whatever is your total expenditure, whatever is the total expenditure in your P&L, pura total expenditure ka list. Okay, out of this expenditure, opposite party, we did expenditure, the one who sold us, or one who basically got the money, that guy, is it registered under GST or not registered under GST? Okay, if that other guy is registered under GST, is the goods exempted from GST? Is he falling under composition, or is he just a regular registered dealer? Okay, so opposite party is covered under GST or not? Agar covered under GST, product exempted, is he under composition or is he under regular wala thing? So in simple words, you are bifurcating your total expense. उसमें GST वाला कितना, नॉन GST कितना, GST में exempted वाला कितना, composition opposite party how much, and the regular one is how much. So there's a huge work. I tell you, most of the chartered accountants say the data was not available, we are not reporting. So actually it is now applicable. It was not applicable till March 22. Now it is applicable, but most of the chartered accountants have written the data is not available, we are not reporting. Then the auditor has to basically put his sign. This is form number 3CD. 3CD में 44 clauses you are required to report whether they are true and correct. Let's go to the next chapter, chapter number 13. 13, 14, 15. 3 more to be done, then break. Okay, let's finish off fast. Maximum by 8 o'clock will be done. Maximum. Okay, audit of PSU. Audit of PSU, we know in India, the government auditing is handled by whom? C&AG and his team. ठीक है. So in India, the government audit is discharged by independent statutory authority C&AG. C&AG के powers etc. is given. उसमें one thing important. Okay, how will the union, territories and state maintain the account? They will maintain the account in a form as the president may prescribe on advice of C&AG. The C&AG will advise to president that they should be keeping accounts in this way, and then the president will prescribe the way the accounts are to be kept by union and states. Submission of accounts. Now see, the accounts of union, territories and states are basically checked by C&AG and team. C&AG and team will then give it to whom? C&AG and team will give it to, if it is central level, it will be given to president. If it is state level, it will be given to the governor. The president will present it in parliament, or governor will present it in state assembly. तो स्टेट लेजिस्लेटिव असेंबली में इट विल बी प्रेजेंटेड. तो C&AG टू प्रेसिडेंट गवर्नर टू पार्लियामेंट और बेसिकली योर स्टेट लेजिस्लेचर. ठीक है. Now, what is this audit board set up in basically things? So C&AG has set up an audit board. Audit board is basically set up to do a comprehensive audit appraisal, covering everything. So whether all government companies will be included in comprehensive audit? No. So every time audit board will take up few government entities for the comprehensive audit appraisal. Okay, that's audit board setup. And action on audit report. Now see, the C&AG has given the audit report to president or governor. They presented it to parliament. Now parliament doesn't have a time to check all the audit reports of government company. So parliament has formed two committees. Which are the two committees parliament has formed? Public Accounts Committee and Committee on Public Undertaking. So whatever reports are basically C&AG giving to president or governor and the president governor presenting to parliament or state legislature, automatically they are referred to these two committees. And these committees will see that the money is spent properly or not, it is as per rules and regulation or not. That all will be checked by these committees. Okay. Public Accounts Committee is for the government departments and Committee on Public Undertaking is for PSUs, public sector enterprises. So this will exercise public sector undertaking as same it is for government department by Public Accounts Committee. Next, what is your C&AG's role? What is your C&AG's role for these committees? So इनके लिए what is your C&AG's role in functioning of committee? See the word in functioning of committee is important. Functioning of committee में मेरा role क्या है? My report will form the basis of committee's working. Okay, if anything is to be sent to committee from the ministries, I will have to check it first. The committees present the report to parliament, state legislature with their observations and recommendation because they got everything. They will see then observation comments के बाद they will put it in parliament. And those reports which could not be discussed in detail by the committee, the written answers are obtained from the department or ministries concerned and basically they will also be reviewed by the C&AG. So C&AG, your report are the base for committee's working. Anything given to committee, you will scrutinize the things that is basically there. Objective scope of PSU audit is fine. Element of PSU audit. Okay, element of PSU audit, they say there are three parties. Which are the three parties? Auditor, responsible party is management, the government entity, and the users. Third one is the users. Okay, subject matter, criteria, subject matter information. There is subject matter which is to be evaluated against the criteria and then we come out with a subject matter information which is summary. Okay, there is a subject matter which is evaluated against criteria and then there is a subject matter information which is kind of a summary. Okay. Now types of attestation engagement are two. This comes in objective. Okay, attestation engagement. Under attestation engagement, the subject matter information, the summary, financial statements are summary. The subject matter information is directly given to auditor and auditor will give a report whether it's showing a true and fair view. The auditor doesn't compare subject matter with criteria. So under attestation engagement, you are directly getting the subject matter information. You need to report whether it's proper or not. But under your direct reporting engagement like performance audit, so subject matter auditor will evaluate against the criteria. The subject matter auditor will evaluate against the criteria. That's a direct reporting engagement. So when auditor is given directly subject matter information and you are just reporting, it shows a true and fair view, that's attestation engagement. Direct reporting mein, the subject matter is evaluated against the criteria by the auditor himself. TK, next one is steps in government company audit. We already did it under your company audit section 143 subsection 567. 143 subsection 567. This is very important. Okay, types of audit in PSU. Types of audit in PSU. Don't think that there are 5 separate types. No, it can be all together also in one. Okay, so financial audit where they look into the financials, whether they show a true and fair view. Compliance audit where they try to check compliance with laws and regulation, internal bylaws also. So whether they under compliance audit, they will basically see whether you're complying with the applicable authority ke criterias or not. So laws, regulation, etc. are complied and general principles of proprietary are also complied or not. That also comes under compliance. But a compliance audit is not a separate audit. Either it is done with the financial audit or it is individually or it is with the performance audit. Okay, next we have performance, proprietary and comprehensive. Coming to performance audit, which is important. Performance audit क्या है? Check. Performance audit is an objective systematic examination. It's an objective systematic examination of the evidence for the purpose of providing an independent assessment on the performance of government organization या उनका program या activity या function, anything. So it's an objective systematic examination of evidence for the purpose of providing what? Independent assessment on the performance of the government organization, program, activity, function, etc. Who does this performance auditing? It will be done by C&AG and his team. It is possible C&AG may appoint a chartered accountant also to do it. वो हो सकता है. But it's C&AG and his team. And what are the issues covered under your performance audit? 3 E's: economy, efficiency, effectiveness. Economy is with regards to rate, efficiency is with regard to input-output ratio, and effectiveness, whether the overall objective is achieved or not. The objectives are achieved or not, that's effectiveness. ठीक है, तो briefly discuss the issues addressed by performance audit. It's 3 E's which are to be written. Fine. Next. Now see, this question is draft the audit criteria. You are requested to draft the audit criteria. What are the sources जहां से आपको criteria मिलेगा? What are the sources from where you can get the audit criteria? तो documents of the entity, law, policy document, some academic research, past audit, media coverage, इतना होना चाहिए. तो criteria, what are the sources from where you can have the criteria? Clear? Next one is basically, okay, this question. Check out over here. The objective of state electricity department is to ascertain whether the total cost is being recovered timely basis, tariff orders, circulars are implemented on timely basis, billing is done efficiently. So economy, efficiency, effectiveness. Which type of audit is this? It's a performance audit. To sample observation. So you found some defective meters are there, that can be written once. You found that meter rent charged is lower for certain people, that can be written. So कुछ भी लिख सकते हो. Okay, proprietary. Proprietary stands for verification of transaction on test of public interest, commonly accepted customs and standard of conduct. Now, proprietary means you should spend your money as if you are spending your own money. So don't spend government money recklessly. And they have given the principles. Whenever it's an expenditure, the principles which are to be followed, the expenditure should not be prima facie more than what occasion demands. Expenditure should not be done which is directly or indirectly for your own benefit. Okay, funds that are not utilized for a particular fund should not be used for a benefit of particular person, and no avenue should be kept open to get yourself benefited directly or indirectly. Okay, provisions of Companies Act is fine related to it. Now, what are the problems in proprietary audit? Okay, I say that they should spend the money as if they are spending their own money. Now, the problem in proprietary audit is what you feel is required, I may feel it's not required. You feel going in a hotel of 10,000 rupees is fine. I might feel that going in a hotel of 10,000 rupees a day is not fine. वो सबके अलग अलग हो जाएंगे. तो lack of auditing proposition. तो lack of auditing proposition is basically the problem. क्या check करना है वही available नहीं है. Plus there is an inherent element of subjectivity involved. तो to take care of this, C&AG has developed some norms of proprietary which are to be there, but our norms of proprietary cannot be standardized for everyone. Every organization is different. Every organization should come out with their own norms of proprietary. So this is basically one thing. And the element of subjectivity whenever it's there. So now whenever I'm checking proprietary aspect, if a peon was sent by flight, so I need to understand what was the circumstances that time. If I see today why peon was sent by flight, so I might feel it's not relevant. So you need to recreate the circumstances also, reconstruct the circumstances in which the auditor had taken the management had taken a decision. This is problems in proprietary audit. Comprehensive audit is important. Okay, remember audit board setup. The audit board has been set up by C&AG to conduct the comprehensive audit. Comprehensive audit will include everything. So if you see the C&AG assist the legislature in reviewing the performance. They have set up the audit board. Audit board will conduct basically the efficiency cum performance audit, which will be called as your comprehensive audit. So which are the issues examined? The question comes up, which are the issues examined in comprehensive audit? One, the overall capital cost project ka, production output is proper or not, plan rate of return is achieved or not, project formulation execution is sound or not, cost control measures are adequate or not, purchase policies are adequate or not, R&D programs are proper or not, repair maintenance ka schedule is proper or not, procedures are effective, economical, this all things. So can I say it covers all things? This is basically your comprehensive audit. And the last over here is audit report of C&AG. So how C&AG gives the audit report? One, they will give a general review of working of government companies. Second, those selected undertaking which were undertaken for comprehensive audit, uska result. Okay, those which are not taken for comprehensive audit, uska bhi significant result I'll share. And third, for government companies, the auditor was appointed by C&AG. The government company ke auditor would have given audit report, the summary of the audit report of company auditors. The one, how are the general working going on? Second, those which were selected for comprehensive audit, the result of comprehensive appraisal. Those which are not taken up for comprehensive audit, the significant result of audit of those undertaking. So other normal audit to hua hai na, wo normal audit ke details. And last, if it's a government company, the government company ka auditor would have been appointed by C&AG. The auditor would have given the report, the summary of the reports of company auditors. Then this is chapter number 13. Come to chapter 14, which is very small. Okay, chapter number 14, liabilities of auditor. Okay, now two things, liability as per Companies Act, second is liability as per Income Tax Act. Coming to Companies Act, one is civil liability, one is for misstatement in prospectus. Prospectus mein misstatement hai, you, chartered accountant, had authorized the issue of prospectus, aapne sign ki di financials pe, you will be liable if someone acts on the prospectus. Okay, but that's not relevant. Come directly to the next one. That was civil liability is only the penalties. Criminal liability is imprisonment. Now, section 34 is actually overridden by 448. Coming to section 448. Okay, if in any return, report, certificate, financial statement, prospectus or any other document, if any person makes a statement which is false, knowing it to be false, or omits any material fact, knowing it to be material. Section 34 was sirf false statement in prospectus. Can I say yahan pe sab aa gaya? Any report, return, certificate, financial statement, prospectus, any other document. If you make any statement knowing it to be false, or you omit something knowing it to be material, you will be liable for penalty under 447. 447 penalty is on fraud. Achha, in fraud mein minimum imprisonment is 6 months, maximum up to 10 years. And if at all there is public interest involved, the minimum imprisonment has to be 3 years. And the fine, this is just imprisonment. Fine not less than the amount of fraud, which can exceed up to 3 times the amount of fraud. 3 times the amount of fraud. But one thing they've given, if the fraud amount is less than 10 lakh or 1% of turnover, whichever is lower, and it does not involve public interest, then maximum penalty will be 5 lakh or 5 years imprisonment, and penalty will be 50 lakh rupees maximum. So this is 10 lakh or 1% of turnover, whichever is lower and public interest is not involved. Fraud karoge to gaye kaam se, please don't do it. Liabilities under income tax. Income tax mein section 288, you are debarred from representing a SSC. When you are debarred from representing a SSC, ek to department mein something CIT has passed an order against you, commissioner or chief commissioner. And second one is guilty of professional misconduct, to be you are debarred from representing a SSC. Okay, section 278, if you induce someone to make false statement, if you're inducing someone to make false statement to the department and the tax penalty interest which has been evaded, it's not 25,000, it's 25 lakh. If tax penalty interest evaded is 25 lakh, then imprisonment minimum 6 months, maximum 7 years. Okay, other cases mein minimum 3 months, maximum 2 years. So if it is not 25 lakh, it is less than 25 lakh. So minimum 3 months, maximum is 2 years. Induce someone to give false statement to department. Okay, third one, rule 12A, You give false information, or you give untrue information, then the penalty will be up to 7 years. Income tax means up to 7 years सब जगह पे. And if you are giving a wrong report but unknowingly, अच्छा report knowingly wrong दिया, 12A rule. Unknowingly, then section 271J, there will be a 10,000 rupee of penalty which is leviable. Because it is not done knowingly, there is no imprisonment over here. Are you clear? Then come to last chapter before break. Internal audit, management audit, operational audit. Internal audit, management audit, operational audit. Keep smiling, let's finish it. We need to move ahead, we can't stop. Just think, yaar, those who are writing both the groups now, how many papers? 6 papers are left. Just 12 more days. 12 bhi nahi, actually now 11 more days. 11 days, stretch yourself. And those who are giving only G1, yeah, 3 more days, stretch yourself. Okay, so internal audit, management audit, operational audit. Internal audit was already covered under SA 610, Companies Act, maybe section 138, internal audit was there. So we will not have much about internal audit over here. I'll just directly, now if I see scope of internal auditing, scope, can I say he has to review everything? क्या review करेगा? He will review the internal control systems and procedure. He will review the safeguarding of asset. He will review the compliance with plans, policies, procedures, rules, regulation. He will review the relevance and reliability of information. He will review the organizational structure. He will review the utilization of resources. And he will review accomplishment of goals and objective. The scope आया everywhere word review है. There was a question asked once, November 18 में, how he will review only the organizational structure. The organizational structure, so I need to review authority, responsibility are in harmony. The organization chart is kind of simple, economical. So overlapping of work, same guy responsible for, 2 guys responsible for same thing, that's overlapping is not there. A span of control, under 1 person, how many person are there? The span of control is kind of reasonable. Dual responsibilities can be avoided, it should be avoided. If cannot be avoided, who is the primary person responsible? That is related to organizational structure ka review. ठीक है? Next is that is fine. Okay, what are the qualities of an internal auditor? The internal auditor should have a special expertise related to accounts and finance. He should have a basic knowledge of technology, commercial practices. He should have a basic knowledge of commerce, law, taxation, etc. And he should understand management principles and technique. Okay, this is given. Acha, mujhe batao, whenever we are doing internal audit, do we need to follow the standards on auditing? When I do internal audit, do I need to follow? Do I need to follow standards on auditing? Answer is no. I need to follow standards on internal audit. SIA needs to be followed. The standards on internal audit are applicable whenever we are doing audit. Acha, internal audit ka, is there any format given to you? Answer is no. There's no format given for internal audit. Acha, just they've said over here, a well-documented internal audit report includes the following key element. There's no format given, but this includes the following key element: overview of objective scope, the fact that internal audit is done as per the SIA, summary should also be given, summary of corrective actions required, and the nature of assurance. What was the nature of assurance? So this is based on the well-documented internal audit report will contain the following matters. Fine. There's no format. Difference between internal and external audit is fine. Going ahead, come to. Acha. Now this question is actually based on SA 610. If external auditor is evaluating internal audit function, whether I should rely on the work of internal auditor, so which are the important aspect I consider? I consider is organizational status, whether it is supporting objectivity. I see his technical competence. I see the scope of function, whether he has done the work properly, whether his work is properly planned, directed, supervised. And I see whether he has taken a due professional care. So based on these things, I'll decide whether I should use the work of internal audit function. Clear? So do they have a systematic professional approach? Wo point tha? That is. Now coming to management audit. Pay attention please. Okay, now management audit is basically you are evaluating the manager's ability to manage. So I'm not going to check his individual decisions which are taken by him. I will be checking is basically the way he takes the decision. The decision making ability is tested. So we are concerned with appraising whether the management is able to accomplish the organizational objective. Management function, planning, organizing, direction, control. So how he is doing planning, organizing, direction, control, that I will try to see. And adequacy of his decision and actions in attaining the objective. So we are not going to sit on his individual judgments. We are not going to sit on individual decisions. We are just trying to see whether he takes into account the required information for making a judgment. So whether he got that required information, did he use that required information in making the judgment? Fine. Why do we need a management audit, need or desirability? The main thing is to detect and overcome the current managerial problem. And the related operational issues also. For that, then management audit, you get to have the problem before the fact rather than after the fact. So beforehand only you are able to identify, not something which happens later, uske baad. And it is very much helpful to achieve the organizational objective, and it's helpful for the ailing industry. Sick company mein problem is always of management. Okay. Next, I'll just take this point, management audit questionnaire. So whenever I'm doing management audit, one is I interview the other person, second I give a questionnaire, and then I come to a reporting. So questionnaire, the management audit questionnaire is an important tool for conducting management audit. Through the questionnaires, you make an inquiry into the current performance. It aims as comprehensive and constructive examination. Comprehensive, constructive examination, questionnaire is given to them, they'll fill and give it to me. And it is concerned with appraisal of actions in accomplishing government or the organization's objective. It will highlight the weakness and deficiencies which are there and also tell you the areas of improvement. So that's basically management audit ka questionnaire. Okay. Next one. Okay, this is the most important of this chapter, behavioral problems and uska solution. Okay, whenever I want to check your decision making ability, would you like it? If I come and say I'm coming to check your decision making ability, nobody will like it. Nobody will like it. So what are the problems which are coming up? Behavioral problem. One is staff line conflict. See, line people are those people who are actually doing the production. Staff people are those who are sitting in an air-conditioned room like us. We sit in an air-conditioned room and we want to comment that guy is not working properly. Dear, you come and stand over there for 12 hours, you are able to understand how production happens. The staff line conflict. Second, what is this control? Now pay attention. The management auditor is to evaluate the effectiveness of control. And there's always an instinctive reaction from the auditee nobody will like. Because you will come and say you are not doing this, you are not doing this, you should do in this way, that way, all that thing. So there's an antagonism, hatred. So this question asked. What are the causes of antagonism? What are the causes of antagonism? Fear of criticism stemming from adverse findings. You will report adverse, तो उसके ऊपर actions लिए जाएंगे. Fear of change in day-to-day habits. Punitive actions by the seniors. Insensitive audit practice. Insensitive audit practice means you're overly critical, just focusing on deficiencies. And hostile audit style. Hostile audit style means you are having an air of smugness. You feel you are good, the auditee is not proper, or you feel auditee are low-level people. So that's basically lack of understanding of auditee's problem, absence of empathy, air of smugness, superiority. These are all hostile audit style. So why that auditee doesn't like you? What are the causes of antagonism? These 5 points, this is the answer. Are you clear? Okay. Okay, so these are behavioral problem. What are the solution to behavioral problem? The top level management should say that management audit is not just for finding your fault. It's basically a part of getting ourselves improved. It's getting ourselves improved. So it's not basically for finding faults. Second, there should be a minimum interference with the regular operation. And now you should have one constructive criticism. You criticize. आप criticize करो, but उसके साथ you also tell him what should be done. ऐसा नहीं होना चाहिए ये गलत है तो भैया करेक्ट क्या है, you tell that. Constructive criticism. Second, the reporting method. Reporting method should be friendly but a firm tone. You wanted to say whatever, आपको जो बोलना था वो आपने बोल भी दिया, but the other person doesn't feel bad. That way you tell it. And third, there should be a participative approach. Rather than me telling this is wrong, this should be done, that should be done, try to bring it from their mouth. तो आप उनको hint देते जाओ and take it from their mouth only, and whenever they speak up, it's always better that they will be following it. So three things: there should be constructive criticism, then there should be a reporting method friendly but a firm tone, and third, participative approach should be followed. This is management audit. Going to operational audit. Going to operational audit. Okay, now operational audit. It is basically you are appraising the operations. The operational areas are looked into more detail. So sir, wouldn't it be similar to internal audit? No. It is extension of internal audit into operational areas. Normal internal audit is more into accounts finance. This goes a level more in depth in qualitative aspects. That focuses more on qualitative aspects of operation. For example, for stock, we are not concerned with stock is there or not. If we count physical stock, book stock, that's normal internal audit. यहाँ पे we'll see the reorder policy, the obsolescence policy, overall inventory management, insurance बराबर लिया है कि नहीं, it is kept properly in godown. That all is becoming a part of operational audit. So it is extension of internal audit into operational areas. Okay, what is the difference between internal and operational audit? One is a perception. Internal audit is focusing more on accounts finance. This is more than accounts finance. Second, in your internal audit, the focus is more the issue may we generally try to see is basically that fraud errors are not happening. That is the focus. But in your operational audit, the issue is basically whether organizational goals are being achieved or not. So see, every aspect of operational audit is basically for management policies, management objective, management goals. So one is perception. This is only accounts finance. That is more way in depth. Issues, the way the operational auditor sees the thing is more different. He tries to always see whether the organizational objectives are achieved or not. So दोनों के objectives are also getting different. Internal auditor needs less of knowledge. Operational auditor will need more of knowledge about other things also. So that is basically the difference between internal and operational auditor. Okay, now qualities of an operational auditor. One, see, beyond accounts finance, your knowledge is less. So you should be inquisitive, eager to learn. Second, you should ask who, why, how of everything. You should have a good visualization power. You should have an attitude of skepticism. You should not give up or feel satisfied easily. Don't give up. You should have a constructive approach rather than a fault-finding approach. And he should develop a team of people who are from different backgrounds which can be used by him. So this is basically qualities of operational auditor. Now see, there was a question on qualities of internal auditor earlier. Operational auditor ki qualities are a bit different. Inquisitive, he should be eager to learn. He should be basically asking who, why, what of everything, visualization, hardworking, skepticism, do not feel satisfied easily, constructive approach should be followed, develop a team which can be helpful to him. ठीक है. Now, why do we need operational audit? What's the problem? Internal audit is basically not giving you all the things, that is just focus on accounts finance. That's the reason. Plus, your current executives and manager are too occupied doing the things. They will not find out the fault in their things. They're just doing. They don't know what changes are required in the things. Conventional internal audit report, they lean towards accounts and finance. Other performance reports which are there, contain in annual audited account, they have their own limitations. ठीक है. Special survey investigation can be done, but they will be very costly, time consuming. So better is you go for operational auditing. Why operational auditing? So that is basically the thing. So why management is getting operational audit done, and difference between internal audit and operational audit we did. The perception, issue, objective. 3 points they had given. Can I add? Answer is yes, you can add few more. Next is systems and procedure. Okay, systems and procedure. See, system kya hai? Set of objects which are working together, they make up an entire system. Procedure are nothing but a clear set of instructions given. When repetitive work is there, if I give clear set of instruction to the employees, they will work properly. So procedures are that. System is set of objects which are interrelated, which are working together to create a whole system. Business में the production, sales, all are kind of interrelated. If production doesn't happen, sales doesn't happen. If marketing doesn't happen, again sales doesn't happen. So they're all a part of one system. Now, question important is evaluation of system and procedure. Question important is what? Evaluation of system and procedure. Whenever you're evaluating system procedure, you need to see three things. Is system procedure meeting the current requirement? Are they operating effectively? What is the degree of effectiveness? Now, iske andar the first point. Are they meeting the current requirement? What should I do? Whether system procedures are meeting the current requirement. So one, is the system designed to promote achievement of objective? Does it operate within the framework of organization structure? Okay, does it have a method of control in which maximum performance with least expenditure is there? Okay, does it indicate performance in logical sequence? Okay, whether there's an effective coordination between one department to another, all functions are established, necessary authorities are basically designated to carry out the responsibilities, and changes can be made to improve or not. Achha, so if I want to know whether this question is good. If I want to know whether the systems are meeting the current requirement, I need to see this, whether they promote achievement of objective, whether they are as per the organization structure, whether they have a cost control method, maximum benefit, lowest cost, whether there are things in a logical order, whether all functions are established, effective coordination of one to other department is there, whether authorities are given basically to carry out the responsibilities, and changes can be made to make it more effective. Differences are all fine, we already did it. Now, RTP May 19 question, advise management whether operational audit is a one-time activity. Answer is no. Operational audit is not one-time activity. It is like plan, do, check, act. Plan, do, check, act. And if there's a hostile management, if management is hostile, employees are hostile, what do? I should go for participative approach. You go for which approach? Participative approach should be gone for tackling the hostile employees. So you want to do operational auditing, but employees are hostile, not giving data, ye wo things. Have a participative approach, make them feel involved in the work. Okay. Done. This is fine. Okay, this is fine. Done. This is chapter number 15. Now we are left with chapter 16, chapter 17, chapter 7. 3 chapters are pending, which we are doing after the break. 16, 17 and chapter number 7. 3 chapters after the break. It's 6:07. We meet back at 6:30. 6:07. We are meeting back at 6:30. Break till 6:30. Okay. Now, Shreya has a question, sir. According to you, which chapters out of miscellaneous are more important? Dear, I frankly cannot tell that. We never know what ICI will ask. But what I'm telling to you is, don't do everything out of miscellaneous. Only focus on the important question. If you're doing important from all the chapters, that is more better rather than skipping few chapters. Important karo sabka rather than skipping few chapters, that becomes more better. Okay, see you at 6:30. Enjoy your break. Last and final session. Yes, we have completed all the chapters. Just 3 chapters are pending. Now, which are the 3 chapters which are pending? 1, your chapter number 16, due diligence, investigation, forensic audit. Chapter 17, peer review, quality review. And your chapter number 7, that is audit committee and corporate governance. So let's finish off the 3 chapters also. And now what you should be doing after this marathon revision, I'll recommend you. One thing is, you please go through the last 3 RTPs, last 3 suggested answers. That's really going to help you. So try to finish up that RTPs today itself. Tomorrow morning again, you can just revise the topics whichever you want. So according to me, today itself, finish up the last 3 RTPs suggested answers. And tomorrow morning, you can basically try to finish up the other things. Let's begin with today's chapter 16. Due diligence, investigation, forensic audit. Now see, all 3 are detailed examination. Yeah, all three are detailed examination. The purpose for which they are conducted is different. Due diligence is to evaluate a business opportunity. Investigation can be for any specific purpose, and forensic audit is whenever your report will be basically to be given in the court of law. It serves as evidence in the court of law. Okay. Now coming to check over here, due diligence is to investigate and evaluate a business opportunity. Whenever you are trying to acquire a controlling interest, it will come up into picture. Now, what are the components of due diligence? The different types of due diligence, uske names are there. Commercial or operational due diligence, financial due diligence, tax cut due diligence, information system due diligence, legal due diligence, environmental due diligence, personal due diligence. Now, overall due diligence, many people feel the financial due diligence is the overall due diligence. Answer is no, it's not just financial, covering all things. The overall due diligence will cover what? One, brief history of target, background of promoter. To talk about the target company, uska background, all that things. The accounting policy is followed. Now, I can ask a question only on this. So, related to accounting policies, what we are required to check? What are the accounting policies followed by them? Second, are the policies followed appropriate? Have they made any change in policy? Is the change in policy made in the purpose of selling the company? Many times I want to sell the company now. I'll be changing the policy in a manner which will result in a higher revenue recognition, kind of that you need to check out. Review the financial statements, taxation, cash flow, whether the company is able to meet the cash flow from internal sources or does it need to take outside help. Okay, whether you are able to honor the commitment with creditor, bank, stakeholder, etc. Are you able to generate cash from debtors on timely basis? Whether any funds are lying idle, and whether you are able to get more benefits out of the available funds. Financial projections you see, management and employees you see, statutory compliance you see. All points are to be covered in overall due diligence. Brief history, accounting policy, we review the financial statement of last certain years, we go for taxation, cash flows, financial projections, management and employees, and statutory compliances. Okay. So this is basically your thing. Important is this question, illustration 3. Important in due diligence is illustration number 3. See how many times asked. May 18, November 19, May 20 RTP, November 20 exam. Okay, what do you do for the hidden liabilities and overvalued asset? The hidden liabilities, overvalued asset. First, coming to hidden liability. There might be some so-cause notice received which are not shown by the company as contingent liability. Letter of comfort. Letter of comfort is not giving a guarantee, but we have just given a comfort. The bank was giving a loan to subsidiary. They asked us, is your subsidiary doing fine? I said, yeah, they're doing fine. I did not give a guarantee. But now, later on, if subsidiary defaults, in order to protect the image of the company, even though I have not given a guarantee, I may pay to bank. So try to see whether letter of comfort, even though they are not guarantees, they will not be there in books. Would they give rise to any liability in future? Okay, you might have sold some subsidiary or business. I have sold some subsidiary business with a condition that if any past liability comes up, I will only bear it. So अगर कुछ extra past का liability आया, I will only bear it. I have sold the business with that condition, so that liability may not be there in books. Okay, liability claim, warranty claim, they are not done properly, litigations are not accounted properly. Direct tax, indirect tax की tax liabilities. So there are some pending tax assessment, uska provision is not done properly. Okay, custom duty was paid on provisional basis, final is pending, actual amount will be more, uska provision not done in books. Agreement to buy back the share at a higher price. We already have agreement to buy back shares at a higher price, but books mein wo liability is not appearing. Future lease liability. I know future mein the rentals are going to increase. Books mein it is not currently available. Environmental problem or claims will come up. Books mein it is not there. Unfunded gratuity etc. is there, or incorrect gratuity valuation are there. Actual gratuity will come up higher only. Books mein it is not there. These are hidden liabilities. Now coming to overvalued asset. So auditor has to check which area? Uncollectible receivables, slow, obsolete, non-moving inventory. Check any obsolete plant and machinery is there. It is impaired, but we have not booked the impairment loss. Asset carried at more than market value due to capitalization of foreign exchange or capitalization of interest etc. Uske karan asset is carried at more than the current market value. Some litigated properties are there. Books mein dikh raha hai, probably it may go away. Litigation mein. Investments are carried at cost even though NRV is lower. Investments which carry a very low return. So we have investments giving a lower return. Those market mein values have dropped. Infructuous expenditure, deferred revenue expenditure shown as an asset. So they are not really the asset. Intangibles are there with no value. Group balance under reconciliation. So holding says I have to receive from subsidiary, but subsidiary says I don't have to pay it. So now CFS mein there's a receivable, whether we'll receive or not, we don't know. So that are all overvalued asset. Clear? Okay, now going to the next one. Okay, this is fine. Now investigation. So with it, due diligence, we go to the next point, that is investigation. We're just doing the ones which are important. Focus on that so that you're able to recall the things. Rather than doing everything, just focus on important ones currently. Okay, difference between audit and investigation is important. So objective in investigation is to establish certain fact. Objective in audit is whether the financial statement shows a true and fair view. The investigation is to establish certain fact, fraud hua ya nahi, for that purpose. Okay, scope, governed by statute, or it may be non-statutory also. Remember, investigation under Companies Act is statutory. There are other investigations which are non-statutory. This is, scope is wide. They are determined by the provisions of law. Periodicity, this is not limited for 1 year. It may cover several years. It is generally yearly. Nature, basically, it requires a detailed study. This involves a test checking. Okay, inherent limitations are there in audit. Inherent limitations are not there in investigation. You want to go as detailed, you can go as detailed. Evidence, you try to seek conclusive evidence. Here it's mostly, it's not actually prima facie, it's actually persuasive. The better word is not prima facie, word should be persuasive evidence. Okay, observation of accounting principles. You have to apply mostly being analytical because you're doing investigation. To analytical रहना पड़ेगा आपको more. यहाँ पे you're just complying with generally accepted auditing principles, accounting principles. Report is for the person on whose behalf you're doing investigation. यहाँ पे report is to the owners of the business entity. ठीक है. So this was difference between auditing and investigation. Steps in investigation is fine. First, determine the objective and your scope. Formulate an investigation program. Examine the records. Analyze, interpret your finding, and then come to your reporting. Now, important is which are the issues to be kept in mind while preparing an investigation ka report. So, whenever I'm preparing a report for investigation, which issues I need to keep in mind? One, report should not contain anything which is not relevant. Only have the relevant things. Second, every word expression which you are using should be properly considered. It should not be words having different meaning, different interpretations. Fine. Facts, conclusion should be properly linked. Basis, assumption should be explicitly stated. Clearly talk about the nature and objective of the assignment. Report should be in paragraph with the headings. Also state the restriction if any it was imposed, and the opinion should come in the final paragraph. So this was what the features basically which are there. What issues you should keep in mind while preparing investigation ka report. Again, only relevant things should be there. Irrelevant you avoid. Different meaning wale words etc. you try to avoid. Facts, conclusion should be properly linked. Assumption should be explicitly stated. Nature of assignment should be clearly written. Paragraph mein hona chahiye. Also state restriction, and opinion comes in the final para. Okay, next. Issues or problems coming under investigation. What are the issues or the problems coming under investigation? One, whether I should go for 100% verification or can I go for test checking? Now, it depends. It depends basically on the circumstances, situation pe. The exact circumstances pe, it will depend. 100% or basically you can go for sampling. ठीक है. Whether I can rely on the audited financial. Okay, whether I can rely, if question is only audited financial mein fraud hai, then I can't rely. But a question is like calculating goodwill for the purpose of admission of partner. So calculating goodwill is based on profits. So I can rely on audited financial normally, but you should take a clear instruction from the person who is appointing you whether you can basically rely or not. Okay. Whether I can take the help of expert, so generally yes, you can take help of expert, but please take a written consent of your client that you can refer the cases to an expert. ऐसा नहीं होना चाहिए that client doesn't allow later on. Okay, if there is a dispute or conflicting claim, one guy says something, other guy says something, you are appointed by one guy, don't focus on his side. You have to be neutral. So if there's a conflicting claim, you have to be neutral, unbiased, and come out with your opinion. Basis for opinion. If basically there's a speculation, if you are not sure, don't give the opinion. Give opinion only when you're 100% sure. So refrain from issuing speculative opinion. You should confine to the established fact. Okay, can you be futuristic? Answer is no. Refuse to make a futuristic statement. You can comment on the assumptions based on which the future data is prepared, but don't comment on the data. Whether to retain working papers or not. Now, audit ke andar, the working papers are to be retained for 7 years. Investigation, nothing is given. Should you retain? Answer is yes. Because later on a case is brought, we should be able to handle it. So, we should retain the working papers. Fine, this is over. Going to special aspect in business investigation. Okay, special aspect in business investigation, everything. First, overall picture. Examine P&L of last 6 to 10 years, balance sheet of last 6 to 10 years, and interpret the figures. So, overall business investigation covers everything. Overall picture, P&L item, balance sheet item, and then you interpret the figures, whatever have came in. Okay. Now, check over here question number 7. You are a manufacturer of chemicals. There are higher sales, but NP is declining. Why is NP declining? One, it can be unfavorable sales mix. So low margin item is being sold more, high margin item is being sold less. Negative impact of financial leverage. You are earning less compared to the interest what you are paying. Other items which you included in sales. So sales may you included freight rate, so sales are increasing, but actually they are not. High admin selling expense. Okay, selling price basically has not increased, but cost has increased. So cost increase, uske karan you are not able to get the NP what you want. Addition to fixed asset, there's a new depreciation which came up. Fine. Okay, next question is future maintainable turnover depends on what? Future maintainable turnover, future depends on one, the trend, marketability. Would you be able to add new markets? Third, political economic scenario and the competition. The future maintainable turnover depends on trend, whether you'll be able to create new market for your product. Third, political economic situations and competition. Okay, types of investigation are two. One is basically statutory, other is non-statutory. In your statutory, we have two things: investigation into affairs of company, investigation into ownership of the company. Okay, the affairs of the company and ownership. Ownership may we are trying to find who are the real owners. Affairs may, if the affairs are being mismanaged, then in that case basically it is there. Now affairs ke related there are three things: section 210, 212, 213. Section 210, 212, 213. Now why that three things are there? Section 210 is ordered by CG. Section 210 is ordered by CG. Okay, section 212 is basically ordered by CG, but the matter goes to Serious Fraud Investigation Office. And section 213, it is ordered by tribunal. Section 213 is ordered by tribunal. So 210 is ordered by CG, 212 is ordered by CG, but it goes to Serious Fraud Investigation Office, and 213 is ordered by tribunal. 216 is investigation into ownership. Okay. Now what are the powers of inspector? This is important. Inspector will be individual. Under your statutory investigation, the inspector will always be an individual. What are his powers of that person? Okay, duty of officer, employees of the company towards inspector. So all officers, employees should give him the required assistance. Okay, you may ask for any information from any body corporate. Okay, so I may also ask from body corporate which are related party. Related party say you can get only if you have a prior approval of the central government. To check prior approval of central government is there, you can have from the related companies also the information. Okay. You cannot keep the books of accounts for more than 180 days. If you want to keep it for more than 180 days, give it, then again take it back for another 180 days. You have the power to examine people on oath. You have all powers which are related to civil court. You have assistance of all the government officers. And if you feel the evidence is there outside India, okay, if you're feeling the evidence is there outside India, so what you should do? You should tell it to a court in India. They will inform to a court or appropriate authority outside India in a country where basically the documents are lying. They will tell to them and they will get the documents through them. Okay, so can I go abroad and do it? Answer is no. that is not allowed with you. The powers of inspector, which one? Duty of officer and employee of the company. All officers, employees of the company will give you the required assistance. You may ask for information from other body corporate related entity K if you have a prior approval of CG. Okay, you should not keep the books of accounts or papers in custody for more than 180 days. If you need for more than 180 days, give it back, again take it for 180 days. You have a power to examine people on oath. You have all the powers of basically civil court. You also will get the assistant of officers, employees of the government, because you're doing this investigation for government. And last, evidence in a place outside India. What will happen? Application is made to a competent court in India that evidence may be available in outside India. Such court will request a court or authority in such country to get that evidence. Okay. Now, approach of investigation under section 210, 213. First, you need to have a clarity of reference. What is the work you need to do? You need to have a clarity. For that, you need to ensure the letter coming from the government has all the things. Try to understand the scope, how many years you need to cover, etc. The period also. The scope, period. Okay, do you need to go into that related companies ka investigation? The scope mein. Period, how much you need to cover, again based on whatever is the letter coming from management. Frame your program, use the work of expert and come out with your reporting. So see, what is the approach? Approach is same. Have a clarity about what you have to do, the scope, the period which is to be covered. Okay, develop your audit program, investigation program, keep it a bit flexible, use the work of expert, come to a conclusion. Investigation to ownership is fine, leave it. Now, investigation on behalf of incoming partner. Okay, incoming partner wants to know, one, the terms which are offered to him is proper or not, and the capital what he is giving, would it be intact or not? तो उसको ये जानना है, the terms which are given to him are proper or not. So what are the things which are to be checked? So everything. But specifically you look into if any old partner is going, new partner is coming. So whether your admission is because of him leaving, because of him leaving, would the business be affected or not? That all points need to be checked out. The goodwill calculation, ye wo, etc. will come up. The history of the firm, partnership deed, etc., scrutiny of the profitability, scrutiny of assets liability, orders on hand, position of the term loans. Then how are the key personals which are there? Is your appointment reason for admission? Is it synchronizing with someone retiring? If he retires, would it have an effect on firm success? Okay, that all thing you try to see. Manner of computation of goodwill, whether any special clause exists where they can add someone else in future at a lower capital, lower goodwill, ऐसा कुछ है. And incomplete contract, reconstitute firm में how it will come, उसका profit loss will be belonging to you or it will go to old firm, how it is there, incomplete contracts. Okay, next we have investigation on behalf of a bank. Now bank wants to know two things. One, whether you will be able to repay, तो installments आप pay कर पाओगे, and second, if you are not able to repay, do you have assets from which I can recover money? So they are interested in one, your repayment capacity, and second is basically the security what you can offer, the source from which it will be repaid and the security which you are offering. So investigator should obtain knowledge of the loan proposal submitted by borrower, purpose, creditworthiness, MOA, AOA, whether they allow you or not, and then there will be examination of profitability, state of affairs. Simple. Okay, next one, investigation into frauds. Now, I'm just taking one which is important, that is fraud related to stock. So I just go down, inventory frauds. I just go to inventory frauds. Okay, now inventory frauds can be committed how? Employee may simply remove the goods. Okay, employee may write it off as a damaged goods and steal away. तो एक तो simply ले गए, books में कुछ किया ही नहीं है. Second, they took away, books में it is written off as damaged. Third, they may manipulate the totals. The total quantities they can manipulate and take away. That's third way. Fourth, they can inflate the quality issued for production. The raw material they say issued is 100, actually issued were 80 and 20 they took away. And stock actually dispatched but not entered in debtors account. The debtor में enter नहीं किया, they took away basically the stock that way. So different ways in which inventory fraud can be done. How do we verify? This is important. Now see, most important way of finding out this inventory fraud, if it is a trading concern, if it's not a manufacturing trading concern, the simplest way is by doing the physical verification and comparing book record with the physical verification. So can I say book record has to be properly maintained? Books को compare करो physical के साथ, that's the most important way. So in trading, stock, raw material, etc., what you should do is you should try to first of all see the internal control system. Theft are generally through collusion. So what as an auditor you need to do? One, I need to understand the system of internal control. I need to understand the detailed records are maintained or not. If detailed records are maintained, the first thing will be to physically check the quantity held and shown in the books. The first step, physically check the quantities held and shown in the books. Okay. Plus you can also compare the inward outward receipt issues. You can compare with goods inward book, goods outward book, which are maintained with the security guy. That can also be done. But now sometimes if you are in production, आप प्रोडक्शन में हो तो कई बार defalcations happen, they show it as wastages but really it was not wastages. So how do you understand all that things? So if it is basically a part of production which is diverted by inflating the wastages, so I need to take a help of kind of engineer. Whether itna wastage comes or not, you take an assistant of engineer to understand whether this much wastage really comes or not. Manufacturing hai, wastage बढ़ा देंगे, they might do the stealing. So I need to take the help of engineer to understand whether this much wastage comes or not. Plus I can use the past data. The wastage production, wastage past mein how much it was. So to understand that this time wastage is appropriate or really they have stolen something. Did you understand? Okay. Next is forensic audit. Now forensic audit is nothing but you are doing investigation only, but your views will be held in the court of law. Court of law mein it will be held valid. That's only the forensic audit. Now difference between audit and forensic audit. This is important. May 18 it was asked. Objective or normal audit is true and fair view. Yahan pe whether fraud has happened or not. Technique, this is compliance, and substantive, this is more of investigative in-depth checking. Periodicity, this can be for any number of period, one year के लिए normal audit. Forensic में no such limitation. Okay, now off balance sheet item, you try to vouch the arithmetical accuracy. यहाँ पे you try to see whether the transactions are real or not. Real है या नहीं, proprietary aspect, real or not. Adverse finding, you will give a negative report. Adverse finding, you will try to have a legal determination of fraud, and perpetrator did it knowingly or not. That is also important. If the perpetrator has done it knowingly, the penalties, imprisonment will be more. ठीक है. Next is, now see this question. This was there in RTP. Services rendered by forensic auditor. Services which are rendered by forensic auditor. One, they will create the question. Craft means create. They'll create the questions to be posed. They'll respond to the questions posed. They will identify document which should be requested. They can identify individual which will have a most knowledgeable data. They can conduct the research relating to the facts of the case. Then there is यहाँ पे enter. They can identify and preserve the key evidence. They will evaluate the produced documentation information for completeness. They will analyze the produced record. They can provide you question for cross-examination. So what are the services provided by forensic auditor? This is the answer. Crafting questions, responding to question, identifying documents to be requested, identifying individual which will have most knowledgeable facts, conducting research related to facts of case, identifying, preserving evidences, evaluating the documentation for completeness, analyzing the produced documentation, and providing questions for cross-examination. ठीक है. Now, if question comes services rendered, कौन सी this? अच्छा, services rendered are in great demand in which areas? The services are in great demand in which areas? The one, criminal investigation, professional negligence के cases, arbitration service, fraud investigation, insurance claim के settlement में, and dispute settlement में. The services of forensic auditor are in great demand in which areas? This is the answer. Did you understand? So which services they provide? Earlier answer. Demand of the services in which areas? This is the answer. Fine. Skill and characteristic of forensic auditor. Now there are two separate words, skill and second is characteristic. Okay, first of all, coming to word characteristic. Characteristic क्या है? Out of box thinking, strong visualization, curiosity, detail oriented, creativity, skeptical, confidence, good professional judgment. ये characteristic हो गए. Skill. You should have a knowledge about auditing standards, accounting standard, information technology, data analytics, criminology, legal framework, investigative technique. You should have a network of professional contact also. This is your skill. ठीक है. Process of forensic accounting is same as investigation, just last step will be, which is the last step? Last step will be the court proceedings. Acha, now just one thing over here. Step number 4, he'll perform analysis. So whatever information is acquired, he will perform analysis. Now, what analysis he will perform? There's a question on it. So actual analysis performed will depend upon the nature of assignment, but may involve the investigation में what type of analysis you do, calculating economic damages, summarizing the large number of transaction, performing tracing of asset, कहाँ पे asset पड़ा है, present value calculations, regression sensitivity analysis, using computerized applications such as spreadsheet, etc. Spreadsheet is Excel, and using charts, graphics to explain the analysis. So what analysis to be done depends on the nature of assignment, but it may involve the following. There's a question on this. Okay, next is this. Now pay attention. Forensic audit के technique, उसके अंदर technology based और digital forensic technique. You are using the help of technology for doing this forensic audit. So every transaction leaves a digital footprint today, and now what happens is the digital investigation can become a quite complex reason whether I can do this or not. So basically trying to see someone's email, trying to see someone phone call के records etc. वो privacy is invaded. So close scrutiny of email, accounting records, phone logs, target के hard drives, they are basically a part of modern forensic audit. But before taking such step, I need to take appropriate legal advice, because it should not amount to invasion of privacy. So you need to ensure all that things, privacy is not invaded. Okay, some open source digital forensic tools which are available for doing a digital forensic, वो email analysis, hard disk analysis, वो deleted file find करना, उन सब के लिए there are softwares available. Which are they? Cross drive analysis, live analysis, deleted file tracking, steganography. Steganography is hiding a message. You hide a message in some particular data, उसको steganography बोलते. Encache and MD5. Encache and MD5 is basically for protection of the data. ठीक है. Log files, PC system log, pre-log tools. तो log से पता चलेगा who edited, who modified, who deleted, when, all that thing that is coming from log tools. ठीक है. तो digital forensic technique. Okay. Next one is data mining. Okay, what is the data mining? From a large chunk of data, you try to find out a meaningful data. From a large data, you try to find out new, hidden, unexpected information or patterns. To try to find a meaningful data useful to you. New, hidden, unexpected information or patterns. Data mining is divided in 3 things. One, discovery. To discover something, ऐसा आप find करो, we put that thing and we try to mine the data. Predictive modeling. Okay, ये हुआ है, तो try to see what will happen. So one is discovery. Past में से I try to find something. Predictive is related to future, and I'll also do deviation and link analysis. ये deviation है या link का analysis, that all comes under your data mining technique. So you try to discover usual knowledge or pattern in data without a predetermined idea about what the pattern can be. So you don't know what the pattern can be, but you still try to find it by using certain, basically your data mining techniques. ठीक है. This is basically data mining. From a large volume of data, you are finding new, hidden or unexpected information or patterns. It will involve 3 things: discovery analysis, predictive modeling, and third, deviation and link analysis. ठीक है, this is done. Data mining over. Forensic audit का report is fine. Now check this question. May 19. Check the question. You are appointed as a forensic auditor to carry out analysis. State the various analysis that you might carry out. Now, what analysis we do depends on the nature of assignment, but it may involve calculating economic damages, summarizing large transaction, tracing asset, performing present value calculation, sensitivity analysis, using graphs, etc. for basically explaining the analysis. So this is basically analysis will involve what? This question. Done, this chapter over. Come to next one, chapter 17, and then we are left with only chapter number 7. Finally coming to an end slowly and gradually. Okay, now next one is chapter number 17, peer review and quality review. Okay, peer review is conducted by peer review board. Peer review board comes under ICAI. Quality review is conducted by quality review board. Quality review board comes under central government. So there are two separate authorities, peer review board, quality review board. Okay. Now let's go to peer review first. Peer means a person of equal standing, one chartered accountant checking the work of another chartered accountant. So ICAI sends one chartered accountant to check the work of another chartered accountant. Okay, what's the definition? Peer review means examination review, kiska, of systems and procedure to determine whether they have been put in place by PU, the whether practice unit, the practicing CA or a firm of CA, whether they have put in place systems and procedure to ensure quality of assurance services as required by technical, professional, ethical standard, and whether the same were consistently applied during the period under review. So under peer review, the peer reviewer will try to see whether you have put in the systems and procedures. The purpose is to see whether your systems and procedure put in place while providing attestation services, not attestation, assurance, while providing assurance services. So whether the system procedures are there and whether they are operating effectively. Okay. Now just going down the objective of peer review. The main objective is to ensure that the members of institute comply with technical, professional, ethical standards, and there were proper systems in place including documentation to prove it, to demonstrate the quality of the services. Acha. Now peer review, the thing is not to find out your deficiency, and we are not concerned with your individual audit. We try to see your overall systems and procedures, whether your overall systems and procedures which you are following, they ensure that you are complying with technical, professional, ethical standards. So this is not to find out deficiency, but to improve the quality of services. We are not going to sit on the judgments of PU, but we are trying to evaluate the procedure followed by PU in rendering services. Fine. The scope of peer review, it is for all assurance services. Okay, assurance services. Assurance services includes your audit also and other things also. Assurance, wherever you are giving assurance, review is covered. Review bhi cover ho jayega when you are giving assurance. Other than audit and review, prospective financial information, you comment on assumptions. That is also assurance engagement other than historical financial information. So assurance services are covered. Assurance services does not cover what? Assurance services does not cover what? Consultancy, representation before department, your compilation, agreed upon procedure, is testifying as expert witness, due diligence wala thing, they are not covered. They are not covered. Okay? Now, they say that we need to check that the PU, the practicing chartered accountants, they are complying with technical, professional, ethical standard. So what is technical, professional, ethical standard? RTP May 18, 19, 21. Okay, technical, professional, ethical standard. 1. Accounting standard issued by ICAI, which is for other than the companies. Accounting standard prescribed under section 133, which is for companies. Ind AS prescribed under 133, this for companies following Ind AS. The simple words, accounting standard. Then standards issued by ICAI related to audit, engagement standard, then statements, guidance notes, standards on internal audit, guidelines, notification, direction, announcement, pronouncements of council. That. So 1, all accounting standards. 2, auditing standard related. 3, the framework, the basis, the framework for preparation of financial statement, preface to your auditing standards, they all are also covered, and the provisions of various statute. So this is technical, professional, ethical standards. Fine. Okay, now applicability of your peer review. Is peer review applicable to all practice unit? All practice unit को क्या mandatory peer review होता है? Now see, they have divided level 1 and level 2. Level 1 entities, level 2 entities. Level 1 entities will be required to have a peer review once in every 3 years. Level 2 will be required to have once in every 4 years. Now, who is covered in level 1? If you are having a statutory central audit of bank, the central statutory audit of bank insurance, if you are having a audit of central or state PSU, and cooperative societies having a central cooperative society having turnover 250 crore or net worth 5 crore or more. Okay, asset management company ka audit, mutual fund ka audit, listed entities, all listed entities covered under level 1. Okay, trust, which are a public interest entity. Okay, someone who has raised fund over 50 crores. Okay, who has a net worth more than 100 crores or turnover 250 crores or more, net worth 100 crore, turnover 250 crore or more. ठीक है, you are funded by CG or SG for 50 crores. NBFC having a deposit 100 crores or more, and those who are following Ind AS. This all are covered under your level 1. Level 1. So if PU is doing an audit of level 1 entities, they need to have a peer review done once in every 3 years. Once in every 3 years. Okay, level 2 is all others. Actually, all others which doesn't fall above, they will cover under level 2. Acha. Level 1 के लिए once in 3 years, level 2 के लिए once in every 4 years. But now pay attention. Currently, if you want to do audit of listed entity, holding a peer review certificate is mandatory. So as such, these limits are given. But suppose if ICI doesn't send someone in 3 or 4 years, what we should do? If ICI doesn't send someone to do peer review in 3 or 4 years, chalega. Not my fault. But if you want to do audit of a listed entity, holding a peer review certificate is mandatory. So in that case, you need to apply suo moto to ICAI that sir, hamara peer review karo. 3 years are getting over. So if suppose 3-4 years are over, ICAI doesn't send someone, chalega. But if you want to do audit of listed entities, you have to suo moto. Suo moto also you can tell them basically that sir, please conduct our peer review. We need to do audit of listed entities. We need to hold that peer review certificate. Fine. Next one is the eligibility of a peer reviewer. Okay, to become a peer reviewer, I should hold at least 7 years of experience. Okay, the member in practice, you shall be in practice with a 7 year of experience. Practice mein hone chahiye plus 7 year experience. Okay, if you moved from industry to practice, 10 years industry experience and 3 years of practice experience should be there. ठीक है? For being appointed as a reviewer, okay, there should not be any disciplinary actions pending. You should not be guilty of professional misconduct. You should not have been convicted by court, or you should not have any conflict of interest with PU, and you have to do some training which is required. Fine. Now, eligibility criteria is above and being appointed ke criteria is below. To be eligible, upar wale criteria. To be appointed, these are basically the additional criteria. Okay, can I take an assistant with me? One assistant is allowed under peer review. Fine. Under quality review, not one assistant. Wahan pe 5 assistants. Okay. Approach of a reviewer. Approach of a peer reviewer. So first of all, a peer reviewer should obtain an understanding of engagement letter. Acha, so engagement letter between the PU and their clients. Kiska engagement letter? Between PU and their client. PU and client ke beech ka engagement letter, you should obtain understanding because the audit is done based on the engagement letter. Then you need to select the number of assurance engagement, how many you are going to check. Then you should examine the policy for acceptance of client, continuation of client followed by PU is proper or not. Then you use a combination of compliance procedure and substantive procedure. The compliance test, so I'll try to see whether they have the systems in place which ensures compliance with professional, technical, professional, ethical standards. And I also do substantive test. Documents are there. I'll try to check your files to really see whether they are followed or not. So pehle I'm trying to see your kind of systems and procedures, and then I'm evaluating your working papers to understand whether really the findings etc. are proper or not. Okay, now if, just a minute. Okay, if you determine So whenever you're evaluating the records, when you're doing a substantive procedure, you need to determine the significant issues are properly considered, adequate audit evidence is obtained, and significant decisions have been properly documented. The approach में how many things? One, you obtain understanding of engagement letter between PU and their client. Second, you try to decide the number of assurance engagement which you want to see. Third one, you need to see that whether the policy for continuation of client, acceptance of client was properly followed. Fourth, you have a mixture of compliance and substantive procedure. Compliance procedure to see whether policies, procedures are there to comply with technical, professional, ethical standards, and substantive procedures to see the working papers, adequately document your findings, your conclusions, everything is proper or not. Now, we need to specifically evaluate that the significant issues are properly considered, adequate evidences are obtained, significant decisions are properly documented. Perfect. Next we have, there are two things, these are newly added. So it's not marked as important, but I'm taking obligation of PU. So PU ka obligation produce to the reviewer or give access to records, give him explanation, give him all assistance. And if PU wants some evidence in Hindi or basically in English, so if it is there in local language, you have to get it translated into Hindi or English, and it should be in a legible form. ठीक है. Obligation of peer reviewer. Can a reviewer take the extract of PU's record? नहीं, वो मेरे client का data है, तो cannot take the extract. He should complete the peer review within a time frame. So 60 days from the date of intimation is actually the time frame. It should be completed, and you should document all working papers, submit a copy of working paper to peer review board if the board is calling it within 18 months of report. Once you give the report within 18 months, the board can tell you submit your documentation. So you should be able to do that. Okay, peer review process में there are certain amendments. Number of days में amendment है, बाकी कुछ नहीं है. So one, the first of all, selection of PU, appointment of reviewer. Okay, who will select the PU? The peer review board. The peer review board will select the PU. They will be notified basically that, sir, you are selected for peer review. They will give you option of 3 reviewers. They'll give you option of 3 reviewers. And a declaration cum questionnaire is basically to be submitted by the PU within 7 days from being notified by board. Name of 3 reviewers are given. You have to select one of the 3 reviewers, intimate again within 7 days. ठीक है, सब जगह now 7 days is mostly there. On-site visit is now 5 days. On-site visit is now 5 days. ठीक है. Now planning. Okay, now you selected someone. Peer review board will ask that reviewer whether he is available. If that reviewer gives a consent, if reviewer gives a consent, the PU shall send that questionnaire which you had given to PRB. The same questionnaire you should also give it to the reviewer, along with the details of proceedings which are going on since basically during the last 3 years wale. ठीक है. Now the selection of sample by the reviewer. Reviewer will select the sample. Within 7 days of receiving the information, the PU will select a sample, which all files you want to see. He should also plan an on-site visit. On-site visit, he will give you 5 days to keep the records ready. 5 days will be given to keep the records ready, and review is to be completed within a maximum period of 60 days from the date of notification. Notification is 60 days. Achha. 5 days is for keeping the things ready. Review is allowed for 7 days. Review is allowed for 7 days. Now, whenever a peer reviewer comes, one, he will check the general controls. He will check general controls for 5 things regarding independence, how do you maintain professional skill standard, outside consultation, staff recruitment, and office administration. This is important. So general controls he will check for 5 things: independence, maintenance of professional skill and standard, outside consultation, staff recruitment, supervision, development, and office administration. Now, number of files which he will choose will depend on, how many files he will choose will depend on, 1, the standard of quality controls which are there, the nature of services which you are offering, the methodology adopted by PU, number of partners, location kitna hai, fees charge, GST kitna. Based on all this, he will decide how many client of assurance, client of yours he will select. Achha, if he wants to change, the peer review board ka approval is required to increase or decrease basically the sample which was initially selected. ठीक है. Now, the one was general controls. Now, when we examine the record, we have an approach of compliance as well as substantive. But now I'm doing a compliance procedure related to assurance. तो while providing assurance services, तो पहले वो general control थे, now these are controls relating to providing assurance services. So while providing assurance services, do you have some controls to ensure that technical, professional, ethical standards are being followed or not? And then I'll do substantive procedure. I'll check your working paper to ensure whether they are really followed or not. So this was basically the stages which were there, and lastly it is coming as your reporting. What general controls pe you'll report. Now the peer reviewer, can he directly give a report to PRB? No. He has to make a preliminary report to whom? The PU. A preliminary report PU ko do. PU within 5 days can give a written representation. If you are happy with the reply, you will give a clean report to PRB. If you are not happy with the reply of PU, you will give a modified report to PRB. And whenever there is a modified report, there will be a follow-on review. Follow-on review kab hoga? Within 1 year from the date of issue of audit report. 1 year can be reduced to 6 months. Okay, there was a question in RTP. Can a peer reviewer directly give the report to the PRB, or is he required to give the preliminary report first to your PU? The answer is first, the preliminary report is required to be given to PU. 5 working days may they can submit the representation. Illustrative qualification, fine. Peer review certificate. Okay, peer review certificate. Board within 3 months will issue a peer review certificate mentioning the validity and inform the PU that peer review certificate cannot be issued. Now, if aapke review mein there were some problems and there's a modified report by reviewer, then in that case they are not going to issue the report now, because there is a follow-on review which will come up within a period of 1 year. ठीक है. Inherent limitation of review. In spite of review being done, there cannot be absolute assurance that the PU has worked properly only. There are always inherent limitation. Now, according to me, this is important. Difference between peer review, quality review. Difference between peer review, quality review. Okay, peer review is a review of systems and procedures. Systems and procedure. Intention is not to find fault, but to help develop the effective systems. And this is basically done by ICI. Quality review on opposite side is basically to penalize if you're doing wrong. So it is acting as a deterrent. So quality review is basically by central government and it is independent of ICI. In your quality review, we try to see whether a particular audit is deficient. So we see whether a particular audit of yours is deficient or not. And we also see one more thing, the quality control procedures which are adopted by you as per SQC1. So that's one. So whether a particular audit is deficient, the main objective is to find the errors or irregularity. And if serious irregularities are detected, the disciplinary actions will be taken against the member of ICI. Okay, so this is by peer review board, this is by quality review board, this comes under ICI, this is coming under central government. Then yahan pe we see systems and procedure. The objective is not to find the fault. Yahan pe we see the particular audit is deficient or not, and we also see the quality control procedures required by SQC1. But yahan pe the thing is, we want to find, is the particular audit deficient? Agar deficiency found out, there will be disciplinary actions again under what? Quality review. ठीक है. Next. Now, there's this question given. Unless you read the question, you feel it's very difficult, but it's actually not. Now, check. You are appointed to conduct a peer review. What areas you should review in independence? Remember, general controls mein we have to check independence. Or general controls mein 5 point mein first one, independence. Wow, how do we check? So, does a PU have a policy to ensure independence? Who is responsible for the policy? Is it communicated to all the staff members? Whether they monitor the compliance with the policy? Do they review the policy on a periodic basis? How do they deal with the threats related to independence? Okay. So question is, how do I check the independence assessment? I have to do checking of the general control. Usme one was independence. So does PU have a policy on independence? Who is responsible for policy? Is it communicated to all the staff? Whether they monitor the compliance with it? Do they periodically review the policy? And how do they deal with threats to independence? Then this was peer review. Let's go to the quality review. Let's go to quality review. Now, quality review is doing this right when nobody is looking. And see, quality review mein, we try to have an individual audit, whether we are focusing on that one audit, whether a particular audit is deficient. And we also evaluate the quality controls. We also evaluate what? That quality control procedures. तो quality control procedure SQC1 and SA220 are same है. Now this is important. Which are the examples of important areas of evaluation? Examples of important areas of evaluation as per the quality review. So quality review mein which are the important areas of evaluation? Okay, so these are the points I have to check this. So whether the audit firm has established and implemented the quality control systems for all the element, ये सब के लिए. Whether the engagement quality control review, whether the engagement quality control reviewer reviews the significant judgment made by the engagement team, conclusion reached. ठीक है. Whether the audit firm assigns a person responsible for monitoring the quality control. तो वो जो points थे ना, engagement partner should act like a leader, ethical responsibility should check, acceptance continuation of client, human resources के लिए. तो assignment of team should be done properly, engagement performance, direction, supervision, review, consultation, EQCR. तो उन सब के related checking. Whether the audit firm obtains at least annually a confirmation letter concerning compliance with policies from all persons who has to maintain independence, everybody who has to maintain independence, are we taking in writing from them at least annually once that they are complying with independence policies? Okay. Now, whether you perform an independent confirmation procedure before accepting the audit, acceptance of audit ke liye you do the procedures. Okay, whether the audit firm develops and provides training program to their staff. So this is basically areas of evaluation as per quality review report. Areas of evaluation. The important areas of evaluation. Why conducting quality review as per SQC1? So whatever points were covered in SQC1 or SA220, uska checking. Okay, clear? Next. Okay, what is objective and scope of quality review? See, the objective is whether a particular audit is deficient. Whether a particular audit is deficient, wherein they are not complying with accounting standards or auditing standards, basically that is to be identified. Okay? And we'll also see whether the quality control procedures implemented by the AFUR, audit firm under review. They don't use the word PU, they use the word AFUR. The quality control procedures adopted by AFUR are adequate or not. So one objective is whether the statutory auditor has ensured compliance with technical, professional, ethical standards. Statutory auditor has complied with applicable auditing standards, whether the AFUR has implemented the system of quality control and there are no material misstatement of assets liability in respect of the selected audit. So these are the four objectives important. Now, at present QRB, मतलब quality review board covers only statutory audit. तो ये सिर्फ statutory audit के लिए है. Internal audit, GST audit, tax audit, they are not covered. Now pay attention. If at all I go to peer review may tax audit, GST audit, they are also covered. They are also covered under assurance engagement. Even the reviews are covered, not audit. Review bhi cover hai. यहाँ पे it is currently only statutory audit. ठीक है, now moving ahead. Now, powers of quality review board. Quality review board is under the central government. तो उनके powers क्या है? तो on its own or through a specialized arrangement under the setup of ICAI, they evaluate and review the work of services provided by the members of ICAI. On its own or with the help of ICAI, they will evaluate the work of members of ICAI. Second, तो उनका power. Lay down the procedure for evaluation criteria. So how to evaluate उसका criteria they will lay down. Okay. They can call for the information from institute. If member of ICAI doesn't give the information required, they can call for it from the institute. Okay, if the company doesn't give information, they can call for it from the Ministry of Corporate Affairs. So if they do not get information from member, they can request the institute. If they do not get information from company, they can request the Ministry of Corporate Affairs. They can invite expert to provide technical or expert advice. And they can make recommendation to the Council of ICAI for guiding the member of ICAI for improving the professional competence, qualification, their work. Okay, so what are the powers with them? Again, on its own or with the help of ICAI, they can review the work of member of ICAI. Lay down the procedure for evaluation criteria. To lay down basically the procedure how to evaluate the work of member of ICAI. They can call for information from institute, members, client, or even that MCA. If member doesn't give, they can tell institute to give it. If Company doesn't give, they can tell MCA to get it done. Invite expert, make recommendation to council to guide the members of ICI. This is what QRB can do. Okay. Now QRB currently quality review is only for statutory audit, tax audit, GST audit, internal audit. It is not applicable as of now. Now how is the firm selected? How is the audit firm selected under quality review? The one, see, first entity got selected, client got selected, the company got selected. Oh, you are auditor, आप select हो गए. So imagine there's a company where fraud was detected, say Gitanjali Gems or Satyam. So Satyam select हुआ, you are auditor of Satyam, your audit firm is selected. So this is based on entity audited. This is based on entity audited. Okay, for those which are covered under NAFRA rules, I can take only those which are referred by NAFRA. Or NAFRA rules may covered in NAFRA refers, then only it comes to me. But other than specified in NAFRA rules, risk-based selection, reported fraud is there, or susceptible to risk of something. So that type, serious irregularities are detected, major non-compliance of laws are there. So I select that company. वो company select हुई, you are the auditor, oh, you get selected. NAFRA rules होगा तो NAFRA rules के अंदर the NAFRA will tell. ठीक है. If joint audit is there, all joint auditor may be reviewed. Not necessarily all will come, may be reviewed. ठीक है. Plus the complaints made by SEBI, RBI, IRDA, MCA, NAFRA, that all will also come up. But individual person के complaints are not considered by quality review board. Fine. ठीक है. तो one is criteria based on audit what you are doing. Second is the firm is selected. The firm where there are more than this many partners, firm जिसका revenue is more than this much, that firm is selected. आपका firm select हुआ and then the client will be selected. Then your particular audit will be selected. तो पहले audit select हो गया, based on that you are auditor, you are selected. Second is firm selected and then they will select a particular audit. Quality review cycle once in 3 years for those who have a 20 partners or more, once in 4 years for those who have 10 to 20 partner, and once in 5 years for those who are having less than 10 partner. But it is not mandatory, it may come up. And same way in peer review also, if ICAI doesn't send someone for peer review, chalega. But if you are doing audit of listed entity, you have to suo motu apply to get the peer review certificate. ठीक है. Up to 3 audit engagement can be selected by board. Basically for this 3 audit engagement, the 3 audits will be selected and they are going to review 2 things. One, who selected audit is deficient or not, and second, the quality control procedures implemented by AFUR. ठीक है. To become a technical reviewer, यहाँ पे they don't call it as quality reviewer, they call it as technical reviewer. You should be having a 15 years of post qualification experience currently in practice. 15 years का post qualification experience currently in practice. You should have handled as a signing partner at least 3 audit assignment. Which type? Central statutory auditor of bank, public limited company, government company, or a private company having an annual turnover 50 crores or more. But ये 3 में से at least one of them has to be other than the private companies. ठीक है. तो you should have handled some big audits. ठीक है. Disciplinary proceedings are not pending against him or they have not been taken during the last 3 years. ठीक है. The empanelment of technical reviewer is for 3 years. You have to undergo training, and after a block of 3 years, they may again renew you to become a technical reviewer. Fine. Now, pay attention. वहाँ पे to select a peer reviewer, the PU was getting option. Whether AFUR gets an option to select the technical reviewer, no. The quality review board will select the AFUR. Quality review board will select the technical reviewer also. No options given. So what is the stage which is basically given over here? QRB selects audit firm. QRB identifies technical reviewer. QRB sends offer letter to technical reviewer. Technical reviewer gives his acceptance. QRB intimates AFUR about the quality review. ठीक है. Now the technical reviewer sends the questionnaire to AFUR. AFUR has to fill the questionnaire and give it back to the technical reviewer. Then there will be an on-site visit which will be planned. On completion of on-site visit, technical reviewer will give a preliminary report to AFUR, and copy of preliminary report is also given to QRG. There's a quality review group. Okay, so there is technical reviewer, they will give a copy of the report to quality review group. Quality review group के बाद जाएगा quality review board में. Okay. AFUR can submit the representation on preliminary report. That representation is also to be sent by AFUR to quality review group. So quality review group got the report of technical reviewer. Quality review group got the basically representations of AFUR. All that things are there. Now the final report will be submitted along with the annual report of the company in a specified format. Again, you will give it to quality review group. The technical reviewer to quality review group is there, and quality review group will be considering QRG to consider the reports of technical reviewer, responses of AFUR, and then they will consider the report and recommend to QRG for the further course of action. So it's basically technical reviewer to QRG and then QRG to QRB. So QRB will take actions later on. ठीक है. So QRG will recommend to QRB and QRB will consider the final course of action. ठीक है, let's move ahead. This all is fine. Stage-wise approach, we almost did it. It's similar. Okay, now directly going to the point which is related to the actions which can be taken by QRB. The actions which can be taken by QRB. So can I say that the technical reviewer, he gave a report to QRG, QRG gave a report to QRB. Now, what are the actions QRB can take? So QRB, one, they can make recommendation to Council of ICI and refer the case to Director Discipline. Okay, if case will go to Director Discipline, if matter relate to first schedule, he will pass on to Board of Discipline. If matter relate to second schedule or both, he will pass on to Disciplinary Committee. ठीक है. Second, they can just give advisory to AFUR. The Quality Review Board can just give advisory to AFUR. Okay, they can inform the details of non-compliance to regulatory body. Whatever are non-compliance, they can give the details of non-compliance to whom? The regulatory body also. They can intimate AFUR about the findings of actions, whatever is taken above. So one, they might can refer the case to Director Discipline. They might give just advisory to AFUR. They might even tell about the non-compliances to the regulatory body also, and they will intimate to AFUR the actions what they have taken. Acha. In case the review arises due to a reference coming from regulatory body, so SEBI, RBI, etc., they had told the Quality Review Board, then in that case the details of action will also be told to them as well. And last one, they don't do anything. They don't do anything and consider the matter as complete. So this is important. Actions that can be taken by QRB. Actions that can be taken by QRB is important. Okay, now changes to the reporting format or questionnaire. So as of now for reporting to Quality Review Board, the technical reviewer का एक format है. Same way the questionnaires, उसका भी format है. That all formats are decided by QRB. If QRB feels that based on international developments or some changes which are happening, we need to make changes. If QRB feels that they need to make changes to the final report or the quality control questionnaire, they can make it. So QRB can make it. So when a QRB is of the view that based on international practices, changes in laws and regulation, through experience gain, it may amend or modify the questionnaire or the reporting format from time to time. Then come to the last chapter of the day, that is chapter number 7, Audit Committee and Corporate Governance. Audit Committee, Corporate Governance. There are few amendments in Audit Committee, Corporate Governance. So you can have a November 22 ka RTP. I already did a session on RTP. Few amendments are there over here. All other things, no amendments at all. Okay, shall we start? Shall we start? Come on, be pumped up. Just how many days are more? Yeah, 6 papers are pending. 11 days more. 11 days you need to push yourself. Don't stop. Bas, that's it. Chalo, going to this chapter, Audit Committee and Corporate Governance. Now, this is based on SEBI LODR regulation. So, based on SEBI LODR regulations, what happens is always a good corporate governance is required. So for that good corporate governance, SEBI has came out with this LODR regulation. These are applicable only for the listed entity once they become listed. It's not pre-listing, it's post-listing requirements. ठीक है. Now, which are the issues which are addressed? Which are the issues addressed related to corporate governance in your SEBI LODR regulation? So, one, functions of board, composition of board of director, compensation of board. Second, code of conduct vigil mechanism. Then, roles, responsibility of audit committee, management of subsidiary company, how to manage a subsidiary company, uske related, risk management related things. Okay, disclosure of important aspect like related party transaction, etc. Content of management discussion analysis report is there. Information to be given to shareholder is there. CEO, CFO का certification is there. And a certificate from the auditor or practicing secretary that this LODR regulation has been followed. वो भी है. So, what are the issues addressed in LODR regulation? The list is given. It's only to the listed entity. Now my question, our shares are listed in SME exchange. Our shares are listed in SME exchange. Do we need to follow this SEBI LODR regulation? Yes. So whether your securities are listed on main board or SME exchange or institutional trading platform, you are required to follow LODR regulations. Okay, fine. Acha, and there are few provisions of LODR telling that this is applicable for top 500 listed company, this is applicable for top 1000 listed company. So suppose you were a top 500 listed company, it was applicable to you, now you are not a top 500. Earlier thing, now you are not top 500, still you have to follow it. So if it became applicable based on market capitalization criteria, it will continue even if now you fall below the threshold. So once you were in top 500, it started applying, now you are not in top 500, still it will apply to you. This is the amendment. Next, audit committee. Audit committee we are doing under SEBI LODR. There's audit committee as per section 177 of Companies Act also. I'll compare both. The audit committee under LODR. So every listed company needs an audit committee. Listed company all needs an audit committee. Minimum 3 directors. यहाँ पे word at least is added. This is an amendment. At least 2/3 has to be independent director. So 3 director will be the member of audit committee. At least 2/3 will be independent director. And if you have SR outstanding share, SR is superior right. The superior right equity share outstanding are there. Then all directors, all audit committee member has to be independent directors. So normally you need minimum 3 directors. 2/3 should be independent director. If SR equity shares are there, then in that case, all has to be independent directors in audit committee. Okay, all members should be financially literate. One of them should have a financial expertise. Chairman has to be independent director. He has to be present at AGM. The chairman of audit committee has to be mandatorily present at AGM. An audit committee may at its discretion invite. They can invite other people including the chartered accountant, the auditor. वो इनवाइट कर सकते हैं किसी और को. मीटिंग दे शुड होल्ड 4 times in a year. गैप शुड नॉट बी मोर देन 120 days between 2 meetings. ठीक है. Powers are fine, roles are fine. I'm not going into that. Powers and roles are fine, not important. Okay, resignation of statutory auditor. Okay, imagine if a statutory auditor wants to resign. If you want to resign from a listed company, resignation is made strict. कैसे strict कर दिया? So if at all you are resigning within 45 days from end of quarter ended, within 45 days you are resigning, complete that quarter and then. तो जो quarter खत्म हुआ ना, that quarter you have to complete and then only you can go. But if you are resigning after 45 days from end of quarter, then the quarter which got over and the quarter which is running, that also has to be completed. And if you have done Q1, Q2, Q3, you have to mandatorily do the Q4 and full year. If you have done Q1, Q2, Q3, mandatorily Q4 is to be done. Resigning within 45 days, complete that quarter. After 45 days, complete that quarter as well as the ongoing quarter as well. If Q1, Q2, Q3 done, full year also has to be done, but this provision is not applicable when you become disqualified. This provision is not applicable when you become disqualified. Now check this question. Check this question. You are appointed as auditor of 2 companies, new limited, old limited. Okay. Now what happened is, due to personal commitment, he tendered resignation in new. आपने resignation दिया new में, on which date? 30th June. Now the thing is, you already done all quarters till December. If you already done all quarters till December means you're done Q1, Q2, Q3. If you're done Q1, Q2, Q3, can you resign now? No, you have to do Q4. You have to do Q4. Now in old limited, your wife borrowed a sum of 6 lakh. Can I say wife borrowed a sum of 6 lakh? You are becoming disqualified. You're becoming disqualified. Okay. But management is telling no, you still have to continue as auditor. You did Q1, Q2, Q3, you have to do Q4. But see, if you become disqualified, these provisions are not applicable. So new May, you're not disqualified, you have to continue. Old May, you became disqualified, management cannot tell you to continue. Did you understand? So you are required to issue the audit report for last quarter for new limited, but he is not required to issue audit report for the last quarter for old limited because wahan pe he has became disqualified. This was audit committee under what? Your LODR regulation. Now going to audit committee under your Companies Act, section 177 mein. Listed company, and there are some other companies. So public company paid up capital 10 crores or more, public company turnover 100 crores or more, public company having loans borrowing exceeding 50 crores. So can I say that was only for listed? This listed plus some other public companies. Okay, that's one. Second, there should be 3 directors. Wahan pe also there are 3 directors. Independent director majority, wahan pe it was 2/3. Plus SR equity share, all should be independent. Yahan pe such provision not there. Then majority members should be able to read and understand financials. Wahan pe all members should be able to read and understand. One of them has to be expert. Yahan pe expert not required. The functions of audit committee are less under Companies Act. It was given more under your LODR regulation. Important is this mandatory review. Mandatory review by audit committee. There are 6 things. Out of 6 things, point number 2 is removed. There is an amendment. Out of 6 things, point number 2 is removed. There is an amendment. Okay, the audit committee has to mandatorily review what? Now 5 things. Number 1, management discussion analysis report. Second, management letter or letter of internal control weakness issued by the statutory auditor. Third, the internal auditor ke report related to internal control weakness. Appointment, removal, terms of chief internal auditor. And last one, the statement of deviation. If the money is not used for the purpose for which they were taken, the statement of deviation, usme there's a quarterly statement of deviation as well as the annual statement of fund utilized for other than the purpose for which taken. The audit committee has to mandatorily review it. So there was statement of significant related party transaction which is now omitted. Okay. So 5 things: management discussion analysis report, letter of weakness issued by the statutory auditor, internal audit report relating to internal control weaknesses, appointment, removal, terms of the basically your chief internal auditor, and statement of deviation. Okay. Now check over here. There was some they met only once in a year. So there's a audit committee, they met once in a year. Yeah, they have to meet 4 times in a year. That's wrong. And one more thing, they had reviewed monthly information system, found out no errors. Okay. Okay. So they reviewed the monthly information system of the company and found no errors. As an auditor, would you consider, is it in line? See, one is you have to write they have to meet 4 times, and second I have to write is they have to compulsorily review these 5 things now. 6 misses, second point cancelled. So they did not review other things, that is wrong. Okay. Now coming to verification of composition of board of directors. So BOD ka composition, there should be an optimum mix of executive, non-executive, and now there has to be 1 woman director mandatory in listed companies. 1 woman director is mandatory in listed companies, as well as 50% of board of director has to be non-executive. Minimum 50% is non-executive, and top 1000 company hai to one jo director woman hai na, she has to be an independent woman director. Okay, maximum age of director is 75 years. Okay, director can become a director, a person can be a director in not more than 7 listed companies. Fine. Not more than 7 listed companies. अच्छा, if you are doing a whole time or managing director, then you can be an independent director in 3 other companies, because यहाँ पे आप whole time हो, you cannot be whole time 2 places. One place whole time, independent in 3 other listed companies is allowed. Fine. If at all the chairman is a non-executive director, 1/3 board should be independent. If chairman is non-executive, 1/3 board should be independent. If chairman is a executive, or if is a non-executive related to promoter, half of the board should be independent director. That's okay. Top 2000 listed company, minimum 6 directors you need it. Okay. Now this point is omitted. Point number 4 is now omitted due to amendment. Okay, so point number 4 is amended. It's removed. The chairman of top 500 companies should be non-executive, not related to managing director or CEO. That point is now omitted. Remove it. Definition of independent director is omitted, but I'm not taking it because you would have done in law. The independent director ka definition is omitted. That I am not taking. Now check यहाँ पे there were 5 audit committee का meeting. 5 audit committee meeting, but यहाँ पे the gap has exceeded 19 से 31, 19 से 31, 110, 111, 112, 11. तो gap has exceeded more than 120 days. Wrong. ठीक है. Chairman did not attend the AGM. Chairman of audit committee has to attend the AGM. Okay. Internal auditor. Internal audit report was there. There's a serious irregularity. The audit committee did not take this issue. Remember, mandatory review में internal auditor का report relating to weakness in internal control, they did not take it. That's wrong. No woman director, it's wrong. 1 woman director required. ठीक है. Next one. Now see, limited review of audit of all entities. So parent company का auditor should do a limited review of the audit of the subsidiary companies. तो सब्सिडरी का जो ऑडिट हुआ ना, वो ऑडिट का रिव्यू करना है. तो पेरेंट ऑडिटर हैज टू रिव्यू, दे हैज टू डू अ ऑडिट, दे हैव टू डू अ लिमिटेड रिव्यू ऑफ द ऑडिट ऑफ द सब्सिडरीज. तो सब्सिडरीज व्हिच हैव बीन कंसोलिडेटेड, उनका ऑडिट बराबर हुआ कि नहीं, वी हैव टू डू अ रिव्यू ऑफ इट. दैट्स ओके. Remuneration of director is fine, not important. Obligation of senior management. Senior management is also not required. BOD has to meet 4 times in a year. That's important. Okay. Director can become a member not more than 10 committees, and he can become a chairman of maximum 5 committees. And now when I'm counting this 10 and 5, it's only audit committee and stakeholder relationship committee are included. Audit committee, stakeholder relationship committee are included. And while I'm counting this limit, whether listed or unlisted, all public companies are to be included. Okay. Now there's one again a change. If an independent director resigns or is removed, can I say new independent director should come in? Independent director resigns or removed, new independent director should come in at earliest, but not later than. These words are removed. But not later than 3 months from the date of vacancy. So not later than the immediate next board meeting or 3 months, whichever is later, ye words are removed. So new independent director should be appointed at earliest, but not later than the 3 months from the date of such vacancy. Achha, once in a year, the independent director should be meeting without the other directors. ठीक है. Okay, moving ahead. Code of conduct is fine, not much relevant. Vigil mechanism fine. Subsidiary of listed entity is also fine. Now, nomination remuneration committee. Nomination and remuneration committee. So every listed company has to form a nomination remuneration committee, and in the nomination remuneration committee they've written at least half is now made 2/3. Half is now made 2/3. 2/3 should be independent directors. So all of them should be non-executive director. 2/3 has to be independent director. Now what is the role of this nomination remuneration committee? They will meet once in a year. Audit committee was meeting 4 times in a year. They will meet once in a year. Unka role kya rahega? Now this role mein there's one addition. Whenever there's an independent director appointed, तो independent director को appoint करते time, what will be his roles, responsibilities, what is the type of independent director we need, that is also a role of nomination remuneration committee. Let me open up. Check. So if I see over here, independent director का definition is fine, and the role of nomination and remuneration committee for appointment of independent director. The nomination and remuneration committee shall evaluate the balance of skill, knowledge, experience required on the board, and you will evaluate what is the role for the independent director. So this point is basically newly inserted. Plus the other thing, formulate the criteria for determining the qualification positive attribute of the independent directors, criteria for evaluation whether it's really independent or not, board diversity ka policy, okay, identifying persons who can become a director, okay, whether to extend or continue the terms of appointment of independent director, recommend the name to board as well as the remuneration. Recommend to board the name of independent director as well as the remunerations payable to them as well as the senior management. ठीक है. Chairman of nomination committee may be present. Okay, whether he is required to be present mandatorily at AGM? No. Audit committee का chairman shall be present. यहाँ पे may be present. ठीक है. Stakeholder relationship committee, इसका chairman has to be present at audit AGM. यहाँ पे word shall है. And that also will be once in a year, stakeholder relationship related. Fine. Now, risk management committee, it is important. They've added one new concept over here, the role of risk management committee. I repeat, they've added what? The role of risk management committee. Earlier, it was not there. Okay. The risk management committee shall have 3 members, majority being board of director. Oh, 3 members, majority board of director means, can I say in risk management committee, other than board of directors, they can also be members. The senior management can also be members. Senior management can also be members, and at least one independent director you should have. If there are SR equity shares, then 2/3 of risk management committee shall be independent directors. Fine. Okay, they will meet twice a year. Okay, so basically nomination remuneration committee once a year tha. Then your stakeholder relationship committee once a year. Audit committee, BOD, they will meet 4 times a year. This risk management committee once a year. This is not for all, this is only for top 1000 listed companies. Top 1000 listed companies. And meeting ke gap should not be more than 180 days. Okay, now unka role is now newly added. Let's see the role over here. Check yera. Given in your RTP. This is nothing but the RTP which I opened November 22. The role of risk management, the role of your risk management committee to formulate a detailed risk management policy. They have to formulate a detailed risk management policy, the framework for identifying internal external risk, measuring the risk mitigation, business continuity plan. Ensure appropriate methodology, process and systems are in place. So one, formulate a risk management policy. Second, ensure that the appropriate methodology, process, systems are in place to monitor the risks, to monitor and oversee the implementation of policy, to periodically review the policy. क्या policy में कोई change की जरूरत है? And at least once in 2 years they need to do it. To keep the board of directors informed about the content of the policy, recommendation, etc. And appointment, removal and the remuneration of chief risk officer. So there will be a CRO. Chief Risk Officer. The appointment, removal, terms of remuneration of CRO will also be decided by your Risk Management Committee. This is newly added, important. Newly added, important. ठीक है. Statement of deviation is fine. One you are required to give on a quarterly basis, and second will be basically on annual basis. Okay, now information to shareholder. Information to shareholder. There's a again amendment over here. Pay attention. What is the amendment in information to shareholder? See, annual report. Annual report is to be given to all the shareholder. If those shareholders who have registered the email ID with the company or with basically the depository participant, to them will give them in soft copy full annual report. Okay, those who have not registered the email addresses, so I'll give them a salient features. I give them a salient features of the annual report in hard copy, and those people who specifically tell me I want a full one, those people who tell me specifically I want a full one, I'll give them a full one also. That is added. So check over here. यहाँ पे C point is added. The hard copy of full annual report to those who specifically request for the same. उनको full hard copy देंगे. You have to send them at least 21 days before AGM. And now, whenever we are appointing a new director or a director is to be reappointed, details about the director is to be communicated. 1 point added over here, F point. 1 point added over here, the F point. Details about directors, mein which point? In case of independent director. In case of independent director, the skill, capability required for the role and why that proposed person meets that criteria. So what is the skill required for the role and why this person meets the role, that is to be communicated. So whenever you are appointing a director, resume of director, his expertise, relationship with other directors, names of other listed companies where he is a director, his shareholding, and one more thing, if you are appointing independent director, what is the role required and how do you see this guy will fulfill their role? Okay. Transfer transmission is fine. Now CEO CFO certificate. Now the CEO CFO will certify to board of directors. CEO CFO will tell to the board of director what they've reviewed the financial statement. It does not contain anything which is materially untrue, or it presents a true and fair view. Plus there are no transactions which are violative, which are fraudulent, illegal. So they've reviewed it. Okay, plus they also accept the responsibility for establishing internal controls. Who is accepting responsibility for internal control? CEO, CFO. And they have indicated, they have communicated to auditors as well as the audit committee what? The changes in internal control, the changes in accounting policy, and the instances of fraud which they have become aware of. Instances of fraud which they have became aware of. They have communicated this thing to auditor and the audit committee. So this is basically the CEO, CFO is certifying to board that they have reviewed the financials. It does not contain anything untrue. It shows a true and fair view. Nothing is violative. They accept the responsibility for internal control, and they also communicated to auditor as well as the audit committee the changes in internal control, changes in accounting policy, and instances of fraud which they became aware. Okay. Now part B is only related to internal control. So compliance certificate shall state they have evaluated the internal control. They also state the manner in which deficiencies have been disclosed to the auditor and audit committee and the steps which have been taken by them to rectify the deficiencies. So this is only related to internal control. 3 points. Fine. Management discussion analysis report. According to me, this is important. The content of MDA report. 5-10 minutes more. Content of MDA report. Okay, now question from Mohammed, sir, risk management committee gap should be 182 days. It's 180 days. Okay, still you can just check it out. I'll also check and confirm in case it is a change. Okay, management discussion analysis report. Content 1, the industry structure, about the industry, opportunity threat, your segment wise outlook, so segment wise performance, segment wise, product wise performance, outlook, future, risk and concern, internal control, discussion on financial performance vis-a-vis operational performance, material development in human resource, new employees added, etc. And if there is a significant change in key financial ratios, details of significant change at 25% or more, then only they are to be written. The one you talk about industry structure development, opportunity threat, segment wise performance, outlook, risk, concerns, internal control system, financial performance vis-a-vis operational performance, development in human resources, significant changes in the key ratios, debtor ratio, debtor turnover, inventory turnover, interest coverage, current ratio, debt equity, NP margin, operating margin, that all. And last, details of change in return on net worth. Now see, यहाँ पे just detail of change. Are they telling significant? No. The detail of change in return on net worth, that is to be disclosed. The content of MDA report, it's basically for management. Well, management has to have a management discussion analysis report, and as per LODR regulation, we just have to see, auditor has to see whether they are there in MDA report or not. Fine. Other disclosure may I'll directly go to related party disclosure. You cancel this, ये पूरा cancel कर दो, and revised one is given in RTP. So RTP में revised one is given, that you refer. Okay, now see, company has to give, the company themselves, the company has to give a quarterly compliance report to the stock exchange telling that they are complying with LODR regulation. The company has to send a quarterly compliance report on corporate governance to the stock exchange. Basically, telling they are complying with LODR regulation within 21 days from the end of quarter. Okay? And whenever they are sending that quarterly, compliance report related thing, they are also required to write down about the related party transaction. So now check. The listed entity shall formulate a policy on materiality of related party transaction and dealing with related party transaction. I have a policy on materiality, dealing with related party transaction. Okay. The policy should be reviewed by directors at least once in 3 years and they will be considered material. कब उसको material बोलूँगा? If the transaction with that related party, during the year exceeds 1,000 crore rupees or 10% of your consolidated turnover. Okay, 1,000 crores or 10% of consolidated turnover, whichever is lower. If it exceeds this, we say it is material related party. तो वो material हो गया. Now, all related party transactions, subsequent modification thereof, highlight the word all. All related party transactions require a prior approval of independent directors in audit committee. So, all related party transactions require approval of audit committee, but usme only the independent directors, other directors should not be voting. Independent directors in audit committee. Acha, they may give some general approval also that you can do related party transaction with this party up to this much. The general approval can also be given, and the listed entity shall submit to a stock exchange the disclosure of related party in a format given by SEBI. Board is SEBI, in a format given by SEBI, and also publish it on their website. So you are required to give disclosure of related party transaction to the stock exchange as per the manner given by SEBI. Now sir, how it is to be given? It's to be given on half yearly basis. So you should make such disclosure within 6 months. So every 6 months आपको disclose करना है. Within 15 days from the date of publication of its standalone and consolidated financial. So within 15 days में आपको ये disclosures करने. Later on it will be the day when you publish, the same day you have to disclose it. So half yearly, every 6 months you are required to make a disclosure. So again, what is given for basically related party disclosure? First of all, a company is required to submit a report on corporate governance on quarterly basis to stock exchange, telling that they have complied with LODR regulation. That is to be sent within 21 days from the end of quarter. Okay, company need to formulate policy for what purpose? For determining the related party transactions ki materiality. They will be considered material if the transaction exceed 1,000 crores or 10% of consolidated turnover, whichever is lower. Fine. All related party transaction, not material, all one, all related party transaction need a prior approval. Kiska approval चाहिए? Independent directors of audit committee. The audit committee, but only independent directors will be voting over there. They may have a omnibus approval, a kind of a general approval subject to certain condition. Plus a listed entity has to submit to a stock exchange. What? The related party transactions ka detail, how they are required to submit on half yearly basis currently, 6 months over, half year over, within 15 days from the publication of standalone and consolidated result, not within 15 days of end of quarter. So not within 15 days of every 6 months over. No, 6 months over, uske financials are ready. Uske baad within 15 days. Okay, there's a question from Verskol, sir, is this basically RTP November 22? Answer is yes, this is RTP November 22. Okay. And you should also disclose the transactions of listed entity with any person or entity belonging to promoter group. Any transaction with a person or entity belonging to promoter group holding 10% or more in the listed entity. So our company mein someone is holding 10% or more, uske saath transactions are there, or such entity ke saath transactions are there, they are also to be basically disclosed. And this above disclosures are not applicable for banks. Banks ke liye this is not applicable. Are you clear? The related party is fully changed. Related party is fully changed. Refer RTP November 22. Okay, next we have this question over here. Check. Okay, now This is report on corporate governance. The company themselves submits a quarterly compliance report on corporate governance 21 days from end of quarter. Earlier limit tha 15 din, now it's 21 days. And last, auditor certificate. So listed entity shall obtain a compliance certificate that you have complied with LODR regulation. You have to obtain. आपको obtain करना है certificate from the auditor of the company or a practicing company secretary. Auditor of the company or a practicing company secretary, and this is on annual basis. अच्छा, तो quarterly basis they themselves tell to stock exchange we have complied. Annual basis they have to get a certificate from an auditor or a practicing company secretary. Auditor or a practicing company secretary may give a qualified report if at all this is not followed. LODR regulation का कुछ भी, anything of LODR regulation is not followed, he will give a qualified report. Okay, check this question over here. Mr. Fine, a director, he is a chairman of stakeholder relationship committee, also acting as chairman of 4 other listed private company not covered. Okay, so chairman in stakeholder 4 audit committee mein, so can I say total 5? 5 is allowed. More than 5 was not allowed. Nomination remuneration committee consisted of 6 members. They met biannually. Biannually is once in 2 years. No. They have to meet once every year. Once every year they have to meet. ठीक है. Risk management committee consists of 9 directors, of which number of independent director is majority, but it was less than 2/3. Now risk management committee, you need independent directors. How many? Let me just go back. Risk management committee. In your risk management committee, you required statement of deviation. This is not, no. कितना था रिस्क मैनेजमेंट कमिटी? कहाँ गया रिस्क मैनेजमेंट कमिटी? Nomination, stakeholder, and ये रहा risk management. Okay, risk management committee, you need at least 1 independent director. Okay, 1 independent director you are needing. If at all SR equity shares are there, 2/3 has to be independent director. Okay, so let me just go down. Let me go down to this question. Okay, now if you check, they are telling whether they have SR equity shares. So no SR equity share. No SR equity share. The 1 independent director you need. They have majority, it's fine. They have majority, it is fine. Then this is basically the question. Any doubts? Anybody with this? We are done with all the chapters revision. I know that for this miscellaneous topic 100% coverage is not done, but I've tried to cover up all the important things which were there for these chapters. Now sir, what as a student I should be doing at this moment? Now I still have a time till tomorrow afternoon. What I be doing? Better is, if at all you feel you don't want to revise from material, you don't know what to revise, अगर आपको मालूम है क्या revise करना है, revise that. But if you don't know what to revise, simple is last 3 RTPs, last 3 suggested answers you go through, that will become very much useful to you. And I hope these revision sessions were useful to you. Please share it with all your friends. And one more thing, we have come out with a subject-wise subscription. FR we already launched. Please recommend that also to your friends as well. Auditing I'll be starting later. And just one thing I'll tell you, you need to keep yourself pushing. You don't stop. You don't stop. Success is for those who keep moving. It's not for those who stop in between. I want you all to become successful. I want you all to keep moving. Don't stop in between. Whether paper goes bad, whether preparation is apt or not, continue writing the examination. And I told you yesterday, if at all a person is not writing examination, if a person doesn't write the examination, is 100% fail. But if you are writing examination, there's a slight probability you may pass out. And agar kuch bhi nahi hoga, you are not passing, you are not getting any exemption, but you will still get experience of writing. What went wrong? What was the thing you should take care next time? That all you will understand when you write the paper. So even if one paper has gone bad, even if your preparations are not up to the mark, please make sure you sit in exam hall for all 3 hours, complete your paper fully. And from my side, best luck to all of you for tomorrow's paper. May tomorrow's paper come directly from all the questions which we have discussed and you're able to write that very well. Focus on our MCQs, focus on company audit, professional ethics, standards. Miscellaneous mein important questions, if you want, you can again go through it and do the last 3 RTP suggested answers. Tell me anything you want from my side or any queries you're having. It was lovely having you for so much time. Yeah, and really happy that from morning till evening, all of you have set. Yeah, the morning 8 o'clock to evening 8 o'clock. It's almost 12 hours we are together. All of you have set, and this is what is the dedication which is required from all of us. Thank you so much. Thank you, Abhinjeet. Thank you, Vinay. Thank you, Rohini. Thank you, Vadiraj. Thank you, Chetanath, Srinivas, Naseem. Thank you, Ashwin. Thank you, Shurbi. Thank you, Sridhar. Thank you, Ujjwal. Okay, Ashwin has a question. Says, shall I refer all the individual MCQs? See, I'll recommend if you've marked out important MCQs, you refer it. But don't go for reading the MCQs. MCQs are basically same from the text only. Focus on text rather than MCQs directly. This is again my personal suggestion. Thank you, Lalit. Thank you, Chandra. Thank you, John. Thank you, Meghna. Thank you, Pushyari Sunny. Thank you, Anubhav. Okay, thank you, Aditya. And hope this was useful to you. Any suggestions if you have related to revision, or if this was useful to you, do ping me up. You can DM to me any suggestions related to this revision, so that next time we can do it in a more better way. Definitely your juniors will be helpful. Thanks, Hema. Thank you, Shiva. Thank you, Rohit. Thank you, Saksham. Thank you, Vinayak. Thank you, Aditya. Thank you, Dheeraj. Okay, Anubhav has a question, sir. Any strategy for audit paper attemptation? How do I attempt the paper? See, first thing is, I'll recommend you to start with the MCQs only. The MCQs se aap start karo. After that, see, generally question number 1 is on standards. So if at all you are confident about standards, you can directly start with question 1. But if there are some people who are not confident about standards, better leave question 1, which is mandatory. Start reading question 2, 3, 4. And 2, 3, 4 mein whichever question you know it better, start with that. So rather than starting always with question 1, always you should need to start with the question which you know the best. But if you start question 2, you need to finish up A, B, C, D of question 2, and then only you're moving to question 3. I cannot have question 2A, then question 3B, then again question 2C. That way it is not there. If question 2 is there, question 2, all of them should be together. So Anubhav, start with basically the MCQs, and then question 1 you can skip it if you are not comfortable with standards. If you are comfortable, I always start with standards because that's actually which I love. So start something which you feel your answers are good, rather than bluffing or starting my answers has to come really well. Okay, Abhijit has a question, sir. I'm planning to study the topics which are marked as important. Will it do good? Definitely. So whatever we have marked as important, if you're doing it again, that is definitely going to work. Extra revision ho jayega, it's more better. See, RTPs, MTPs anyways are covered. So all RTPs are actually covered over here. RTP November 22, just amendments, that also I covered today. So if at all you are going directly with again the revision of important things, it's fine. Do whatever satisfies you. The way you feel happy about your preparation, that has to be done. With a positive frame of mind, we are entering in the examination hall and we are writing the paper full 3 hours calmly. That is what is required. Thank you, Mona. Thank you, Sagar. Anything else? Okay then, chalo, I put an end to this session, wishing you all a best of luck for tomorrow's paper as well as all the remaining papers. May you pass out with flying colors, and I'll see you again. Bye-bye, take care and all the best.